Hey guys, welcome to the Wednesday edition of Splash into Futures. Or Forex Focus. Wow, that was definitely a brain fart. I should leave the openings up to you.
You've been doing
Steve
this so
Stunning.
long.
Look at you. It's the haircut threw me off.
I know.
Again, few guys get to be 10. How you get to be an 11 is just unfair. Well done.
Thank you. It cost enough to warrant that compliment, so I appreciate it.
So again, you went to the kitschy blind barber place with the speakeasy in the back.
Oh yeah. And it was slammed. I went on a Saturday, and yeah, on
Have you
Saturday.
had this haircut for 2 days? I'm just noticing it now.
It's all right.
That's the most troubling aspect of this whole thing.
It's all right. You're a
I'm
busy
going to let
guy.
you talk for a while now because I am not making any sense whatsoever.
No, I went on Saturday, and it was so crowded because everybody wants to go. I think they were just behind because I went at like 4. And so it was standing room only. You couldn't even get a seat in there.
Now, do you make an appointment or you just walk in?
You make an appointment. They're harder to get than you'd think. Well, I only go to one person. If you go to anyone, I go to Kelsey.
A delicate thing. You want it.
Exactly.
It is funny how my oldest son, we took to a woman who cut my hair when I was a kid.
Nice.
And he went to her until she retired, until he was 28. So
I've had
it's like
3 people cut my hair.
You're living downtown now. There's some places to go. No, I'm going to Shelley.
Yeah, no, I found this place because when I started working here, I used to go somewhere in Northfield that my friend's mom went.
Oh, there you go. Yeah.
Paul, great guy. But when I came down here, I was kind of scouting around who had good hair. Went over to Todd McCarthy himself. This is when he had like longer hair. And so I said, all right, where do you go? And he said, blind barber, but you got to go to Kelsey. And that was the first time I'd been in like a barber shop. Usually, my hair's been longer historically as well. So usually it's a more salon.
Now, did you feel better or worse knowing that Frank goes to the same place?
Well,
because you did go to the rock star of hair, Todd McCarthy. So.
Yeah.
But then you went to.
Then I passed it along to Frank.
So he took your.
Correct.
I gotcha. So he's a follower.
He's a follower. It's pretty public. It's one of the most public things he does.
See,
but yeah, my haircut hasn't gone down since he started going there. So.
That's fascinating.
Yeah, it's fine. We
Okay.
got 50 degrees here.
Yeah. Gorgeous outside.
It's never felt better. Yeah.
It's nice. And you know what? It's so funny. My wife, I got home and she goes, "You're home so early." And it's like, I'm home at 5 o'clock.
It's just light out.
It's just right. It's just light out, which is nice. I know we're due. Chicago's the same thing. It's not going to be fantastic for every day for the next 2 months, but at least we're seeing a little bit of a change in.
Yeah, and one of the things I hate about winter is I find myself talking about the weather so much, and you feel like I like to think I'm an interesting conversationalist, but it's so top of mind, and when it's dark all the time and freezing, that's all you can think about. It's horrible.
Yeah, it's good to be past that.
Are you gonna get out of here anytime soon? A little weekend away anywhere? You like Florida?
I'm going to a conference in a week.
Oh, really? Nice.
In Florida, so that'll be good. But no, don't have a lot of other stuff planned. How about you?
Is it nice or is it Orlando?
No, it's Boca, so it's nice.
All right.
Yeah, no, it's not Orlando.
This is your crypto conference?
No, it's a futures conference, but it's no, it's not Orlando. Thank God.
Yeah.
I mean, Disney World was great. The kids had a great time, but it was always just
a hassle.
It was just a very expensive, stressful hassle. It sounds like such a bad thing for a dad to say, but I would imagine half the dads feel that way.
Easily.
Yeah. You get home after 4 days with a huge bill and a headache.
And sunburnt.
A little bit.
Yeah.
A little bit. What about you? You're usually on someone's private jet off to somewhere.
No? I gotta save up now. I might go to Amsterdam in the summer.
Aha.
So, and the
hookah's calling you? What?
Yeah, that'll be pretty out of pocket. So I gotta start saving because my saving thus far has been into crypto, and so I have to do some different saving because it doesn't look like.
Hey, by August the bots are going to be at all-time highs, so you're going to be good.
But I have to be prepared if it's not. So maybe some cash.
Now, why Amsterdam? Well, although you've really traveled all over.
One of my good friends is from Amsterdam. His
Okay.
family still has a house there.
There you go.
And so at least lodging will be accounted for.
Okay.
Which will be very nice. But there's a little music festival out there as well.
Very nice.
So we got a good group. I think 8 people will go.
And you get the private jet covered and everything?
Nope.
No PJ this time?
Nope. I'm actually looking for a new credit
it's
card.
so disappointing when you have to fly commercial.
I know. I'm looking for a new credit
Like the
card
rest
right
of
now.
us.
So if you have a referral points,
Oh, sure.
thinking like United or Delta, maybe get a free flight out of it at least. So yeah, we're getting creative here.
Good for you.
It's NVIDIA Day. Happy NVIDIA Day to those who celebrate.
What do you now? Again, they talk about this poor stock. It's had a huge run. It's off a lot, but it's like, oh, this is with 4 down days in a row in equities, and yeah, we're having an update today, but days early. But it's not an incredibly healthy bounce. It's plus, but it's not like getting away from anybody who's been short or looking to lay back into the short. So maybe I'm talking my position more than but this idea that this earnings is going to turn it all around. What are your thoughts about one set of earnings?
I mean, obviously, it shouldn't operate that way. And there's a lot, you know how it is. Like if there's a lot of news around it, it'll always be more hyped up probably than it turns out being. But what is interesting is if you look at the last one, that kind of was a catalyst for just up and to the right. So, it's kind of just a short-term historical bias. Everyone looks to the last one because you only have these quarterly. But now we're in a completely different situation with a lot different momentum.
So in your mind, where does this bleed? Obviously, it plays through the underlying.
Right.
It plays through the whole Mag 7 ecosystem. Then it goes through the equity indexes because there's such large components of each of them. Does the bleed, when I say bleed, just the impact, does it stop there or does it roll into yields? Does it roll in FX?
Yeah, I mean, I don't think you'll see quite a direct roll into FX, but in the scope of the week, we're gearing up for a pretty more interesting week than I thought. We had consumer confidence yesterday stir a little recession fears again. We have some more numbers to end the week. We have durable goods, a GDP estimate, and PCE on Friday. So I think if this folds into the greater story, if we see a little uncertainty, that scares people. We get 3 other data points that scare people. Maybe we can chalk that up to a significant factor. But I think a good earnings report, I don't think blinds everybody from everything else that's going on.
Okay.
And bleeds
Yeah,
through
and we've got month
other
end coming
asset
up,
classes.
which is always a great day to trade on Fridays. So a fair amount of, again, Fed's preferred inflation gauge on Friday.
Yep.
Okay. So we'll get some good back and forth.
And last week in February, usually that's not a very interesting week. When we were looking at it coming into the week,
Right.
we were saying, in terms of economic events, not the most
Last week of the month
pressing.
is usually light, but since this is such a tight month, we're actually getting a little bit more juice out of the orange.
Action
But
packed.
well, let's jump over and take a look at the markets because we're actually seeing bonds holding on to their highs. Long end still 117.5. That's the upper end of the range we've sat in. So yield softer. That 2-year getting back closer to 4%. Again, the idea of the direction of travel may be that rate hikes are coming a little bit sooner and with a little bit more certainty. That should, in a vacuum, cause a little bit softer dollar, but we're seeing just the opposite this morning.
Yeah, we've got a bit of dollar strength,
Commodity
especially
currencies, especially Kiwi cannot find a friend right now, and I don't know if it's again tariff talk or whatever. They came out yesterday at 3:45 and said they're going to put out looking at tariffs on copper. Copper rallied, I don't know, 2-3%, and it's held on to the bulk of those gains right now. So, but it'll be interesting to see. So again, taxes on goods like copper play through the entire cycle, impacting both commodity currencies as well as us. So still a kind of a struggling story here versus a euro, which is actually slightly south of 105, but much better tape structure than the Aussie and the Kiwi.
Definitely held in, and we haven't really seen we're looking at the daily chart here. We haven't seen any real congestion that we've seen the past few days around this 105 level. If we're looking back, I mean, even year to date, we've only spent a couple days trading in the same range, but a really good back and forth range.
Right.
But now kind of settling around 105. Before we'd seen not really anything above this 105 level dating back to the December Fed meeting. Now are you seeing a little more momentum here as opposed to
I think you're
days?
seeing that longs don't get punished so quickly. We've had 5 days, and we've floated on either side of 105. But anyone who's looking for, okay, this is the bottom and we're going to see some extension to the upside, and you would think that yield story would help a little bit, and I think it has helped euro a little bit. You're not getting punished by being long anywhere at 104.80 or 105.10. All of a sudden, it's 104.5 off, 104.50 offered. So it's interesting a little bit to see that very different kind of performance versus the commodity currencies, which are still having a hard time not making you feel the pain of buying the dip.
Exactly.
So, different flavors, different trading styles right now. Dollar yen, a little bit of the same thing here
right.
too. We've traded again comfortably on either side of 150. Does a big round number mean anything? No, it's just a reference point. But here we look again. Some of the things you'd expect to see an updraft in dollar yen, we haven't seen that play through. And if you had been selling some dollar yen here, depending on where you sold them, you've taken a little bit of heat,
right?
But not okay, it's 151, it's 152. Where am I getting out of this? So it'll be interesting. And you hit on it though. Relatively quiet inside days, some decent back and forth if you're willing to adjust your expectations. But the question comes is today, tomorrow, and Friday, we do have some binary events in terms of data coming out that will affect markets. Lasting or not, who knows? I don't want to guess what the number is, the impact on it, not interested. But I do want to think about how do I adjust my scalping ranges. Right now, if you've been willing to bring them in the short run, it's giving you back and forth.
Right.
Now what do you do? And I think we're going to look a little bit at correlations, which is really going to be interesting because the rate correlation piece with rates at the higher end of the range is an interesting aspect.
Yeah, and we can get right into it. I've got some slides for today if we want to flip over to those. Interest rates, definitely an interesting story. As of late, interest rates are falling. What does that mean for the U.S. dollar? And this is interesting, I thought, because interest rates and U.S. dollar, the relationship in theory should be pretty straightforward. When interest rates are higher, especially short-term overnight interest rates, you're getting more yield for holding U.S. dollars. So there should be a correlation in theory, very strong with who would want to hold U.S. dollars and when. But what we've seen recently in the interest rate market, here I've got the 10-year yield and the 2-year yield. We're seeing from those January highs, we're seeing a big sell-off, a big move lower, especially in that 10-year yield, more pronounced than that 2-year yield. So when you think about when the Fed is going to cut 1 or 2 times, maybe that's not as interesting, and that's closer to the 2-year yield there. But the long-term, perhaps inflation expectations, and longer-term interest rates definitely taking a hit. But it could also be because what was interesting in January is even at those high yields, people weren't really buying bonds, were they?
Right.
And so maybe now the safe haven play with recession fears, people are actually engaging with these bond markets again when they haven't in recent months.
Yeah, I think when you see true two-sided equity risk, which we're seeing a little bit of, but NVIDIA will save us all. Yeah, I think 4.5% wasn't that interesting.
Right.
Now all of a sudden it is. And I think you're actually, because you would say, well, part of the reason the economy is slowing down is we're seeing stickier inflation, we're seeing this. That should cause yields to go higher. There's always more than one thing driving it, and that idea of, okay, if some of the equity exposure is being peeled off, where's a natural place to park it? And it's absolutely in treasuries. So that could be fueling a little bit of, okay, 4.5% isn't that exciting if every day stocks are printing new lifetime highs.
Yeah.
And whether you're a fund manager who's got to, again, hold on to your fund and explain to your customers why you're not participating, or you're an individual looking at everyone around you participating in this rally and thinking every new high is too high to buy, that idea of missing out makes this alternative a little bit more challenging. Now, a little bit of that is changing with this.
Yeah, and it'll be especially interesting to see if any of this 10-year yield decline sticks. We had that consumer number yesterday. That's where it'll really play through when we've been in this environment of high yield savings. If that starts to come down, maybe it is more of a snowball effect than we've seen so far. But wanted to take this price action, relate it to U.S. dollar.
Right.
Here we're looking at the U.S. dollar 3-month correlations to U.S. rates across the yield curve. We've got the 10-year, the 2-year, and the 20-plus year, the longer-term interest rates against each of the major U.S. dollar currencies. And we're seeing some interesting trends. The difference between red and green here is mainly all in part due to which side of the currency pair U.S. dollars on.
Right.
So here I'm just looking at the magnitude because for the Australian dollar, euro, and pound piece, the dollar is on the bottom there, whereas for the other three, it's on the top. So that's where we get the red, the positive versus negative correlation. But we're seeing the greatest magnitude of correlation with the traditional flight to quality assets, currencies, Swiss franc and Japanese yen. And what was interesting to me, we're seeing a stronger correlation with longer term interest rates than short term. Because when you think about it theoretically, this stuff should move with the Fed funds, the 2-year.
And the equivalent. Right. And I think you make a great point. So they're all positively correlated. In other words, and it's a good explanation that depending on where the base and quote currency is, what side of the equation the dollar is on. So the negative number is actually a positive correlation between the currency, the dollar piece, and yields, which again, it's the degree of correlation. And you're right, the safe haven currencies, whether that be Swiss or yen, have a much more direct impact to 10 years.
Yeah, especially that dollar yen 0.65. Yeah. That's a pretty strong correlation. Do you make anything of the correlation within rates here? Is that, to me, it was interesting. You're looking at 0.76.
That's low.
Yeah, that's what I thought as well, but I have less of a historical basis.
It's how far back did you go on a 3-month rolling car? Yeah, that should sit between, again, 78 and 88. So anything when you see the 60s there or the low 70s, that's awfully low. Yeah.
Interesting.
Yeah.
And so taking a look at those, the dollar franc and the dollar yen, we treat them as a popular story is to say they're safe haven assets. But what is the story behind it? Is it when we see some divergence in dollar markets, we see European currencies acting one way against the dollar, and we see the Swiss franc and the yen, which have had a lot of momentum recently, when we see those outperforming relative to U.S. dollar, a lot of times we chalk it up to, oh, well, it's the safe havens catching a bid here. But is it more a story of converging rates?
Yeah.
Because we're seeing that.
This is a great visual.
We're seeing that with. We have both of them. We have some uncertainty, but we also have lowering U.S. rates. And when we take a look at here the central bank set rates, we have a big decline in the U.S. With this recent kind of shakeup, our December expectations are now centered around 2 rate cuts.
Right.
A month ago, we were looking at probably just 1. So now we're back to 2 rate cuts. Japan, completely different story. We have been hiking in Japan, and we're currently sitting at 0.5%, and another hike expected this year. Right now, they're trying to guess when that'll be, maybe Q3, so could be for a while. But there, we're seeing a very direct convergence in rates, and that is, it's been very popular, the dollar-yen piece for carry trading. And
Absolutely.
That's exactly where you're seeing this play through, is now there's less appeal for capitalizing on the divergence of interest rates. Historically, if we look back to 2024, at the start of there, it's over a 5% difference. Now we're closing in on 4, maybe 3.75%.
And this is great because, again, we use Japan and the yen and the Swiss franc interchangeably as safe haven currencies. Again, old school, and that was then, this is now. Whatever pit I was closer to, if I saw equities really taking a bath, I'd buy 20 Swiss or 20 yen, whichever was closer, just because I wanted to have a little contracyclical on. This speaks to why that indifference between those two safe havens isn't going to work for you here.
Right.
Because you're seeing a material disconnect in the direction of travel of rates, where the Japanese rates are helping that cause of seeing that yen contribute to more dollar-yen selling, where the Swiss component of whether it's down at safe haven or not, the yield differential is moving in the wrong direction for that play to work. So this really is a great, really clean thing of, well, from a safe haven standpoint, Swiss and Japan are interchangeable. Not so much. And this yen, this rate divergence of trajectory. Don't get hung up in the nominal.
Right.
The nominal's given. That's priced in. What is interesting is when the direction of travel or the implied change, that's where we see rates react immediately. Not when the rate change takes place in the Bank of Japan. That's already priced in. Markets are efficient. But this is a really good takeaway about what do I want, which currency do I want to use when things are happening, give it a change in rates or a change in risk. And a really powerful takeaway here around this really makes it very clear as to why the Swiss and the yen aren't interchangeable pieces to be used for rate divergence or safe haven plays.
Exactly, and this graphic would speak to the Swiss franc being the remaining safe haven asset, because you look at their rate path, they're cutting rates at a more aggressive pace than we have in the U.S. They're obviously didn't get as high, only got as high as 1.75%.
But they were down at negative 2.5% at one point. So on a curve, you're absolutely right. But I think this is a natural drag on Swiss, and that frustration of why doesn't Swiss rally? It speaks to a little bit of that longer term play.
And yeah, December expectations. This is for the end of year here. Put it at 0.25%, but their chancellor or whoever's in charge said they would be comfortable at 0 or even negative if necessary. So,
and there's some. I don't want to have to move them, but I'm going to talk them down to see if I get the reaction I want. And it gives you an idea of direction of travel, which is great. Solid takeaway here.
But yeah, just wanted to bring up one final point here. When you're kind of looking at both of these markets, you're looking at the dollars, and you're kind of wondering why, from a fundamental standpoint, each is moving the way they are. An easy check right here would be to check the currency crosses you're looking at Swiss franc, Japanese yen, and there you have just a direct relationship, and we're seeing a lot more yen strength in 2025 than the Swiss franc. So more of an interest rate hike piece from Japan.
A fantastic walkthrough of the differentials, correlations. The challenge often is, okay, what do I do with that? And it's like, well, you can kind of, here you've got the product, again, you see the changes in rate trajectories. This is one of the great things with FX. You go right, you don't have to build something or have something that has a core, go right to the rate play, which is Swiss yen, and trade it. And that is a powerful way of being able to, your interpretation of, well, the Swiss may cut more, or the yen are overly aggressive in their rate projections. That builds into your trading strategy. But the ability to express that in one built product that's scalable in size is great. Fantastic walkthrough by you.
Thank you.
Excellent job as always.
There you have it.
Guys, coming up next, Tom, Tony, and Vanetta. We'll be back with you tomorrow for more Forex Focus at 6:30.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to tastytrade. See how it pays to have friends? Terms and conditions apply. tastytrade.
The beauty of thinkorswim was that we were different.
From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies. Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Woo! Get tasty, pre-market. Come on, you know we can, you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
you knuckleheads. Happy Wednesday to you both.
Hello.
Hola.
Look at Thomas. He looks so happy and smiling. I know why. Vanetta, do you want to know why?
I would love to know why.
Because, Vanetta, he had a boys' night out last night, enjoyed one of the best steaks he's ever had in his entire life with his newfound friend, Tucci, of 40 years. Tooch, that's right. Bat didn't get the nod. It's okay.
Wait, where'd you go? To EJ's?
No. Went to Asador Bastion.
Oh, Tucci put out last night. This poor guy.
Oh.
Wait, how come this is like the 4th steak dinner that Tooch has got to go on, and he has sold 0 properties?
That actually took a little bit off the top, if the truth be told. I mean, yeah.
That's 4 steak dinners.
We've been going out to dinner together for 40 years. Over 40 years.
Okay.
And
he's my only friend. He's my only friend that actually, that makes sure we connect. It's good.
I gotta give him that. Tucci does.
He's the best
do that.
friend. He's the best person I know for making sure that, you know what? Every couple of months we go out.
You need a reacher outer. You need
a reacher outer.
Yeah, a reacher outer.
I'm too used to hanging around with too many traders and we're all fine if you reach out. If you reach out, if you don't reach out.
If you reach around, whoa, hey, I don't judge.
Yeah,
love is love.
If you reach around and play the trombone, you get a steak dinner.
Love is love. I don't judge.
Reach around and find out. Yes.
What is happening? It is 7:02. Look, we couldn't make it 2 minutes.
But it was unbelievable. I can't tell you how good it was.
So what kind of food is Asador Bastion? That's a crazy name, by the way.
It's a Spanish steakhouse.
Oh. Okay.
It was. I'd been there once before because it was a corporate outing for somebody else's firm.
Uh-huh.
But it was a big dinner night.
Because we do not have corporate outings.
No. And it was I didn't order any of the food, so I didn't, I thought it was okay. But last night,
when you were in the driver's seat.
Oh my God. I think it was one of the best meals I've ever had.
How many courses?
2, 3,
Okay.
But it was great. It's stupid expensive. And it got rated the 14th best steakhouse in the world.
In the world?
Yeah, it's the top rated steakhouse in Chicago, but it's the 14th best steakhouse in the world.
Wow. How about that Asador Bastion?
They tell you the name of the cow before you eat the steak.
Oh no, that's sad.
You're eating a killer, and you're eating baby.
So you couldn't handle this place. It's not good for vegetarians.
I'm not a vegetarian.
It's not good. You don't eat meat.
I eat.
You don't eat
no meat. It's okay. I make lamb.
You don't eat steak.
I do not eat steak.
The only thing on the menu. Well, they have fish.
I eat fish.
Yeah, they have, but the only meat they have is steak.
Okay. Wow.
And it is.
Is there a chimichurri or situation, or what kind of what's the Spanish?
No.
Where does the Spanish come in? Kind of.
No.
What's? It's just a dry ass steak. What's on the steak?
Nothing.
Nothing.
Well, you could get stuff, but no, it's spectacular. I'm just telling you.
I wish you.
No, it's no chimichurri. I mean, maybe they have something. I don't really know.
Okay, I don't know.
Now, Sadnup, I hear this place is insanely impossible to get into. How did a guy like you get in there?
You got to know people.
Is Tooch people?
You're not going to come clean, huh? You're not going to come clean. I mean, like I tell my son, if I'm asking you a question, I already know the answer to it, so don't lie to me. So I'm going to ask you again. This place is insanely impossible to get into. How's a guy like you?
You can get in there. Occasionally there's an opening.
Has Scott Sheridan been there? That's all I care about. Oh, he hasn't?
No.
And you've been twice.
He went there at 4:45 and opened the doors with them. That's how he got there.
5 o'clock.
Mm-hmm.
I don't hate eating early. I'm not against that.
No, it was unbelievable. That's all I want to say. Unbelievable. But it's a little fancy, then not that the place is fancy. It's just it's more of a special occasion place.
Sure. You and Tooch had a special occasion?
We did.
Well, my wife would never go there because she doesn't eat steak. She doesn't eat meat.
Oh, yeah.
Yeah, so I mean, she would never go there.
Yeah.
But it was great.
Well, I'm glad you. Did he take you out for your birthday?
No. We just had it. We were supposed to go out a couple weeks ago and it got canceled, so we just rescheduled.
All right. What are you doing for your birthday, girl?
I don't know. I don't know. We're gonna go out to dinner probably, but then
is Bat going? Because he's gonna complain if you don't invite him.
I mean, I won't. I won't go. I just need the invite. But there's always that slight chance that I might go. I know that's why you don't invite me.
You want to go out with me and Corinne? Sure.
Yay!
That would be awesome. I would love. We're gonna do that again.
You guys should double date. When's the last time you guys double dated?
We don't double date.
I would love to double date. Oh my god!
You don't mix church and state. You don't mix.
You don't mix your worlds up. You saw the old side.
Worlds are colliding.
Worlds are colliding. You don't
mix the work wife with the actual wife.
Oh no!
Yeah.
You know how pissed off his wife would be seeing how he treats me.
Tom, would you like me to cut your steak again for you?
Right. I knew you cut his steak. I knew you did that.
You guys should totally double date.
How many times did you chew? I told you got to chew 20 times.
And you're like, hold on, I have to rub Tom's tummy now.
His wife wants to order something. He goes, Tom doesn't really like that.
What appetizers you want? No, honey. I'm sorry. Tom doesn't like that appetizer. We'll have to get something else.
See, I mean, this is it would
my wife. My work wife doesn't like that appetizer.
It would be legendary. All right.
We certainly could. It just requires a lot of planning. There's a lot of stuff that goes into all this stuff.
Yeah.
That's where Tooch comes in.
It's way easier. It's way easier to tell a friend of 40 years, hey, I'll meet you here on Tuesday night at 5:00. I don't have to have any other conversations.
Yeah.
Like, what do I need to wear? What are you wearing? What are you wearing? What
are you going to eat?
Who else is going to be there? What are you going to eat? Let me see the menu. Blah, blah, blah.
I need to see a menu.
Shoot me now.
I need to plan in advance. And I also need to sort of be told what to wear.
Okay. See, and I find it much easier not having to deal with any of that stuff.
Nah. All right. Well, what are you going to do?
Where are you going to park? What are you going to do?
Bat, what did you get up to last night?
Ooh, last night. It was a beautiful night. No hockey, nothing to do. Vinny allegedly did his homework, although that's sus, as the kids say. So he was out on his bike all night. They started a fire at my friend's house in the backyard, and they cooked burgers.
Like a legal fire, or like a
like a legal fire.
Okay, good.
A burger and a baked potato. They made it on the open flame and ate it there, and then he was home around 8:30. It was a beautiful night.
Oh, that's good. They're not in front of the screens, getting outside. That's wonderful.
Yep.
See that?
I did have to pick them up, but that's another story.
Okay, well that's
Sadnov's getting the emails now about people wanting to go out to dinner with him. You don't have to tell me where we're going. I'll go. I'll be nice.
How'd you know that?
I know. The walls have ears, Sadnov. The walls have ears.
I mean, guys just like very simple, like it's a lot easier if you told me, hey, you know what? In 2 weeks, it's Wednesday, right?
Yeah.
2 Wednesdays from now, I'll meet you at 5:15 at so-and-so. Perfect. See you there.
You don't think women do that?
No.
What?
No. And you know this how?
Way more complications.
What? How? Okay. Well, because we're doing all of the emotional labor and physical labor, and you are using your weaponized incompetence. So yeah, maybe there's a little bit more steps.
Weaponizing confidence. Wow.
Yeah.
I'm going to use that one.
She can't even explain it without
what?
Without some sensitivity.
I'm not sensitive. I'm good. I'm golden, baby.
You're not sensitive.
I'm perfect.
Let me tell you something.
Let me tell you something.
You are sensitive. The two of you are the two most sensitive.
You were the most sensitive.
I'm not. Get out of here. You are, and he is. The two of you.
Okay, that's fine. Well, you have the least
I
amount of
don't
self-awareness.
buy that. I think you're lying.
You have
Oh
the
my
least
God.
amount of self-awareness. How about that? How about that?
That's-
Hey, Blackhawks played the Utah Hockey Club last night. I was just mentioning this because when I was at the airport, they had a bunch of Utah hockey like merch, and it was just like weird looking because it's just so generic,
Yeah.
you know.
Yeah.
Who won the game?
The Utah Hockey Club, which is just weird to say. I think it was 2-1.
They don't have a name yet.
Yeah, you're right. 2-1.
Yeah, it's
What's
the
that?
It's the Utah Hockey Club.
Utah Hockey Club.
That's it. That's the tweet.
Have the Blackhawks won
That's
a
it.
game in the last month or two?
We don't get the actual games. I just heard it on NPR.
I don't know. I mean, I don't think they have 20 wins.
It was funny. I was telling Tony I bought Blackhawks tickets before the season started
Yeah.
for next week,
Okay.
and because I figured 5 months ago, by then I'll be ready to go to a good Blackhawks game.
Oh, sure. Yeah.
Now I'm going to be trying to figure out who to give these tickets to.
What day's the game?
I don't know, Monday or Wednesday.
He doesn't know that's the problem.
Yeah. Hey, Ovechkin, he's only like 12 goals now away from Gretzky's record.
Well, he's going to break the record.
So that's exciting.
Yeah. I mean, who would have thought? I mean, that's a record. I mean, again, we've said this about other records too, but I mean, that was a record I thought would never be broken.
Agreed. Nobody thought that record would be broken. I mean, I'm sure Gretzky is probably totally cool with it because Gretzky just seems like that kind of person.
Yeah. Team kind of player. Yeah, for sure.
Yeah. He just seems like
Not
that kind of
selfish.
person.
Yeah.
But
I mean, he had a hat trick the night before. I think he's got I forget what it is, but it's something like 20 goals in 15 games or something like that. It's just like some crazy number. It's unbelievable.
How old is he?
It's only 39.
39.
Wow.
He looks like he's 50.
Sweetie, take a look at yourself.
Him and I both look like we're.
The guy skating at a professional level, up and down the ice, playing against the best in the world, and you go, he looks like he's 100.
We both look like we're 50.
Yeah, he's playing against some farm-raised kid from Saskatchewan that's like 19, and you're sitting over there unmoisturized. Be so for real.
One thing I'll say about Ovechkin is that guy is durable.
He's durable.
Oh yeah,
he's sturdy.
He's been banging every year.
He's a tough guy. He's not like
Yep.
He's not soft and he plays hard.
Yeah, he's not like you.
Are you calling Gretzky soft now?
I'm not calling Gretzky soft, but Gretzky was a completely different kind of player.
Well, it's a different league.
I call Polina Gretzky soft.
No, I'm not calling Gretzky soft. Gretzky was just he was an unbelievable goal scorer. Ovechkin's just he's a monster.
Yeah.
Yeah, I mean that's a record. That's a record that that game will be cool to be at.
Oh yeah, 100%. And Gretzky had enforcers, where Ovechkin is his own enforcer.
I hope they do it in Washington.
Oh, at home.
Yeah, I hope.
Yeah, it's hard to say though. But if you're
How about Washington? They came from the bottom and now at the top. I mean, they're probably one of the best hockey clubs in all of hockey right now.
I just hope they do it in Washington.
If you're that goalie and he's the one goal away, what do?
No, you play your game.
But I'm just.
Oh man, you don't want to.
You don't want to be that goalie in the highlight film for the next 100 years.
Oh,
I mean, kind of.
No, you don't.
It'll be your legacy.
Kind of.
You do not want to be that goalie. You do not want to be the guy when they show the highlights. You're the guy standing there with your head down.
Big fat goalie.
Right.
No, you don't want to be that guy.
I don't know.
If you're a goalie, you want it to be the night before or the night after.
Actually, yeah. The night
Yeah,
after.
you do not want it to be the day you're on.
Well, it's gotta be somebody.
Yeah, it's got to be somebody. It will be somebody.
But then, so I would rather still be in that historic photo than. Okay.
No, you obviously you're not a competitive.
No, you don't want to be
sports player. No, you don't want to.
You don't want to be the guy that gives up the 714th home run, and you don't want to be the guy that's playing goalie.
All right, fine. No. Be that way. Well, you can.
Those tickets in DC.
Yeah, but you don't know what game it's going to be.
Doesn't matter.
No guarantee. But there's no guarantee, though.
Of course, there's no guarantee. But anytime he has a chance to break the record, Those tickets.
That's what I'm saying is like if you could, yeah.
Those
now,
tickets.
It's so funny. We almost went to DC for a weekend, and I looked at tickets to go to the game because Capitals were in town, and I looked at tickets, like 10 rows off of the glass. They were under $100. I mean, it was like I couldn't believe it.
Oh wow.
I mean, yeah, it was nothing like
they're
going to a Blackhawk game.
They're going to be, Blackhawk games
I know,
are stupid.
I get it. For that, they're going to be outrageous. But just, you go to a normal Blackhawk game, see a crappy product, and, it's a couple $100 per ticket. I mean,
Blackhawk prices are ridiculous.
Ridiculous for the product out there.
I can't believe how ridiculously expensive Blackhawk tickets are.
Yeah, I've never been to a Blackhawks game.
Want my tickets next week?
Do I have to come in? Do I have to come into work the next morning? Can I have the next day off?
Get out of here.
No.
Hey, we got a great show for you today. Whether you scored a hat trick last night or not, on this wonderful Wednesday.
Oh, no hat trick for the bat, by the way.
On this wonderful Wednesday at the top of the 8 o'clock hour, we got an options jive for you today. Volatility of volatility. Son of Kong.
That's right. Volatility on volatility or volatility of volatility. Is it volatility of volatility? Volatility.
My computer says volatility of volatility.
Here you go.
Okay. We will be looking at that and
That's,
all that entails.
Volatility of volatility is VVIX.
Okay. Oh, yes. Yes. VVX. And because it is Assume the Position Wednesday at 8:40, we got What's Your Assumption? So our viewers write in with an underlying and a directional bias. Tom and Bat try to do as many trades as possible. That's at 8:40. Then 9 o'clock, we got Jacob in the house for the Skinny on Options math, gamma, beta, and delta stability.
Yeah, this is a tough one. Tony's gonna have to brush up on his calculus for this one.
Oh no!
I'm just warning you right now. You might need. I think you're going to need a math degree to get this one.
Or some chat GPT.
I don't know. I've been helping my son with his 9th grade algebra. I think I'm all tuned up. All right, we'll see.
Well, here's the way. You want to scare Vinny a little bit? Make him watch Jacob's segment thing and say, hey, you're going to need this in order to be successful.
This is what you're doing next year.
Don't scare him like that.
Because all I'm telling you is this segment, it's hard.
Yeah. All right. Well, buckle up, Buttercup. That's headed your way at 9 o'clock with Jacob. And then live from the trade desk, big boy Scotty S. Scott Sheridan, counting down all the top trending tickers over at TC Trade. I missed some of the discourse last week because I was gone. I was on vacation. But I saw the cherry on top highlights. And those toe spreaders that Scott has? I have those.
Oh my God.
Oh my God, we're twinsies, but mine are pink. But it really does help. I used them a lot when I was recovering, I broke my leg a couple of years ago. But it really does help. It stretches out the fascia in your foot. It's really nice. Okay, no, you don't care.
Toe spreaders.
I'll get you some. Do you want purple ones?
All I'm going to say is no guy should ever use a toe spreader. And if he does use a toe spreader, he shouldn't tell anybody he's doing it.
Why? How are toes gendered?
Principle. You don't.
Because you have webbed feet?
You don't tell people, oh my God, I got my toe spreaders on.
But he's trying to help you because he said it helps.
I don't care what he's not helping
back
me.
Pain or his leg pain?
He's not helping me. I'm not buying a toe
or his
spreader.
knee pain?
I prefer to have my toes curled. But if we have to go with spreading, I'm fine with that.
I prefer to have webbed feet rather than wear a toe spreader.
All right. Anyway, I'm #Team Scott, #Team Toe Spreaders. And if you want pics of those, call me. Your girl's got to monetize a second revenue stream. So feet pics it is. My toes are cute. I got a pedicure for my birthday. My toes are looking good. We got Johnny Trades, Nikki Back coming in. This anyone with a smaller size account. Nikki's going to be in at around 9:45 with his trade ideas. And it was so nice to see Liz and Jenny. They were here live in studio yesterday, but they're going to be live from the floor of the SIBO today. They hadn't been there in a while because they had some vacations and some other scheduling issues, but back at it again, the lovely ladies, the first ladies of the SIBO, live from the floor. That is headed your way at 10 a.m. That's the run of show for today. In the meantime, in the between time, you guys want your daily dose? I got a lot of news today.
Yeah, sure.
Yeah,
Ready,
all right.
let's do it.
It's my theme music. Let's go.
Our leading story. Breaking news. Across the wire. Our leading story. Top story. In today's headlines.
This just in.
Breaking news.
All right, everybody. Today's a wonderful Wednesday. It's February the 26th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Sure.
Ready for the news.
What's on deck for earnings today, Mr. Bat?
Nobody's going to care about CRM or eBay. It's all about NVIDIA.
Yes. What are you going to do in NVIDIA? Bad boys.
I actually don't know yet.
Okay. Well,
I mean, I have
time.
I have a couple of positions on in there already, but I don't know. I'm going to see how the market plays out today.
All right, we'll see how that plays out.
I'll give you some statistics from my Taiwanese sources. NVIDIA is 7% of the NASDAQ 100, 9% of the Russell 1000, 12% of the S&P Technology Fund, and 17% of SMH.
And it's 100% of my heart.
Yes.
Hey, getting to the first headline here, a new survey from Charles Schwab, their latest quarterly trader client sentiment survey. 2 out of 3 traders currently believe that the market is overvalued, and they cite mega cap tech and AI stocks as among the most crowded trades. But that said, the bulls continue to outnumber the bears among traders, 51% to 34%. Those numbers are consistent with the sentiment found during Q4 of last year. What are your thoughts on, and do you ever get polled for these traders' sentiment surveys?
Well, considering I'm not a Schwab customer, no, I would not.
No. But you are you. You're you. You're a big matzo ball out there.
I mean, I would say what I would say was that 2/3 of the traders that they polled were probably were Thinkorswim customers, so we probably know most of them.
Okay. But you feel the market's overvalued as well, but you remain bearish?
Well, but this thing says, but sentiment for the quarter remains bullish.
I know, but what's your sentiment? You don't care about what anyone else.
I'm a little bearish right here.
Right. That's
I think that rallies are. I felt like yesterday afternoon was time we'd reached a pretty important bottom because we had such a huge rally during the day yesterday. So I thought they reached a very short-term bottom yesterday, and we got a little bit long overnight.
Okay.
I mean, going home last night.
We got yesterday right on the close.
Got yesterday pretty right. Didn't make any money, but got it right. Just because they popped vol up.
That's all going to come back for you today, Sosnoff.
Went home a little bit long. I thought they would rally today. They have. I don't know how much higher they're going to go, but they're back over 6,000.
Okay.
I'm not bullish here, but I thought, we're probably due for a little bit of a bounce.
What about in bonds?
Bonds, we had a monster bounce, and they're up again today.
You did.
1720. That's probably all that you're going to get.
Okay.
That's the high for the day. They were about almost a full point lower. 1728 is the low.
Yeah.
Hey,
1628. I apologize.
Interesting news from the CFTC, sort of taking a parental approach. They're basically like, hey, if you tell us that you did something wrong in advance, we might go a little bit easier on you. It's really about trust here. I know the CFTC is going to curtail fines for alleged wrongdoers who cooperate. They're going to evaluate how companies or individuals accused of wrongdoing cooperate or self-report before they levy fines. It's the latest signal the derivatives regulator is shifting its approach to enforcement. What are your thoughts?
Well, first of all, their old approach to enforcement was absolutely horrible. This new approach can't be worse than whatever they did before. Same with the SEC. That said, you have to realize in the regulatory world, there's so much gray area that it is very difficult. Most firms, I mean, of course, there's criminals out there.
Sure.
But assuming that you're not a fraudster or a criminal, assuming that you're not Sam Bankman-Fried or whatever else, I think most people don't we've been fined for stuff, and we'll go to the mats and say we did absolutely nothing wrong.
Right.
We just don't, the rules are so ridiculous sometimes that they can almost fine you for anything, and you can't fight it. You have to settle.
But you can't afford to fight it, you mean?
Well, you can't fight it because they have unlimited funds. You could just go on forever, and then they just tell you, because they're pretty good at it, just saying, listen, if you settle, we'll settle for this, but if you fight it, we're going for 10x the number. Right. And you can't win. So what do you want to do?
So the CFTC says their new advisory intends to create meaningful incentives for firms to come forward and get cases resolved faster with reasonable
That's the way it should
penalties.
be. And that's the way it should be. And I've actually argued for this for quite some time, that regulatory agencies need to be collaborative.
Mm-hmm.
And it can't be just an environment of
Punitive.
Sure.
Hey, President Trump has ordered a new sheriff probe, I can't say the other word, into U.S. copper imports. I normally wouldn't report this, but this news came out and it did move FCX in overnight trading. So this is why I wanted to talk about it. So is that cool? Can we it's just about copper. So Trump has ordered a probe into new sheriffs on copper imports to rebuild the U.S. production. But again, that sent Freeport McMoran moving around.
Yeah, I mean, copper's up big this morning.
Right, okay.
It's all the way up to 464. We haven't put a copper position on in a while.
Okay.
It's kind of, maybe it's let me call this mid-range-ish for recently.
Okay.
But IB rank is down in the teens, low teens.
Okay.
And it's been in the single digits. So we haven't been in copper now for about a month or two.
Okay.
Simply because the IV rank got down into the single digits.
Right. But now it's in the team. What do you want it to be?
If you watched we did a market measure yesterday talking about IV ranks and where you want to be, and you really need to be over 30. So we're nowhere close to putting a position on in HG, which is copper.
Okay.
And it's pretty liquid. In FCX, which I say is a little bit less liquid, IV rank is 53, and it is on its butt.
Okay. So I might have did something.
Not really. I mean, the stock.
Okay.
The stock's up $1.50 this morning, but this stock has been in a free fall.
Yes.
I mean, it's been absolutely in a free fall. So they were just looking for any reason to buy it.
Yeah, the company produced 1.26 billion of copper in the U.S. Last year. So good job. Keep an eye on those things. Hey, here's something interesting. Mexico's lower house of Congress yesterday approved a constitutional reform to ban the planting of genetically modified corn. I did not know that Mexico buys $5 billion worth of U.S. genetically modified corn each year, mostly for livestock. As tensions escalate between the two countries, President Sheinbaum was like, look, we're not going to take any more of your weirdly modified American corn. Essay.
The best thing that ever happened to Sheinbaum was Trump.
Well, I just want to talk about corn. I just want to talk about.
No, I'm saying he put her on the map.
Yeah, well,
now she's a toughie.
Yeah, well, she's got the balls to back it up. I want to talk about corn and soybeans and wheat, grains, whatever. This is a big deal. Like, it's not nothing.
You can talk about corn all you want. We have a lot of corn positions on.
Okay.
And I say,
corn's had a nice rally this year, but the last week it has sold off of its highs from around 5.15 or so to under 5 at 4.96 right now.
Yeah,
it is up.
Corn has a real corn. Oh, hold on. Corn is it's up 2 cents this morning. Let's take a look. But yeah, you're right. It's had a pretty good sell-off in the last couple of days. We have let's see, in corn, what's our position? We have an April strangle. We were in March. We rolled to April. We have the 480, 510 strangle.
Okay.
It has very little, very little delta. We're a tiny bit short in there right now, stock, but it's up 2 cents today. If it drops 2 cents, we'll be flat.
Okay. Good to know.
You know what? It's really hard to make money in corn.
Did you know Mexico is the birthplace of modern corn?
I did not know that.
Yeah. And they want to keep it pure. They're like, don't you keep your weird corn away from us.
Well, I'm going to tell you something. Corn is hard. /ZC. We've been trading corn since the beginning of this year. Let's see. ZC. We've been trading corn delta neutral since the beginning of this year.
Yeah.
Delta neutral.
And fighting it the whole way.
Fighting it the whole way. We're down money in corn. We've been fighting soybeans the whole year. We are unchanged in soybeans, and we're up in wheat.
Hooray!
But my point is, I'm not taking any delta direction.
Right.
So I'm completely delta neutral.
Right.
Wheat's been a winner, corn's been a loser, soybeans are a scratch. It's not exactly the easiest to trade any of those softs.
Right.
Like it's hard to grind money out of there.
Okay. Sorry. Just kidding.
IB ranks high. That's why I'm in it.
Citadel Securities, your boy Kenny G, is plotting a jump into crypto trading after the embrace of the new administration. Ken Griffin's market-making Citadel Securities is looking to become a liquidity provider for cryptocurrencies. What are your thoughts? And crypto technically entered a bear market correction? Maybe?
I don't believe in that bear market correction bullshit, but
okay, wow, strong words.
I don't believe in it. It's just some ridiculous.
How can you not believe in it? Isn't it just a finite number? Like if it's not, it's like it's fallen a certain.
When you say something like it's entered into a bear market,
but if it's fallen a certain percent, that's
why is that a bear market?
It's quantified because it's quantified. That's the definition. It's like 20%, right?
So I don't know if that is the definition. I mean, crypto's 87. I mean,
Yeah, all right.
Off its all-time high.
I mean, give the girl some leeway here, Sosnoff. I mean, yeah, Vanetta.
Citadel Securities plots jump into crypto. I mean, to be
a liquidity provider. In
obviously,
this case. Okay,
but
yeah.
to be fair,
obviously,
to be fair, they're about 10 years behind every other firm in this space.
Okay.
I mean, I'm glad they're getting in there because they're one of our liquidity providers.
Yeah.
But again, Jump's been there for 10 years.
Sure.
Every firm.
Coinbase, Binance, whatever.
No, we don't use those for liquidity providers.
Okay.
But
yes, but Jump and DRW and stuff like that.
DRW, Jump. There's probably about 15 different market making firms.
Oh, okay.
That we are connected to, that we use different ways. They've been there for a long time.
What are you doing in Coinbase? And let's just talk Bitcoin and crypto in general.
Coinbase, I sold some puts yesterday. I'm a little bit long. Coinbase is up $1 or $2 this morning. It's nothing much. And then, so we're a tiny bit long Coinbase, but not
a lot with this sell-off that coin has had, right?
No. We just sold some puts. We lost a little money in there yesterday. I mean, crypto tried to rally last night, and the futures are actually down a couple hundred this morning after being down almost like 5,000 or 6,000 yesterday, 7,000 at one point. MSTR has been down huge. I mean, I didn't think Coinbase was getting back down to 200. I really didn't. And MSTR, let me see what I have.
What is going on in crypto? Like what? How do you
mean? It's only dropped. I mean, crypto has 100%. Well, not now, but it's basically trades. At a really high volatility.
Sure.
The fact that it pulls back, 15, 20%, who cares? Like, I think crypto needs to pull back to 60,000.
Okay, wow.
Before it's interesting. Or maybe low 70s. It's still 87,000 for Bitcoin.
Okay.
It needs to get hammered. You got to clean out the weak hands. You got to scare the children a little bit. Get this interesting.
Hey, couple of earnings reports from last night. We can't all afford to go to Acid or Bastion, but Kava says people are spending more in their stores, but their sales forecast did miss estimates. But the fast casual chain says that, again, people are spending more. They expect same-sales restaurant sales to rise 6 to 8%, and they continue being watchful about spending on dining out in 2025. I know you were a Kava fan, but now you've kind of soured against.
Well, I sold premium in there yesterday.
Oh, you did? I didn't know you traded this.
I finally got filled just before the close. I sold 2 calls and 1 put.
Okay.
That's right. And even though the stock is up about $3, that's well inside the expected move.
Yeah, I sold 2 calls and 1 put. Expected. I did Friday options, so these are going to be a home run. I sold the 127 call. Stock's like 101, 102. Kava, you know what? Every time I go to Kava, I really want to like Kava. And every time I go there, I'm like, these sauces aren't that good. Their spicy chicken's not that spicy. And I don't get why people don't go to Roti. It's so much better.
Because Roti's out of business.
They're bankrupt. They're not in business.
Because it's known as Grody.
Yeah, it's Rody. Kava CEO Brett Schulman said the company raised prices in January by 1.7%. So good luck with that. Hey, other earnings last night. AMC tops their revenue target as box office hits drive strong demand.
We missed that.
Movies including Moana 2 and Wicked helped draw a strong crowd of moviegoers. Shares of the company rose around 3% in extended trading after it reported a 20% jump in attendance in their theaters. There's Nicole Kidman ads.
It's a $3.29 stock. We didn't miss crap.
Such grumpy boomers today. Such grumpy boomers.
I didn't say anything. I didn't even know it had earnings.
I didn't get to have the 14th best steak in the whole country. I mean, I don't know what his problem is.
But yes, AMC had, I don't know if you had a position in there.
I don't.
Okay. NVIDIA.
Don't worry, you're going to be able to get inside. If the stock is unchanged, you'll be able to do whatever you want.
NVIDIA set to report earnings, and basically the entire market and the world is waiting to see what happens with NVIDIA earnings today. There are going to be some things called into question, like how they're spending, what the threat from DeepSeek is, what the limits on maybe export to China will be, what is the expected move back in NVIDIA, and then Tom, what are you going to do?
In NVIDIA? I'll tell you right now.
No. In General Motors, expected move in NVIDIA is $13.
Ooh, okay, that seems small. What are you going to do?
I don't know yet.
Okay.
I have some short strangles in March and some iron condors, but I don't know if I'll keep those. I might change up my whole position. I don't know what I feel like in NVIDIA. The stock is a lot lower than it was a week ago, so I have to rethink this maybe.
All right. Well, also keeping an eye on things, Supermicro stock was down 10% yesterday. People are like, are they going to make their deadline? And they snuck it in at the last minute. They filed their financials just ahead of the deadline, and they say they had regained compliance. Boom, zam, to the moon. Stock pops 22%. What a wild roller coaster ride this has been. Are they a company? Are they not a company? Are they a fraud? Are they not a fraud? Will they file their?
It's funny the stock jumped just because they filed their just because they filed ahead of the deadline. I don't know what that means. They could have filed crap.
Okay, yeah, that's true. That is 100% true.
But the stock is up $10, from 45
it was
to 55.
Up. It was up yesterday afternoon. Right, exactly. That's what she said. 22%.
Yeah, BDO, the company's auditor, says, in our opinion, the consolidated financial statements present fairly in all material respects the financial position of the company in June of 2024. So green light. The auditor says, yep, good. So I don't know if you were trading in there or not.
Who's the auditor? Do we audit and how?
Yeah, do we cheat them and how? But as NVIDIA goes, all the other chip stocks move. So look out for moves today in NVIDIA and Intel and SMH.
Well, look out for moves tomorrow.
Well, that's what so pedantic today. Hey, keeping it moving. Meta, which you got the idea to do a trade in yesterday because I was back and I did the news on Meta. You're welcome. But Meta's now in talks for a $200 billion AI data center project. This is on the heels of Apple announcing they're going to spend $500 billion for their new AI data center. Microsoft spending $80 billion in just AI, but they're getting rid of.
I'm going to announce that I'm going to spend $6,000 on building my data center for AI.
Yeah.
Do it, Sadnov. Do it.
What did you?
6,000.
What trade did you put on in Meta yesterday? Or what did you adjust? Or what are you doing in Meta?
It's a good question. I don't think anything.
Okay.
I think I got out of Meta.
Okay. Oh, it was a one and done situation.
Meta IV rank of 23.
No Meta positions.
Okay. Alibaba announced they are going to release an open source version of their video and image generating AI model Wan 2.1. The Chinese tech giant said in a post. What are you doing in Baba?
In Baba, Babalicious.
Baba trading 140, Sadnov, up another $6. Been on quite the tear this year. From 80 to 140.
We're going to be a little bit short this morning.
Uh-oh. Okay.
We're going to have to roll our 125 puts up to 135.
Get it together. DeepSeek is also rushing to launch its new AI model as China goes all in. The Chinese startup that triggered $1 trillion+ sell-off in global equities market last month, that was fun, is now back at it again with a cut price, continuing their cut price AI reasoning model. The R2 release is imminent. They'd planned the R2 release in early May, but now they want to release it as soon as possible, again, competing with Baba. But I mean, again, they really did put the global market into a tailspin because no one, was really super, talking about them. But
I like the work they did on their logo. It looks good.
Okay, great.
And I kind of like the whale. Looks a little like unusual whales, but I like the whale.
All right. Hey, Tesla's market value is now tumbled below $1 trillion as its European sales slump. Tesla stock down 8% yesterday, pushing its market cap below $1 trillion for the first time since November. What are you doing in Tesla?
Nothing.
Tesla's up about $5 this morning, 307. But you are correct. Had a little bit of a
We're out of
pop and
Tesla.
vol, a little bit of downward pressure.
You're out of Tesla?
Yes.
Oh, okay.
We are out of Tesla.
Well, how about this? What do you think about this? Lucid CEO is stepping down. CEO Peter Rawlinson has stepped down. The company expects to more than double its vehicle production this year to 20,000 units. You like the looks of that car? That's the Lucid Air.
I really do.
Okay, there you go. LCID bat, not sure what the stock is doing.
Down 10 cents.
Yeah, 20 cents, 241 on the bid, closed at 261, right?
Yes.
Oh, okay. You're right. Yep.
Okay.
It was up like 20 cents last night. Then he stepped down.
Right,
It's down
right
20
at the
cents.
right at the expected move. Right.
Yeah. I mean, I'm going to go to the Lucid dealer.
Okay, you don't know where that is.
My friend Tooch does.
Oh, Tooch, no, Tooch with the hookup, Tooch with the connection. Nice. All right, there you go. So you,
oh man,
Scott
I
Sheridan
wonder
too,
what
because the
Tooch had to
6,
do last night.
the 6 needs a new
poor
car
Toochie.
too. So you take the 6 with you.
Yeah, we're all going to Lucid dealer.
I'll go into Lucid. Hey, Amazon is hosting an Alexa-focused press event in New York City today, considering the company hasn't held a major device press event in nearly 2 years, last one being in September 2023. We're expecting some splashy announcements. TP wrote about Amazon in the Cherry Bomb. But the hardware team is trying to find ways to boost profits through monetized subscriptions, fees, and other add-on services. What are you doing in Amazon?
In Amazon,
It's up about $1, sometimes $2.
yeah, I don't have anything.
Okay. And then what's the IV in there, Bat?
Not bad at 39.
Okay, you said it's got to be over 30. Let's go.
Yep.
Let's go,
You're
Amazon. Hey, I believe we have footage, but a Southwest jet here in Chicago at Midway Airport narrowly avoided colliding with a business jet. Some shocking footage. Around 8:50 a.m., Southwest Flight 2504, a Boeing 737 arriving from Omaha, Nebraska, abruptly pulled up and flew over a Flex Jet Challenger on the runway. I think John has some footage there. The Southwest plane performed a go-around, a maneuver in which it circled and then reapproached the landing.
Have you ever been on a touch and go, on a go around before?
Yes, when we were trying to land in Puerto Rico, and then he had to abort and then go around because there were dogs on the runway.
I happened to be at O'Hare once when there was a plane on the runway.
Yeah.
They do a touch and go and then circle around. Amazing.
Yeah, John, do you have the video? Maybe.
I mean, I know a lot of things have to be scarier on a plane, but man, that's got to be.
Well, you don't know. You have no idea.
Well, you're coming down, and all of a sudden you must feel the thrusters bring you.
Oh
back
yeah,
up,
yeah.
and
You
gotta be
feel
wondering
them.
What the hell is going on? You know they're not doing it because this is going to be fun.
Oh yeah, yeah.
They're doing it for a reason.
504, and you can see in the video from plane spotters here was coming into land on Midway's 3-1 Center. Very busy airport, huge hub for Southwest Airlines. This is what's called a go-around or an aborted landing. You may have experienced this on a commercial flight. Usually pilots do this when the approach is unstable or there's wind or there's wind shear. In this case, this is called a runway incursion, meaning an airplane on the runway where there shouldn't be. That's the private jet, the Challenger 350 there, taxiing out in front of this flight. The crew artfully of the Southwest flight does a go around, pitches up, and climbs back into the air to come back around for us.
Yeah, that was close.
You know what? I've pulled out in front of people too in my car. It's no big deal.
That was kind of close. And that pilot should have his license suspended of that private jet.
Of the flex jet, of the business jet, yeah.
I mean, he didn't even look.
Yeah. Not sure what Love is doing, what Southwest is doing, but what is going on in the skies? Good Lord.
I don't know.
Well, my sister, who is a manager at Love, thinks that the stock is a little undervalued, especially after that maneuver there. She's a little long stock, full disclosure. $30.25 looks unchanged.
Adobe, for the first time ever, is bringing its Photoshop app to cell phones for free in hopes to court younger users. Adobe Mobile will be available on phones for the first time, offering both a free and paid version at the lowest cost yet for the app. It would be $7.99 a month. First released in 1990, Adobe's digital image software changed the game. I suck at Photoshop. I'm not sure when Adobe...
That was such a great campaign.
I'm not sure if Adobe had earnings.
To this day, I still think it's one of the greatest marketing campaigns ever done.
I suck at Photoshop?
Yep. I suck at Photoshop.
Pretty good. I'm not sure what Adobe the stock is doing.
$4.45 and change on the bid brings it up around $2.
Do they have earnings already?
Adobe has earnings coming on March 12th.
Oh, okay. Oh, yeah. So you got some time there. Hey, bucking the trend. Did you know the Egg McMuffin is 50 years old?
No, but I remember the first one.
1975.
No, you do not.
I do.
1975.
I do.
Yeah, okay.
1975.
Yeah.
Yeah, that was the year I was graduating high school.
Okay.
I remember it because when the Egg McMuffin came out, we're all like, this is amazing.
Well, bucking...
Because fast food breakfast didn't exist before the Egg McMuffin.
Sure.
And so it was a very big deal back then.
Well, bucking the trend, McDonald's is vowing no egg surcharges, looking at you, Waffle House, as it preps for $1 Egg McMuffin Day. To mark the 50th anniversary of the breakfast menu cornerstone, customers could purchase an Egg McMuffin as well as a sausage McMuffin through the app for $1. But having worked at McDonald's when I was 15, they're not really real eggs. So I'm not, like we're not cracking eggs back there. They come like in a liquefied form, and you pour it into a mold on the griddle. So,
but how much do you think an Egg McMuffin was in 1975?
A nickel.
I think I remember.
What's your guess?
Go ahead. I'm gonna let you do this.
79 cents.
$1? I think it was 49 cents.
Okay. Wow.
You know what? First of all, it came out in 75, right? I mean, Sadnov says he was there. It was debuted, I think, in California and Santa Barbara.
Congratulations. We had a McDonald's in our town, and I'm telling you, it was about 50 cents for an Egg McMuffin.
What about trading McDonald's year to date? Shares are up 6%.
I haven't made a trade at McDonald's, I don't think, this year.
Okay.
I mean, they hit it hard.
Right.
They whacked it hard down to like 280 something, and I think it's over 300 now.
Yeah, good job. Hey, we talked about this at the big boy table yesterday. At least one NFL team, looking at you, Packers, they're trying to get the tush push banned.
Yes.
A few weeks ago, the Chiefs saw their dreams of being considered the NFL's greatest dynasty crushed under the avalanche of points as the Eagles took a 34-0 lead in the Super Bowl. But the tush push, the tush push has a 92% success rate.
I know. I'm all for getting it banned.
Why?
I hate the tush push.
I am too. As a matter of fact,
Anyone
I remember
could do
you weren't
it.
allowed to do this.
The tush.
I love the tush
It's
push.
bad for. It's too much like rugby. It's bad for football.
Why is it bad for
I just
football?
don't like it.
Anyone else could utilize it.
I understand. I just don't like it.
Okay, well that
I agree with you 100%.
seems petulant. I thought you were a free market kind of guy. Like
I don't like it.
Isn't the tush push?
No.
Just the the pinnacle of free
No.
market? Like, okay.
No.
Packers
I remember in Pop Warner football, Sosnoff, around the time when you were eating your Egg McMuffin for 63 cents, by the way. You weren't allowed to do this. You weren't allowed to advance a
Packers
runner.
president Mark Murphy wants it banned. He says, I'm not a fan of this play. There's no skill involved.
Exactly.
And it's an almost automatic first down on plays of a yard or less.
Not if you're a Buffalo Bill, it's not an automatic first
But
down.
can I
If you're
say
a
why I
Buffalo
hate this
Bill,
play?
you choke.
There are certain plays in football. Like, why can't you put a big, like, fullback in there, pick up the quarterback, and just throw him down? Throw him, like, 2 or 3 feet.
I think that's just against the rule. I don't know.
No, of course, like, you can't, there's certain things you can't do. You can't, like, on defense, you can't jump up on top of a guy to block a kick, but for some crazy reason, you could put 5 guys behind a quarterback and push them forward. Doesn't make any sense.
Yeah.
But you can't
I'm
put.
so angry about
I'm not.
this.
It's just it's a dumb. I mean, it was whoever thought of it. Great, it worked, but it's got to be banned.
Getting to my viral video of the day. I am a sports girly. I do love sports, but football has my heart. I like going to baseball games, but I'm not a big like watcher of baseball on TV. I like to go to games, with my girls, sit in the stands, whatever.
Look at the guys.
Look at the guys. Right. But spring training is commencing right now in the warmer climates. And the Boston Red Sox have a new drill. If I'd known men would be out here in wet pants, I would be going to spring training. Check out the Red Sox drill for sliding. Watch this. It's funny.
Here it is. All right, 2 more.
It's a slip and slide. They are grown men.
Here it is.
Can you slide into base? Do you ever
Yeah,
slide
I
when
don't
you're
know.
playing softball?
Did I ever slide? Yeah, when I was a kid. I don't slide now.
Yeah. Yeah, you break your leg.
Sold with all of my might. There's no side love. You never. Come on, dude. There's a reason why you played quarterback. There's a reason why.
I have to be honest. Okay, there's a little bit of truth to this. Like, I never did a head first slide in my life because I don't like that.
Well, your head is ginormous.
And I never.
It would have been an unfair advantage to your team.
I never really slid much.
Right.
But you got to realize when we used to play, I'm going to be fair now because we didn't have these cushy baseball fields that these kids have today.
Sure.
We had glass in the infield.
Okay.
Bottle caps, glass.
Right, at Larchmont
At the Larchmont Country Club.
We played.
Larchmont, yeah.
We played on a lot of fields that were not as actually safe to slide on, and we also played a lot on concrete.
Gotcha. That makes sense. That does make sense. Well, this has been fun.
I mean, we didn't have a Glencoe environment where, where you had a tractor come out between innings on a 4-year-old game and just make sure the infield dirt was all perfect.
Hey! You must remember Uncle Bry Daddy when he broke his ankle. Remember? Stumbling into second. Don't you remember that when we were playing softball?
Bry Daddy was my infield mate. He played short. I played third. But you know what's really funny? That is the second reference today to him.
To Bry Daddy?
Yes.
No way.
No way.
Yes, Marty gave me a whole Bry Daddy speech early this morning. So I had 2 Bry Daddy speeches. It's only 7:53 in the morning.
That's a rare thing.
Yeah.
Hopefully
that means
he's
you
okay.
gotta call him. That means you gotta reach out. That's what that means. Hey, Bat, what's coming up next?
No, I have dinner with him once a month. They still call me Sadma for dinner, unlike my other set of friends. He's fine. Don't worry. You don't have to worry about him. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with Confirm and Send. Good job, Vanetta.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. Before we do, let's take a quick look at the market. Even the S&P is up 21. They were just up 30 a moment ago. They've been up 20 for most of the night that I saw. NASDAQ up 115, Russell up 7, and the Dow up 54. Volatility only in by 7 cents. What do you think about that, Sosnoff?
Yesterday was weird because yesterday vol was down on the day with the market down pretty much the whole day. But volume was good. It was good trading. I mean, I like what I'm seeing in the markets right now. There's a lot of liquidity in America. I'll just leave it there.
And some two-sided action too, which
and
we
some
haven't
two-sided
seen.
action. Yeah.
Yep. Bonds speaking of two-sided action back near their highs, although they're 117.16 by highs. I mean the recent highs that we haven't seen since December of last year. Bitcoin down around 800 or so to 87 and change. Oil down 12 cents. Gold up $1.70. Some of the earnings plays that we had, I guess the biggest mover, if you want to look at, is Intuit, INTU, right, Sadnov?
Yeah, we got a little lucky in there. We sold puts yesterday, and we also, a viewer on What's Your Assumption got us short some put spreads. We were down money on, but we'll be up today. So it's up like $50.
Up $50 in Intuit. Yep.
I'm Tom Sosnoff. He's Tony Batista. Let's go to Confirm and Send. We're running a little behind.
I'm ready.
It's Wednesday, February 26th. I can't believe we're done with February. March, in like a lion. Crazy. In like a lion. Out like a lamb. That is correct. Would an opening trade ever credit buying power back to me?
Would an opening trade ever credit buying power back to me? Not unless you close it.
Yeah, I think a lot of people get confused about this. If you make an opening trade and let's just say you sell something for like $1, okay? You're going to get that $1 in your account, but you can't use that. That $1 is not going to credit back buying power, right? So the answer is an opening trade is going to always debit buying power. We're not going to let you make trades without putting up the money to carry those trades, no matter what it is. So there's always going to be buying power required to make the trade, even if you receive a credit, whether it's a credit, debit, whatever it is. When you make an opening trade, your account might be credited cash, but that's not cash you can use towards your buying power. It gets a little confusing.
If you sell a spread, if you have $300 in your account, you sell a spread for $3 credit, you don't have $600 to use.
That's right. Right. So you're not going to ever credit. You're not going to get buying power credited back to you for opening a trade.
Now, what if you buy a stock and you buy a put? Then you could get some buying power back as long as you keep that relationship on, but not in a credit spread, correct?
No, none of those. But we'll talk about it later. It gets a little confusing when you're long stock about what the overnight requirement is. Like there's an initial requirement, then there's a maintenance requirement. I don't want to get into that right now. The simple answer to this thing is no. Let's go next slide.
Not for credit spread, for sure.
When doing a ratio spread, where do you put your long option? What delta? And where do you put your short option? This is a little bit subjective, but I have my views. Tony will have his. Go ahead.
I like to start with my long option somewhere around 20-ish deltas and below. I like to go as wide as possible, meaning with my short strike, I like to put it out 10. I prefer it to be more than $5, $10, $15, $20. I prefer to have a plus 80% probability of success. And I prefer to collect at least, $1.50, $2, something like that. I'll move the strikes up and down depending on how bullish I am on the stock. If I'm doing a put ratio spread, but I start around the 20-ish delta.
So I have a very easy answer for you here. You could do what Tony said, which is totally fine. Start around the 20 delta. Figure out wherever you have to go to get a credit. That's fine. If you're doing 1 by 2. The other thing that's really easy to do is just look at whatever the expected move is and put your long option just outside or just at the expected move, and then put your short option wherever it gets you a credit. They're going to come out to basically the exact same.
Basically the same thing.
Yep. But either way, either go to the expected move, and that's where your long option is, and then put your short option, wherever you have to do to get a credit if you sell 2 of them. And then, or you can go to the 20.
I will say the further out in time you go, like if you're closer to 45 days, you'll be able to go a lot further out than if you're closer to 35 days when you're putting this trade on.
Yep. Let's go to the next slide. But either way, they're going to come out virtually the same. Do you use collars on long stock? And if so, do you have a set of mechanics in place for when you adjust them or close them? When we're going to mention collars here, we're talking about you own a stock, and you sell a call and you buy a put. And we call this a cashless collar because wherever you sell the call, you want it to be more than you're paying to buy the put. That's what a cashless collar is.
You want to do it for a small credit. You sell the call at $3, you buy the put at $2.50 kind of thing.
You're looking to do it for a small credit, and it just like it says, it collars your stock, takes the risk off the table. We don't do this, but go ahead.
Go ahead. You go.
No,
you do it. You got it. No, I was going to say it's not something that we do. As a matter of fact, I don't remember the last cashless collar that we put on, so I don't have any mechanics to it. I mean, I think the mechanics is putting it on for a credit. I mean, I think that's the mechanic. And then after that, it's just managing your winner, right? I mean, if the stock doesn't go up, you'll have a lower or a less of a loss. Go ahead.
Yeah, so this is pretty straightforward. We don't use collars. Tony and I don't use. I can't even remember the last time I ever did a collar, but some people like cashless collars. If so, do you have a set of mechanics in place for when to adjust them? 21 DT.
Yeah, I get the cashless collar.
I get it too, but it's not my thing.
And especially if you have long stock, you've had it for a long time, you don't want to sell it, tax ramifications or whatever. I get it.
100%. Let's go.
Sadnov, your bonds just moved about 20 ticks or so, about 10 ticks or so, 1709. They're down 4 right now.
Yeah. This person writes, I'm sure I'm in a similar position as a lot of people with the market over the last week. I have put some spreads on in various underlyings that are slightly in the money or they're getting tested. My account is long term, and I have plenty of liquidity to absorb a near-term P&L hit. Is the best course of action to keep rolling these out in time and wait for a rebound? Obviously, this person has sold some put spreads. Okay? Mm-hmm. When you say I have put some put spreads on, that means they've sold those put spreads because they're being tested.
Yeah.
And the down move.
Yeah.
Is if you're bullish for the long term and you're kind of like, okay, we'll go down every once in a while, and they have plenty of liquidity, is the best course of action to keep rolling these out in time and wait for a rebound?
With reading between the lines and everything you wrote here, long-term account, bullish assumption, yes, I would be looking to do exactly what you said here. I'd be looking to do it for a credit, though. So I'd either be rolling to the same strikes, which a credit could usually be obtained. You might not like the strikes that you have, but you can get a small credit usually, 85% of the time. If you're right at the money or just in the money, you'll be able to get a better credit than if you're deeper in the money. So I have no problem with this. I'm going to reduce some of the delta.
I'm going to disagree a little bit with you. I have no issue. I have no issue with this either. I have no issue with rolling out in time. I think it's the right thing to do. If you're long-term bullish and you like selling put spreads, just keep rolling them out in time. Don't add to the position. But you're going to find that if you're short in the money put spreads it's going to be very difficult to roll those out for a credit. They're going to be small debits. That's all.
I completely disagree with you. They'll be pretty close to the same, if not a small credit. Obviously, it could be a small debit, especially if the stock pays a dividend.
All right. Well, it doesn't matter. I mean,
it's six of one, half dozen of another. It's going to be a small amount of money, and probably not going to like the strikes that you have.
Yeah, I'm just telling you that you're gonna, when you start rolling in the money spreads, it gets, sometimes people don't like paying debits for it, and if you can do it for a credit, it's a no-brainer. If you're going to pay a debit for it, sometimes people don't like that.
It's probably time to close and open a new trade, right?
Or roll it down, whatever it is. But I mean, I'm just telling you that if you're being tested and they're in the money, you're going to be doing it for debits, and that's where it gets a little more challenging because credits are easy. It's easy to roll for credits. It's hard to roll for debits, but sometimes you just got to close your eyes, hold your nose, and roll for a debit. Let's go next slide.
Yep.
After this kind of a down move the last few days, I find myself carrying a lot of positive deltas. Are you doing anything to reduce those deltas or these deltas? Are you adding new bearish positions or recentering existing ones?
If you were watching the show yesterday, we actually did the opposite. I know we like to lean short at market highs, and we really are just a skosh off of the equity market highs. I'm not talking about other products here. We actually kind of reduced short delta and added some long deltas. Now you got out of most of it, but we're just trading right here. I mean, just trading.
Yeah, after a down move we had the last couple of days, we're pretty aggressive, so we're not really long a lot of positive deltas. Actually, we stayed a little bit short, but. Yeah, I was doing stuff to reduce those deltas the whole time. I mean, I was rolling down calls nonstop for the last 3 days. Are we adding new bearish positions? A little bit, but not really. We're recentering existing ones, and we're rolling down calls and recentering more than anything else. We've been pretty aggressive. Let's go next slide. And the last one. This person writes, I have a portfolio margin account, and I'm 100% invested in SGov and BIL. Those are two Treasury ETFs. No transaction fees, pay about 5%, couple ticks under 5%. And this person writes, locking in around 5%. I then use about 40% of the buying power I get back from those products to sell options. What do you think of this approach?
Is it working? If it's working, then I don't have any problem with it. Sosnoff?
Okay, so I have a problem with this, but my problem, as I wrote back to this guy, my problem is not in how you're trading or what you're doing. My problem is that by putting 100% of your money into SGov and BIL. At around 5%.
And you're not locking in 5%. That's what it pays. I mean, but
that's what it pays
for the year.
That's what it pays. But my point is, after you put your money in SGov and BIL, then you borrow against it to make the trades. See, you're not using 40%. You're using 40% of your buying power that's available to you, but you still have to borrow against your own money to do that. So the problem is that you're borrowing back from us at 8% and you're only getting 5%. So you're locking in a 3% loss. So
yeah, I didn't read it. I didn't read into it properly.
So what I wrote back to this person is, listen, let's say it's a PM account. Let's say you have $1 million, just as an example. In this, what you're saying is you're using 400,000 of that, of which you're paying 8% on, only receiving 5%. So you're losing 3%. What I would do in this case is I'd only put 600,000 into SGov and BIL, and then the balance I would use that to trade with, because that makes more sense.
Right. I thought they were holding it for a full year, getting the 5%, and taking 40% of that money that they were making.
No.
On the 5% and putting it.
No, I went back and forth.
You're 100% correct.
I went back and forth with this person a couple of emails because it's hard to understand sometimes, and I get it. But when the buying power Like when you have $1 million, it doesn't matter how much money it is. Let's say it's let's say $100. You put $100 into BILS Gov, you're going to have $93 of buying power from that. But if you use it, you have to pay to use it.
Right.
That's all it is.
Yeah, there's no free ride here.
There's no free ride. Right. Otherwise, everybody would just borrow and get, just think about it. It'd be free money.
Right. Can't work that way.
Yep. That's it.
Good job out of you, Sadnov. Nice catch. Thank you for correcting me. I'm going to take a quick 90-second break and come back. We got more Tasty Live after this with Option Jive.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately has turned into 100 shares of long or short stuff.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
I'm like the Tupac of economists, going out on top. And will I ever really be gone? Say bye to Ben Bernanke. Cry your eyes out past the hanky. Gone from the Fed, but still looks swanky. Bye-bye, Chairman Ben Bernanke. Ben Bernanke, hardly knew ya. Ben Bernanke, glad we're through ya. Sayonara, Mr. Yankee. Closing bell tolls for Ben Bernanke. Now, say hello to Janet Yellen. New blood, maybe start some selling? All around the world like a market Magellan. Hello, Janet Yellen. Janet Yellen, Professor Shady. Janet Yellen, new chair lady. Welcome in the new Miss Yellen. Different from the old, there's no telling. And I'm out, like Tupac, in a peaceful transition.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
It's Option Jive.
Tomas, we are back, my friend. We got time for a little bit of an option jive. Even the S&P is up 21, volatility in by 7 cents. I'm ready for you. Bonds just turned green again.
Okay. Yeah, I'm looking around to see if there's
gold is about $30 off its highs, down 10. That's another mover to the downside.
I'm extremely bearish in gold here. I know you are. I know you might be. Let me take a look at my gold.
Yep.
I got to do this really fast. Gold to GC. Extremely bearish, and I let myself get a little bit caught long here in gold. I think gold can crash. I don't know if you think that, but
I'm bearish. I'm bearish on gold. I don't know if it can crash, but I'm bearish on gold.
Yeah, I'm bearish as hell on gold. Let's see, where's GLD this morning? 267. That's not too bad. Okay. All right, let's do it. This is our first segment of the day, first research segment of the day. We're doing something which is volatility of volatility. There's a symbol for that called VVIX, the volatility on volatility. Let's go to the next slide. We put together a little piece here to talk about volatility on volatility because volatility measures the VIX and the /VX measure the volatility of the S&P 500. But what measures the volatility of volatility? And that's VVIX. John, next slide. So the VIX, often referred to as the fear index, gauges the market's expectation of 30-day volatility for the S&P 500. Like the SPX, the VIX is a cash index and is not tradable directly. But it does have an options market. I mean, the underlying's not tradable unless you use the futures, but there's ETFs that trade volatility and there's options that trade volatility. Traders can engage in VIX options to speculate on the future value. The VIX, which indicates the implied volatility of the SPX, has its own implied volatility called VVIX. That's the volatility of volatility.
Yep.
Let's go to the next slide. So here's a summary of some of the key similarities and differences. I'm not going to read through this whole thing, but you guys can later on if anybody wants to get into the nitty-gritty here. We just provided a crap load of research. What's important here is the VIX is negatively correlated with the SPX about 87% of the time, and the VVIX is positively correlated to the VIX because when volatility goes up in the S&Ps, it's going to go up in volatility itself. That's the main takeaway from this. Let's go to the next slide. So the long-term correlation between the VIX and VVIX stands at 0.87, which should make sense to everybody because those two should be, like I said before, it's about an 87% correlation, inverse correlation between the S&Ps and volatility, meaning when volatility goes up, S&Ps go down. When S&Ps go down, volatility goes up. And which would make sense that the long-term correlation between the volatility of the S&Ps and the volatility of volatility also stands at about 0.87, meaning that they move in the same direction. Let's go next slide. So the VVIX generally ranges between 60 and 200, although we almost never get to 60 and we almost never get to 200. 70+% of the occurrences fall between 85 and 110. Where's the current VVIX, Tony?
Good question. I'll take a look for you right now. VVIX is trading at, it closed at 108.47.
Which would be considered to be, which we would consider to be a little bit on the high side.
A little bit on the high side. I mean, like this year, it's gotten up to around 140-ish, and that was that was actually at the end of last year. I mean, this year it got up to around 120 something and down to around 90 something. So
yeah, rarely do you see volatility in the 70s or 80s, and rarely do you see it much over 120. So
that is correct.
We're in that range, but a little on the high side right now. Let's go next slide. It's good for trading when it's over 100. Both the VIX and VVIX are measures of implied volatility, but VVIX is generally more volatile than the VIX. Sure, because volatility on a more volatile index is going to be higher than volatility on a less volatile index. Currently, both the VIX and VVIX are above their long-term median values due to the recent market pullback, indicating expectations of wider trading ranges and uncertainty in the near term. Of course, and this makes for more opportunity. More uncertainty, more opportunity. You can see here the long-term median average for VVIX is 93, and we are at 108 and change. Let's go to the next slide. So while they are generally positively correlated, they can diverge from their median values in opposite directions. Since last year's election, we've observed a lower VIX, yet a higher VVIX. This suggests that the market sees lower potential volatility for the SPX, but there's increasing uncertainty about this volatility prediction. I think this is actually a good slide. The long-term median VIX is 17. The past 4 months are 15.5. But on the other hand, the VVIX, the long-term median is 93, and the past 4 months have been 99. Doesn't make a hell of a lot of sense, but it is what it is. And I think they described it here very nicely. There is increasing uncertainty about this volatility prediction. Let's go next slide. So the ratio, VVIX to VIX, the ratio is a valuable tool for option traders to assess current risk dynamics. The ratio typically decreases as the VIX increases. Since the election, the median VIX has been 16 with a VVIX VIX ratio of 6.3. Currently, the VIX is trading near 20 while the ratio is 5.4, aligning with the long-term data. Yeah, I'm not sure that we would use this that often, but it is interesting to see. The chart on the right-hand side of the page.
I don't know if it's something I'm going to set up, but yes, it seems
understood.
It's a good to know.
It's a good to know. Let's go to the next slide. Fundamentally, both the VIX and the VVIX provide a straightforward yet simple mathematical representation of option pricing. The VIX tells us the premium levels for the SPX, while the VVIX reflects an option premium for the VIX. The dynamics of the VIX and the VVIX are driven by supply and demand within the option markets for both the SPX and the VIX. Increased buying pressure raises implied volatility and vice versa. Just a game of supply and demand. It always has been. That game's never going to change. Let's go next slide. And some of the takeaways. The VIX and the VVIX both measure implied volatility. VIX is for SPX, VVIX is for VIX options. Unlike most underlying assets and their implied volatilities, the VIX and VVIX are highly correlated in the same direction, 0.87. The VVIX typically ranges between 85 and 110, and it's currently near the high end, but not at extreme levels. And currently a higher VIX results in a lower VVIX VIX ratio. A lot of takeaways in there, but just a good discussion on volatility.
Yeah, very nice one. I think it kind of shows you how you can use some of the different products in volatility because it gets a little bit confusing. So we're going to take a quick 90-second break and come back. We got the opening bell. Going to slap you right in the face right after this. We'll be back in 90 seconds with Tasty Live.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
Stocks go up and stocks go down. Markets move. Beta is a way to measure the movement of a specific stock relative to the market as a whole. In simple terms, it tells us if the underlying has more volatility of price movement relative to the S&P 500. Beta of 1 is our control here, SPY being the underlying. If the beta of a stock is less than 1, it would mean the stock typically moves less than the SPY. If the beta of the stock is greater than 1, it means the stock tends to move with greater volatility than the SPY.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a tastytrade account. Plus, smart tech and a broker who's got your back at tastytrade. Make your move, genius. tastytrade.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts. Some people say it's insane. That's what I do. Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Tomas, we are back, my friend. You know what that means? The opening bell imminent here in about 2.5 minutes. With that being said, even the S&P's only up 18. I say only up 18 because that's about as low as they've been for the whole morning. Sadnoff volatility not contracting this morning. It did go down to 1810 very earlier. Even with the S&P's up 30, it was only down about a nickel or so. It's up 3 cents right now. Volatility kind of signaling that this move might be a little muted, Sadnoff, but the NASDAQ up 82, the weakest of the group, slightly the strongest of the group, but only by a skosh. Russell up 370 and the Dow up 41. Bonds, which were higher by about 8 ticks or so, are only up 2 ticks right now. Bitcoin taking a big fall here, Sadnoff, I think kind of bringing the market down here a little bit, down 2,400 to 86 and change. It was around 88 earlier this morning when we first came on the show. Oil down small 3 cents or so, IV rank of only 29. Gold down 10 off of its highs, today's highs of 29.42 to 29.08. Silver bucking the gold trend up 13 cents. Corn, wheat, and soybeans, kind of a mixed bag of tricks. Let's see what some of these earnings trades are still doing. You have a position in Intuit, so I'll mention it. Intuit 638, Sadnoff. It closed at 555. What do you think about that move to Intuit to the upside?
I think I'm going to lower my bid for my put spread. That's for damn sure right now.
That's a good thing.
I'm lowering my bid for my put spread because that's
Kava 101. It's only up around $2 now. It was up 3 or 4 earlier. You're short 2 calls and 1 put. You might want to lower that one a little bit also.
And on my naked puts that you made fun of me selling yesterday, into it.
Yes.
Oh, they just can't.
Well, I made fun of the price of them. I mean, Lucid down about 15 cents or so. Well, there you go. It doesn't matter anymore because there's your opening bell, Sadnov. As they come spinning at the turn, SMCI up 9. There's your Intuit you got filled on. The bat saved you some more money. More profits for you.
What did I buy it into it?
The 520, 510 put spread for 85 cents. Markets are a dollar wide or more.
Yeah.
In the
You know what's funny about
look at the mid-price.
You know what's funny about that spread is, so somebody wrote in, and the guy wrote to me last night. It was kind of interesting. He said, "Hey, did you see into it?" I said, "Sure." I sold that spread at $1.85, I think. It marked last night at $2.85, and I bought it back on the opening. I put it at 85 bid, and I probably paid too much.
I think it's a fair price. The natural offer is $2.70. The natural bid is a credit of $1.75. Now we all know that these spreads cannot trade at a credit when you're trying to buy them. So it's just wide markets.
Yeah, of course.
Let's see what's going on in the rest of the market here, Sosnoff. As foretold, the Dow is now down 42 cents, Sosnoff. Even the S&Ps are only up 10. Volatility is up by 8 cents. Let's see what some of these movers are.
Well, the Kava trade was the big winner, sir.
Kava only up 74 cents on a pretty large expected move. Yeah, that's got to be a big one for you. 2 calls and 1 put. Yeah, that's a beautiful one. You only paid 24 cents for that.
That's a good one for the good kids.
And are we still good? Are we still good kids, or at least you are?
I'm the good kid. I don't know about you.
Sold that at $1.70. He sold it at $1.70. Paid 24 cents. That's a good one for you, Sadnov.
Yeah.
To the downside, one of the leaders yesterday, Costco down $6. UNH was also up. It's down 4. Apple down 3. Microsoft also down. I just saw it here a moment ago. Let's see where it went. Microsoft down $3.38. Let's see what's Starbucks also down. Sadnov down 91 cents. Let's see what's moving to the upside. Well, CVNA, that's Carvana. Up $8. SMCI up about $8. CRM has earnings after the close today, up $6. Your beloved Baba up $6.
My beloved Baba. Oh.
Intuit, you're buying those puts back at a nickel.
Yeah, I mean, I probably could have held out for 2 cents if I just waited a couple hours. Microsoft, $3.95. You ugly, Microsoft, ugly.
Microsoft is ugly. Google is ugly. Google down another $1 today. Google hasn't had an uptick in forever. Google IV rank of 35, pretty good.
Yeah, there's some SMCI. Let's see what we got here. So they finally sucked the premium out today. They finally took the premium out.
Well, that's what they've been waiting for, this announcement, right?
Yeah, they've been waiting.
$7.
They've been waiting for this ridiculous announcement. I mean, and they didn't take any premium out until today. And
yeah, you can see the IV rank right here down to 42 or so.
Yeah,
after being closer to 80.
Yeah,
all those upside calls are gone.
Gone. All that crap. I finally got my money back in there. Roll out to April, keep a position on, roll out to April, keep your money. Keep your money.
Yep.
All right, what do you see here?
SMCI volatility is going to continue to contract too, in my opinion, Sadnov.
SMCI?
Uh-huh.
Yeah, that's why I rolled it out. I didn't take it off. I just rolled it out.
I think that's good. You went from March to April. I think that's prudent.
Yeah. NVIDIA.
You got a partial in MU.
NVIDIA. Let's see. NVIDIA up 260. Yeah. I don't know. What's your gut say
The
here?
most important day, as Dr. Jim will say, in NVIDIA's history is going to come out today with their earnings this afternoon. NVIDIA up $2.80. Good IB rank of 62 in NVIDIA.
What did
I think what do you think? What do you think in NVIDIA pre-earnings here? Like, we don't know what the market's going to do. Obviously, if the market sells off, you're going to change your opinion on NVIDIA. If it rallies, you might change your opinion. But right now, it almost looks like a two-sided trade, maybe with a little bit of long delta. What are you thinking?
In NVIDIA?
And by two-sided trade, I mean calls and puts.
I'm thinking two-sided trade.
Mm-hmm. Mm-hmm.
I am thinking two-sided trade.
Very good.
Kava down $2, just so you know. So our Kava trade was a really good one. Our Intuit trade was a really good one. And our Lucid trade is 0. So much for sad Lucid. But the earnings plays.
So much sad Lucid is right.
Yeah, the earnings plays have been good. No complaintos.
Earning trades have been real good. Tesla up $4, SMCI up $7.50.
Does any of that really surprise you?
No. Apple down $4 and change. That surprises me.
That's why I don't think that I'm not sure this market's going anywhere fast.
Well, Apple helped the market yesterday. I'm talking about the NASDAQ here. Apple was up yesterday, and now it's down and not helping the market.
Apple does not. Apple does not look good here at all.
It's out of step, Sadnov. It's out of step with the market. It's like doing the can, but it's not lifting its legs properly.
So, what would you do in Apple?
That's kind of a tough one. Apple IB rank of 45 is pretty good. No earnings looming here. Monthly implied volatility in the 27 handle. I think you could look at doing both sides in Apple. What do you?
I think this is an ugly move in Apple. I think you got it. I just recentered. That's what I felt like doing. I just feel like that's the right trade in there. Just recenter, move on.
Why stay in March? Why not go to April?
I will. I'm just I'm 2 days early.
Just too complicated for you to do it all in one trade when I say it to you because you forgot? I understand.
It's a little too complicated. All right, what else do you see here that we got to do? Anything else we got to do?
S&P's catching a little bit of a bid. I don't see anything that you really have to do, Sad. Now, if you got a good P&L, maybe just sit back, relax, and try to enjoy it. Don't screw it up.
Sit back, relax, enjoy the flight?
Yeah, why not?
Yeah, I guess. Okay.
You know what, Sadnaf? I want you to enjoy this. So we got 10 trades coming for you from our viewers on what's your assumption. You're going to find 10 trades. Let's do that. You want to?
Sure.
Volatility in by 12 cents. Even the S&P is up 21. We'll be back in 90 seconds. Take you live.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to tastytrade. See how it pays to have friends? Terms and conditions apply. tastytrade.
America's best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
I found very early on that I was comfortable with having risk, and I liked the benefit of it. I mean, I found trading in a unique way. I loved seeing Wall Street in New York. When I was a young kid, I would drive down to the financial district and see all those guys in suits, very powerful looking. So to me, that was a way of having some sort of social status where I bettered myself. Trading was just a way out of Brooklyn. I go anywhere there's action. Really anything that has high implied volatility. And the IVX 5-day change, that's the volatility of the product's 5-day change, is green. And I show that on my Option Trades Today podcast. You can definitely get the thoughts on why I'm making this trade. Am I leaning a little bit longer? Am I leaning a little bit shorter? All the things that we talk about on the show day in and day out. It's not magic, it's just math. By the nature of the strategies I pick, I'm going to have a high probability of success. And I think my expertise comes from managing those trades, when to take them off, how to maximize the profit on them. I think that's what sets me apart from the novice trader. People are always asking, where can they find my podcast? There it is, son. Look at that, Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow, Option Trades Today, every Tuesday and Thursday, around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon. Every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with this. What's your assumption? Even the S&P is up 12 and change. So I don't know if we talked on the... Okay, we're ready. Hello?
Yeah, I hear you.
Inside day-to-day Sadnov, we talked about that on the close yesterday. It looks like volatility is going to stay bid going into this NVIDIA number here, really not doing much of anything at 18. Even the S&Ps are up 12. They've been oscillating back and forth between here and up 20 or so.
Well, clearly...
Apple down 5.
What the hell was that?
I think that's your Lucid buying your 2.5 puts back at 15 cents. My man.
No, that's the scratch.
Okay, but that's my man.
Well, the funny thing is, Lucid turned out.
You could tell all the people in that fancy steakhouse that you're a trader. You bought those 15-cent puts back. Yeah, my man.
No, Intuit worked. The Kava worked. So this has been a good earnings cycle for me, better than anything else we've done. Today's a little weird. I thought more juice would come back. I felt like they owe me more money, but we'll see.
I tend to agree with you. I think volatility staying bid because NVIDIA is the problem. I think if you're a bull, I think you got to nibble on Apple here. If you think we're going to have an inside day going into the NVIDIA earnings, I don't think you do anything.
No, you do not touch Apple when it's down $5 early. I don't care if you're an Apple bull or not. You stay the hell away. You could touch it tomorrow, but you stay away from today. It's a mine. You don't touch it. It's just waiting to blow up. Tomorrow, go for it. Anyway, it's 8:45.
You say so. Fortune favors the brave.
Yeah, I haven't done anything this morning except make some adjustments and cover the earnings trades from last night. But we're going to make our first opening trades right here. Let's take a look. RTY up 15, S&P's up 13. That's good for the good kids. And that's it. Let's do it. Trades that came into us from viewers all over. Again, I'm Tom Sosnoff. He's Tony Batista. Let's see what we got. These are assumptions. So what is your assumption? Let's see.
What is your assumption?
From Lithuania.
KSS.
All I can say is I follow the greatest TikToker from Lithuania ever.
Okay. All right.
Well, I have never been to Lithuania. I have no doubt in my mind that it's a place that at some point in my life I'm going to go there. But I follow the funniest TikToker ever from Lithuania.
What do they do that's so funny? Like, are they a food person?
No. It's a woman that explains life in Lithuania to American men. It's great.
My God, Sadnoff. Are you on a mail order bride site or something like that?
No. It's just a funny site. We've had, over the years, we've had lots of Lithuanians work for us over the years. And
oh, yes, we did. Some of my happiest moments.
And it just, the similarities are just, I love it. It's so good. Yes. Some of my favorite all-time employees are all Lithuanians. KSS. I have...
Kohl's, Sadnoff, Kohl's. When was the last time you were in a Kohl's?
I don't know, but it was a long time ago.
IV rank of 74 is pretty good. It has earnings March 11th. I don't think you're going to like what you see in Kohl's. It's only a $12 stock.
I thought Kohl's was a deal stock. Is it not anymore?
Obviously, it's trading near its lows to just a few pennies off. They are right on that point. I mean, it is a...
I thought some private equity firms... Speaking of that, by the way, did you see that Dave's Hot Chicken is going to trade?
It's going public?
No. It's going to be bought out.
Oh, by a private equity firm. I didn't know that.
What do you think the number is? Now, you know my love for Dave's Hot Chicken. It's so good.
I don't know how many locations there are.
270.
Wow. Okay.
Started in LA 2017. My son discovered it first. He hit it first.
By waiting in line for 3 hours for a chicken sandwich.
No. Yeah, because Hal and Ray's had too long a line, so that's why Dave's is successful. But how much you think? 270 locations, Dave's all around. In my opinion, one of the best chicken sandwiches I've ever had. Blows away Chick-fil-A. Not even close to Chick-fil-A. Like 100 times better.
Just under $1 billion. I don't know, 300. I would say 800 million.
You're a damn good market maker, Batista. 1 billion.
1 billion?
Yes.
Yeah, I was going. I don't know. Like, what do you make each franchise worth?
I don't know.
400,000.
Now you're gonna get my boy at Fry the Coop a little, like, you can do it.
Oh, he'll get a little fire under
you let
under
it fire.
his belly.
Let it fire, Joe. Go get him, boy. Go get him.
Yeah, I'm rooting for Joe.
I'm rooting for you, dude.
Yep.
KSS Kohl's. I mean, I don't even know what to say about this stock except that it's basically on its butt. If you're going to do anything in here, you're just doing a covered call.
Yeah, exactly. And you're probably doing it with the 12.5 calls. You're not going to go up to the 15.
You're doing it with the 12.5 calls, and you're doing it.
How about this? I'm gonna give you a little bit of pushback here. You certainly can do that. It's got earnings coming in in March 11th. You're going to trade the March option and just sell a naked put? The 12 put?
No, I was going to do the covered call in April.
Call?
I'm going to do the covered call in April small.
Mm-hmm.
You can't trade this big. So I'm just going to do a covered call in April. I'm going to do it at 11:16. That means I bought stock, sold the 12.5 calls, and did it for 11:16.
And that would mean your break-even price is?
What do you mean?
11:16.
Yeah. My break-even price.
I was just trying to add a little color to.
Bought it for 11:16. My break-even's 11:16. Hope it gets called away. Let's go next slide. Peter from Montreal, looking at LMT. Is that Lockheed Martin? Yes.
That would be correct.
Another stock we don't trade very often, and another stock that's just coming off its lows.
Somebody mentioned it. I think it was Vecchio or somebody not too long ago.
I don't know. Russia is not going to agree to a peace plan and is stringing us along. This will result in increased weapons purchased by the EU. Well, Peter, I mean, sure, your guess is as good as any of ours, but the stock's on its butt. I have no problem getting a little bit long it here. I don't care about the fundamental reasons. The earnings are when? April. We're fine. Mm-hmm. So we'll go out to April. The stock is at $4.45. The expected move is $30. That takes us down to, what's it? I say 445 down to 415. So we can do one of two things here. We could sell like the naked 400 puts. They don't trade very much. Or we could sell the 415. No, we could sell the 410, 405 put spread. Now it's too cheap. 400, 410, 400 put spread. Okay, Tony, here's my question for you. The 410, 400 put spread or the 400 puts naked?
Okie dokie.
Which one would you choose?
Between, give it one more time.
The 410, 400 puts, the put spread's trading
Are you going to do this in April? Because earnings are April 22nd,
yeah,
right?
April.
You're going to roll it 2 days. Okay.
April. It's a buck 60, a buck 60 for the put spread. Let's call it 320 for the puts. Which would you do?
I probably do the put spread because I don't trade Lockheed Martin that much.
I don't trade it either.
And I'm looking at the markets here. They're 50 cents wide, 30 cents wide. There's not a lot of volume. I would do the put spread.
It's not good at all. We're going to test the waters and see if we can even tell where this thing is trading. I mean, the stock's down $3 today. It should get filled.
Mm-hmm. Mm-hmm.
Nothing done yet. Let's keep working it. Peter, I'm working it. Ryan from St. Louis. Ryan the Lion. SPX, NVIDIA, ACHR, LUNR, OKLO. What's going on here, Ryan? I think the market's just testing the bottom before rising back up. No floodgates here. May test a few more weeks, though. Oh, Ryan, I'm not just buying this crap down here, all this junka stuff. LUNR, what is that?
I don't know.
Intuitive Machines. No, I don't buy this stuff. OKLO. No. These stocks are already up $3. No. You're not getting me on a day the SPOOs are up 32, Ryan the Lion. I'm passing on this one.
Okie dokie.
I'm not necessarily bearish here, but I'm just not doing anything. By the way, this Lockheed Martin, this sucks.
It's impossible to trade.
Yeah, you can't get filled on a spread, I think. I'm going to do this. Let me try the 400 puts. Let's just see if we could get a fill and just to see if anything trades. Mm-hmm. Oh, yeah, you could fill a naked put. So,
that's a good sign.
Yeah, well, at least I filled it. So let's see, similar order. Oh yeah. Okay. So I sold some puts at 340 and 345. Just small, keep it in there. Lockheed Martin, Peter, we filled. Aaron from Waxhaw, New Hampshire. CL, 45 days. I'm thinking oil staying in a $5 range. I have no oil position on it. It all depends on IV rank in there. Aaron, 27.5. Okay, you're borderline. It was a lot worse than that. It got better. I'm okay with that. $5 range, huh?
Now, if you talk about oil in April, with 49 days to go, the expected move is $5.40. So by saying it's going to be in a $5 range, you're basically saying you expect it to stay inside the expected range with an IV rank of 27.
Yeah.
You're not going out on a limb here.
Yeah, which is good. Aaron.
Yep.
So
Yep.
we're going to go just outside the $5 range, 74 puts. And we'll go, where are we? 63.5. A little put skew, a little 63 puts, 74 calls. Pretty close. 21, 24, $1.90, $1.89. Maybe. I don't think so. $1.88. Take a fill, Phil. $1.88, Ryan. I'm sorry, Aaron. $1.88. Sold the 63.74. It's the first oil trade we've had on in a while. Let's go to the next slide. VRT, Ken from Philly. You know what? We have a VRT position on, believe it or not. Stock's up $8 today. You're bullish. Ooh. Might have came a little late to the party. Well, maybe early. Microsoft and Google saying they're not spending as much on data centers is overblown. VRT. Well, yeah, you're right, Ken, because it's up $8 today. We have on one position in here in March, and we are. Well, let's roll it forward so I can give you a fresh position in April, because we're inverted. I don't like it. Let's see what we can do. 85.320. Delta neutral. 85.320. Oh, that was too easy. I must have messed up. That was way too easy. 85.320. At 6:35. How bad is that? 85.320. Oops, I got the wrong strikes. Oh,
yeah, of course you do.
85.120. I'm sorry, not 320, 120.
That's right.
What'd I say? 635. Mid price is 640. Not as bad as I thought. Okay. Mid price is 637. We did it at 635. I got price improved. Let's go to the next slide. Johnny G from, that's a good name, Johnny G. Johnny G from Foxborough, Massachusetts. Hopefully you're not a Patriots fan. XLF. Actually, if you're from Foxborough, Massachusetts, you have to be a Patriots fan. Otherwise, you'd be thrown out of town. XLF. April. What's he want to do here? No one knows where rates or the economy's going. Well, yeah, that's fair. What do you want to do, dude? He wants to sell a strangle. Sure. Stock's trading for 51 and change. The expected move is 232. So you want to go basically. This is, you don't have a lot of choices here. 49.53 is the only thing you can do. For $1.10 is mid price. You're not going to get filled. Let's say 109. I would not go a penny lower. Take a fill, Phil. All right, Johnny, we put a trade on. We don't trade that often. Let's go next slide. Lyle from Newcastle, Oklahoma. ARM. ARM. Stock ARM Holdings up $4 today. Okay. It's had a nice, it's been wackadoodled here, this stock. I'm raw to option trading, but I just don't see the growth play in ARM if the market's going to turn bearish against growth, then ARM seems like a good hedge. I don't like the fundamentals. The chart's choppy. Could possibly close the gap back to February, which was roughly $70. Yeah, you're a little bit too technical in there for me. But
well, like you said, he's raw to option trading, probably looking more like a stock trader. He's trying to find some angle to push the trigger.
I mean, this stock has basically been in a free fall from 160 to 135. You know, I would have rather bought it than sold it just based on price alone. I don't necessarily hate your play, but but again, I'd rather lean a little long here than a little short, only because it's a tough day to short ARM with NVIDIA earnings coming out after the close. And also it has an IV rank.
I mean, ARM and NVIDIA are not in the same space, but I get your point.
No, but it could move the NASDAQ, you know what I'm saying, in general.
Yeah.
And the other thing about it is that ARM has an IV rank of 23. It's not rich enough for me to sell premium. And
you got to go to directional bias?
I'm not bearish enough in there yet. I mean, if you had hit me yesterday, I would have gone long the stock. Not because it's up $4 today, but just because it has an uptick in 30 handles.
Okay.
Let's go to the next slide. I'm going to pass on this one, Lyle. Sajin from Kentucky, Louisville, Kentucky. PM, is that Philip Morris? I don't know what PM is anymore.
It's not PM margining, Sadnov. You are correct with your assumption. It is Philip Morris International.
I have not traded Philip Morris. You're bullish. This stock has been hyperbolic. This has stock, unlike ARM, this stock hasn't had a downtick.
Started the year at 115. It's now closer to 160. 157 and change, basically unchanged today.
Every guy in his 20s or 30s is using them to boost productivity. What are we using?
I just don't know. They're going to get into AI, Sosnoff. That's what they're going to do. The AI cigarettes and stuff. It'd be good.
Check the office and see how many Zenners you have. And that's how many Deltas we'll go with. This stock is at the top end of its range. I never, ever, ever trade this stock. I don't think we've traded this stock in a couple of years. Did we miss earnings? Yeah, there's no earnings, nothing.
Did we miss earnings? No, earnings are April 22nd. Seriously, don't try to always make me look bad like it's my job to get the earnings. You got a computer. You look at the earnings too.
Man, nothing trades in Procter & Gamble.
You mean Philip Morris?
Oh, Philip Morris, right.
You almost made me curse. I was this close to it. Nothing trades here in Palmolive. 50 years you've been doing this. You remember when an Egg McMuffin was 63 cents.
49.
You can't know what PM is. It's been around forever.
49 cents. Man, there's nothing in this is
PM Sadnov. PM is the owner of Zims, and that's what all the kids are doing. That's the problem. That's why it's parabolic.
Oh, I don't know what Zims is.
They own ZYN.
I know, but what is it?
It's those packets that the kids put in their mouth to get nicotine instead of smoking.
That sounds really healthy.
I mean, come on. Even what's his name is doing it. Your boy from the I can't remember. Kennedy. Thank you.
Who? All
Kennedy,
right.
It was seen putting a couple in.
60, 65, 60, 160, 165, 1/2, call ratio spread, 7-cent credit. Put it on the board. I don't love it, but I'm not bullish in there. I put a position
so
on
omnidirectional, neutral-ish trade with a small 7-cent credit. You're really just hoping the stock slowly goes up to 160.
Yeah, you're kissing your sister with that trade.
It settles in at 163 at expiration.
Let's go to the next slide. Oh my God, where are we getting these trades from, boys, girls? WBD. I don't know what this one is. Do you?
WBD.
Warner Brothers.
I'm trying to come up with an acronym. That's not appropriate, but appropriate. I couldn't do it. Sorry.
Warner Brothers.
You are correct. Warner Brothers Discovery, Sosnoff. That's why there's a D there.
Got it. I have never traded this stock. What are you, neutral? This is a tough
Warner
one.
Brothers going sideways for the year, but it's at the higher end of its range if you look at a full calendar year. And by calendar year, I mean from 2024 to now.
This is a $10 stock.
It's got earnings coming, Sadnoff, in two days or so. I think you abstain.
I don't think I could trade this one. It's a $10 stock with no option volume at all in April.
Actually, earnings are tomorrow. I apologize.
I know. I got nothing. The markets are not. They're not tradable. Let's go next slide.
The markets are actually tight, 3-4 cents wide, but there's nothing to do. I agree with you there. Expected move is 80 cents. You got to have an opinion in the stock.
Goldie from Israel, looking at AMAT, bullish. April 17th, 50 days, IVR near historical, IV 40, after earnings on supporting, slightly bullish. I think we have an AMAT position. AMAT, let's see. AMAT. No. We have Apple, Adobe, Affirm, AMD, Amazon, and AVGO, but no AMAT. It's a $167 stock with a 30 IV rank. It's borderline. After earnings, it's a post-earnings trade. This stock is absolutely at or near its butt. I like it down here because it's more interesting to me. It is up $2.50 today, so you just got to have a little fun with it. 190, 150. Gives you a little 20 delta on both sides. 20 delta on both.
More delta neutral than the bullish trade that they had. I hope they put the bullish trade on yesterday.
Yeah. Well, it's up a couple. Well, I just went in to sell some premium and they just took all the option prices down.
Oh, yeah. It's a conspiracy theory against your big trade.
Oh, yeah. Okay. I hope you're happy. 519 on the.
That's right. They even price improved you with putts.
The 519 on the strangle. I sold the 150, 190. It's a tiny little bit bullish. Let's go next slide. Oh, that's it. Okay. Well, we did 7 out of 10. In KSS, we did a covered call. We don't usually trade covered calls, but that was calls. In Lockheed Martin, we sold a naked put. SPX, we passed. In CL, we sold a strangle in the futures options. In VRT, we sold an April strangle. In XLF, we sold a April strangle, $2 around the money. ARM, we passed. Philip Morris, we did a call ratio spread above the market. Warner Brothers Discovery, we passed. And AMAT, we sold a post-earnings April strangle. 7 out of 10.
Good job out of you. Good job out of my viewers for bringing us those trades. Really do appreciate it. We're going to take a quick 90-second break. We're going to bring you the Skinny on Options Math with my man Jacob immediately following these messages. We'll be back in 90 seconds. Even the S&P's up 35, so I'm not back near their highs.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand. Just no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. All right, Katie, what is the Widowmaker?
The Widowmaker can be any spread that is volatile that might dink you if you're on the wrong side of it, but at tastylive, the Widowmaker historically has referred to a spread in natural gas futures and the seasonality of injection season and the storage around that. So it's typically a calendar spread that has the propensity to move between the March and April natural gas futures contracts.
What does tendies mean?
Tendies refers to ordering chicken nuggets at a restaurant when you're out watching the game with your boys or your girls, but tendies in the options trading world or the trading world refers to profits that you are taking on a position.
What is an offer? So the offer price is the price at which you can buy an option at, the bid being the price to sell at. It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Talk about stuff. Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live. That's right. With this man, Jacob, the skinny on options math. How are you, my friend?
Good morning, Tony. I am very well. I don't know about Chicago, but here spring is showing its face.
It was here in Chicago too. It was 50 degrees yesterday. Is the official start of spring. It's going to be 40 and raining today, but spring started yesterday.
Yeah, I mean the rains count as spring.
Yep, agreed.
Yeah. Oh no, that's nice. It's nice to be out, around the corner and get out of the dark days.
That is correct.
Yeah. I've what's up, Tom?
I love the start of spring.
Yeah. As does everyone who lives in a temperate climate.
I can start planting my flowers. You know, Tony, what I do in the spring.
Oh yeah, you haven't touched a hoe in about 25 years, if at all.
Yeah, you're laying your plants in there, Tom. You're getting the all stretched up, pulling seedlings out of the greenhouse.
Sure.
No. Well, I've got something fresh for everyone today. It's something that occurred to me recently, and then I worked out a little bit of the algebra behind it, and I enjoyed it on a mathematical level, and I think it has some use for people on their trading. And it's this thing where usually we run into the problem where you can't sum deltas between underlyings, so we use beta-weighted deltas so that we can have something to compare them with. And then, of course, gamma is even less summable between underlyings and we often say, oh, well, we'll use theta since they're correlated and thetas are summable between underlyings. So we'll sort of estimate our total gamma vulnerability by using thetas. But you can alternatively still use beta, but you wind up needing to use 2 copies of beta. And so you get beta squared gamma. And we'll run through today sort of how that comes up and where that comes from and get an idea about, you've got your portfolio and you've got your total beta weighted deltas in the upper corner of the platform. But if the market moves, what's going to happen to you? What's going to happen to that? And we'll get a nice approximation for it. So let's go. Backing up to classic reviews, we'll start with delta. Right, this is the most fundamental piece that we're working with today, and delta is just, and we're not going to use any of the Black-Scholes formulas today. This works this is model free, right? This is just the idea that the values of options change when the values of the underlying change. We don't need to worry about the specifics of that today. Right, the delta is the change in the value of the option with respect to the underlying. So this gives you sort of a first order estimate for if you had a $1 move in the underlying, what the change in the position's price is going to be. And just so people at home can always remember that long calls are going to have positive deltas, long puts will have negative deltas, and then the short options will always have the negative of the Greeks from the long options. And just for, finding rough values at the money, it's going to be about plus or minus 50s. Deep in the money, deep out of the money are going to be plus or minus 100s, right? And that's just because it's 100 shares per option contract. That's where the 50 and the 100 are coming from. And then deep out of the monies are going to be about 0. And, if you're an efficient market hypothesis believer and you don't have strong directional assumptions, you sort of think that the prices of the underlyings is about correct given what's going forward, you might want to use delta neutral strategies, right? That way you can profit without having to necessarily be directionally correct. Right, you don't have to assume that the stock is going up or going down. You can make trades even without doing that. Right. So that gets to our deltas, but then we've got this wrinkle coming up, which is our gamma. Let's go forward one. Yeah. Okay. The only way that delta is constant, though, is if the position is just shares or, synthetic shares. If you're long a call and short a put, that's going to move exactly like shares, even if it didn't cost you the same as shares to enter into. And so we can take another derivative, and we can look at the rate of change of delta with respect to the underlying price, which is the same as the second derivative of the position value with respect to underlying price, right? So it's got this change in the underlying squared in the denominator. That's the key feature here. So that long options, and remember, long options are always going to be positive gamma, and short options are always negative gamma. Highest values are near the money. Away from the money is lower, and it doesn't matter if they're calls or puts. That's important. So that if we're premium sellers, we tend to wind up with negative gammas. That's just sort of the inevitable feature of being positive theta, is to be negative gamma. But like deltas, gammas are not directly summable between underlyings because they've got this change in the underlying and the denominator. And you can't add things together if they have different denominators. This is one of those rules they teach you when you're in elementary school. You have to get things to have like denominators before you can add them up. And even though derivatives are not really fractions, they're a lot like fractions, and we can treat them as such for these purposes. And so what we're going to do is we're going to try to manipulate them until we get the denominators to align so we can sum things. So we'll do it first for delta, which is a pretty classic beta delta thing, and then we'll work into our gammas. Let's go forward one. So the key here is that we need something to transform our change an underlying of the denominator into something that's uniform across underlyings, and we're going to use beta. Right? Beta is the correlation between an underlying and the market overall, weighted by its own volatility. Right? On the right are 2 equivalent definitions for it, but it's the slope of the line of best fit between the returns of the underlying and the returns of the market. Right? So usually we use SPY. So it's that slope of that line there, right? If these dots are all points where, the market went up by a certain amount and the underlying went up by a certain amount, and that puts a dot on our graph over here, then we draw the line of best fit. Then beta is the slope of that line, and that gives you an idea about if the market moves $1, how much do you expect the underlying to move? And once we have that idea, then we can start chaining things together. So let's go forward when we'll get to beta deltas, which we're hopefully pretty comfortable with. I think Tom and Tony use them every day. That's what's going forward one. Right. So beta serves as approximation for the change in the underlying given a $1 move in the market, and delta tells us the effect of the change in the underlying on our positions. So when we multiply the deltas by beta, that gives us an approximation for the change in the value of our positions given a $1 move in the market. Typically, this is known as beta-weighted deltas, though because it's just beta times delta, I like to write it as just beta delta. That's pretty standard. And this is a key metric for gauging your overall exposure to market moves, right? And because the denominators match, because the denominators always change in SPY, you can add them up all of a sudden. So you can look at your total across all of your positions and all of your underlyings and come up with your total portfolio beta delta or beta weighted deltas. And then if you don't have an assumption, you might want to have that be totally neutral. So we can go forward one real quick. Right. So if we're avoiding directional assumptions, even if we're like not perfectly delta neutral in each individual underlying, the total, right, the systemic risk in the capital asset pricing model would be your beta risk, your total beta delta across your whole portfolio. And so if we try to have that be neutral, because we don't have a strong assumption that the whole market's going up or the whole market's going down, right? We're not really a bear or a bull, we're a human. We want to have that be relatively close to neutral, but how sensitive are we to changes in the market, right? Because none of the deltas are constant, thanks to gamma. So if we have a $1 move in a SPY, then we get an underlying ABC has a beta value of beta ABC. Then we'd get a approximately beta ABC dollar move in the underlying. And now if we had gamma, right, and while we can be delta neutral, we can't really be gamma neutral if we're trading options. It's not a function. It's not a real approach. And so what we're going to wind up with is we're going to have some sort of total gamma in ABC, right? Gamma ABC. And now if we had beta dollars moved in ABC, then we'd pick up beta times gamma additional deltas in ABC. And so that if we have beta gamma ABC deltas, that means that we have beta squared gamma beta weighted deltas. And this is what makes me happy because it has a beta squared in it, which is weird, but is exactly what you need in order to rectify the denominator situation and make these things summable. And so now we can look at we can go to takeaways and look at the sort of total effect on a portfolio, because we're going to need to add up this term across all of our underlyings. But so the general idea is that it can be tricky to avoid directional assumptions, right? And we can start off being delta neutral, but option strategies will going to gain exposure as the underlyings move. On a portfolio-wide level, you can try to neutralize your beta deltas, but this is tricky. Because if you have a $1 move in the SPY, your beta deltas are going to change by, and then it's going to be this sum across all the underlyings you're trading in of beta squared times gamma for each of the underlyings that you're trading in. Realistically, especially because the platform is not going to show you this statistic readily, the best way to keep your total beta weighted deltas under control is to stay active and attentive to your portfolio. But if you're willing to do this arithmetic yourself, a little bit of algebra, you can do the math to help you be prepared and know how sensitive you are to a move in the market. And therefore you can say, oh, my total beta squared gammas, right? Your sum of your beta squared gammas isn't that big, right? You don't have that much exposure. Probably your thetas aren't that big. Then a move in the market isn't going to make you pick up that much beta weighted delta. On the other hand, if you have a lot of thetas, you probably have a pretty big beta squared gammas across your underlyings. And then you're going to have to worry that if you do get a big move in the market, you're going to wind up with a big change in your portfolio's exposure. So either you have to stay attentive, check in every day, but if you're willing to do the algebra, you can have at least a rough idea about how exposed you are to a market change to shift your total portfolio exposure. I like that. How about you, Tom? How are you doing?
Thomas, what do you think of this?
Anytime you get into beta squared, I have trouble because I'm reading this, keeping control of beta. I agree with everything that's on this takeaway page, but I have a lot of problems when you start talking about squaring different things? Because I don't really know what that means. I can't.
Let's go. We can go back one, and the square is a little bit more apparent. And the idea here is that there's two betas coming into it. The first beta is that when the SPY moves $1, your underlying moves beta dollars.
Got it.
But if your underlying moves beta dollars, then you've picked up beta gamma deltas in that underlying. And if you picked up beta gamma deltas in that underlying, and you picked up beta times gamma beta weighted deltas for your portfolio.
I think trying to figure this out is going to make me into a worse trader. it's
well, at least you said worse trader, not better trader or ruin my trading. Worse trader is probably the way to go.
Yeah, well, I only have so much capacity, Jacob, as you know, as Tony can as Tony and I can both attest to. We only have so much capacity, and we have to start. You know, I don't want to take the math stuff out of this, because I definitely work too hard to make it a point not to focus on the macro stuff when we're talking about our positions and our risk. But I also need to understand, like, I get all the beta risks and I get how they all line up together. But when you start talking about beta squared, it gets a little harder for me.
It's because it's the second order thing, right? The delta is the first order derivative of value with respect to price. Gamma is the second order derivative. So in order to compare your deltas together, you need to multiply them by beta. In order to add your gammas together, you need to multiply them by beta squared.
Of course, everybody knows that.
Well, they sure do now.
No, that was good. It was good. It's just hard.
All right, my friend. Good job out of you. That's what I have to say. But I'm going to take a quick 90-second break with even the S&P's up 45. Apple only down 250, Sadnoff, as foretold. We'll take a quick 90-second break. We'll bring in Mr. Scott Sheridan. That's right. My disciples made money. I don't know about yours, Sadnoff. We got Mr. Scott Sheridan coming in next, followed by Johnny Trades. Thank you, my friend.
Yeah, you can use Nikki's young brain to.
It looks like it's down
330 now. It was down 250 a minute ago.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
Do you remember Gilligan's Island?
It's near and dear to my heart. Every day I come home from school. What do you want to know? Let's sit right down and hear a tale of a fateful trip that started from a tropic port aboard this tiny ship. 5-6 passengers set sail that day for a 3-hour tour. See, you didn't think you were gonna kill Gilligan's Island.
3-hour tour. Which one was Bob Denver? was it this here? Which one was Bob Denver?
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move. Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
My name is Tom Preston, and I am the Chief Market Strategist here at tastylive. So every day I write the cherry bomb that goes out to our tastylive customers. And usually it talks about some potential trade idea that people might want to consider with a little bit of context about why a person might be interested in doing it. But the main reason that I push these things out is to get people to think in terms of volatility, liquidity, and probability in their financial decisions. What I want people to learn is an effective way to approach the financial markets and to use options to their fullest advantage.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
What happens when two titans of trading come together to harness the power of their prowess? Yes, let's watch these two dominate this popper shop. Wait a minute, I thought these guys were traders, not contractors. They're putting up a lot of bricks. Well, lucky for us, Tom and TP are better at writing than they are almost anything else. Subscribe to tastylive Cherry Bomb to get piping hot takes on the market delivered right to your inbox. Sign up at tastylive.com/newsletters.
Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
I'm just trying to. I'm
Tomas, we are back.
I'm literally just trying to help you guys to become so you become more worldly. I mean, I can't. There's only so much I can do with you.
I can't wait to bring this guy into the room. Tasty Trade World Headquarters, your friend of mine, the very popular Mr. Scott Sheridan from the Scott Sheridan Studios. Take it away.
Okay, we just got to get to the punchline. Did you and your date, Tooch, have Bananas Foster or Cherry's Jubilee tableside to finish off this meal that you two share?
That's not a dessert like two guys share. Like, I can have a piece of cheesecake with you. You know, we slice it down the middle.
Yeah.
I take a little, you take a little. But to go in there with our spoons together and, you know, like lick the Cherry Jubilee and go in, I mean, that you guys, this Tooch must have really put out last night. That's not a guy's dessert to share.
We need to cover the simple fact that this arguably is the greatest steakhouse you've ever been to, and you can't tell us what kind of steak you had.
It has a fancy name. I don't know what it was called.
Oh, you had the petite filet, and you don't want to admit it. 100%.
I'm with Tony.
Petite filet for the lady?
2 petite fillets.
No, you can't. You can't order an individual steak there. They don't have individual steaks.
Oh, it's a liberal restaurant.
Okay, now you're going to force me to reach out to some people that I know have been there and get clarification for what type.
It's just they're big steaks. They're for sharing.
Just big. They just lop off a chunk of meat and just bring it out.
Sounds like your story's falling apart. Seriously,
It is.
Are you broadcasting from a hotel room right now? Is Tucci there? Bring him on the show.
Start to finish, what was his meal? Nice bread basket. I'm assuming something. What kind of salads do you have? Or appetizers? What'd you have?
No bread basket. No appetizer. I mean, no bread basket. They don't give you anything. Had some sardines. Some sardines.
What?
Sardines that were flown in.
I'm really, you know what? Wait a minute.
You slept alone last night. I take it back. Never mind.
I'm really beginning to worry about you. Go ahead. Sardines. Like my dad. May he rest in peace.
Start out with
sardines. If you're not born in the 20s, maybe the 30s, I don't think you're allowed to eat sardines straight up. But go ahead.
These are the ones that are flown in. They're still flapping their wings when you're eating them.
Oh, yeah, flown in from Mexico.
King Oscars, double packed oil.
They're flown in from the Gulf of Spain, whatever.
Oh, my God. Okay.
Oh, no, sorry. It's the Gulf of America now, but it used to be the Gulf of Spain.
Go ahead. See, don't offend these two, okay?
Okay. Start off with some sardines.
That's offensive. Those are fighting words.
Then we had a beautiful crab that was flown in from the Mediterranean that was also...
Hey, just to listen. Sardines come from California and Oregon.
They can come whenever they want.
Maybe the Mediterranean.
I saw this plane. I saw the plane ticket. They showed me the plane ticket.
It had a first-class seat. Go ahead. So then you had crab. Where's the crab flown in from? Where?
From the Mediterranean. Beautiful.
I mean, you get sardines from all over the place, but they probably came. Who the freak knows?
Okay.
Whatever.
Anyway,
so
some kind of crab that I never even seen or heard of before. It was beautiful. They put it in rice. One of the best dishes I've had.
Crab?
That's an appetizer.
Yeah, it's like a little.
Wait a minute, some kind of crab. They found a new crab.
Crab like risotto or something. It was amazing. And then
crab risotto. Oh my God.
Like a Spanish crab risotto, and then a steak with mushrooms. That's it. The whole dinner.
How do I do that with the 6?
What?
And wait, what was the name? What was the name of this place? So everybody knows.
No, you don't have to get the mushrooms.
Okay, because she can, but she prefers not. But she's clear on the mushroom.
The mushrooms were a side dish.
What's the name of this restaurant?
I'm not telling you. The mushrooms were a side dish.
Come on, the people want to know. What's the name of the place?
No, I'm not telling you. I'm just saying it was a great meal. I don't want to ruin it by having a bunch of losers like the people that you hang out with show up there.
Oh my God.
Wow.
Does it say meat but not defined? I can't see that. What does it say?
I can't read it.
Do they have Dover sole?
They do have Dover sole, but nobody eats fish.
Oh, is that your risotto? What is that? Oh, it's creamy spinach. I can't see it.
Oh, those sardines. I don't know what that is.
Sardines.
Yeah, those are the sardines I had.
Those exact ones. They took a picture, put it on the website, and then sent them.
Everybody gets the same one.
Yeah, amazing.
Gotcha. Okay. If I talked about going to this place the way you just talked about it, the abuse that I would take for being a bougie SOB. Okay? Tony, Nikki, anybody?
Here, scroll down. I'll show you.
Yeah, it's called Asador Bastain.
Hey,
I'm looking at it right now. The menu here, Sadnov.
Scroll down.
I got to take out a mortgage.
That's it.
Oh, I can't find the steak I had.
Wait a minute. Cocktails are $68?
No, it's not.
A 60s beefeater
Steaks
gin,
are on the right.
chartreuse.
Oh, that's the steak I had, Scott. The one on the top.
It's an Ashkenazi. What does that say?
I don't know.
$105 per pound, it says. $105 per pound.
And what'd you get, 5 pounds?
Yeah, $105 per pound, is crazy. Steaks are expensive. So that's a lot.
Yeah, thanks, Joe Biden.
Yeah, but that's not the price that you said this was. What else did you guys have that you're not sharing with us?
You got to scroll up. I'll show you.
Did you let your date go crazy with the wine list?
I must have.
He knew what he was getting. Oh yeah, every couple of months they meet up.
I can't find the other thing I had.
The
sardines are flown in with their service dog.
Right? Did Tooch say it was amazing, or is this just you?
No, he said it was probably one of the best meals he's ever had.
All right, gotta go. How hard to get a reservation? Probably not hard. What'd you go?
I don't
5
think you
o'clock
can get in.
yesterday. Was it what? Seriously, did you go at 5 o'clock?
Yes.
4:30. What time do they open?
5 o'clock.
5 o'clock. He went at 5 o'clock.
Okay, 5 o'clock's not bad. They're still setting up. So, but this is the same people as Andros, right?
Yeah.
Yeah, no problem. Piece of cake. We got in there. The 6 has that covered. No problem. No problem.
Man.
All right. Now I got something to look forward to. Oh my God.
I can't do the tricks that Tucci can do, so I'll never get there.
See, and now I'm telling you, you can't go to oh my God, what's the steakhouse in the St. Regis? Miru and
I've never been
steakhouse.
there.
You can't go. You can't go now because you're going to tell me, oh my God, you're so public if you eat there when you could go to.
I know. It's bad.
That's the door bastion, right?
Like the last time I went to Joe's, unedible.
That's not true. You said one of the steaks was not edible. You said the other one was great. Okay.
Oh, then I went
You're
again
forgetting.
after that. I went again after that.
my
Had
God.
the beef Wellington. Gross.
The beef Wellington was gross.
I told you it was gross. Yeah. I know you highly recommended it, but it was gross.
It's actually a viewer who highly recommends it, who I am agreeing with. It was excellent when I had it. And I'm not a filet person, but I can do it in beef Wellington. Sorry you didn't like it. I think they know who you are and they spit in your food. I'm guessing. They overcook it. They spit in it. Something. You did something bad at Joe's. What'd you do?
I didn't do anything
Tell
bad.
us where the bad Joe touched you.
You did. You did something at Joe's. Tony, were you bullish today? Strong and quite strong? You had a good call the other day.
We did have a good call. I'll give Sadnov credit too. I didn't think we'd rally this far because volatility wasn't really contracting, but it has now. And Apple was down $5. It looked like I wanted to have an inside day. It's a little bit more bullish than I expected.
Tom, what are you doing in NVIDIA today?
I don't know yet.
Don't tell me you have not you haven't decided.
You guys have been waiting for the doomsday for weeks now. I mean, come on. You got your one down day.
I've been on a pretty good. I've been on a good earnings roll.
We bought it yesterday.
I've been on a good earnings roll. I've been
to screw
good.
it up now with NVIDIA.
I don't know what to do.
Moving NVIDIA.
They're killing premium in NVIDIA today, murdering it.
12. It's $12.
Yeah, they took
$12.
They took almost it was 13 yesterday.
That's
true. Scoop of chocolate. Nikki, how bullish are you? I love to hear the other side.
I mean, here. This is what I do. When markets go up, you trim long delta. When markets go down, you add long delta. Like that's what trading is, right? So you gotta, you buy.
Hold it, Nick. I gotta stop.
So
I gotta get my notepad out. Hold on. I gotta get my notes. My notes on my phone.
This segment is going to be notes from a person who started trading post 2008. Okay.
Oh my God.
So post 2008 notes. We only go up.
In recent history.
We always go up. Yeah. We only go up. We always go up. Yeah, that one.
Yeah. The days in the 90s were much more relevant to now trading. You're right. When nobody could trade, when you guys were the only game in town. So here, listen, I have to listen to Tom every day when we go up 1%. Oh, it's a bubble. We're going to crash. This is way, way too overpriced. When we go down 1%, it's not a buying opportunity. The disparity is 1% up, too expensive. You need a 40% down move to buy them. So
Thomas, let me interject here.
You want a fresh one?
Could you explain?
He's my problem. He's my problem.
Yeah, you got to keep your You
want a fresh one?
Could you
Scott
explain
should be going
to him,
like this right now.
Right? Could you explain to him pot odds so he understands what this is? Risk reward.
Oh God, pot odds. Oh, okay. Pot odds are pot odds to Tom are how he's positioned. Nothing about it is pot odds.
All right. Well, let's come back and review this.
The kids are uppity. Spoo's up 50.
Yeah.
The kids get uppity.
Yeah, they are.
Spoo's down 50. They're crying in the corner. Spoo's up 50. They're uppity.
Aren't you supposed to buy when things go down a little bit?
I did. I actually bought some things yesterday.
Okay, all right. I like that.
Dinner, dessert. Okay. Sardines. Forgot.
Oh, that ain't fair. That ain't fair. That ain't fair.
Yeah, that's really unfair.
That ain't fair.
All right. Should we get to some business so you can get to the real talent? Because I'm assuming that we have Johnny Trace today.
Sure.
We do.
There we go. All right. Top 15 symbols going through the system. First 40 minutes today, no broad-based indices or futures. Tom for you, number 15, Baba at an 84 for everybody else. NVIDIA at a 62. And please, I assume by later in the day, you're going to tell everybody what you're doing because inquiring minds would like to know. Tesla at a 61, Apple at a 41, SMCI at a 41. PLTR to 73, Amazon at a 36, Meta at a 22, Microsoft at a 36, APP at a 111, Google with an L at a 32, iBit at a 19, Kava at a 46, MSTR at a 33, AMD at a 29, and number 15 for Tom, Baba at an 84, rounding out the next 10. Tim's at a 61, General Motors at a 42, Hood at a 48, GLD at a 44, TLT at a 39, TQQQ at a 46, FSLR at a 44, and INTU at a 33.
Well, that speaks volume for us.
All right, Tom, you're preoccupied.
No, I'm not preoccupied. I'm fine.
No, I did not order the petite filet. I'm fine. Thank you,
I gotta
Mr.
go look
Sheridan.
at this menu. I just have to go look at this menu. A steak that I don't know what type of meat it was.
Well, it's Japanese. I looked it up a little bit. It's Japanese steak, I believe. And I'm glad the sardines didn't have to swim all the way to the restaurant, that they were flown in, because they would have been very tough if they had to swim all the way there. So that's good.
I thought it was an Argentinian spot. Is it not? I thought it was an Argentinian steakhouse, no?
Oh, you're so young, so raw.
Yes,
so raw.
Pinky up. I do not frequent such high establishments as me lord.
Well, that akaushi is Japanese.
Ah, yes.
I'm being told by my Taiwanese sources.
Yeah, well, your Taiwanese sources don't know. It's Japanese, but raised in New Jersey.
That was Akasaka.
There's only 3 of them in the whole U.S., and they had their stomachs rubbed every day while they were growing up, just so you know.
Much like a Sosnoff back in the day. That is correct.
Exactly.
That is correct.
Hey, Nikki, I'm leaving this to you. You can play some music.
They had their stomachs massaged every day, Tony.
Play some music. Hey, that ain't my stomach. That's right, Johnny Trains with Nick Batista, my offspring. How are you, son?
I'm great. How are you guys doing?
Doing well, thank you. What do you got for us today?
I'm a little under the weather. I decided to stay home, I don't want to get everybody sick like Tom does, so I figured I'd stay back a little bit,
Yeah.
Thomas, you ready for some trades?
I think you did the right thing.
I'm ready.
All right, I got a couple trade ideas for you. First one, Amazon. You got a position?
No.
Stock's gotten killed over the last couple weeks. We've gone from, let's call it 240 down to 210-ish in about a month. I think you buy a little dip here. I did a call diagonal spread, April, March.
Ooh, what do you think, Sadnoff?
No, I mean, here's my problem with it. A, stock's up $4 already today. B.
Yeah, but down 40.
I know. I don't care.
In the last month. Yeah.
Stock's up $4 today. I don't buy call diagonals when the stock's up 40. The other problem with it is I'm rolling on Friday, so I don't want to put on a March position.
All right, Johnny.
I mean, I'm opening.
Sadnov, you are taking a lot of abuse today. I'm not going to lie.
I thought the Johnny brings the trades. I thought you were the trader. I'm the Johnny, but it's okay.
It's okay. I mean, it's not like a horrible trade. I'm just not interested. You should have done this trade.
You're just a Johnny.
This was a trade that needed to be done yesterday.
Well, Johnny trades is on Wednesday, but we caught it kind of at the lower part today, so it's okay. All right.
Okay.
It's fair.
What else you got?
All right. Boo. Tesla, you got a position?
No.
Volatility has continued to expand there. You got an IV rank at 65. Stock's been hovering around this 300 mark pretty much all day today. Up 5, down 5, kind of chopping around here. I think it might be an interesting spot. Sell a little putty spread. I did the 275, 265 put spread in April. I did it at $2.83. Just kind of, a little neutral to bullish. 1/3 the width of the strikes.
Tesla has a good IV rank. As a trade, which one? What strikes you do?
I did the 275, 265, so you're around like a 30-ish delta for the short options.
For what
if you
price?
Want to do an iron condor, you could do an iron condor.
For what price?
I did it at 283. It's marked at $3 and change right now.
Yeah, it's trading around 330. I don't love Tesla here because I think the stock could go into an absolute free fall, but I think the stock could trade back to where it was post pre-election, which I think was around 280, 285. But it might be a good spot to just nibble.
Yeah.
Under 300. I mean, I don't think anybody thought the stock was getting under 300 just a couple of weeks ago. That's for sure.
You got to sell the put spread, or maybe you sell some naked putties if you got it in you. You sell the 250s at $8.
I'm not that bullish on Tesla. I mean, you might think it's bouncing, but I mean, have a little position on in there. I'm fine, but I'm not that bullish.
How bullish is a 1 standard deviation put? That's not bullish. That's neutral.
Yeah, I agree. I'm trying to sell it right now.
Yeah.
I'm on the offer. I'm on the offer. They haven't taken it from me. I'm on the bid. I'm sorry. They haven't bid. They haven't. I'm trying.
All right. I won't push you.
I'm in there.
This is a safe space.
I mean, I thought I would be filled at 330. I'm not. I'm at 325 now. I'm not filled.
Oof. All right, NVIDIA.
Now you're making Daddy angry.
NVIDIA. This is my last one going into earnings. So, obviously a huge part of the markets. I think it's about 7% of SPY, 8% of the NASDAQ, and like 19 or 20% of SMH, which I also have a position on. And I'm going with sideways movement. So I'm doing March. I'm selling the 110, 100 put spread, the 150, 160 call spread. I did it at $2.77. I think it's an interesting play for just some sideways action here. You got $20 a room to either side. You're in March. So if there's something crazy that happens, you got a little more time to be right. But, this is 2 times the expected move. Iron condor for about 1/3 the width of the strike.
So great minds. By the way, I got filled in Tesla. Great minds at 325. Great minds think alike. I put this trade on in NVIDIA last week. It's currently trading at 268. I sold it at 350. These exact same strikes. 110, 100, 150, 160. I sold it about a week ago at 350. And it's currently, like I said, under 270. I'm going to leave it. It's not going to be my full earnings trade, but I have this one on pretty big, and I'm up about, just about 80 cents on it already.
Nice. Yeah, I think that's the play. I mean, even if you get a big move, greater than expected move, you would expect volatility to contract here pretty significantly.
Yeah. I like this trade. It's not going to be it's kind of my March trade. I'm going to put a Feb trade on tonight. I'm kind of waiting till, I think I want to wait till like the last half hour or last 45 minutes.
And by Feb trade, you're talking about the weekly options, correct? With 2 days to go, more than likely. Is that what you're thinking about?
Yeah.
You could do something like a crab trade setup might be interesting for you, buying like a call or a put if you want to do that side in April, and then selling like 2 or 3 of the weeklies, because there's a lot of calls skew in the weeklies.
Yeah, I think I'm going to be selling a lot of calls in there. I think I'm going to be selling upside calls in there and trying to just squeeze out a little juice. That's kind of my game plan right now. But I'm going to leave this Iron Condor on in March, but I'm going to sell February premium. I'm thinking 2 calls and 1 put, but I could be off, or maybe just 2 Maybe just a bunch of calls.
Okay.
Okie dokie. Well, good job. Good job out of you, Nick. Tom, nice of you to play along. We're going to take a quick 90-second break and come back. We got more Tasty Live after this from the SIBO Sosnoff. That's right. Liz and Jenny next. You want to see some old friends and wave to them? Watch the show then. You'll get to see the SPX pit and all its glory. We'll be back in 90 seconds. Let's take the live. Peace.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building. The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back? But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
to the Wednesday edition of the Liz and Jenny Show. My name is Liz Deerking, the beautiful brunette. To the left of me is Jenny Andrews, and it's our favorite day of the week at the SIBO.
Live from the SIBO. We love it here. Honestly, it was pretty busy when we got here this morning. SPOOs are up 47.50, so
48, 47.75.
And even though everyone's waiting for NVIDIA earnings later today, there's still a lot going on.
They were loud this morning, and to be honest with you, a lot of times when there's nothing going on, we get talked to. We didn't get a lot of conversation today, which means that there is stuff going on.
No, you're right. You're right. Nobody stopped by to talk to us.
No one.
That means they're busy. They are busy. So it's nice to see. I'm actually happy. Well, so
and
mine says
you can actually hear like a rumble. Sometimes when we're here, you don't hear the rumble.
And I guess I am updating. I was going to say mine says 49, and that said 47. But yeah, 49, almost at
49.50.
Are we going to? Because according to Frank the Great, he says the sooner the better, the earlier the better. Are we going to do the Jajun?
Heck yeah, we
Who's
are.
At 49, are we going to do the Jajun
and
trade?
Let's pop into the platform if we can, please, ladies and gentlemen. Let's take a look at this beautiful platform, SPX. Earlier the better. So we're up 47,
48.
Jajun, you go to the 0 DTE. We're going to be the 600, 605. Okay.
Okay. 600, 605. We're almost right back to where we were 2 days ago. I think we were 595, 600.
Yes, we were. So I put it in. I'm going to pop.
Yeah, 2 days ago, 595, 600.
Filled.
Today, 600, 605. So
we're filled 295. I'm going to immediately put in an order for 345.
Okay. All we did was buy a $5 wide debit spread in the 0 DTE SPX. Paid what'd you pay for it?
$290.
$290. Ooh, hefty today.
Got to go big or go home.
So we're trying to sell that for $340. We will see what happens. SPOO's up 49. We need them up about 55.
SPOO's at 51. Come on.
We need about 55, 56. But I can see it. I feel like we're going to hit up 60 today.
I'm not going to lie to you. Yesterday, I didn't think there was a snowball's chance in hell that we were going to get hit on that Jajun trade. Because we were down 75. We put down, we were down 50. Then we went down 75. At one point, Jenny, and I know your dad was over, so you didn't get to see the market. At 2:30, the SPOOs were only down 8.
Really?
And then at 3 o'clock, they were back down 30.
I will say, I did see.
Frank, your nephew's walking by.
Oh, there was Jeff. Jeff, come say hi. I did see some of it because when we were in the studio, when we were after the show, I remember I gave myself a certified badass card because I sold puts in coin. But when I got home,
she retracted her certified badass card because she closed it.
When I got home, I closed those. I closed those because the market had rallied. When we were on the show, it was down 70, 60, and when we got home from the ride, it was not down too much because those puts. It's interesting when you're selling the bigger, heftier credit puts. They can come in quickly. So I sold it for $11, bought it back for $9.
On a car ride.
And when I put it on, I really thought I would keep that whole 11.
I know you did. No chance. Like I said yesterday, no chance. But that's okay.
But whatever. It's tough. But if I were selling a higher probability put further out of the money, I probably would have sold it for $4 and took it off for $2 at 50%. So take $2 out of the $11 in a day.
What is coin doing today? Let's pop into the platform.
Let's take a look.
Because IBIT is down, which means Bitcoin's
Coin's up $3.
Okay.
So,
Ooh.
Oh, and today they're only 7. So I had sold the March 200 puts for $11.50 yesterday. They're only $7.50 now.
How do you feel about the 217? No, it's $4. Never mind.
There isn't a 217 further out in time.
No, I was just going to go very near term 217 calendar.
A 2-day, 9-day?
Yeah.
But coin whips around too much.
No, but it was too expensive too.
Oh, was it?
Yeah. Want to see it? I'll show you.
$9?
It was like it's like $5. If it was cheapos, it was $3.98.
Yeah, and coin moves so much.
Yeah.
It's hard. It's hard. So crypto's down.
Yeah, IBIT is down. Let's look at Bitcoin.
Let's take a look.
When I looked at crypto this morning,
IBIT's down 42 cents, but it's up to at least 49. It was as low as I guess maybe this is close to the low. Yesterday's low, 48 and change.
Yeah,
I don't know.
It's close to the low right now.
It's about a dollar off its low.
Yeah, you didn't get an abandoned baby. That's for darn sure.
No. I don't know what's going to happen with crypto, but at least the market is bouncing back. We'll see what happens this afternoon.
This is crazy because NVIDIA, all eyes are going to be on it.
I know. I know.
I mean,
We'll
they were
see.
talking this morning about how much. We know it's 7% of the S&P 500. It's a bigger percentage of the NASDAQ. It's a bigger percentage of Smash. It's percentages of everything.
Okay, so now yesterday we were told it's 7% of S&P, but today the boys said it's 7% of the NASDAQ. So, and I thought they said it was 12% of the S&P. So
It's
I
big.
don't.
Like, it's
I
a
don't know
percentage.
exactly.
It was a huge percentage of Smash, too.
Because whatever
Take a
the
look
boys
at
said
Smash.
today was different than we heard yesterday. But again, it's a big part. It's a big part of SMH. It's a big part of everything, really.
Yeah.
It's going to move everything, or it's going to be a nothing burger, and it's not going to move at all, and nothing's going to move. And Vol's going to just get sucked out, and VIX will go from 20 to 16 overnight.
Let's take a look at the NVIDIA volatility right now. So it's only got a 56 rank. So it's got 100% implied volatility in the 2-day, and you can see that right there. And then it goes down to about 70 with a 56%.
And VIX is only 18 right now. So VIX dropped a couple points in just a day.
Yeah, it did.
So we'll see. We'll see if NVIDIA's expected move is not that big.
Well, I can take a look at it. It's 1169.
So it's not that big. Yesterday, I want to say it was maybe 13 or so, a little more. We had higher vol everywhere.
Yeah, you did have higher vol. I mean, it's up $6 today. It's up 5% today. It's up half of its move.
I know.
Dun, dun, dun.
What's going to happen? I feel like when we've got something big that everyone's been talking about and everyone's been waiting for, that's when it ends up being really not much.
Well, that's a lot of times when it's priced to perfection. There's so many players in this game. Look at this. 83 million with an M have already traded, and it's 10 o'clock.
Well, and part of it's its price point, $133. It's available for everyone to play.
Well, after that reverse split, right?
Right. So at this price point, there are tons of players in the game, and when you have so many on both sides, you're right. It can be priced to perfection.
Yeah.
If you feel that way, are you going to get crazy?
No, I said I think it could be priced to perfection. I have, and I've been running with, and I'm actually surprisingly still up on it, the diagonal.
Oh, in NVIDIA. Now, I do not.
And I can't throw the towel in yet, because if it goes up and I was like, oh, I think it's going to be a nothing burger, that is when you will see me go ham.
I don't have anything in NVIDIA right now, but even though I think it might be a nothing burger, I'm not going to take the chance and sell the strangle in there.
Well, yeah, and we have a little bit of a discussion about that for our, I think it's What's Your Assumption? Oh, no, because we have it in Twitter. Now, today, Jenny, so we've got a lot of stuff to do. It is 10:07, so we're only 7 minutes into the fastest hour of the day.
Who's at 49?
We got a steak up from Jacob. A study
from Steakup.
A study from Jacob. So we have a study from Jacob. We have What's Your Assumption? We've got the biggest earnings of the year.
And we're working the close of our Jajun trade. So we will see what happens today. Can we get Spoos up 55 before the end of the show? I hope so.
I think so. All we need is one little hop.
That's it. Okay, so we are taking live tweets. If you want to send us a tweet, include the hashtag LIZJNY. If you're on YouTube, Frank the Great and you have a question, Frank the Great can share it with us on Twitter.
Yep.
What's that other platform Vanetta is going to teach us?
Blue Horizon.
Blue Horizon.
I don't know. I'm making that up. I have no idea what it is.
It was blue something.
Blue something.
It was blue something, like blue sky. Blue sky. Blue something. So anyway, Vanetta was talking about teaching us how to use blue.
Using both. We like Twitter.
We'll see.
Old dog, new tricks doesn't really work that way, so we'll
take feedback. We'll take feedback. If you want to switch to Blue Sky, Blue Horizon, whatever, we'll take feedback.
So let's pop into Jacob's study.
Sure.
Let's do that first, don't you think?
You're looking at me like I'm going to pull it up. You're in charge.
No, I know, but I was like, you're in charge of the schedule. So does that work for right now?
Yeah. 10:08. It's time, Liz. Pop into Jacob's study. Let's go.
Surviving losses in 0 DTEs. We happen to be sitting in the SPX pit right now. They are behind us. 50% of the volume is done in 0 DTEs.
And after the week we've had, this study is pretty fitting.
This study is very eye-opening. I'm also going to give a prequel to this. We do this study. We get it first from Jacob. We love Jacob. We love you. And then the boys will do it again tomorrow. So this is a little bit of a heavier one. It will be done twice, and you might even get 2 different takeaways.
Well, and you might want to watch it a third, fourth, or fifth time, and these studies will be in the archive. So, especially tomorrow. Tomorrow, Tom and Tony will do this. This is a market measure sponsored by the SIBO. These slides will be linked to tomorrow's market measure. So tomorrow when they do the market measure on surviving 0 DTE losses.
Do they not link these to ours?
I hate to say we don't get as much as the boys.
We don't get them linked.
I don't know. I really don't know. I really don't know.
We're gonna have to talk to somebody about that.
They might be linked to our show, but I'm gonna say
no.
Probably
I'm gonna
not.
Say no too.
Probably not.
I think
So
you're right.
tomorrow there'll be a market measures. The boys are gonna go over this again, and honestly, this needs 2 times.
Oh, it took me. I read it 6, and I still think I need 4 more.
I had to keep rubbing my eyes, I'm not sure. So we'll see. But tomorrow's market measure, if you go to that in the archives, these slides will be linked, so then you could go over them.
You are right. It's so funny because I was with our friend Kathleen, and she's like, "So I'm following you on Instagram. Did they not promote your show?" I was like, "Nope, it's just the guy in the beret."
No, not us. It's okay. We've been around for 14 years, so I think
we know the drill.
I think we're gonna make it, Liz.
I gave us 3 months 14 years ago. Remember that?
So when we started, our contract was 3 months.
Yeah,
3 months, and then after we proved ourselves, after the 3 months, our contract was
a year,
1 year, and I thought.
A year and 3 months of my life doing the show.
Yeah,
doing the show with that knucklehead. Sure.
I think I could do this for a year. I think we can do it, Liz. And so 14 years later, it'll be 2025 is going to be the 14-year anniversary.
Yeah. That's a long time.
Who knew?
Yeah, it's a long time. I want to say that's longer than I've done anything because I was only on the trading floor for 12 years.
It's longer than I've done anything, except, our marriages are longer. That's it.
All right, let's pop into the study. Surviving losses in zero DTEs.
Okay, here we go.
Now, the extreme liquidity of zero DTE options markets provide active, attentive traders with fresh opportunities every day.
Now, and when I say pay attention to every word as we read it,
pay attention
to every word. But this high-speed trading style can be hard to stick with if you get a string of losers, especially when you are just starting out and there is no way to know if now is a lucky time to get started. And we've seen that with many trades. We show the results over a year, 2 years, but you never know if you're going to jump in and it's going to be a bad streak.
Correct. If you start with a max loss and the first time you do it, that doesn't mean the trade doesn't work. It means you entered at a weird time.
We've been doing those earning diagonals. If you started last week, no good.
You think we're nuts. It's true.
Yeah.
It's true. Okay, while controlling position size and defining risk is the only foolproof way to ensure survival, can capturing profits help control our exposure to clusters of losses as we look to sell zero DTE premium every day?
Okay.
I didn't know where the question mark was. That was a very long sentence.
I liked your emphasis in the middle. Very good. Very good.
Thank you. Okay.
Okay, the study.
There's actually 2 slides of the study, so this is where we say pay attention.
Right. This is where you really have to know what's going on. Using just shy. Now he's changed. Now he's gone to just shy of 2 years. Just shy of 2 years of data in zero DTE SPX options collected every 10 minutes.
We examined selling strangles at the market open at a variety of initial deltas, from 50 to 20, so different deltas.
50 deltas to 20 deltas, all different deltas, looking at selling strangles at market open, okay?
That sentence will be collected in the after. It's corrected soon.
Paired with managing winners at a variety of profit targets from 15% to 50% of the initial credit.
Okay. And all the trades were assumed to exercise at mid-price and losers were held through expiration. Okay, there we go. Now here's more in depth of the study.
This is where it gets a little tricky, okay? The study. For each date in the data set, we found the furthest into the red that a zero DTE trader who began trading mechanically on that day ever reached their start to worst.
Okay.
So imagine you're starting and then you start to worst, right?
Yeah, so each date in the data set, they found the worst, which I think is fascinating. So they found the furthest into the red, so the furthest loss that you're going to find.
Right. Okay.
Okay, that is how much initial capital. Okay, so that is how much initial capital, in addition to the necessary buying power to place a trade. Keep in mind, that's a lot of buying power in these, would have been required so that they would not have been wiped out. So we know margin can change intraday.
So when they talk about wiped out, when you're out of money,
tapped out.
You're tapped out. You go negative. Your account goes negative. Where it's this trade needed $100,000 to put it on, and the trade goes against you so much, and you're
that's called a margin call.
And then you go beyond where you've got your negative. Yeah, and where he talks about wiping out an account, which is why with these big trades, I always like to define my risk.
We can't afford, need to. We can't afford it in this account, and I'm not going to lie to you. We can't afford it in our accounts.
Even with that little, I was going to say little, even with that CL strangle, the weekly CL strangle, we're defining our risk. We put that on this morning.
And that's peace of mind, not...
Yeah, right. I guess even
CL
for these,
you can afford. We can afford it.
But I like to define peace of mind, even for these. I like to define my risk. Okay.
Okay, so did you read that? That is the initial buying power. Okay, in addition. Okay, so what they asked for. Now here we go. For what percentage of starting days was the first win enough that they were never in the red? Positive start to worst.
Okay, and I'm going to read that again. For what percentage of starting days was the first win enough that they were never in the red? Positive start to worst.
I don't feel like we read that.
Then, how much was required for an average trader starting to survive the mean across starting days? So the mean that you had to have, how much was required for an average trader starting to survive the mean across starting days? And I believe that's in addition to the buying power of the trade.
And then how much was required for those starting on the unluckiest 5% of the days?
The downside C-bar.
Okay.
So the downside C-bar is if you're starting on the unluckiest day.
Okay.
Moving on to the results. Surviving losses in 0 DT. So we're looking at straddles, 15% profit target, 25, 35, 45, 50, and no management.
Okay, so yeah, and those are all the same. So I'm just going to go 4, 5, and 6 are here's straddles. I'm going to go backwards too. Straddles, 40 delta strangles, 30 delta strangles. So each of these have the same, you can see that. That's up in that corner.
Yes.
That's all they're doing. The things are the same. So the never negative frequency of never getting in the red is that first column. So 27%, like you're looking, the 15% profit target is your never negative, which is the highest across
never negative
all
frequency.
the boards except for the 30 delta strangle.
Yes, okay. And then you've got your mean start to worst. And then you have your C-bar.
Okay,
C-bar.
So, and the mean start to worst is what additional needs to be put in.
Additional buying power to have in addition to the buying power of the strategy.
Correct. Okay.
And I believe the C-bar is on your worst day, looking at your worst, if you start on the worst day.
Yes. So like we're going to start with straddles. The never negative frequency is actually new to me because I didn't see that in the trade. The never negative frequency is something that we can actually put, because this makes sense to me. 15% profit target on a straddle, your never negative frequency is higher than it should be the rest of the time with no management.
And again, Jacob dives deep into these studies, right?
Oh, he is super smart.
University.
I can't wait to see the boys do this without reading it 3 times. Can't wait. I'm gonna get some popcorn, maybe a glass of prosecco in the morning.
Like Jacob's so smart. He went to University of Chicago, amazing university. It's right here in the city. Beautiful, beautiful buildings. And my daughter was looking up, because she wants to do pre-law, she was looking up like best pre-law programs. And,
I'm sure.
And that pops up, and I was like, he don't really belong there.
Can you go toe-to-toe with Jacob? I don't think so.
Have you met Jacob?
It's pretty funny. Okay, but let's keep going through this. The mean to worst, if I look at that one, this makes a little bit of sense to me too, because your profit target, it should be, if you're no management, $45,000 on top of the hundreds of thousands of dollars.
Yeah, the no management. Yeah. That's where things get ugly. When you decide, hey, I'm not going to manage these, and you don't have defined risk, that's when things can get ugly. And so we know that. We've seen that. Our studies all show manage these trades.
Manage for sure. Usually, I would be surprised if it wasn't always managed at 15% profit target, because I'm going to go to the next one.
Even 25.
Yeah, I mean, between those two, 20% is good. Okay, so then you kind of look at the same thing. You're in 40 delta strangles now. The never negative frequency is still the highest the earlier you manage.
15%, 25% management.
Your mean to worst is actually worse at 15 than it is at 25, which is surprising, but I don't consider those too big of a differential.
Now, when we talk about 15 to 25, I know that sounds like a low profit target, but we looked at first straddles and now 40 deltas. So when you're selling the straddle or you're selling the 40 delta, you are collecting so much that 15% is still a lot. 25% is a lot. Yeah. As we move to 30 delta, 20 delta, maybe we're going to be moving to a higher profit target, higher than 15%.
Yes.
But you've got to keep in mind the delta that we're looking at.
And they are. Even the lower deltas, you're collecting a lot. This is SPX. It's a huge, big, monstrous animal.
But basically, no management, that you need to have a lot more money in your account than the buying power. A lot more money
honestly, I don't care how much money you have in your account. No management is dumb.
But I don't want to. But we do have viewers that do trade these SPX and they leave them.
Well, they me.
Liz thinks you're dumb.
No, I was going to say, you've got so much capital to burn.
I'm pretty sure
You've got so much capital to burn. If you're doing these,
I'm pretty
you're
sure
not defining your risk.
the CL strangle guy leaves them.
But that is $10,000. This is $190,000 plus 40.
Plus 74,000 on your worst day. Yes. And that's just extra capital lying around.
That's just laying around.
All right, next. 30 Delta strangles. So
it switches between the 15 to the 25 and the never negative, which is fine.
Yeah.
Your worst to mean is actually worse than 25. I actually think 20 is the sweet spot.
I think if someone wants 25%, some people have. I take profits early. You take profits early. I mean, look at me. I got out of my coin put in a few hours. I didn't wait. I didn't even wait for 50%. I didn't wait for 25%.
No.
You were close. Such a baby. I washed my jacket. Otherwise, I would have had a million badass cards in my pocket.
Do you have badass cards in your pocket usually?
Yes.
Oh.
They're on my dresser.
Put some more in there. Okay. Now I went to 20. Now you'll see this is the last of them too. You're never negative at the 20 Delta strangles. Seems to be a little bit more consistent over your profit target. That's
even the 45% profit target doesn't look terrible.
No, it doesn't. It doesn't. They're not bad.
Yeah, the mean to worst is about the same. The C bar is about the same.
Yeah.
So when you're going further out and selling this 20 Delta, that's when people will try to take more profit.
We always say your bar is lower in your percentage of profit target the narrower your deltas are.
That's why when we're looking at straddles or big lizards, we usually look for 10, 15%.
Right.
Then you start selling 30 Delta, 20 Deltas, then you're looking for more.
The lower you collect, the more percentage you have to take in. Okay, so let's go to the takeaways.
All right, repeated, unmanaged, zero DTE trading involved exposure to a level of risk most would find unacceptable.
That's what I said.
It's unacceptable.
Unacceptable. While stop losses are the most obvious form of trade management to control downside, capturing winners helped persistent traders by reducing the exposure to serial losses.
The closer to the money we look to sell zero DTE strangles, the more effective and important aggressive profit capturing was.
And that's very eloquently said. We said the closer you are to the at the monies, take it off quicker.
Liz said, if you don't take it off quicker, you're dumb.
Yeah, should I use unacceptable?
It's unacceptable.
Unacceptable. Okay. These results were specific to strangles sold at market open. If you choose to pair extreme liquidity of zero DTE markets with a directional assumption of other creative option strategies, make sure to say active, attentive, and small.
Excellent point.
I'm going to give
that. up 51.75.
I'm actually going to give the. We do not.
All right. We finished this, and actually, I think it went better than we thought.
Well, I'm telling you, here's what I learned. This is what I learned while we were doing this live on air. The never negative frequency.
You just skipped over that when we were going over this?
In the train, I did. I was like, well, never negative frequency.
Negative.
I couldn't wrap my brain around mean, start to worst.
Yeah. Well, and I couldn't wrap my brain around those numbers. No management, $74,000 in the C-bar, or what? $80,000. There were some crazy numbers here.
Yelling numbers. I was like, where are you getting this $45,000?
You need go to SPX right now if you can.
I will. I can do it
if you can, go to SPX right now.
And then, granted, it's going to be more later. More earlier.
And you look at the zero DTE.
So let me give you a 40 Delta.
Oh, well, we have our...
we have the Jajunin.
We have a Jajunin.
Yeah, but
go to 1 day. Go to 1 day.
Oh. No, you can go to zero. I mean, it's just going to be more. The 1 day's too much because the NVIDIA's built in.
Well, but I'm just saying, I just wanted to see buying power. Like, because I don't want to cross over the Jajun trade, but if you go to the 1 day and sell the straddle, it's using 120,000. So if I started this on the worst day, I would need, in addition to that 120,000, another $80,000 in buying power if I weren't going to manage the trade. That was like starting on the worst day.
Yes.
In order to not wipe out my account.
So you need 118, which is always similar. It's 40 Delta strength.
So I need like $200,000. I'm going to put this on, and I end up putting it on the worst day that we've had in the last 2 years.
Don't make me say it. Unacceptable.
So takeaway is, I think, define your risk. We've looked at this. You can buy cheap wings just to have the peace of mind.
So my takeaway is, and I like that he's doing this because you're right, and we're kind of kidding, you know that. We have lots of viewers that have lots of capital, and this might be something that they're doing.
Maybe.
But we know from my nugget size account, if you're in the zero DTE, you can define your risk to an acceptable level of every person's account size.
And if you're doing these, if you're doing naked strangles and SPX, something tells me you're watching this. So we have lots of people who like stop loss losses in these, or they believe in stop losses in these. So something tells me they're not just like selling naked strangles and SPX
and then go
closing,
snorkeling.
closing their laptop and leaving for the day.
No.
They're watching it. So, and you know, with the stop loss order, because we don't really use them, because we're just watching if we need to. With the stop loss order, let's say you sold it for $20 and you put in a stop loss order to buy it back for $40. Once it triggers 40,
it's a market order.
And once it triggers the $40, it just buys it at market. So you could be buying it at 50.
Yeah.
That's what I don't like about the stop loss.
So just keep that in mind. We don't usually use stop loss orders.
Not if you're watching.
I don't even know how to put one in.
I don't even need that. Somebody emailed me about bracket orders, and they're like, can't believe you don't do bracket orders.
We do not.
Don't even know how to do it.
We're old school traders, though. We're kind of like these guys. You know, I prefer to leg in, and I prefer to leg out sometimes.
Trading is just, it's gotten so fancy over the years.
Fancy dancy. These crazy kids and their fancy stuff. Okay, so is there anything we need to manage in this account before I jump into Twitter?
All right, I'm gonna glance at profit, P&L, like profit percent, and it doesn't look like it, other than
things are coming in the right direction.
Yeah, I don't really see anything.
We switched Etsy to a put spread, and it's fine. No, I don't see anything.
40-50 put spread.
Honestly, it's weird. You would think on a day like today we could be managing winners. We're just getting back what we gave back yesterday.
I put in a GTC for that. So I will say some of those losing diagonals we just sold put spreads, and so anything we make in those put spreads is just making money back that we lost on that earnings trade.
And we're in better footing. Like you take a look at ANET. I'm gonna just use that as an example. It looks like we made $137. We did today.
Back.
But I'm just going to go to our activity in ANET for the past couple days.
Well, since we sold that put spread, it is down because we sold the put spread out of the money, and now it's actually in the money. It's just coming back a little bit.
It's just coming back. That's what I was going to say. Our diagonal in ANET was the one.
It's much higher.
Much higher.
Yeah.
Am I looking at much higher?
Yeah, you're looking at that right.
Okay. Yeah, we're looking at that. So I was like, wait, what? Are we doing this right?
So I don't think we have anything to close. We were a little bit gun shy yesterday. I don't know that we added many new positions yesterday.
I'll show you what we did yesterday. Activity, all symbols, yesterday. Because we didn't do much yesterday. So we wound up switching our Marvel, which is fine. I think that was a good move.
Yeah.
So we switched our Marvel. We did the Jajun trade, switched our Marvel, and then did a gold Iron Condor. That's it.
Right. Honestly, what we made, I think we bought back the 100 put for about $11, and today it's $9. So, and we're up $100 on the... we're up $86 on the diagonal, but the diagonal is defined risk. We have very defined risk.
That's what I think is crazy. Is Marvel, it has earnings, so it's going to keep its wings up.
I know.
So I like the diagonal where we're going to be selling another one in that earnings cycle.
Right. So we sold that today. We don't want it to cross over that 98, but even if it does, we'll roll it out and up.
Correct.
We'll roll it out and up.
Okay. So that's that. I'm going to pop into Twitter real quick.
Okay.
Hold on, let me go this way. I'm going to pop into Twitter. I know we have Bob's earnings trades. We're going to get to
earnings.
that next.
We have what's your assumption? We have a lot to do.
Blue sky. You were right.
Oh, blue sky. All right. So I don't know. What are people saying about it?
Hold on. So Jack JT is Frank Walsh is saying that it's blue sky, and so is Jack JT, which is awesome. And then Jack is making fun of me because I said steak up for Jacob.
If you guys join over, steak up for Jacob.
Yes, I did mix my words.
Yeah, so I don't know, blue sky. If people want to switch to that, we've got a lot of followers on Twitter. We have a lot of our viewers on Twitter. So I don't know.
You ask me, I'm staying on Twitter.
I mean, I really don't know.
We might do both.
This was new to us when Vanetta came over and said
we might run both, and maybe we can take questions from there. But we're going to stay where our home is.
We were eating lunch, and she came over to us and said it was something like, "Oh, do you guys want to use blue sky?" And we were like,
even Vanetta
what?
said she's staying on Twitter.
What? No, but we didn't even know what it was.
I just called it Blue Horizon. Isn't that like an airline company or something?
I don't know. All right. So here, this is really interesting. Jack Tucker. We know Jack Tucker's been selling so many SPX Iron Condors, 4 tranches in 0 DTE, put on much earlier than normal, with today the call side being tested before I could post. Initial credit 25,800. Well, oh, not this one. What the interesting one is yesterday's, to see how he fared yesterday, because yesterday down 60, 70 during our show, down only 20 at the end of the day.
No, it was down 30 at the end of the day.
Okay, we'll see how Jack Tucker fared. Go all the way to Jack Tucker's.
Here.
Where did it go?
Here. So Jack Tucker at the end of the day, he's got between 59.15 and 6,000. I think he's fine.
Oh no, I thought he wrote. I thought he posted.
No, he's fine. This was from yesterday.
For some reason, I thought I saw his. Oh yeah. Okay. So 18 hours ago, right between Frank Walsh and Cupcake.
Oh yeah.
Where it says closed SPX. SPX closed at 59.55. The 10 short calls at 59.50 strike were in the money, so he gave back 5,255 after fees. Daily profit was 51,673 minus that 5,000. So his daily profit yesterday 46,148. Jack Tucker, you are out of control.
He's a legend.
I mean, that's crazy. $46,000 yesterday. And the nice thing about SPX, it's taxed. It's taxed 60/40.
Oh, but I was going to say, what I love about what Jack Tucker is doing is he can sleep at night because he doesn't put anything on until the next day.
Then he's got everything off. He goes to bed, sleeps like a baby, wakes up, and is like, what am I going to do today?
Yeah.
Made $46,000 yesterday.
I like it.
But again, it's taxed. It's not all 100% short-term gains.
With 60/40.
Yeah.
I don't know. Contact your tax professional.
Ask your tax.
But in my small brain, it is taxed differently.
Right.
Okay, so Frank the Great comes in with lots of things. New home sales was today at 9 o'clock. Johnny was very much looking forward to that.
I was just warned. Liz was like slinging trades at 8:40, and I just said, well, there's a number coming out at 9 Central. And according to Frank, it was the new home sales.
And it did something because we walked in and
hey, 9 o'clock hit and that market skyrocketed.
That market skyrocketed.
No, it was a little later.
All right, let's go to Bob on Fire. Now here we go. Jack JT wants to know where did he say this? He's like, NVIDIA, what are we gonna do? So Bob on Fire comes in. We got NVIDIA, Snow, AI, CRM, Mara, Ion Q. Don't know what that is, and Norwegian Cruise Lines.
Okay, so looking at these, we vetted these ahead of time. The diagonal in NVIDIA was tough because you were paying 50% of the width of the spread, and we don't like that.
I'm just let's
you pull it up and show it.
Let's talk through these situations.
So we like to pay between a third and under a half of the width of the spread, and NVIDIA it was almost a half. So if you had a $11 wide, you were paying $5.50. If you had a $10 wide, it's it was a little bit. You were paying too big of a percent of the width of the spread.
So taking a look at this, here we are. What are we at? I'm $12 wide. Am I $12 wide?
I didn't.
44 to 32, $12 wide. 32 to 44, yes.
Wait.
132 to 144 is $12 wide, and we're paying $6.54.
Right, half the width. So we don't do them. If we want if you were going to do something in NVIDIA, I don't think I'm going to play NVIDIA, which I know everyone's playing it, but I don't think I'm going to.
So the problem here's my problem. NVIDIA, my account has taken a hit the last couple days, but NVIDIA will move the market. In my mind,
yes.
And I think everybody's kind of been talking about this, the earnings today will move the market, one direction or the other.
Yeah.
I'm locked and loaded in the one direction. So do I need to play this as well? No, I'm already in it.
Yes.
So I might stay, but if I wasn't and we're not, I don't know that I would put this in.
And here's how I'm playing NVIDIA. I loaded, not loaded, but handful and Qs, handful and SPY, handful in both. I did the today, tomorrow calendars in Qs and SPY. So selling today. Now it's not going to be. I did it yesterday. So yesterday they were. I didn't pay as much as they would be today. Today they'd be more. But I did puts, I did calls, put on cheap calendars.
I'm going to assume you went to the expected move. They're still $1-ish.
Yeah, $1. I paid did a handful in Qs, handful in SPY, where I sold calendars, calls, and puts, just assuming that at the end of the day today my shorts would roll off, and I scattered them, assuming my shorts would roll off, and I'd be left with tomorrow's strangles and Qs and SPYs. In SPY that I didn't pay much for because I did the calendars, today, tomorrow calendars.
So
if that makes any sense.
No, yeah, I just pulled it up. So I was trying, while you were talking, I pulled it up. So like in triple Qs, if I did the expected move for the 0 DTE on both the calls and the puts and bottom, then went to the 1 DTE cycle and wound up buying, I sold them at the expected move, then I went to the 1 day and bought them. You're spending $3.
I paid yesterday doing these, I paid about $1 each. So $1 for the calls, $1 for the puts. So basically for every like Q strangle or SPY strangle I have is about $2.
Are you through your call side yet?
On some of them.
Yeah.
But who knows where we'll end up today.
Yeah. Yeah.
So we'll see. But I figured if NVIDIA moves a lot, I have those on. So maybe I should sell a Strangler Iron Condor in NVIDIA since I have those.
It won't be one for one. I mean, this is a percentage of
I know.
NVIDIA. Like if NVIDIA skyrockets, great. If NVIDIA plummets, great. That's going to help. It's going to help. So that's not a bad way to play it. But NVIDIA, like I said, if we
JXJT is short the 120 puts. I'm short that Jack says, what are we doing in NVIDIA? I'm short the 120 puts, still long my shares pre-split, sub 82.5 basis.
So the 120 put, I don't know what cycle he's in. I just went to the 16-day. That's not a bad do. It's very expensive though, Jenny. It's a 120 put in NVIDIA. It's holding up $4,000 in buying power.
Well, the 200 put in Coin used $10,000 in buying power.
Coin has a lot of buying power.
It's the same thing. It's the same.
Yeah.
It was basically margin. I mean, margin in NVIDIA to own. Let me go into the platform.
Well, it should be 20%, and it seems to be a little bit more than 20%.
No, I'm saying margin. Like if you had the stack, it would be $6,000.
Yes.
So basically, in some of these products lately, I've been seeing margin like if you're owning the stack, 50%, which is 50%. So selling put in NVIDIA and using 4,000 isn't as bad as some of the margin we've been seeing.
No, but it's not normal margin. Normal margin
would be 20%, so it should be about $2,600.
Yeah.
And it's not.
Yeah.
So, and if I went to March, how far can I go if I wanted $500? So the 122 put $480 is using $4,000.
No, I have two of them in. Yeah, it's using $4,000.
I don't know. I don't know what to think.
It's a lot of margin, but that's saying it's going to move.
And Jack has the 120 put. He has the 120 put. He's pretty far. Well,
it's not bad.
No,
Jack,
it's not bad.
That's not bad. Okay, so let's take a look at this. I want to see if there's a skew. So I'm going to go to the 2-day NVIDIA.
Sure.
Okay, the 2-day NVIDIA, and I'm going to go to it's trading
132. So go to the 142
and 22.
It's 231 for the call and 122, 221. They're the same.
There's no skew one way or another.
People don't.
Dun, dun, dun.
Yeah.
So if you thought it was going to be a nothing burger, the other thing you could do would be, I'm just pricing the at-the-money calendar.
It'll be pretty cheap.
It's cheap. The 133 calendar, meaning it's not going to move.
But the fact that it's cheap means it's probably going to move, or it would be expensive. Usually it's cheap when they know it's going to move.
Yeah, I mean, I think it's going to move one direction or another. It just depends on.
So we'll see what happens. We'll see. And are we going to have a fake out, like it's going to jump up and then be down 10 minutes later?
Like hymns?
Just like hymns. 55 and then 47. Is NVIDIA going to jump up to 145 and then end up at 127?
It could. Unless you have something, unless you have something you can do against your stock, it's not beneficial to look what it does in the after hours, because by the next day it could be totally different.
No, and like selling options, I don't trade stock in the extended hours. It would only be if you were, long the shares and wanted to sell them, or if you had, so let's say you had a long call and it jumped up in after hours, you could sell 100 shares against each one call in extended hours. But there's so much premium in those options, people aren't just going to buy the options.
No, I don't think they're going to buy the
Although there's really not. $11 expected move is not that bad.
No.
It's not that bad.
It's not. So we're going to put a pin
Do you
in that
remember
one.
we knew someone who used to, at the end of the day, the very end of the day, they would buy the straddle, and then in the morning on the open, no matter what happened, would sell the straddle.
Okay, so that, because it's cheaper, you need the day's decay to come out.
I mean, it'll be about $11.
It's going to be
$11 or $12.
Let's take a look at this. I bought the 132 and the 133, so I split the difference because it's trading 132.50.
Yeah.
The price of the straddle
is exactly the
expected move.
So
now, if the implied volatility continues to inflate as the day goes on, that expected move will get bigger.
It could. But we knew someone who used to do that. End of the day, buy the straddle, and on the open, sell it no matter what.
Well, and that's what with those, I think it's got to be the open. It's
the
not,
open.
I mean, I'm talking 8:30.
Order in at 8:29.
Yeah.
The open.
Yeah.
And if this doesn't move at all, you'll lose $500.
Yeah.
$600. But most of our studies show on earnings, we don't sell straddles on earnings. We usually don't sell straddles on earnings. We're giving ourselves room, like the expected move, double the expected move.
Okay, right now, but the research shows, and we haven't done this in a long time.
No, we haven't.
Is that most earnings moves are understated versus overstated?
Yes.
Meaning that the implied volatility is higher than the expected move typically is.
Right.
I don't know if that's true anymore.
We've seen some outliers.
Yeah.
So we'll see. We'll see what happens, but I don't know if I'm going to do anything.
Okay, so that being said, the other thing too is if NVIDIA does move the market up, our account will be doing well. So we're not going to put anything in
Our
NVIDIA.
account is long delta. Yours long delta. I'm long delta. If NVIDIA goes up, we'll be doing okay. So we don't need to throw in a bullish trade.
And as the market the last 3 days, I'm just going to go to SPX because we're in the SPX pit. And as the market the last 3 days has been coming down, our deltas have been getting bigger and bigger and bigger.
Right. So if it goes up, great. Snow was expensive. CRM was expensive. Snow was over $1,000. CRM was expensive. The only earnings trades that were inexpensive that we could afford would be AI and a Norwegian Cruise Line.
So let's look at AI. So AI, now let's take a look at this thing. Look at the chart in AI. It's kind of bonkers. I mean, you can just glance up there. It's been all over the place, but it's back down to a reasonable level, 27.
So that will be pretty cheap if you throw in the diagonal in AI. That's not going to be expensive,
and it shouldn't be. And there's a little bit of premium in it too. I'm opening up the 2-day, and I can go all the way to the 31, which is the expected move, and you're getting 80 cents. So sometimes when you open this up and you're getting 20 cents, you don't want to do it.
Right.
80 cents isn't bad.
No, that's not bad. The 2-day, 9-day is about $1.48 for a $4 wide, and that's what we look for. It's like closer to a third of the width than not half. So it's a $4 wide. We're not paying $2. It's only $1.48.
Yeah, it's only $1.48.
And I don't know what the 2-day, 18-day is.
It's 20 cents more. It's $1.68. I have that pulled up. The 2-day,
okay.
16 days.
So
I'm good
sure.
with you there.
It's cheap enough. I don't mind throwing $1.60 into an earnings trade.
Okay, so we're gonna push that. What was the other one we were gonna look at?
NCLH, which I don't know what your Royal Caribbean's been up to, but Norwegian fell the last few days and is kind of. Or like later, Friday, Monday had a fall, but the last couple of days been holding steady.
Are you surprised? Okay, so only because, I mean, she says you're Royal Caribbean, because I do sell puts until I can put the stock.
Well, she's going on a Royal Caribbean cruise. She's holding her stock.
I've already got it. I'm out of my stock.
Oh, okay.
Because as soon as sorry, Royal, hope you're not watching.
Hope you're not
but
watching.
I sell puts until I can put the stock, and then when the statement comes out, and it came out, I ship them my statement with 100 shares on there, then they put $100 stateroom into your credit.
Maybe you shouldn't say this on air, because now if they hear this, they're going to change it where like you have to hold stock for X amount of period of time.
I'm not going to lie to you. If they hear this, that means you're watching.
Royal Caribbean.
So, but take a look at Royal Caribbean. So look at NCH, and they're just correlated, right? So Royal Caribbean has been, and hold on, waiting for data. So this has gone from 110 up to 280, and then pulled back recently. In this,
right,
in
it had
AI filled.
You're filled in AI. So Royal Caribbean. We're not going to trade that, though, because they don't have earnings. We're going to trade NCLH. NCLH, you can do a diagonal pretty inexpensively.
So
I don't know how their earnings are going to be, honestly.
Royal knocked it out of the park.
Oh,
that's what I was saying is like with earnings, that is, yeah. I'm not saying it's going to do the same thing, kind of like Home Depot and Lowe's. Lowe's was up their bar was so low, but Home Depot was up, so Lowe's was up today.
Well, and Lowe's had earnings. Had earnings this morning.
Yeah, no, that's what I'm saying. Yeah. But, like I was listening to.
But Home Depot the day before was up.
They were saying that Lowe's bar, no pun intended, Lowe's bar was so low and it was still up.
Still up. Okay. But throw it in NCLH. It's pretty cheap.
Okay, so I'm going to sell the 27 in the 2-day and the 16-day. It's $1.33 for a.
It's got to be wide enough.
Is that wide enough? Yeah.
20. What do you have? 24 and a half, 27.
Yeah.
Yeah, that's fine. Okay. So 2 earnings trades. That's all we have. The other ones were just too expensive. We didn't want to.
That's all we have in right now. Okay, I'm gonna go to the top.
And we do have what's your.
I jumped into Twitter just because.
Okay.
This is a new tweeter. FK the operator.
Okay.
Which I don't know. I really like your little picture in there. That looks awesome. You should check Blue Jack on StockTwits, track record, ultimate guy. And that's me. Oh, okay, good. For today, right away, load these $5.99 calls, 601 on the way. And they're talking about, and then he's selling NVIDIA 132 calls.
You should check the Blue Jack 696 on StockTwits, track record.
Ultimate guy. And that's me. I love it.
All right, right away, load those $5.99 calls, 601 on the way.
And then he's selling the NVIDIA 132 calls.
Okay.
And then look at Cupcake to Jack Tucker. I love it.
Big dog. Yeah, that's crazy. And then Jeff Jones, I'm with you all in on the oil trades. Doing okay so far. So today we put on Fridays.
Today we put on Fridays.
Do you want to do that now in the show account?
Sure,
Let's do it.
sure.
Let's walk through the oil trade. I don't know what will happen, and we don't have a lot of... Tasty did not do back testing on this. This came from a rising star.
Yes. God, what was his name? We did it yesterday.
Yes.
Jim Rolfe. Okay, so, and then Jack JT's pretty funny. He's got both. We're doing both of those things. Okay.
All right, so
I'll
today we
show
put in
you what we're
Fridays,
gonna
and
do.
maybe that's not quite his system. We're just kind of making our own system.
No, but I think that's fair. Like, you watch something, what you don't want to do is you don't have to mimic exactly what they're doing. You're just creating your own.
And the caution on this trade is that these expire before the end of the day. They don't expire at 3 o'clock. They expire earlier. We haven't decided if it's 1:30
It doesn't matter.
Eastern, Central,
We're taking it off during our
12:30.
show.
We're taking it off during our show. So
Then just to be on the safe side. But what we did is we went to the 2 days. So I'm in CL, which is a big dog. Big. Here, I'm going to show you how much it is first. If you're buying one contract of CL, it's $10,000. Okay?
Right. Selling the strangle is about $10,000. But we are defining our risk. I think if you go, we're looking for about less than a dime on each spread will give us. We did it this
$200.
morning for about $180.
Yeah, so I just went to the 67.5, 66.5 to the downside on the puts, and that's about 13 cents. You can maybe move it a little bit.
I moved this morning. I did the 67.66. That gave me 80 cents.
67.66. Okay.
Sometimes I kind of like to keep the whole number. There's a little more open interest.
So that only gives us 7 cents right now.
I got 67.66.
Oh, sorry. So
I don't know.
$80. That's fine.
So we can adjust it. But
And
I
then
was just
the
trying to
upside,
give ourselves some room.
I'm going to go 70 and a half.
Yeah.
71 and a half.
So we're getting $160.
$160. This morning we got 18 for it.
Well, it's how many hours later?
Correct. This is only a 2-day trade, so it's
and we did it before the open.
Yeah.
We did it before the 8:30. We put this on early. We got $180, $160 now. This isn't one of those trades where we're looking for a third of the width. We're just looking for 2 spreads where we collect enough.
And we've got a 12 delta on the puts and an 18 delta on the calls. We're collecting enough. Our max loss here is $840. I'm okay with that. Now, your buying power effect is higher because it's span margining.
And I understand span margining to the other side, where your buying power is less and you're risking more. I don't understand it where you're risking less and they're holding more.
I'm telling you, it gets bonkers when you're nearer term. So span margining, when you are closer to expiration, which this is, span margining loses its mind.
Right. So this is using $1,800.
I've seen a long hold up $17,000. Long.
I know. They're getting nuts with the long options in the margin.
Yeah. So it is what it is. This is where we're at right now. The margin's a little high, but we know that our risk is only $840.
And if we put this on once and it's a full loss, yeah, do it. We did it. So if we put this on once and it's a full loss, hey, we know that can happen.
Yeah.
It doesn't mean we're not going to next week put on Mondays and put on Wednesdays and put on Fridays. We're going to, take what that rising star gave us and go with it.
We're going to roll it if it's a loss.
Yeah, we'll roll it.
We're going to roll it. We're going to do this. Okay. Now, that being said, we have about 12
All right, so that's
minutes left.
sent.
Should we go to what's your assumption?
Yeah, let's do what's your assumption.
Okay. So I got to go through this to get to what's your assumption. Now, hopefully they're playing some type of guitar music behind us.
Okay.
Okay, what's your assumption?
What's your assumption?
Number 1.
Kohl's bullish. Kohl's is very cheap. I think you can just go to the March. You can go to the 23-day March.
Okay.
It honestly gets 4 stars.
It does?
I think so. I think I looked up and was surprised. This is from Audrius from Lithuania. I'm Lithuanian. I know I say everything, but my grandma was 100% Lithuanian. My grandpa was 100% French Canadian. My grandma 100% Lithuanian. My grandpa 100% French Canadian. That's my mom's side. My dad's side all Polish.
I'm watching the greatest Lithuanian basketball players this side of the Mississippi tonight.
Good luck. Good luck, Lamont.
Yeah, and we're like a 50% Lithuanian team, and my little guy JD. I call him little, even though he's the biggest.
Can you come up with a mascot? I always want to say like, good luck to the Lamont.
No, because you can't be the Indians anymore, Jenny. Don't say it.
But give yourself a new name, something else.
I can't name us. I do not have the authority to give the high school.
Good luck to the Lamont
team, Lamont basketball team.
All right.
So what do you want to do in Kohl's?
Audrey's from Better Call Lithuania.
Did you ever watch Better Call Saul?
No, I don't think so.
Oh, it's funny. Well, it's not funny. It's a great show. Great show. Better Call Saul is an amazing show.
I need something to watch.
Yeah, you would like it.
Last night.
It's almost like a cult following. You've never seen Better Call Saul?
No.
Oh, it's good.
I mean, you know what I did the night before? Watch the Rising Star videos. I have nothing to watch. I'm like, let me make some popcorn and watch the Rising Stars.
Yeah,
wonderful night. I did enjoy it.
Better Call Saul will take you a while because it's long. And then there's like spin-offs of it.
Okay.
Okay, so.
All right, so Kohl's, just go to March and sell the 12 foot. That's it.
Getting $1, that's not bad. And putting up $500, not bad.
Mm-hmm. Hey, did you know, so I know Instacart had earnings. Did you know Instacart is closing only? You can't trade it anymore.
Really?
Mm-hmm.
Why?
I don't know.
Sometimes it says that on our platform, though.
Okay, so selling a put for about $1, using $500 in buying power, not bad.
No, it wasn't bad. Okay.
Not bad from Audrius.
So then, let's go number two. We've got SPX, NVIDIA, Archer, Lunar, and Oklo. Bullish, 60 days.
Okay.
Check, and check.
And I'm going to double check. Read those off to me.
SPX, we've got the Jajunin.
SPX, we have Jajun, which
NVIDIA,
is bullish right now.
Well, we're hoping that a rising tide rises all boats.
Okay.
Archer, check.
We have puts in there. And
Lunar,
Oklo, we have
something in there.
A put spread.
Yeah.
So we have them all. So Ryan
except
from
for
St. Louis.
LUNR, which we're just ignoring.
Oh, I don't even know what that is. LUNR.
LUNR.
Intuitive Machines.
How much is it?
$17.
Let's get in.
Let's get in. We're in.
LUNR.
Up 12% today. Oh, there's a lot of premium here. So the 15 put, my eyes just went. The 15 put, it's $2.
Are you in the 15?
In the 23 day. I'm in the 23 day. So in March 21st, 23 day, 15 put, $2 is like only $550 in buying power. What a good find.
Something's too good to be true. It usually is.
Hey,
here,
I'm going to do it.
Look at the chart. When you take a look at the chart, you got the 15. What was it? The 15 put?
Yeah, but you know what? It's only a one lot. Like a one lot in Lunar is not gonna. It's not gonna hurt us.
I'm fine with that. But it was just
if this drops to 4 and we took in $2 on a 15 put, our break even's $1,300. So if it drops to 4, we're out like $900.
It's not using much capital. We'll try it.
Or maybe a little more, but it's not bad. Maybe my math is off by
Your
$1.
math is off.
If we take in $2 on the 15 put, our break even's $1,300. If it drops to 4, yeah, we're out $900.
Yeah, $900, which we might be out.
Hey, we were out.
We might be out in oil that tomorrow.
I mean.
Okay, next on what's your assumption? CL neutral. Why didn't we wait on this?
We just did it. We did the Friday. We did the Friday Iron Condor and CL.
So honestly, this would be great if oil stays. Now, this is Aaron from Waxhaw. Mm-hmm. He says CL is going to stay in the $5 range for the next 45 days. That would be fantastic.
Yeah, great. I hope then we'll be doing this every Monday, Wednesday, Friday.
Yep. So then next is XLF, my favorite product to trade. Neutral, April, high IV. No one knows where rates are going or the economy is. And hopefully the people that have been watching for a long time know that I'm kidding. I hate this product.
Well, because there's not a lot of premium in there. If you go and look, there's not a lot of premium. This is from Johnny G from Foxborough. And I will say my parents have always wanted to go to Foxborough.
Oh, wonderful. What do you want me to say to that?
There's supposed to be some amazing casino in Foxborough that they've always wanted to go to.
I hope their dreams come true. I would like them to go to Foxborough. So if they, what are they, neutral?
XLF
April.
neutral. Okay, there's very, 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 very little premium here. Throw in a calendar.
That's what I'm going to do. I'm actually going to do the 52 calendar on the 50-day, 23-day.
And since we're running out of time, you can stay in the platform and I'll read the next one.
Okay, so it's 37 cents. I'm putting it in.
And I don't want to, I hope I don't butcher his name, but Sajan.
Okay.
Sajan from Louisville.
Okay.
Bullish Philip Morris. So PM, Philip Morris. Every guy in his 20s or 30s is using the Zins to boost productivity. And I mean, I hear it from the college kids. They're all using the Zins to help them. They're all taking the Zins. They're all using the Zins to help them study, help them stay up, whatever, right or wrong, I don't know.
So they are bullish through April.
Bullish PM, Philip Morris. It's the working man's AI. Check the office to see how many Zinners you have. And we have seen the Zin packs in the office.
We have. How many of these people do you think do this?
How many people, can we ask? Can I get a show of hands? How many people have Zin in your pocket? Zinners you have, and how many deltas will you go with? Okay.
Okay, so
I bet you if we said how many people have Zin in their pocket, we'd get at least 30 hands raised.
If you're listening, they're busy. On a slow day, we'll ask questions.
Yeah, I guess they're busy.
They're busy. Now, but take a look at this. Philip Morris has gone. I mean, it's been 80.
Yeah.
It's a straight up move. This is almost like the cliffhanger. But if they are continuing to be bullish on it.
All right, so he said through April. Do you want to sell puts in April? Do you want to sell puts in March and then roll them to April?
I actually have an idea. I want to look at something.
It's $2,500 for a naked put.
It's got a 44 rank. Weren't we going to look at maybe a big lizard here?
Oh yeah, sure. Do a big lizard.
In the 23 day, I'm going to sell the 55 straddle because it's trading 55.70.
Okay, buy the 60 call.
We can buy the 60 call and then go down.
So you're getting 538.
I mean, we could actually, to make it more bullish, I could buy the 57.5.
Yeah, sure, 450, and then just buy like the 147.
Yeah, this is great. So we're using 432. We'll make money if it goes up. If it stays right here, we get to keep our premium. It's got a 44 rank.
Okay.
When there's that high of a rank, sometimes we'll do things like that. So we've got the 55 big lizard and the 55, 57.5, 47 big lizard.
I think we're going to do it because the last one is bullish in AMAT from Goldie in Israel. IVR near its historical IV after earnings on supporting levels, slightly bullish. AMAT, this is from Goldie in Israel.
Okay, I'm listening.
Do we have AMAT? I know you have AMAT and I have AMAT.
Okay, so Philip Morris is not being filled, but that's fine.
You're working it.
Yeah, AMAT.
AMAT bullish. We do not have an AMAT position.
Filled in Philip Morris. Okay.
Right, they're bullish in AMAT. We have nothing.
Okay, if you are bullish in AMAT, let's take a look.
And while you are working on this,
take AMAT's all the way down. I have no problem with maybe a shorter term diagonal. You got
I think
31 rank. I'm going to look at some things first. If I'm looking at the 21 days to sell a put, I can go down to the expected move. I just want to see how much it is. It's $2,000 to sell a put at the expected move.
Okay.
You've got a 31 rank, and they are bullish.
Whatever you want to do. I'm pushing all of our trades out on the follow page, and then we're running out of time. We have to make a decision on Jejun.
I am going to do another big lizard, Jenny. Because we're going to use $800. They're bullish on AMAT. I did the 67.5, 70, and I bought the 75. So if it pops above 75, I'm only in the 23 day. We'll keep $1.20, and then we can buy something to find our risk.
Ship it.
Okay.
Ship it, and then we have to make one final decision. Screws are only up 43.
Ah,
I know.
How much is Jejun down? It's down $40. Now we're up on the air. We are up on the air. We're up about $140 as of yesterday because of our trade. I say we don't. I say we close it.
Sure, close it. Now again, up on the year with our P&L, but that doesn't take into consideration fees. With fees of in and out, we're probably a scratch on the year.
Maybe.
So I just want.
Now we're down $50. 40. I'm going to try to close it for 40.
Unless you want to leave it and think we're going to have an afternoon rally. I don't know. But who knows?
We don't know.
We could end up unchanged on the day.
I'm getting rid of this one.
Because we paid a lot for this one, $295.
Yeah. And we're filled 240. So we took
a loss on the Jejun trade.
Yeah. Here, let's talk about what we did today because I know we're almost out of time. Here's all activities, all symbols today.
Okay.
Okay. Today, from bottom up, we put in the Jejun trade. We wound up closing it for a small loss, but that's fine. We got a win yesterday. We took it off today for a loss. AI, we put in the diagonal.
Okay.
Lunar, LUNR, we sold the 15 put. XLF, we did the 52.5 calendar, which is, going to be amazing.
How much was that?
38 cents.
No.
Yes.
You should have done at least 10 of them.
No kidding. But so that's
what are we going to take it off for $3.80?
We're going to let the short roll off and hold on for a $5 win.
Oh my gosh.
Okay. Kohl's stores, we wound up buying a put.
No, well, you should have sold a put in Kohl's. Did you put it in backwards?
That went in backwards.
You bought a put in Kohl's?
I believe. Hold on.
Just leave it now.
No, we're short a put. Wait, okay. So we're short a put on here, but when I go to the activity, it says we're long a put. So
well, I'm going to push the trades out right now on the follow page, and it goes out in calls as we sold the March 21st.
Okay, perfect. Because on my screen right here, and everybody can see my screen, it just says long. Like there's no short next to it, which is fine. So it's in right.
Yeah, it's in right. We sold it.
Philip Morris, we've got a big lizard in. AMAT, we've got a big lizard in, and we closed Jejun.
It did. I don't know if the AMAT filled.
AMAT's filled.
Oh, it is. AMAT's filled. All right.
Good job, Jenny Andrews.
Then we did it. We did it. We made it through Jacob's study. What's your assumption? Managing trades. Another busy Wednesday.
Another busy Wednesday. All right, everybody have a wonderful afternoon, and remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We will see you tomorrow.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I've got my man Mikey Butler with me as always. And if you want to come join us, hop over to YouTube, type in tastylive, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day I get to spend with my buddy Mikey Butler. How are you, sir?
Things are going well. Things are going well. We got some bangers after the close today for some earnings reports.
Yeah.
We got the market rebounding, except for Bitcoin. It's going to be very interesting to see what happens with NVIDIA, Snowflake, and Salesforce after the close. How's things with you? Sorry to hear you're sick.
Yes.
Little
Thank
sickness.
you. I feel like, after watching Tom come in for 2 weeks and sniffling around and getting everybody sick, I figure I'd stay home and save everybody the agony.
Yeah.
But yes, some earnings after the close: NVIDIA, Snowflake, CRM. Tomorrow you have VST, which is one that I know a lot of people have been trading. It's one of the like energy data center type stocks. Norwegian Cruise Lines as well. NCLH, Warner Brothers is in there. You got a couple other random names here, but those are really the big ones. It is NVIDIA day, I would call it. Big move today to start the day, up $5 and change. We're at 32 and change here. It's been very, very strong throughout the session. On the flip side, you got some downside in like Apple down $3 and change. You have Tesla down 2 and change, 3 now. Amazon has been stronger. Google's been a little bit weaker. So it's definitely been a mixed bag.
Yeah, it feels like maybe a little rotation out of Apple, which has been strong throughout the chaos the last couple of days. And you're getting some upside movement in your Amazon, your NVIDIA, Microsoft as well. Microsoft's on the lower end of a lot of these ranges, but seeing a little rebound today. So yeah. It is NVIDIA day. We can call it NVIDIA day officially. They report earnings after the close, almost a 12-point expected move, already up 5 today. We'll see if that can hold that or if they can exceed that. But yeah, lots of implied volatility still remaining. If you look at SPX, still looking at a 75-point expected move throughout the rest of the week, and it's Wednesday. So lots of implied movement there still.
Yes, and we covered NVIDIA in the cherry picks yesterday. If you didn't get it, sign up now. You'll get it sent to your inbox, tastylive.com/newsletters. But we looked at a bunch of the past movements in NVIDIA. So we gave you a list of all of those, and we also looked at, obviously, today's move, which has actually come in. NVIDIA implied volatility has certainly contracted a little bit into today, and maybe just given the bounce we're seeing in the market or in the stock itself, as well as the market, seeing a little bit of volatility come out. It is still a $12 expected move. When we were looking at it yesterday, it was a $13 expected move. And just based on the weightings, one of the things that we looked at in the cherry picks was just its weighting to the S&P 500, as well as some of the major ETFs that carry it. So SMH, it's about 19%. XLK, it's about 14%. SPY, it's 7%. And then the NASDAQ, it's 8%. And what that translates to, if you're looking at if the stock moves roughly $12 in either direction, when you're looking at SMH, which is up about 7, I think, today, a lot of the chip stocks having a little strong day. It's about a $4 effect on SMH. For XLK, it's about $3. For SPY and the Qs, it's about $3.50 to $4. So, if NVIDIA is up $12 after the earnings, all else being equal, it would move SPY about $3.50 to $4 to the upside or downside. If it does move $12 to the downside, you probably see, a lot of the big name stocks move in that direction. So I think there is potential, if it does move to the expected move, for us to basically be, back to either highs or back down to, 5,800-ish on the E-minis. It could be a crazy day, crazy afternoon.
Yeah, I wholeheartedly agree. I think you're going to see some push and pull, and you're going to see some sympathy moves here. Looking at volatility, we are seeing some premium come out of there. Vol down 60 cents in the H contract. We're back into decent contango. We saw it flatten out. The curve of futures flatten out pretty nicely into the sell-off over the last couple of days. All of these contracts were hovering around 19. Now you can see we're in the 17 handle in the H contract, the 18 handle in the J. So seeing that the flattening of the curve go back to contango, we'll see if that gives us anything to hang our hat on. But earnings are super volatile and unpredictable, so just make sure you're staying small out there.
Yes, there were a couple after the close yesterday. I know Kava was one of them. It's basically unchanged. Intuit was another one. That one was up $60 or $70. I think that was around what the expected move was. First Solar was another. That's up 15 and change. We didn't really trade any of these, or these are kind of fringe stocks. But maybe we'll look at. Well, of course, you got to do something in NVIDIA, but maybe we'll look at CRM or Snowflake as well. But just to give a quick little market update here, we've got E-mini S&P 500 futures up 43, got as high as 60.23, which was about 10, 11 points from where we're trading right now. We've had about a 50-point intraday range, so it's certainly been a little bit of a wider range than what we saw over prior to this sell-off, where we were just kind of chopping around. So markets are moving here in anticipation of this earnings. You got the NASDAQ, the strongest of the group, up 232, a little over 1%. The Dow, which was strong yesterday and has been stronger relative to the rest of the market, basically unchanged today. It's up 80 points. The Russell up 22. Bonds continuing to rally, which means rates are coming down, which helps the Russell here today. Oil basically unchanged here, 68.84. You got volatility futures, as Mike alluded to, down 62 ticks, a little over 3%. So a big move in the volatility futures. Bonds up 7 ticks. You got gold up $9, silver up 43 cents, and Bitcoin down $1,000. It looked like we were going to get back to like 90K overnight in the overnight session.
Love to see it. If you're looking for a buying opportunity in Bitcoin, there has not been one better than this one since the election, which is wild. So yeah, we'll see if we get some more volatility pumped into there. But that price is coming down, which means some of these options prices are coming down to the upside. I will say though, the IBIT position we have, the 55.70 strangle. I'm not adjusting that at all. I've got the 55 short put. The 70 call is worth 25 cents. But in the April cycle, I just don't see a reason to roll down. Like I do not want to roll from 70 down to 60 for 50 cents. Like that doesn't make any sense to me, because again, you have to think about how this product is structured and how it will behave if we get a big move to the upside. If we get a big move to the upside, I want to have the space for IBIT to move through 60, for example. I don't want to have my intrinsic value short share risk start at 60 for 50 cents. If it was $1.50 or something like that, it makes a lot more sense to roll down. But I'm not bringing my risk 10 points in from 70 to 60 for 50 cents. Just I don't see a reason to do it. Especially with plenty of extrinsic value in the 55 still. We've got the break even down at 45, so we're still totally fine in this cycle. But yeah, we're just not seeing the premium there to make it worthwhile to roll down and bring that risk in 10 points.
Yeah, I hear you and I agree with you. I actually sold the 48 strike put yesterday. I did that at $2.50. It's marked at 266, and I actually put another trade idea in the cherry picks from yesterday as well. And I bit the selling the 45 strike put at like $1.70 and change. So that one looks nice. But with IBIT, and we've talked about it with Ryan, volatility tends to decrease into this move lower in Bitcoin. So when you look at IBIT, the IV rank at 13, you have actual implied volatility at 53. I think the last time we had Ryan on, we were looking at it actual implied volatility like 65 or 70-ish. So volatility is certainly low here. And to Mike's point of like not rolling down right now, if you get a $2,000, $3,000 move back to like 90K on Bitcoin, you'd expect volatility to expand. And at that point, you could look at rolling down the call or doing something else if you wanted to. So I'm with you on just kind of sitting tight with that position.
Yep, totally. And outside of that, we're getting some value today in a lot of these stocks that we bought the dip in a couple of days ago. So that's nice. But nothing too crazy. I mean, I'm already in NVIDIA for earnings. I think I'm just going to hold what I have there.
What do you got?
The 140, 150 call diagonal, long the 5th. April weekly.
Ooh, okay.
Yeah.
I like that.
Yeah, it's down $100. I mean, if I did anything, I would move to like the 130, 140. But I think I'm comfortable with the risk that we have there, and outside of that, I wouldn't really change anything. But we do have two others, and we have earnings previews for each of these stocks we're going to talk about on the News and Insights tab. So I'm going to pin them to the top of the YouTube chat as we talk about them. If you want to join us on the YouTube channel, just go to Tasty Live. You'll see the live video streaming. You can throw in your trade ideas, questions along the right-hand side chat. And if you're ready, we can start chatting about these.
Yeah, for sure. I'll give you quickly what I did today too. I got some long delta in my Johnny Trader account in Amazon. I did a call diagonal spread here.
Bless you.
Thank you. The 220, 230 call diagonal spread. I'm doing that April, March. I mean, Amazon has just gotten murdered over the last month or so. It's gone from 240-ish after into earnings down to 210. I mean, we were in the 205 handle at one point yesterday. So I figure I get a little bit of long delta there. I already have some long delta in this account as well. So that was one of the trades. I did a March Iron Condor and NVIDIA. Overall, I'm playing for an inside up move. So this account, I have this same Iron Condor. Actually, I think it's a 15-point wide. So very similar position in this account, as well as an upside crab trade that I put on. So I've got net long delta, but I'm very, very short premium. So if we get an inside/up move, that would be just nirvana for my position. So that's what I'm playing for there. And then I bought the dip in Tesla. I sold a little put spread. I did the 275, 265 put spread in my Johnny Trader account, just playing again into a really big move to the downside. Who knows if it's the bottom, but I figure it's about time. Volatility is pretty high there as well. I did that when the IVR was about 62. The stock was $3 or $4 higher. And then I closed out of a Walmart call diagonal. I think that was a trade from the YouTube chat. So whoever gave me that, thank you for the lunch money.
Lunch money indeed. Yeah, I mean, we get the question all the time, like, market's near all-time highs. I want to add bullish positions, but I'm afraid of a downside move. Right now, there's huge tech stocks that are near lows. So like Microsoft, you called it out, Tesla, Amazon, there it is. Like if you're looking to get long products into this dip that aren't near highs, Microsoft, Tesla, NVIDIA is kind of middle of the range, but Microsoft, Tesla, Amazon are three that I think I would call out for that. And all of these are still really low IV. Like Microsoft, if I were to pick one, it would be Microsoft, just for the fact that Microsoft is down 20% from recent highs and the implied volatility is 25%. So
It's gone nowhere since this time last year. I mean, this time last year we were trading at 400 and change. We're right there.
Yeah. So low IV
I'm with you.
Yeah, low IV just means it's cheap to participate in delta if you're doing like a diagonal spread. So good thing to keep in mind.
I agree. It's funny because I was giving Tom and Tony and Scott a little grief on the show earlier this morning because it's like when the market's up 1%, it's somehow a different vibe than when the market's down 1%, right? Like when the market's up 1%, everybody's like, oh, it's too frothy, I can't buy here. But when the market's down 1% or the stock's down 1%, nobody, everybody's scared that it's going to go down more. It's a weird difference in psychology. So I was trying to get them to buy some dips, and it was somewhat received.
There you go. Yeah.
Yeah, it was a mixed bag.
The brain goes nuts when losses start compiling, that's for sure.
Yes.
All right. Kicking it off with Snowflake earnings. I just pinned the link to the Snowflake article to the top of the YouTube chat. Ryan also is looking at a put diagonal in snow. I'm not one for reading chart tea leaves, but it's sitting at the top of the gap up from November. If it drops, it's going to tank. What do you think about Snowflake?
I mean, by these stocks, I mean like the stocks that are kind of like in the second tier of big tech names, the $80 to $180 tech stocks. Like I'm thinking of like PanW, which we had which you did a trade on in into earnings. Like Datadog is one that caught me off guard. To the downside. They've been pretty volatile. They've had big moves in either direction. So I don't know if I have a directional lean here. I mean, Snowflake was one of those stocks that during the height of the pandemic, it went nuts. I think it got up to like 500 or 400 and change if we look back here.
Yeah, 420 almost, 425.
Yeah. It was one of those stocks where it IPO'd and, it IPO'd at 200 and change. It went straight to 400 and change and then all the way down to 100. So, I think that is certainly in play. Did whoever posted the question, did they have a lean on up or down?
Down. Put diagonal.
Down. Okay. Yeah. I mean, you got some of the, if you're a technical guy, you got the 200-day moving average lower. So, could play for that.
Yeah, I think you could certainly see this thing fall out of bed. They've had decent earnings recently, but they also have huge partnerships with Amazon, Microsoft, and Google. So it is what it is. But if you're trying to lean short or long, I think we're going to find risk regardless. I think one thing that I would look at is the value difference between going to April and May. So May, you have 80 days to go to expiration. April, you've got 50. Big volatility crush relative to May in April. So April, you're seeing 58% IV. May, you're seeing 52%. You're only paying like $100 more, $200 more to go to May if you have that ability to do so. And then you can sell, you could sell the 155 in the weekly against it, or the 140 or 145 or the 150. I think anywhere in that range, totally feasible. Picking up $500 to sell the 155 in the 2-day against the 165 in May. So you can you can go to May in the 2-day and still pay under $10 for a $10 wide diagonal. So I kind of like that.
Yeah, I was thinking my market lean into the end of the week is obviously we've had a little bit of a pullback. You have a lot of kind of uncertainty with NVIDIA coming up here, and I am leaning in NVIDIA, slightly upside, but really for a vol contraction. So if you think that happens, if you think there's like a little bit of an upside move, let's call it an inside up move in NVIDIA, we'll say with NVIDIA trading right now 132 and a $12 expected move. Let's say we get to 140 tomorrow and a vol contraction. You got to think that the market as a whole takes that very nicely and has a nice little move higher. And so my lean for these tech stocks, just based on what NVIDIA is going to do, is to kind of play these to the upside. So that's my lean for Snowflake. So that's what I'm going to look for.
Fair.
I'm thinking just a standard April. What's the 180? Yeah. I'm going to do an April and then the weekly, like the 180, 190 call diagonal spread. It gives me another, I can roll the March if we have an insider up or insider down type move. Obviously, if you get the big downside move, that's going to be painful, but I think here you played for a little bit of upside. And the market's strong today. Like I think vol crush is on the way.
Yeah, I think I'm gonna go with I actually really like the way this sets up. It's kind of abnormal for me, but I'm gonna just do a small little iron condor here in March.
Okay. The monthlies?
Yeah, the March monthly. So you're looking at a 20-point expected move for earnings. If you go to March, it's just a little bit more, but I'd still like to go to March for short premium definers trades, because if you get a blowout in either direction, you can at least hold it for the next 23 days and see if you get a reversal into the range. But the 150, 190 shorts and then defining risk 5 or 10 points wide, you're covering the expected range for earnings. You're picking up half the width of the risk. So it's a risk one to make one iron condor. But if you get an actual move of like 4 or 5 points against a 20-point expected move, you can make $100 overnight and call it a day. And I don't really have a directional lean either. Like I want to be long NVIDIA. I actually want to be long Salesforce if we can figure it out, but we can talk about that in a second. But this is what I'm going to do. I'm going to do a 150, 145, 190, 195 iron condor in Snowflake. I'm just going to let it sit there for 235. See if we get filled.
Okay.
Just a small little.
Go on.
Small little earnings play.
Yes. Salesforce is a little tougher. I know you said you were trying to figure it out, meaning that it's pretty expensive to be, to do any sort of directional trade here. Call diagonal spread or something like that is going to cost you, double what we were looking at in Snowflake.
Yeah, totally. Well, CRM, I just pinned the earnings preview for that one from the News and Insights tab in the YouTube chat. Definitely click on that. Absolute amazing image from Yessi. Very, very much like what's that show called? Severance. Getting Severance vibes with this one. But yeah, Salesforce has earnings after the close, 26-point expected move on a $300 stock. Still a huge expected move, especially when you compare the weekly expected move to May. It's well over 50%. It's more like 60, 70% of the implied range through May. Same thing with Snowflake. But CRM, I think, is interesting. Workday reported earnings yesterday.
Yeah.
And Workday is, it's adjacent to Salesforce. They're both software companies that provide solutions to companies. We use both here at Tasty IG, but Workday's up 20 points, almost 6% from earnings. I would not be surprised to see Salesforce have a similar move if they can report good numbers. I think one thing to call out with Salesforce is they recently expanded their partnership with Google. They're bringing in what's the AI platform?
Gemini.
Thank you. It used to be called Bard, I believe. But yeah, Gemini. Bringing in Gemini to Agentforce. So they're basically bringing the tech in from Google to fuel Agentforce. And Agentforce is basically the AI solution you can create for your company for AI bots to help customers. So I don't see how that could possibly be a bad thing for Salesforce. I think it just comes down to beating numbers this time around. And I like the fact that Workday did pretty handily. So yeah, that's my little thesis.
So what are you thinking?
So that's the question. It's a $300 stock. It's really expensive. I think what I might do is I think I might just go with a calendar spread, upside calendar spread, which I know you don't really love, but
I get why you would lean towards that because it's so expensive.
Yeah. So you can do like a 330 calendar for $700 or even closer. This is May weekly. You could do, I think 330 is probably where I'd go. But if you look at the premium you're collecting in the 330, it's again almost $600 for 2 days relative to $1,300 you're paying for the 80-day cycle. So if there's any upside move in CRM tomorrow, as long as it doesn't go to 400 overnight, any upside move you'll make $200, $300, $400, $500 overnight. And it's a cheap way to participate and reduce cost basis against the long option with 80 days to go. So I think that's what I'm going to do here. Just go with a straight up calendar spread in CRM, long May, short the 2-day.
All right. I like it.
Cool. Last but not least, NVIDIA. So again, I already have a position here. What are you going to do?
I'm locked and loaded. I have an iron condor and an upside crab trade. It's definitely a short volatility position. Just to give you an idea of my risk profile here. And I could put this in here. There we go. So into the end of the week, if we get a nice little vol contraction here, and we say like a 10% vol crush, be a nice little winner to the upside.
Yeah. Ranch Michael Mike looking for a 2-day earnings trade in NVIDIA for quick moolah. 2-day
up or down?
Yeah, 2 days tough. I mean, the only way I would just do only a 2-day trade is if I'm just like selling a put to assume the risk of shares, and then if it goes down, you roll to March or April. That's pretty much it for me.
At the money call spread.
Or an at the money call spread. Yeah, you can do whatever you want. Yeah, if you're bullish, short put or at the money call spread. At the money call spread, the nice thing about that is you're likely gonna get a move from earnings. Like I would be shocked if it just opens at 130 tomorrow. And if it's to the upside, if you have an at the money call spread like a 130, 135, where you're risking one to make one, it'll fill up pretty much immediately in terms of max value. If we get an opening print of like 140 or 145, like you'll get to max profit pretty quickly. So
don't be so sure about that. The last two earnings, and this is in the cherry picks. Last one in November was a 2% up move, and the last one in August, so that was the third quarter earnings, was a down 3% move. So certainly can happen. You certainly could have a 130 open.
Certainly could. Do I see it happening?
No,
I don't think so.
Think so either.
I also think the market landscape is a little different too. Like, if you go back to the Japanese yen unwind when the markets were crashing, I remember Amazon had earnings and we had some other big name tech stocks that had earnings and their numbers were fine, but it was just a liquidation event. Like after earnings, everything was selling off. So I think now you've already seen the sell-off. You saw the sell-off yesterday get eaten up and bought up, and now you're seeing the E-minis up 40 or 50 today. At the very least, the market is more calm today than it was 3 days ago.
It's fair.
So
volatility insignificantly. I agree with that.
Yeah. But either way, if you're doing a 2-day trade, I think you're either like selling a put or selling a call if you want to be long or short, or you do a defined risk at the money spread, like what Nick said, where you're just playing for the directional move and nothing else. and you're looking to define the risk there. Oh, I was just filled on my Snow Iron Condor for $235. Love that. Still working the CRM for $8 exactly. It's probably going to fill pretty soon here. All right. Let's move on to some other questions. Leonardo Teixeira, put spread on VXX, 40.35 with a $1.87 credit, expiration in March 21st. I'm profitable and is wondering if I should keep it, as historically it's never gone below the break even.
Well, that's based on the splits. So, split adjusted. I mean, this isn't a long-term product. So there's no, looking at it on the chart and saying it hasn't gone below 40 is not really true, because it's gone below, it's been trading. It's basically gone to zero multiple times. It just splits so that it's not at zero. So like that's not really what, you're trading for here. Generally speaking, selling premium in these products is very, very difficult, just because of the way they work. When this is a short-term long volatility play. And so when you have volatility expand, which is what you want here, volatility of volatility also expands. So it kind of takes away from what you would think you'd make on this trade, just because of the nature of a derivative, which is what this is. And so, I think it's a great trade. You caught that volatility move. I think for next time, if you are playing for a pop in volatility, I would do just out of the money calls or really wide call spreads. It's very, very hard to trade short premium here just because of the dynamics of these products. But a great trade. I would take the money and run. And, if you still think volatility is going to expand, I would roll into that out of the money wide call spread or just naked long calls.
Yeah. And it's like VXX is going to behave just like Bitcoin, like iBit or MicroStrategy. If there's a big move to the upside, volatility of VXX is going to increase. So you don't necessarily want a credit spread in that scenario. You literally, your best trade you can have is a naked long call in that specific environment. So, but yeah, I think you should ask yourself, would you open this as a new trade, collecting 60 cents, risking $500 in a market that is down $1.30 today? And if you continue to see vol collapse, you could see this go at the money, and now all of a sudden you have your 50 cents turn into $2. So, I like the take the money and run angle.
Agreed.
App Lovin', is it dead?
Yeah, I saw that one got absolutely murdered over the last couple sessions here. It's gone from 500 to 330. Pretty wild move here. I know we've been, whoever gave us the idea, I think it was Smack Lovin', to play that to the upside. We totally missed the 300-point upside move. So congrats to whoever caught that. But I will say it is something that is very difficult to trade. I know the markets don't look horrible right now at 50, 60, 70 cents wide, but it's very hard to get filled here, especially if you're doing Iron Condor or something like that.
Yeah.
So I think it's a pass. But yeah, I don't know where it's going from here.
Yeah. This is a wild move for sure. Very squeezy.
Yes.
After rolling from a diagonal to a calendar, do you ever convert it to a vertical debit or credit spread? So that would be 3 rolls total. I personally don't. Once I convert to a calendar, if there's still the long option remaining, which there would be, I like to just hold the long option, because the problem with converting it to a credit spread is you are locking in a loss for sure, and you now have embedded credit spread risk. So if you eventually do, let's say you're holding this, you're rolling it, you're bullish, you have a call diagonal spread on, it's not working, you roll it to a calendar, and then you turn it into a short call credit spread, and then you get the move higher, I don't think I could mentally deal with that situation. I don't hate turning it into a vertical spread. So if you're going from a calendar spread and then you're rolling into the expiration that you're long and you go into a vertical spread, I think that's okay. But again, if you get that move to the upside and you have that short option on that you probably sold for like 30 cents or 40 cents, and now all of a sudden you get the move higher that you've been looking for, you're going to really be capping out your value back that you can get. So I usually just leave it as a long option. If I've gone from a diagonal spread where I already reduced basis in a big way, then I went to a calendar spread and I continued that, and now my long option's worth like $100, I'm usually just holding it and seeing if we get that move. There was a stock that I got bailed out on recently.
Celsius.
Yeah.
On earnings.
Celsius on earnings.
And that's what you want when you're basically at near max loss. And you've hedged yourself as much as you could on the entry with the diagonal spread itself. You don't want to give up the chance to get bailed out by gamma. Like gamma is what is going to get you back to a scratch. You're not going to get back to a scratch or small loss or small profit by selling more premium. You need to get bailed out on that move, and I think that goes to what Mike was saying.
Yeah. I'm trying to find my Celsius. Yeah, okay. So
you had like the 30 strike call, right?
Yeah. So I had the 30 strike call.
Yeah, you did the 30-35 February, January. So you were just left with the February 21st 30 strike call, and you closed it after earnings. Stock traded at 32 and change.
Yeah. So I'm just looking at the history here. So I initially had the 32.5, and I sold out of that into a rally and converted to a 30-35 diagonal. So I bought the 30 for $480, and I sold the 35 call for $167 against it. That was a Jan-Feb diagonal. And then when earnings came, my long option was only worth like 50 or 60 cents. So I didn't cap it because there's nothing to sell against that. And then I got bailed out with the earnings move to the upside. But that's kind of an example of once you've reached a certain point, your long option is only going to be worth like $150, let's say. If you're turning it into a vertical spread by selling something higher than that, you're not going to be collecting more than like 30 or 40 cents against that. And if I would have sold something against it into that Celsius move that only lasted a day, I would have seen substantial losses on that short call that I sold, and it would have offset a lot of that value back. And maybe I would have held it, and it would have been a full loser because now we've sold off back down to 27 in Celsius here. So sometimes you've already reduced basis as much as you can, or it makes sense to, and you just got to lean long or short depending on your option strategy. But definitely never converting to a credit spread. Sometimes you can convert to a debit spread if there's actual value in the short option. Like if you're at a scratch and you want to convert it to a debit spread, that means that there is going to be enough value, most likely, to turn it into a debit spread. But if it's an out of the money option, I'm probably just leaving it. Drone and special. Let's do it. In Tesla. Broken wing butterfly, 290, 280, 265 in March.
Yeah, very similar to what I did this morning in the Johnny Trader account. I just did the 275, 265 put spread, short put spread. So basically the same thing you have on here, just doing it for a little bit, for a credit where if we do have a bounce higher, I'll make a little bit more or a lot more than this position, which, this is more of a neutral / bearish trade, whereas mine was a little bit neutral / bullish. In this account, I have a call diagonal spread. I think all of them fit the assumption that, maybe this is a time to get some long delta into this move.
Agreed. Yeah, no risk to the upside, small credit. And yeah, you're basically giving up the credit to create a much wider spread, which I like. So yeah.
Do you have anything in Tesla?
Yes, I have the 375 call calendar.
Ooh.
Yeah.
Okay.
It's a rough one, but
yeah,
there's still $177 in the March weekly March monthly short option, and any kind of rally here will benefit me. But yeah, I basically cut the loss in half against the long option with the sale of the short option. So just sticking with the calendar. If we get a move back to, let's say, 330, 320, I think
$30 up move.
Yeah, I think we'll be okay there.
Mm-hmm.
But yeah, this little sell off has not been fun.
No.
Gus, everyone's talking about how nice CRM AI bots will be for customer satisfaction, but no one seems to mention that will also create layoffs, which is sad, but will make them way more money. Yeah, I read an article. Some CEO was saying that the future of CEOs is not managing people or projects, but managing AI, which is a wild concept to think about.
I don't know if that'll be the CEO level. I think that'll be just like it just basically takes away the lowest level, just goes away. And the second level above that is now running the AI that takes over the lower level, and however many levels that consists of in the organization.
So that either means that everyone gets an embedded boost vertically in their companies, because now they are managers of AI that would have been humans.
Yeah. At the expense of the other 2 or 3 tiers below them that go bye-bye.
It's really wild to think about, but I was just filled on CRM. Speaking of AI. So yeah, Snow got the 150, 190 shorts for the Iron Condor in March, 5 points wide. And then CRM, I've got the 330 call calendar long May short the 2-day for $800.
So.
Smack Lovin with an App Lovin trade. If one were so inclined to lean into this high IV, how would you play it? I'm thinking of buying the 350 calls in April and selling the 380s in March for $18. So a 30-point wide for $18.
It's a big boy trade.
Yeah. The problem with this is that it's like this is meme stock territory. If you look at app.ivr, you can see the IV rank skyrocketed into the rally, and it has gotten crushed into the sell-off. So that's the one thing that is a little tricky to deal with if you have a short option against your long. But in this case, if it's 30 points wide and you're paying well under that, I think it's fine, because you'll still be profitable for sure if you get a rally back up to 380.
Mm-hmm.
But yeah, selling something against it, I think, is certainly wise. In this case, I might just look at like more near-term cycles. Like so like I actually, if you're willing to put up more capital, instead of selling the 23-day, which is going to be very sensitive to upside moves if you get it, selling something like the 9-day, you're still the 380 strike still with 9 days to go versus 23 days to go. You're still collecting $900. And if you hit it correctly, and let's say late next week, you get the rally back up to 380, you're gonna make way more on that strategy than the 23-day short that's gonna double or triple in price.
Mm-hmm.
But again, you're putting up a couple $100 more in costs and risk.
Yes.
But you can always roll from the 9-day into the 16-day into the 23-day. So still a lot more implied volatility in the 9-day versus the 23.
Too expensive. Too much for me to mess around in APP for $1,800. But I feel you. I like the idea. I mean, the stock clearly has $50 up or down moves built into it. I mean, if you look at the chart, it's gone $100 in either direction in the span of just a couple days. So I like the idea. It's just a little too rich for my blood.
Yeah. Mr. Bajra, 2-day in the money call spread 120, 125. I think it's going much lower. Nvidia. No reason to mess with an in the money spread here.
Yeah.
A short in the money call spread, which is what I assume you're doing. Selling the 120, buying the 125. The bid-ask spread there is 20 cents wide. If you buy the 125 put and sell the 120, it's the exact same trade, and your bid-ask spread is 6 cents wide. So you're dealing with much better markets using out-of-the-money options, and it's the exact same risk profile. So if that's what you want to do, I would 100% do the out-of-the-money put spread versus the in-the-money call spread.
Yeah. And if you're wrong, you'll avoid any of the commissions because you'll want to close it and not get exercised or assigned.
Yeah.
You know, that's another reason too. But yeah, I would just buy the put spread.
Yeah. Let's see.
I hope short vol blows up. You guys have nothing left. It's amazing. I mean, we don't really trade all that much short vol. Yeah, we are short some volatility, but I don't know if you can blame us for the market's propensity to short volatility.
Yeah.
We're just a little operation here.
Yeah, we're just little peons here. But
yeah,
what's funny about
you took the entire Tasty universe, and it would be a drop in the bucket of a daily liquidity. So,
yeah. But yeah, our short vol plays are mostly through structures of defined risk trades that are both bullish and bearish. So
it's mostly short time.
Yeah, it's cost basis reduction for us.
Yeah.
But yeah, short vol, even in the case of VXX, yeah, I mean, short vol, long vol, it's not really our bag, baby. But
yeah,
I do like shorting vol after big spikes. I wouldn't say this recent sell-off we saw and the recent rally and volatility is a big spike. Like, we're still in the teens. Bring us into the 30 and 40 handle, and then we'll start talking about SVXY and some of those other products. Are there any mechanics for debit spreads? Like, for a 10-point wide debit spread, would you target a 50% gain? Yeah, for any debit spread, it's the same story as credit spreads, because debit spreads have a defined profit potential. Any strategy that has a defined profit potential, the more you see in profit on the table, the less you can make going forward, but the risk is still the same. And you now have the unrealized gain on the table. So yes, if you have a 10-point wide spread, let's say you paid $5 for it, you're probably shooting for around $200 or $250. But the closer you get to $300, $400 in profit, you're really just leaving a lot of risk on the table for not much else to gain.
Yeah. Depends on the time frame. Like, if you're doing the NVIDIA one that we were looking at earlier today, that's going to be instant. You don't really have a profit target there because it's going to, depend entirely on the move on earnings. But if you're doing some sort of like at the money debit spread 30 days out or 50 days out, it's the same thing as we would look at with a credit spread, because you have a capped amount of profit potential. And after that, you have more risk than potential reward.
Yeah. CRM. What were the strikes? Yeah, sorry if that was not clear. We were bouncing around. I did the 3:30 call calendar. May. So I bought May and I sold the 2-day. So bought May for $1,300, sold May for almost $600, or sorry, sold the 2-day for almost $600. If CRM rallies in any way, I'll close it tomorrow for a nice winner. If it sells off, I will. If it sells off or doesn't move, I will roll the 2-day into Feb monthly or no, sorry, March monthly. And depending on the premium, I will more than likely turn it into a diagonal spread, because I can sell the 340 in March. If you look at the value now, it's $500. If we don't move around, it'll probably be $200 or $100, in which case I would take that. But yeah, if this does not go well, I'll just roll the 2-day into March and call it a day and just hold on to that. Yeah, the .ivr feature is the real deal. It's a nice thing. Just type in .ivr after any ticker symbol, and you can see the IV rank charted out.
Yes. You can also add it as an indicator, IVR. You just click on the indicator button, IVR.
Mm-hmm. Ed McAllister, managers won't manage AI. They will be freed up to manage outcomes instead of messing around with the broken old school software. Yeah. Yep. What are we doing in NVIDIA? Quick recap.
Neutral/bullish for me.
Yeah. I've got the 140, 150 call diagonal, long April, short the 2-day. And Nick is neutral to bullish with a couple of spreadies there.
Iron Condor and a upside crab trade. My perfect spot would be somewhere like, let's say, 140. 137 to 140 would be perfect.
Mm-hmm.
Which basically gets you back up to like the recent highs.
Yep.
Cool.
Do you guys trade the VIX? Not really. I think the big difference with the VIX and trading the VIX is 5 or 6 years ago, we used to trade the VIX all the time. We used to trade UVXY all the time. XIV, those products that are no longer with us because of the vol-apocalypse. We used to trade those products all the time because when you think about the VIX and products that track percentage changes in volatility, what we used to see a VIX that was like 9 or 10. And then overnight, it would go from 10 to 15 or 10 to 20. And you'd see these huge moves in VXX, UVXY, et cetera. Now, what you see is a baseline VIX of 18 or 16 or 17, and you get a move up to 19 or 20. Like, that's not going to move the VIX. So the environment has changed to where we're not seeing those swings anymore. And even if we do, the market is so fast now that it just eats it up. Like yesterday was a good example. We were down 70, vol curve was flattening, and then by the end of the day, we were flat. So it's like that didn't really happen back 5, 6, 7 years ago. Like you'd be down 70 and it would just continue, and that would increase the VIX more. So I don't know. Right now, we're not trading the VIX all that often.
Yeah. That it? We got any more?
That's it. Yeah, market's seeing a little selling pressure here.
Ooh,
Bitcoin down
spooky.
2K. It is spooky. NVIDIA staying strong. CRM up. We'll see if it holds. But yeah. Maybe we can get one more here. GEV.
Yeah. This is the spin-off. I know GE did their, I think it's GH is healthcare, right? HC.
Yeah.
So they spun off all the components, and I think GE itself is aerospace. There you go.
Yeah.
So GEV, what are we thinking? Up, down, sideways? It is these data center related stocks and energy names. GEV is another one at VST, is in there. VRT, which is Vertuve, is another one. They've all been whacked. So, that's, and you have NVIDIA earnings after the close, which I think this sector is also going to respond to. So whatever your thoughts are on NVIDIA is how I'd structure my trades in these stocks as well.
Yeah, Snowflake, I think too. Whatever happens in Snowflake, you could probably see a sympathy move in GEV to a small degree, but we will see.
Yes.
All right, that's it for us. Thanks for tuning in. If you got any further inquiries, you can find us on Twitter. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. Check out the earnings previews for all three of these stocks: Snowflake, NVIDIA, Salesforce. They're all in the News and Insights tab. As always, we cover all the big name tech stocks and big name stocks that report earnings and have futures content and what have you on the News and Insights tab. So check that out. But yeah, it's been fun. Answered a lot of questions, but we will be back same time, same place, 11 a.m. Central tomorrow. We will see you then. Peace.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
What does it mean when you hear can't buy an uptick?
When a stock can't buy an uptick, it means that the stock just continues to go down every single day, every single minute, every single hour. It's a phrase to use when a stock just continues to go lower. What's it mean when you eat like a bird and shit like an elephant?
Eating like a bird, shitting like an elephant, that means you're probably picking up a couple pennies here and there on a trade. And then you might have one trade where you get a little too big for your britches. You have that big loss and it kind of wipes it all away. So you're pecking at profits and then you piss it all away.
What does it mean when you get whipsawed?
Ooh, when you get whipsawed, you are basically selling into the hole or buying into a big rally, and then the opposite happens. So let's say you have a strangle on and the stock rallies towards your short call. If you roll up the short put to add more premium to the position and then the stock drops, you have effectively been whipsawed.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
My name is Mike Reckentine, also known as Dr. Data, and I am Managing Director and Head of Research and Development at tastylive. I work a lot within the background of the content that goes out. I've built hundreds of programs that the research team uses. It's nice to have the freedom to work on a lot of different projects and a lot of really cool things. I really like writing for Luckbox as a contributing editor. The utilities are one of my favorite sectors. This kind of goes back to my history as a market maker, floor trader at the Chicago Stock Exchange. It's an area I'm quite confident in. It's an area that I understand how interest rates have an impact on that market. They also are one of the best performing sectors over the past 20-something years. So utilities, boring, but they do have a lot of advantages. Advice to new traders would be the same thing that I learned when I was young, which is just do something very simple. Buy something. It gets you interested in the markets because you got some money in the game.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
We are back. It is Wednesday, February 26, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, the big event of the week beckons. How are you?
I'm doing good. You know, it's my favorite part of the week. Wednesday, I get to spend it with you, so it's awesome.
Wednesdays are great days. We get NVIDIA earnings. Sometimes we get FOMC meetings. Today, of course, is the former. This is a market that was trending higher today, and perhaps some of the remarks made over the past hour have weighed us down. And as we turn to the slides, it looks like that NVIDIA is retaining that role here, Thomas, as a modern-day Atlas holding the entire market upon its shoulders. If it goes down, one can imagine that TSM and AMD and SMH altogether probably takes a big spill tomorrow, not to mention names like Meta, Microsoft, Apple, Alphabet, what have you, the big AI titans. So, Thomas, we look at NVIDIA, we look at these earnings today, we see a market that's more or less in a stasis now after giving back some of those gains. Are you thinking this is a market that may be in trouble heading to NVIDIA earnings?
It could be. I mean, NVIDIA earnings have been more impactful than the US NFP, I believe, over like the last 4 or 5 months in terms of broader market impact, so the impact on the S&P 500. So it's definitely an event that everyone's going to be watching. It's kind of a make or break moment. We got a few other earnings too from smaller names, but still notable: Salesforce, C3 AI, Snow, things like that. So an exciting afternoon ahead for us.
It definitely is for these markets today, Thomas. One thing that's happened here in the background over the past few days as we see stocks struggling a little bit, even in the face of lower yields, has been the fact that lower yields are evolving alongside a shift in Fed cut odds. What a month it's been. A few weeks ago, we were talking about 1 cut through the end of next year. Now we're looking at 4. First one scheduled to arrive in June, then September, then March, and then we have a 4th one now eking its way onto the calendar for December here, Thomas. At 1 rate cut, we were talking about the market probably being at an extreme. We're now in the neighborhood of 4 cuts, which is starting to get a little frothy again. I mean, what do you take of these movements in the Fed rate cut market recently? And more importantly, do you think they have some staying power here? Should we hang our hat on them?
So the rate cuts, I think, are being driven by some economic concerns, which isn't really what you want to see. Before, it was inflation coming down, rate cuts coming in. That was good, more of a Goldilocks environment. Now it's kind of more the stagflation story is taking over. So 1 to 4 rate cuts without a notable uptick in equity pricing. That's kind of concerning in my book.
I think that's very concerning. I mean, we talk about what happened in September. We going into that meeting, we were discussing what types of rate cuts you get. Are they emergency rate cuts? Are they maintenance rate cuts? Are they recessionary rate cuts? And at the time, we came to the conclusion that it was a maintenance rate cut because it was a Goldilocks condition. Growth was positive. The unemployment rate was with a 4 handle, and therefore inflation coming down is the rationale. The 3-month return on the S&P 500 going back to 1984 when the Fed was cutting for maintenance reasons is plus 4%, and the 6-month return was plus 9.5%. Those are all good things. And the market, by and large, has followed that path. The market has traded higher since the September rate cut. But as we point out here, there's a difference. And you make this distinction. If the market's pricing in more Fed cuts because of a different reason other than inflation, it's doing so because of a growth issue. And when the Fed is cutting for recession reasons, that's a problem. When the Fed's been cutting for recession reasons, on average, the market's produced a return of 2.2% lower 1 month later, 14.3% lower 3 months later, 12.8% lower 6 months later, and 11.6% 12 months later. So there is a vibe shift happening right now. We can talk about the technicals in the S&P and where it may have failed today shortly as a note of interest. But the reasons why these rate cuts are coming, coinciding with the deterioration in PMIs, consumer confidence readings, Dallas Fed manufacturing, Chicago Fed National Activity Index, it all points to the rate cuts taking more of a recession flavor than a maintenance flavor moving forward. And that is not something that stocks have historically liked over the past 40 years. And that beckons a new world where lower rates aren't necessarily seen as good for equity markets, Thomas. I think that's been a notable change here in recent days, at least from my point of view.
Yeah, definitely. And, if the market sells off in a considerable fashion, we would need to see more of a sell-off than this. But that brings into the question, when does the market direction impact how fiscal policy and these trade tariffs are going to be put on? Is the administration going to consider that in its calculus of putting all these trade restrictions on? And we're getting more news flows on those trade measures coming through in just the last 24, 48 hours. So it's going to be interesting to see if there is a reaction, assuming that the market continues to drop.
Where are we failing from today in the S&P 500, which is now only up by 0.18%? We were trading higher back above 6K, high of 6023.75. Interesting place where the market begins to fail, right up against that 1 week moving average thus far. And this isn't a great place for that failure to happen, Thomas, because the uptrend from the lows that we have in August and in January are certainly coming under pressure. What's interesting is if you look at this from a slightly different vantage point, let's say at SPX as opposed to ESH5, if we look at where the market is beginning to fail right now, again, yesterday we closed back above that line. Today we may be looking to fall below it with that failure at the 5 EMA. So really, no matter how you slice it, if it's through SPX, if it's through SPY, if you wanted to look at it through that particular perspective, or ESH5, there is a little bit of teetering here at a level where if the market is going to bounce, this should be the place where it bounces from. And the price action today is not giving you really much to like if you're looking for something on the long delta side.
Yeah, 5,900, I think you got that same line drawn on your chart right around there. That's a kind of line in the sand for me. If we make a close below that, I'd probably expect to see more selling, perhaps down to 5,700, 5,750, or near that January swing low right there. And that's where we could really get in trouble if we start testing that and even break below it, then it could get nasty.
I'm still sitting and waiting and watching. I didn't pick up any long delta exposure on Monday or yesterday. Quite frankly, I've only placed 2 trades in ES this year so far because it's just been a choppy sideways market. The little bit of acceleration that we may have seen coming out of the mid-January swings clearly didn't have much staying power, and we attempted another move up towards 61.75 or so, and that didn't have much staying power. And so where are we right now at 59.82? Thomas, if the highs are near 61.80, if the lows are near 51.75, we're basically 200 points in either direction right now. So I would posit that perhaps for traders who are looking to do something, right? Not that trading for the sake of trading is ever a good idea. But if we're struggling to find directional acceleration in this market right now, we could argue that the most prudent thing to do is just simply, slap on the short iron condor. You can go out 44 days right now. In fact, let's just square this up here automatically. You can go up here to 44 days. We'll go to go. There you have it. That's a 69% probability of profit. You're risking, and this is, we need to fix the width of these. I just noticed that there. Let's go right outside the range. 63.75, 60, 57.75. This is a 52% probability of profit over the holding period of 44 days. Thomas, it's risking 3 to make 1. I'm not usually, thrilled about that kind of risk to reward. However, given what the trade is, a directionally neutral position where you expect it to grind sideways, this isn't completely unreasonable given what we've seen play out in these markets. If we were to widen the strikes, slightly different, upping the ante there a little bit. But that's really what's been the most prudent thing to do. I mean, when I played this on the long side recently, I get a little bit of acceleration, then get chopped up. And ultimately it goes nowhere. If I've been trading this sideways, I'd be much happier because it's still in the middle of a range that's been carved out since the end of September. It's just not my cup of tea right now. But I could see the argument that why people would say, you know what, just set it and forget it. Don't expect much resolution anytime soon.
Yeah, it's not a horrible trade. It's not too exciting, like you said, but it makes sense with where we are. For me, I'd probably wait till NVIDIA earnings after today. You could say the market's going to move past NVIDIA earnings pretty quick with PCE on Friday. I don't know if the market's too focused on inflation right now, given growth concerns. So I think that's where the focus is going to remain at instead of the PCE. So this is where PCE comes into less relevance, whereas last year, these were really important prints. I think the NVIDIA earnings is definitely going to be the most important thing of the week, and I think that could dictate direction going into next week.
Thomas, the NASDAQ is perhaps more concerning, right? We see the uptrend here off of recent swing lows. If we want to be generous, we could draw it to the one on January 27th. If we want to be a little bit more strict about it, per se, we'll call it to the January 13th low. Either way, we see some failure again here where we can't quite scale that 1 week moving average. We're beginning to see failure again after trying to retake the uptrend. There are swing lows that come closer down towards 20,600. So given the momentum profile, if we see some weak NVIDIA earnings, could we expect another flush of 600 points or so, 500 points? I wouldn't rule it out. Another 2% down in the NASDAQ. The technicals certainly seem like they're moving in a place where that seems like it's a possibility. But then that draws into question, is this a bearish rising wedge? Because if it is, this speaks to a more considerable top. And given the measured move, you're talking about, roughly speaking, a drop back down somewhere in the neighborhood of the lows that you had in early August. So technically, we're beginning to sit on a knife's edge right now, Thomas. I mean, this is a momentum profile that's quickly shaping up bearish. I'd note that stochastics have begun to move into oversold territory. MACD's trending lower below its signal line. Those are not things that you want to have in your pocket if you're looking long deltas right now. So for me, as someone who particularly likes to trade stocks on the long side, given how stocks historically behave, this is just still a very good time to be patient.
Yeah, sit on your hands moment for sure, especially if you're a long trader on the equities, which I am as well. So that's what I'm doing right here. I don't have any equity exposure right now. Maybe that'll change after NVIDIA earnings, but for right now, it's a no for me.
The Russell here continues to struggle. We talk about the uptrend from the September, the early January swing lows, and in recent sessions, we sliced below that uptrend. Monday, we closed below it. Tuesday, we closed deeper below it. Today, we try to scale it. And again, like so many of these other markets, right up against that 1 week moving average, top, turn lower, fail below the uptrend again. Not a lot of sticking power on this rebound, which is to say that if yesterday was the low, right, we get to 59.90 in SPY, you see this potential triple bottom forming an ES, you'd get a little bit more follow through here today. Now, granted, I understand why there's not more follow through because of NVIDIA and all of the comments that were coming out of the Oval Office just now over the past hour. You can look at the charts and the comments, and when the market begins to take a move south, look on the 1 minute chart for your own eyes if you don't believe me. But this is, again, technical weakness in the face of rising Fed cut odds for recession reasons. And that's not something that stocks like. So the best laid plans of mice and men, Thomas, talk about ES 7000. Maybe that's going to have to wait for a little while. On a sector basis, I think this is the alarm bell that if you're a long trader like I have been on the equity side for years now, almost exclusively. I don't think I placed a real significant short ES trade or long time. The sector rotation looks like crap, Thomas. XRT, retail ETF, the one that typically is most sensitive to downturns in the economy when a recession hits. That's leading the way lower here. XLY, granted there's a big Tesla component of this, but that's not great either. Closed at a fresh yearly low yesterday, breaking this potential uptrend, a potential top in here. And then, Thomas, if things are going bad, then stuff like Staples should be doing well. And sure, it's off on today's session, but yesterday it closed at an a new yearly high. If it's Staples, if it's healthcare, these are the parts of the economy and rather the market that are holding up right now. The sectors that are defensive are leading the way, and that's not something that you'd like to see if you're worried about recession. So the stars are aligning in a really negative manner on the macro front, at least in the short term, where we can't dismiss more downside. It feels like it's more possible now than ever.
Yeah, the stars are aligning, the planets are aligned, but
they are aligned.
Yeah, they are aligned. You don't want to see XRT go down. You don't want to see the Russell go down when yields are going down, especially if rate cut odds are increasing. That's definitely underscoring the growth story here, concerns about growth in the economy. It's just the equity market's really not giving us anything to really get long on right here.
No, and even when you look at some of the sectors, like industrials kind of sit somewhere in between. Obviously, you'd like to see strong industrial performance, but this is just a consolidation still. This is not giving you any sort of direction. If this is a symmetrical triangle, bottom left to top right does favor an upside move, but that's most of the time. It could be a top. It could be a sign that we're rolling over. Maybe this is a left shoulder head, right shoulder here, and it's just taking some time to play out. But it's not exactly the puzzle pieces you want to see come together. And it's a dramatic change of pace from where we were a few weeks ago, which granted I think needs to be acknowledged, when you had banks, when you had consumer discretionary, when you had semiconductors leading on the way up. That's just not the environment we're in right now. So yes, we have 3 of the 4 U.S. equity index futures in the green here today, Thomas. But beneath the covers, beneath the surface, it's not the most reassuring setup, as it were.
No, and we've said before you have to keep a really close eye on these headlines coming out of the White House because this does show a shift in momentum. We were going up a lot on the deregulation story, lower taxes, et cetera, and now it's shifted more to growth concerns over these trade measures, especially with more certainty coming into how they're going to be implemented. So the market's shifted its focus. We're past the deregulation story, and now we're going into the potential economic impacts from pretty heavy trade restrictions. It looks like they're slightly tempered a few weeks ago, a little bit more measured in their approach, and now we're shifting back to a more broad tariff base that's going to be slapped on possibly more products in more countries.
What's so interesting about this decline here we've seen, the breadth today is starting to deteriorate a little bit more. S&P is up by 0.13%. RSP, it's down by 0.05. The NASDAQ still up by 0.35%. QQEW is only up by 0.14. So it's the big guys that are getting the attention right now, at least in the S&P and the NASDAQ. In terms of the breadth, though, coming in today, 49.5% of S&P 500 stocks were trading above their 20-day moving average. That's, where's the directional signal in that? There really is none. It's not an extreme is my point. The extremes that we've seen in the market, when you're at like 8% of stocks are above their 20-day moving average, 1-month moving average, you get readings like that as we go into the start of the year, Thomas. And sure enough, as we have those readings at the start of the year, where are the lows found? Well, it's a pretty dark point. Everyone's feeling pretty crummy. Stocks aren't doing well whatsoever, but it's an extreme, and it's extreme in positioning that we've seen so many times before. So guess what? It coincides with the market rebound. On the way down here, there hasn't been that substantial of a flush just yet. And I pointed out because last Wednesday, February 19th, when the market closes here at this new high, at least in SPX, there was only 55.8% of stocks in the S&P 500 trading above their 20-day moving average. I don't think that breadth is helping here. It's not necessarily hurting, but it's certainly not evolving in a manner that makes you comfortable, again, operating on the long side right now. So patience. It's a 29.4 IVR. We've seen the VIX pop up here in recent sessions. It's had some staying power. Yes, I know that we came back in yesterday, but we're very much off the lows here today. And this is kind of that gray zone, Thomas, that Victor Jones likes to point out all the time. When you're between 18 and 20 in the VIX, the odds of it going up to 22 are basically the same of it going back down to 16, if you look at the history of the volatility. So to say that this is the point in time where you want to just jump in with 2 feet and sell the vol, let's see if we can get another spike into 21 first, or 22. But here, you may be stepping in front of a steamroller for a little while before ultimately the market finds a low, if that's to occur.
Yeah, I agree. And some traders get too focused on vol contractions in the VIX when trading equities. I think that's exactly right. Between 18 and 20, it's really kind of a gray zone. I don't know. I think NVIDIA earnings could have a lot of impact, but right now I think volatility staying elevated makes sense. Given the news flows, there's no real catalyst for going the other way. So why trade it with that expectation when you don't know?
NVIDIA earnings, we're talking about basically a $12 move through the end of the week, right? This expires in 2 days. So, Thomas, this is not exactly a 10% move. NVIDIA right now, we talk about it being the Atlas holding up the market, very much like the S&P 500 sitting at the midpoint of its 4-month trading range. You could say the same thing about NVIDIA. Lows are closer to 113. The highs are up to 153. It's a 40-point range. We're at 131.5. I mean, we're $1.50 off of the midpoint of this range that goes all the way back to mid-September. This has been a long time we've been trapped here. September, October, November, December, January, now February. 6 months. Maybe that's the play, Thomas. 6-month trading range, iron condor, sell the calls above 155, cap it off, and then sell the puts below 115 and cap it off. There are many ways to skin this cat right now, though, and I don't think people should be, don't think that directional, just because directional's sexy, right? Don't ignore the more homely short iron condor in a situation where a market has been range bound.
Yeah, and I mean, if NVIDIA went below 115, the market would undoubtedly be in trouble, given its weight and influence on sentiment. So trading in this range is surprising given the moves in NVIDIA last year. But yeah, I don't necessarily think I'd trade NVIDIA with that range right there. But potentially enticing. I mean, it's got good IV to trade.
It does. It does have good IV. It's popped up here a little bit going into the earnings result, which we've seen. That's fairly typical. Those results are going to be out after the closing bell today, which, Thomas, we have overtime today. Mike Butler's joining us today. You're joining tomorrow as the guest host. So we will be discussing that after hours. Let's turn our attention to bonds here, which have been able to turn their way higher over the course of this session. They came in overnight ever so slightly here, but then we get this press conference with the President of the United States, and as stocks go down, it's pretty clear that some of this tariff talk is moving forward, even with the March 4th deadline implementation schedule set to kick off next week. So the pendulum swings intraday back towards these growth concerns. Both ZN and ZB sitting near their session highs. ZB has made a trek now close to 118, 117 and 30 ticks. ZN, it's in here at 110 and 25 ticks. Thomas, I can't help but notice that in the background of all this, we talk about those Fed cut odds evolving. We now have a Republican House appropriation bill that's been set forth and voted upon. Yesterday passes 217 to 215 in the People's Chamber. So it's going to move on to the Senate, where there's no doubtedly going to be rounds of revisions, votes, probably sent back to the House once more. But it doesn't look like there are big spending cuts coming at all.
Yeah, no,
so what's the trajectory here? Are you personally worried about government spending as any of your, given all the noise we've heard, right? Is this into your calculus whatsoever now, given the actual legislation that we have in front of us?
I mean, you could be worried about it, but Congress isn't really worried about it because they're adding to the deficit. So there's cost-saving measures in the bill, right? But ultimately, it's going to add to the deficit. The fact that rate cut bets are coming in, if bonds rise enough, the Fed is going to have to adjust their path more. And this is kind of why Fed rate cut bets are moving this much, is because the bond prices are moving. So it's somewhat forcing the Fed's outlook on rates. And again, this is driven by growth concerns right now. So I could see bonds going higher from here. I've only traded them a couple times. I probably should have taken a long stab earlier this week. I was thinking about that, didn't pull the trigger. Am I concerned about spending? Probably not more than anyone else in Congress, apparently. So, no, I think more spending is probably good for economic growth. That's what we probably need. I think if spending was coming in even more, that would probably cause bond prices to go up even more, in my view.
Right. So like we're cutting $1 trillion in spending in some areas to offset it with a reduction in revenues otherwise. So net the deficit is actually going to be going up again. Is that a problem for the bond market? I mean, Thomas, I mean, like, I don't want to sound like a conspiracy theorist, but we've heard so much from the Trump administration about how they want to bring down long end yields. And, you know, if they're getting a market reaction right now where this tough talk on tariffs, they may not actually implement anything, but it leads to enough fear, I don't know, chaos that ultimately provokes lower interest rates, then they're engineering the trade that they want to. Tip of the hat to Jamal for his show later today. I don't know. I mean, this seems like it's a policy outcome that they're striving for, but the Fed and the market seems to think the Fed is going to have to respond because over the past, we'll call it week and a half since February 12th, we've added roughly 1.4 times 25 basis point rate cuts on the board, a full one and then 40% of another, to phrase that a little bit less unclear. That's a big shift in a short period of time. So the market's clearly caught on to something right now. And again, what is the best performing asset class when recession conditions set in? This was the discussion we had at the later part of July of last year, the long end of the curve. ZB, that's the place to be. If you think recession's coming, forget stocks. You want to hide out in bonds. And right now, bonds are behaving as if those recession fears are coming true, and so are the interest rate futures. So SOFR, 3-month SOFR futures for December 25, we've added 1.4 times worth of 25 basis point rate cuts. 40 basis points have been added, okay? I just got to stop flubbing this, Thomas. But we're moving towards a more dovish world, but not for the right reason.
Yeah, exactly. ZB is probably the place to be if you think this is going to continue. I think it's going to continue for a while. Are there going to be pullbacks, profit taking? Yes, along the way. That's probably the times you want to buy right there. So there's going to be opportunities if you want to get long. Wouldn't necessarily get long right away at this level. But again, pullbacks are going to invite opportunity to buy.
We talk about a market with some strong structure, the swing high we had on February 7th. We break through it yesterday. That first touch that we have back at those levels here this morning, or rather overnight, they produce the immediate bounce and we swing up to a new yearly high. So that's, good news if you've been operating on the long side of bonds, of notes. I lifted my long deltas in ZB yesterday, if only because of the structure of the position. And so I was hoping for a little bit more of a pullback. I thought it might be a little bit deeper than this, not just to the swing high. So I was caught sitting on my hands and I haven't been able to re-engage. I was looking for a move back to the 5 EMA. We touched it the last few sessions. So, hey, we got a bounce into there and a pullback above the former high. We got something to work with. This thing keeps running. So I'm no longer on board with ZB. I'm still holding on to ZN. So the call spread, the 111, 113, there's still a good deal of time to it, 58 days to expiration. And so there's no reason to make an adjustment right now. This is working in the manner that one would hope, being long deltas, and vol is starting to bounce back as prices going up. So good news for being long the call spread, a little bit of juice on both ends. Otherwise, bonds and notes, it's a great place to have some exposure right now. If you think the writing is on the wall that short-term macro conditions are deteriorating and could lead to a deterioration further in risk appetite, and the sector rotation is not helping, and the comments from the White House are not helping, and the Federal Reserve just doesn't matter right now, Thomas. And I don't mean that in terms of the rate cut odds, but has there been a Fed speaker that you've heard from that has moved the market in recent weeks? They have no cash. They have no cachet right now, whatsoever.
Yeah, the market's not really focused on Fed speakers. It's the bond pricing and rate cuts move in the markets and what traders are focused on right now. I mean, besides for Powell speaking, there's no Fed speakers that are really being paid attention to right now.
And that's such a dramatic. Tom has given me a hard time the other day. Oh, you finally realize that none of these things matter. It's like, well, 2 years ago, James Buller, the St. Louis Fed president, would whisper something about rates needing to be higher, and the 2-year yield would shoot up 15 basis points in a session, and everyone would pull their hair out because some regional Fed speaker said one thing. So to suggest it's just a dramatic change of pace from where we had been when monetary policy was clearly dominant over fiscal policy. Now fiscal dominance is very much that is the soup du jour. But let's talk about these metals, Thomas. Bouncing back here a little bit today, not the biggest bounce back in the world. Gold prices only up by 0.34%, silver up by 1.2% now. What do you make of this price action over the past 2 weeks in gold?
I got a little bit long gold today. Going to take a stab at it. I did sell a put spread with the short at 29.20. So I'm expecting a little bit of upside right here. Yesterday was kind of the fear-driven move where a lot of money was shifting over to bonds. Gold also a safe haven asset, but it wasn't really responding in the typical way that it did, that you'd expect to see yesterday. So a little bit of moderation today in the overnight session and continuing into this session. The VIX still elevated. Is gold a place that traders are going to want to be to seek out some safety? I'm guessing yes. Technically, it also still looks good, a lot better than silver. So staying out of silver right now, keeping my chips in gold. So yeah, it's just a small trade, but a little stab at the long side.
I'm still holding on to the long gold position here. I know Jamal got out 2 days ago, right before the thing had a spillover. I'm still comfortable staying long. Maybe we're flagging up here, and it would certainly appear so. In any event, the prevailing trend has been to the upside, and as long as we continue moving and chipping higher, it feels like it's worth staying long. While we have seen this area between the 5 and the 13 EMAs pull up as support in recent weeks, we're perhaps seeing that again right now, although this setback is a little bit deeper. The overextension between price and the 1 month moving average is being depleted. So more of a sign that we're losing some of the overboughtness in this market rather than losing the actual price. And you love to see that if you're trading momentum wise and it's a brief pit stop for accumulation, the indicators deteriorate from their extreme readings, but you don't lose any ground whatsoever. And in this case, we really haven't, because when we were overbought back at these same exact price levels at 29.30 2 weeks ago, we have worn down these overbought conditions and prices haven't gotten anywhere. So I continue to treat this as a bull flag. It looks like a strong run. In the event that we do have a measured move to the upside in our Fibonacci extension, we'll go to here. The swing low that we have at the end of June to the highs that we have in October and then back to the November swing low still calls for a move up to $49.20. So consistent with this breakout gathering pace, and we can probably redraw this to be a little bit more accurate. Okay, $30.46.50. If we're in that neighborhood of going north of 30.40, Thomas, it means that I want to stay long because we haven't reached that target yet. So I'll continue to roll up on the long call spreads, depending on pick your poison. The vol has also come off here too, which I think is the big tell. That is a hallmark of what happens to gold when it pulls back in recent years. We'll call it over the past 18 months. That pullback from February 14th onward was perhaps a sign that we were due for a contraction in price. And so if you were able to catch some of that, I think good on you. But now is a difficult time to be looking to sell calls because we have come off and because the vol has already been crushed. If we even get a $20 or $30 price rise, another bump in vol could be very, very painful. So maybe sell it directionally neutral, but my preference is as a momentum trader to stay long here. Silver prices, Thomas, you mentioned. Those are up 1.17% today. I really like the support here, though. The former highs that we have at the turn in January, support again, pulling back in today. Is this any part of the conversation for tariffs? Do you think that silver here is being negatively impacted by some of these flows or news flows around what tariffs may or may not go into place moving forward?
I think indirectly, yes, on the growth story, especially China's a large silver consumer. Their economy affected a lot by tariffs. We could still see retaliatory measures in place. Yeah, it's kind of just not my preferred method to get long right now in the metals. Prefer gold, like I said. But you're right, that support is holding. I think it's, if you drop below that 32.4, 32.3, you're looking at potentially some trouble reestablishing that downward trend line, perhaps. But yeah, I think the growth story kind of plays into the little bit more of a larger pullback versus gold. So that's just kind of why I'm not trading it to the long side, a little bit more loss of momentum there, even though support's holding.
Silver prices here are bouncing nearly as much as copper prices are, but the percent change is a little bit misleading. Once you go over to the chart, you say, whoa, hold on a second, we've come back in. There was tariff talk in between the markets being marked for closure yesterday and when the market reopened for the Wednesday trading session. But the question is it over, unrefined copper? Is it over refined copper? No one really knows. We haven't received an answer yet. But that clearly is now in the background. Copper prices and copper, generally speaking, had been, I don't want to say immune to some of the tariff talk, but they weren't certainly directly targeted. Ilya was making the argument that a lot of the move in February was more about what was happening with supply related to the Congo, the DRC, and Rwanda, the conflict that's happening right now between those two nations. But the tariff talk adds another interesting element to this that we have not yet seen this year so far. Do you think that we should be looking long deltas then, knowing that we have this sort of Damocles hanging around that could ultimately put a squeeze on supply?
Yeah, so we had the tariffs on steel and aluminum already talked about. Now more recently, we're getting talks on tariffs on copper. The U.S. produces a good amount of copper, but we also import a lot, mainly from Chile, I believe. Not that much from China, but China's also a big player on the market. So one thing you saw in aluminum is Europe and other places have a large surplus of aluminum. So the tariffs aren't as consequential as they are in copper, where there's deficits in other places. So this could really raise U.S. prices for copper more than it can for probably aluminum. So I think a long copper trade here makes sense, especially if these tariffs, they haven't announced the rate yet, whether it's 10%, 20, 25%. I think it's probably going to be around 10%. It could go all the way up to 25%, I believe. But we have to watch for more talks on this. What exactly are they going to hash out, and what's this final number going to be? But it's going to raise prices in the U.S. more than anywhere else. And you're already seeing that with the COMEX spread versus the LME. You've seen it earlier this month and last month kind of explode to pretty extreme levels. Those levels have pulled back a little bit, but they're still holding elevated to where they've been averaging over the past few years. So the story in the market is expect higher copper prices, especially in the U.S. But again, this growth story, copper is a big input into industrials and overall the economy in terms of automobiles and other things. So it's really balancing the tariff talk with how much is growth going to actually contract. So if growth fears subside, I think that's when you could really see copper take a run, perhaps even up to 5.
There's not really a direct trade in here per se, although if you go over to ECH, the Chile ETF, the MSCI Chile ETF, you'll find a stock market that's pointed very higher. Chile's foreign ministry put out an announcement today saying that they are monitoring the situation with the United States and the copper tariffs, because you can see the red bar here according to mining.com. That seems like a reputable source for stuff on metals, Thomas. They're a pretty big contributor to where we import our copper from. They're the biggest one. They're bigger than Canada, Peru, and everyone else combined, in fact. Yeah. So if we're slapping tariffs on imported copper, maybe it's something that, while good for copper prices, could actually be really bad for the Chilean equity market, which again, ECH here, not a very liquid instrument, 59.6 thousand shares traded today, but it has ripped higher here in recent weeks. Would tariffs on their biggest sector be bad for that economy? I imagine Chile would probably come to the table and negotiate a deal first because they could not afford to lose the United States as a major market destination. And I don't think the world would stand for China doing more dumping either. Interesting times, Thomas. Energy continues to struggle here. This is certainly an area of interest for both you and me. We've traded in and out of natural gas this year quite a few times. Down another 3.5% today. So this is a sharp turnaround this week, Mr. Westwater, as the chart loads. Natural gas was trading up near, 460 a few days ago. Now we're back down in the NGJ5 contract. I think the highs were closer to 4.35. So we're off 37 cents from the highs. Is this the end of the uptrend?
I think for a little bit it is. I'm actually short natural gas as of this morning. So I'm expecting more of a drop down 3.7, 3.6 is the area I'm looking for. We've seen a few things. Cold weather in Europe has subsided a bit. That has closed the premium from the Dutch contracts, TTF futures versus the NG futures. So that arbitrage window, it's still open, but it's less incentivized to send cargoes to Europe right now. At the same time, the weather has shifted warmer into the U.S. model. So the next 8 to 14 days, looking for warmer weather across the eastern seaboard. And we're about to come out of withdrawal season. April 1st officially marks the start of injection season when the weather shifts so much that you build inventory rather than draw on it. So we're nearing the end of the winter. The chances for another Arctic blast, freeze, polar vortex, whatever you want to call it, are subsiding by the day. You could still get them into the end of March, even sometimes into early April, but those chances are reduced. At the same time, production per Bloomberg is up to 106.4 billion cubic feet as of today. So that's signaling, if you look at last week, we were trading all the way down to 102, 103 billion cubic feet per day. So we've added about 3 billion cubic feet per day in capacity. And that is pretty considerable. At the same time, energy consumption has gone down for both residential and industrial. So number one, these freeze-offs that were taking our production offline in terms of 3 billion cubic feet per day are ended or ending because that cold weather is no longer existing. Producers can bring their equipment back online. So the story is flipping. There's some profit taking in there as well after the recent run-up. So I could definitely expect to see more downside into next week. But again, you got to continue watching the weather even at this point. In a few weeks, you could stop worrying about it so much. But yeah, it looks like the bull story is over for right now in natural gas.
You mentioned the weather here on the right-hand side of the screen, the 8 to 14 temperature outlook. Most of the country is going to be normal or slightly above average temperatures. You're talking about like 75% or so. That's perhaps off the table. European inventories as well. So the red line here on the chart is the 5-year average of the daily storage change. The green bars are this year's most recent data. You could see that as we made our way through December into February, right? We're talking about this track where we're actually drawing down a lot more energy out of European inventories than we had seen previously over the past 5 years. So that drawdown of supply, that increased demand relative to what had been the norm, certainly contributes to that upside pressure. But what have we seen here in recent sessions? Right, we've started to pull back in line with more normal levels of demand, more normal levels of inventory drawdown. So perhaps the strain is ending. 2 of the past 3 days, we don't know where we're going to close in natural gas today, but today could be 2 out of 3 where we are below the 1-week moving average, and we have not seen that kind of price action since you go back to the end of January. Last time you see at least 2 out of 3 closes below your 1-week moving average are the final trading days in January, Thomas. So that's not characteristic of the uptrend that carried us here. If there's a pullback, swing high that you have back here on January 16th, that 1-month moving average, the yellow line, up at $3.71.8, that would be a place to look for some short-term support. So if I'm short deltas here and we get down to 370 or so, that's an interesting place to readjust, get yourself more duration, take profit altogether, trim your position size in half, what have you. And if you're not in the market and you've been waiting to get long, this for me is the place where I would be interested in perhaps taking a stab on the long side, depending upon what we see with volatility and ultimately the tape tells us intraday. But there's a little bit of a plan here. I don't have any natural gas on right now. I took it off a few days back. I'm going to keep it off for the foreseeable future as we wait for some of this dust to settle. Crude oil prices, Thomas, slightly different story. Volatility coming back, 25.8 IBR, but we continue to break down. And the uptrend that we now see from the lows in September, in December, giving way. Why is oil so weak all of a sudden after beginning 2025 with such a bang?
Yeah, so the obvious thing is the growth story, right? The other thing is the U.S. policy is really going to be supporting exports from Iraq. That's a big source of oil. Some more supply coming on, perhaps. More broadly, you could say U.S. energy policy altogether is conducive to more production over the next few years. There's some estimates that are probably high. It's probably going to be pretty moderate, but you can expect energy production to perhaps rise. One thing to note is the prompt spread really hasn't followed this sell-off in the recent weeks. So that's showing more that, this is more of a financial positions flushing out right now, resettling at a new level. The question is, where is that level going to be? Between 69 and 70 was a good place to put your cards on, but we're trading below that right now. So, we really do got to get a bounce back in the next couple days if we want to see, this new level established right there. If we go lower, perhaps 66 is on the cards. Again, you got to keep your eyes on how tariff talks are going. You got to keep your eyes on the energy policy with the U.S. But this looks to be more like a financially driven move rather than actual structural changes, at least acute structural changes in the market. So I think the selling, we've seen a little moderation today compared to yesterday and Monday. So I think I'm going to take a long stab soon. I don't want to do it quite yet, though.
Yeah, if we're talking about long deltas, I'd probably wait closer to 66 or so. We've seen a bunch of lows in this area, September, October, November, December, right? Give us another $2 or so, which at these prices, that's a 3% move. That's not nothing. But you give us that 3% move to the downside, then it looks a little bit more appealing on a technical basis. Otherwise, that's a really ugly bearish engulfing bar yesterday. We moved above the Monday high, closed below the Monday low, and we find ourselves with that follow through here today. So why are U.S. Treasury yields going down? Well, by and large, they've continued to be a function of what's happening with oil. So oil prices down, Treasury yields go down. It is one and the same trade, and now stocks are getting a whiff of what oil and yields are talking about, and stocks do not like it. Thomas, 2 days ago, I tried getting filled on a short iron condor position to just look for oil to stay within the 52-week range high-low area. Again, about a 3-to-1 risk to reward. Not my favorite, not my most desirable setup, but couldn't get filled. I suppose that's a grateful thing here on this Wednesday because the market is about $2 displaced from where I had wanted to enter. Nevertheless, 25.5 IVR, I'm glad I didn't do it. It's not like we're seeing much juice.
Yeah, and it makes sense to wait until going down to 66, 67 even, because you're going to get more volatility coming in, most likely if we do go down to that level. So you're going to have more juice to play with. I'm with you. It kind of just makes sense to wait a little bit for now, but the volatility is coming up, so it's becoming attractive again, whereas the past couple weeks, there wasn't really anything to play with at all in crude oil.
So much hand-wringing going on about the bonds and the stocks, Thomas, but the currencies, they don't seem to care whatsoever. If it's German elections, if it's tweets about tariffs, or heck, I don't know if anyone saw the president's new video about what Gaza would look like with a Trump Gaza tower there today. FX does not give a damn. And that's the polite way of putting it. This is a 0.19% move lower in the euro, 0.04% higher in the yen. Even the peso today, up by 0.3%. Canadian dollar, down by 0.21. These are nothings, Thomas. Why is the FX market so calm and steady, all things considered, relative to its peers?
That's a good question. You look at the move in yields and you'd expect to see a bit more movement in currencies, and we're not seeing that. I don't know. That's a good question. I'd love to hear your thoughts.
Makes me think that. And what I just see a headline that Trump is delaying tariffs. Now, it's like, what is it? This is our day. Every minute. Bloomberg story. Mexican peso, Canadian dollar get boosted after Trump delays tariffs. But it's not letting me load the story, so I can't tell you if this is talking about what happened over the past 3 weeks or if this is brand new. I think it looks like a retrospective, so perhaps that's a poorly timed headline, Bloomberg. Either way, though, yeah, we could see how the Canadian dollar losing some of that momentum. I'm just big picture, right? Does this help or hurt the U.S.'s standing moving forward? I think it all is a net negative for U.S. standing globally and our role in the financial system. Does that mean anything about fiat currency shifts between central banks? Maybe long term, but immediately, not necessarily. The rate differentials are what matter most at the end of the day. And so, broadly speaking, the dollar index behaving the way that it is, it kind of looks toppy still. It looks like it's rolling over now. And that's following the track of what's happening with interest rates. That chart looks one and the same. The 10-year yield versus DXY. So I think we can just avoid the noise. There's questions over European growth. There's questions over growth basically everywhere in the Western world right now. But if U.S. yields are going to continue to leak lower, that is the albatross around the dollar's neck right now. And it makes, quite frankly, a really interesting environment where we could probably sell some put spreads in something like the British pound or the Canadian or the euro, which have avoided Trump's ire thus far and appear to be standing out of the way of any of this tariff talk. 40.2 or 50-something IVR, don't look away from those. That's pretty juicy.
Yeah, and the Europe is going back to rate cut talks more aggressively, even though inflation is still above their target a little bit. They're saying they're still going to pull down rates, even though that inflation is still elevated. That's probably aimed to promote economic growth, even though what they're saying is rates are at a level where they're not restrictive anymore. So you assume that more cuts would lead to, a better financial condition in Europe, and potentially with U.S. yields continuing to drop, I think it makes sense to probably be neutral to more longish on the euro and the pound.
Yeah, well, this is the one part of the market. If people are looking for exposure away from things that won't be touched by NVIDIA, FX probably not going to be touched by NVIDIA. What's next on the calendar? That calendar page shouldn't be blank. But the fortunate thing here, Thomas, is that we can just do this live tomorrow. What's on the calendar? Tomorrow's actually a day where there are important things on the calendar. So we squeak this over here. IG, parent company, has a great macro calendar, Thomas, that may have been absorbed from a previous venture that you and I were involved with. We see here GDP tomorrow morning. We have durable goods tomorrow morning, pending home sales. I would say ignore all the Fed speakers because they have not said anything that's levied a market impact whatsoever. We'll fix this on the slides before it goes to publication. As we wind down the show, we typically do a brief bit of education. Head over to tastylive.com, top banner, learn beginner futures, or click the link here on the bottom of the slide to take you there directly. But today's a good day to recap some of the key concepts regarding futures, Thomas. There are 6 primary sectors, with the majority of those products trading in the same time frame, except for ag, ZC, ZS, ZW. They all have their own unique characteristics. But there are multiple market participants in each futures segment that are trying to express opinions. If it's to reduce risk, if it's to take on risk, producers are trying to hedge, traders, we're trying to make money at the end of the day. And all of us have a rhyme or reason for why we do what we do. And how we behave, the positioning we take, is instructive for the onlooker to help determine how they should feel their exposure in the market. Mind you, when you're trading gold, crude oil, ES, NQZ, NZB, you're going to have different tick values, different overnight margin requirements. Just keep an eye on those as you move from product to product. But generally speaking, if you go from the big guy like ES to MES, the micro, CL down to MCL, you're looking at a tenth of the tick value. So if it's $10, it goes down to 1. In any event, go learn more about futures products. tastylive.com, top banner, learn beginner futures, or click the link here on the bottom of the slide. It's going to take you there directly. And you don't need to wait every single day for the education, Thomas. You can work your way through it. And it's a good refresher course. Just remind yourself why futures may be a benefit to trading and how to express those cost-efficient views. Thomas, we have a few minutes here, which means we get some money back from the producers. So we'll wrap it up early. Just a reminder, after this, we do have Truth or Skepticism coming up. Sawzoff Radigan. It's a replay of yesterday's episode. So if you missed it, you can see it again. Other than that, Thomas, I will see you later. Good luck trading. Up next, Truth or Skepticism here on Tasty Live.
Hello, everybody. We are back. And you know what? This is the first time, Dylan. Actually, I don't know if it's the first time. We might have done this about 10 years ago or 12 years ago when we first started, that we've done. Let me think about this. No, what am I saying? We always do the show live. I'm thinking we always film this show. No, we always do the show live. So what am I?
We've never done it live on a Tuesday.
Yeah. What am I talking about? Josh got me all messed up here.
Wednesday, but we've never.
Yeah,
we've never
we always do the
run
show
a
live.
Live Tuesday.
Never done a live Tuesday.
Yeah.
That's right. So we're filling in for Dr. Jim. So we're going to do the show live today, and then we'll play the recording tomorrow. So Dylan, thanks so much for accommodating our schedules today.
No. Thank you for accommodating my schedule. As you know, I've got a big, we've got a big fashion show here in Milan this week. So tomorrow's going to be, I'll send coverage of the various items, of fashionable items. So I appreciate your flexibility. We're actually hosting Christy Ross. Very exciting for us. We got
Christy Ross is the CEO, ex-CEO and co-founder of Tasty, and she's in Milan. And I'm like, Christy, you know, you're going to Milan. Dylan's in Milan. She's like, well, he won't be at the fashion show. I go, Dylan's at the fashion show. She's like, oh my God.
We're running it. Come on.
She's like,
come on.
She's very excited. She's like, oh my God, Dylan's there. Okay, so you guys will have a good time.
So we're combining worlds.
Yes.
So speaking of combining worlds, there's been a long-standing political hypothesis that is, if only a businessman if America was run like a business, there wouldn't be so many problems. There wouldn't be so many issues. There wouldn't be so much. That wouldn't be so unproductive. It wouldn't be so inefficient because private business, they don't put up with this shit. Listen to Jamie Dimon and listen to Tom Sosnoff. This is how it is. So
if only we could find a real business person. Where can we find
a businessman?
We need to find a businessman. Yep. If only we could find one.
Combining a world. It's like Christy Ross coming to Milan. And so, if we were to have a businessman run the country, then we would have a beautiful government and a beautiful country. That's what they say. And so Donald Trump's actually not a businessman so much as he is a gentleman who inherited a lot of money, who pretended to be a businessman on television for many years, but he's business-like. Other than the absence of any penalties for failure and the ever-present availability of free capital, but we'll set it aside and just presume he's businessman-ish. And
yeah,
Elon Musk,
he's business/entertainer. I would say. I'd say he's a business personality. He's a business personality.
He's a business personality. He's one of the most successful business entertainers in American history.
Yeah.
And he's certainly surrounded himself, I would say, by mathematical purposes, the most successful businessman in American history with Elon Musk by the numbers. The jury's out. It's only been a month. And there's obviously lots of issues, lots of things, lots of positives and negatives that can be commentated on at this juncture.
Sure.
But before we get into analyzing this particular business entertainer and his businessman friends, did you have when you know, whether it was in the days of Bill Clinton or the days of Jimmy Carter or the days of John Kennedy or the days of George Bush, you know, and Tony Batista would say to you in the pits of Chicago, he'd say, you know, Tom, if we just had a businessman, we wouldn't have these problems, you know, and you'd be like, all right, Tony, I guess so, Bat, you know. And so were you a subscriber to the if only we had a businessman hypothesis over the course of your many years among us?
Surprisingly, no. I was
okay.
The reason for that is, now again, I don't put Trump exactly in the businessman category. I put him in the business/entertainer. We have had entertainers before. You know, I mean, Ronald Reagan was an entertainer. You could argue, you know, the Schwarzeneggers of the world, that kind of thing, you know, entertainers.
Even Clinton was somewhat of an entertainer at the end of the day.
He was more of a lifer politician kind of thing, you know.
Right. He was more of a former governor, I suppose.
Yeah.
But Reagan was an honest entertainer.
Yeah, Reagan was, for sure.
Jesse Ventura, entertainer.
Sure, absolutely.
He was a fabulous politician as well. I loved when he was my favorite. When he was running, was it Minnesota? He was the governor.
Yeah,
he was great. Anyway, you're trying to make a point.
Well, yeah. It's funny you mentioned Jesse Ventura because I just listened to him the other night. He lives off the grid somewhere in Mexico. You know, crazy. He
should. He should.
He's batshit crazy, but entertaining. Yeah, for sure.
He's an entertainer.
Yeah. So there haven't been a lot of business people who have, or at least not that really come to mind, that have been.
Michael Bloomberg was a businessman. Sorry to interrupt you. Mayor of New York.
Yeah, he was. And he was a pretty successful mayor.
Yes, he was.
Unsuccessful candidate for president, but a very successful mayor.
Catastrophic presidential candidate.
Yeah.
But fine mayor.
Yeah. One of the reasons that most entertainers make good politicians is because entertainers, by definition, know how to entertain, and they can usually they can usually make you smile or make you happy or say what they can learn.
Win you over in some way.
Yes. If Elon Musk was not the richest person in the world, he wouldn't win anybody over with his charm and charisma. That's for sure.
With his ketamine chainsaw massacre.
Yes. Yeah. Either with the Jamie Dimons of the world. There's a lot of people out there that Michael Bloomberg was a perfect example of somebody that had a very difficult time talking. You know, he wasn't a great speaker. I mean, you know,
I believe he was terrible.
Yeah, terrible. I was trying to be nice, but he was terrible. And
I would say I'm a friend and admirer and former employee. And he was actually anyway, this is not a Mike Bloomberg conversation. He was a terrible speaker in the president.
Exactly my point, though. And, you know, one of the reasons that, you know, one of the reasons Reagan became president is because he was an entertainer. One of the reasons that Trump won is because he understands the business of entertainment. I mean, that's always been one of his strengths. And there are other people, you know, like him, the Jesse Venturas of the world, the Arnold Schwarzeneggers of the world. And I'm just thinking of people that just pop up on my head, but
sure,
I'm sure
we can fight off the top of our.
I'm sure there's a lot more. And
Zelensky, and former entertainer, by the way.
Yes. Yeah, exactly.
Not to go global on us, but
yeah. So what's always scared me about business people is the fact that one of the skills of being a great leader is that it's not just all about being it's not just all business. And that's the difference with politics. And that's the difference inside of political systems. You know, I mean, I've been hanging around politics since I was in college, interning, you know, starting off interning in the New York State legislature and in Albany, working my way into Parliament and listening to all these great, speakers.
Well, I mean, let's be honest. You were a chauffeur in Parliament, so let's not misrepresent your role.
No, I was a tour guide primarily, but I did eat lunch every day in the members' dining room, so I was a special tour guide. But I listened almost every day.
Just driving that guy's Rolls Royce, but anyway.
But every day I sat in parliamentary chambers in the chamber, and I listened to everybody just talk, and they're all great. I mean, it didn't matter what side of the aisle you're on. Man, the bullshit was flowing all the time, and great speakers.
If the system selected for some of the best speakers on earth,
exactly,
you couldn't get in the room without being a great communicator.
That's one of the beauties of parliamentary systems. Anyway, I guess my point is, you can be a great politician without being a great business person, because you articulate things, you repeat things, you're able to get different messages across, but there's not that much policy that you necessarily have to initiate yourself, or you don't have to be that innovative with respect to policy. You have to be reasonably smart, all that kind of stuff. It is very difficult for certain business people to deliver that same message or those same messages, and to deliver it in a way that makes people believable. That's why I said, Elon Musk could never do that. He doesn't have the ability to communicate, and nor does Jamie Dimon, nor did Howard Schultz from when he thought about running. I mean, these are
disastrous.
They could not communicate. They couldn't get their point across. And even
Bob Iger hasn't been able to get anywhere.
No, he can't talk either. And there are some politicians that are also challenged, but what you'll find is that most politicians, they're pretty good at, the art of the bullshit.
Throwing some words.
Yeah.
Throwing some words.
Yeah, they throw some words around. Might I say, you would have made an amazing politician.
I appreciate it. Listen, I'm a young man still. The days will come. Our day will come, sir. But
Yes.
but with all sort of joviality set to the side, the logic behind the reason that the logical basis for the businessman president as follows. The government is inefficient and wasteful and does not make decisions in a way that incentivize performance and targeted outcomes. So the theory of private business is, if you open more brokerage accounts, you sell more sneakers, you sell more toast, you open more bank accounts, you take care of the clients at the airport, whatever it is, like if you satisfy a customer with some product and or service, then the business benefits and you benefit.
Yeah, and when you talk about governments and countries, and you think about that for a second, the U.S. is not a publicly traded company. We don't really care what the market cap of the U.S. is. We do care what the GDP is. We do care about the success of our economy, but we don't care about the market value of the U.S. What that means is that our objectives are different. Okay, we are not as concerned about what our bottom line is. We are concerned about our culture. We're concerned about building a place where it's a good place to live, where we can attract bodies, brains, innovation, and lots more. And to do that, it's not just about, companies come down to, it's a bottom line thing. Either you're in the middle of some kind of massive growth, or your bottom line is you're just kicking out free cash flow. It's one or the other. You either get rewarded by growth or you get rewarded by free cash flow. That's all there is. And that's how you're measured. Doesn't matter if you can talk. In the world of...
And growth and free cash flow is theoretically derived from satisfied customers. Theoretically.
Sure. Okay, that's fine. Whether it's a retail, institutional, whatever it is. Sure, you're satisfying customers. The difference is when you're running a government, there's a lot more things at stake. You have to make a lot of people happy. You have to make rich people happy, poor people happy, new businesses happy, old businesses happy. You have to balance lots of different things. You have to defend your territory. You have to take care of people. You have to build culture. You have to make places safe. You have to make places clean. You have to build infrastructure. And so the game is completely different. I don't know.
What I'm getting at, I'm with you, but who are the government's customers? Does the government have customers?
I don't know.
Are the customers the taxpayer? Are the customers the citizens? Are the customers only the people that vote? Are the customers anybody who has a passport for that?
If you were looking at it that way,
metaphor.
If you were looking at it that way, it would be taxpayers. You don't have to vote. I mean, you should vote, but you don't have to vote. I think it'd be taxpayers.
So the government shouldn't serve children because they don't pay taxes.
No, children are just
obviously you don't believe that.
Of course not. But one thing
I would say the customer passport holders.
Okay,
citizens.
whatever. I don't care. Define it however you want. I think the difference is that you can't ask people that run governments to run companies, and you can't ask people necessarily who run companies to run governments, because that's all I was getting to is there two different motivations. There's two different bottom lines. There's two different objectives. Company's objective is to create free cash flow or grow. The politician's objective is a lot more. It's very different. And you would never ask a politician, which is why most politicians, when they're done in politics, they rarely go into business unless it's some form of consulting business or unless it's some form of lobbying business or something that they're used to or that they can parlay off of their political experience. And that's why business people rarely go into politics, because it's a different mentality. It's a different objective. And now what you have in the US is you have an approach where you're trying to use a business logic in a political system, and it's not necessarily working. At least we don't know. It's too early to tell, but we don't think it's working. Some people will argue it is working. Some people say it's not. Whatever. It's not making people happy, that's for sure.
Meaning, let's just cut to the bottom line.
Sure.
The implication of a business mentality is on an individual basis, failure to perform in your job can result in demotion or termination.
Sure.
Which may or may not actually be true, but that's the perception of sort of private sector life. And the perception of public sector life is that performance in your job is almost irrelevant to your professional security.
Yeah,
the logic is that being vulnerable professionally generates better performance. This is the sort of businessman's rhetorical logic of the government should be run like a business.
Sure.
The employees should be incentivized to perform.
Sure. Where else? Government is so messed up that right now there's basically nothing is bipartisan. The votes are all one side, all the other side. Nobody jumps the aisle. Okay. If the system was truly, if it was a business world, everything would be decided on whatever the event is that's happening right there, whatever the vote is actually about. In the world of politics, the vote has nothing to do with the topic or the issue. The vote only has to do with what side you're on. That makes it not business-like. That's what differentiates politics from business. In politics, everybody votes on their platform. Nobody votes for the actual, or this is the way it is today. It wasn't always like this because people would cross the aisle. But today, you only vote for what everybody else votes for. That's why the votes are Nobody crosses over.
There actually is no analysis.
That's right.
There is no business-like discussion. There is only loyalty to.
That's right.
A group affiliation.
That's right.
That is indifferent to any possible.
That's right. So no matter what you say, right now in America, if you asked politicians on one side of the aisle one question, whatever they believe, the answer they give you is the party line, no matter what. And
which is the least business-like possible way to make
exactly. Which is why business and politics require different leadership. Because it doesn't work.
Or political parties need to be abolished.
Or political parties need to be abolished. Yes, one or the other. Or something else has to
then eliminate the incentive to, which would force a vote based on the issue rather than based on party lines.
Listen, in a perfect world, you would say, you know what? I want the smartest person who can articulate things, who's the best business mind to run this country. You know, of course you would say that, just on the surface.
Who's also empathetic and moral compass and thinks about the weaker people.
Exactly.
And all the things, all the layers.
Who cares about stuff and right. And then what we found out is that person doesn't really exist. You can't have your cake and eat it too. Either you're going to get some, either you're going to get what you have now, or you're going to get completely the other side. But whatever the case is, you're not going to get exactly what you want. And the best you can hope for sometimes is that perfect centrist, which again, in today's world doesn't really exist or doesn't interest people in a polarized world.
The other thing is, in a world where communication trumps everything, saying that you're running the America like a business as a rhetorical device is very different than actually running the country like a business. So to your point, I should say, if the country was being run like a business, there would be no votes along party lines. The surest way to understand that the country's not being run like a business is the fact that anytime there's a decision, the decisions are made based on party loyalty and have absolutely nothing to do with the issue at hand.
Sure.
Full stop. I mean,
100%.
So even saying now, oh, well, Trump's a businessman and now it's a business and blah, 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 is by definition BS.
Of course.
As much as it was with any predecessor who made the same claim. It's not even a Trump specific.
Of course, but go into any boardroom, not even any boardroom, but go into any corporate meeting, high-level corporate meeting, and everybody states their opinion. There is no...
And the opinion is based on the issue, not based on who their friends are.
Of course. Of course. Best of friends can sit there and say, no, you're crazy. Doesn't happen in politics. Or it doesn't happen in politics in 2025. Because people we've turned politics. Now, the reason it used to work in politics and the reason it works in a parliamentary system that it always has is because the rewards were in line with the risk. In today's world, we have created a political system where the rewards are far greater than the risk. So the risk of standing up to your own party, to whoever the leader of your party is, the risk of standing up to that person is too great the economic risk is too great to you personally now, whereas it never was before. So now people refuse to do that because, their livelihood. The game's turned into a money game. And it's essentially a very big money grab because what's at stake now are big donations. What's at stake now is huge campaign funds of which politicians essentially get to keep. And there's a lot of money, whether it be speaking tours, campaign contributions, whatever else it is, that I'm not talking even about the presidency. I'm just talking about everything else The numbers are too big.
Book sales,
everything. The numbers are too big now for normal discourse or objectivity. Doesn't happen. So we're in a dangerous time.
Does the current trajectory of sort of slash and burn rhetoric, how do I say? So
it's bad.
I think
it's bad. No company could survive.
There's a Silicon Valley saying, which I do actually like, which is action generates information.
Yes.
And I think I would imagine you would like a phrase like that yourself.
That was great until politics became too intertwined with Silicon Valley, and all of a sudden Silicon Valley bit. So Silicon Valley is not the independent economic machine it once was. Silicon Valley has got addicted to government contracts. Silicon Valley has got addicted to a lot of bad stuff.
Monopoly protections.
That's right.
The monopoly protections. But I still wonder, because I mean, maybe I'm on my optimistic part, but it's easy to be sort of concerned, obviously, by some of the business-like decision-making, the so-called business-like decision-making coming out of the government at this moment. But in my optimistic side, I say, okay, well, at least they're taking a lot of different actions, and all these actions will reveal more information. And that new information will either result in the dismissal of the current executive staff because they'll be soundly, rejected, or it will reveal a new operating system. Because I do agree that the existing operating system is calcified, inefficient, intransigent, self-serving, wasteful, et cetera, et cetera. And so is there any part of you that's like, okay, this is destructive and chaotic, but at least it is going to force some new information?
Yeah, that is what happens, and that is the silver lining. I agree.
If there's any new information, it'll be get rid of these crazy bastards.
Yeah,
this is crazy. But that we get there pretty quickly because because the level of action is so high.
Yeah, we've swung too far, and it will swing back. That's what happens. We swung too far one way. We swung too far the other way.
Business like. Would you go into a company? Because the other thing is, because Musk gets a lot of currency right now out of the fact that he is perceived to have gone into Twitter and have quickly fired 3/4 of the employees, and that basically the Twitter methodology is what's being used on the U.S. government.
Yeah, well, I mean, that's his MO. I mean, he thinks what works in Twitter will work in the U.S. government. The only problem is Twitter doesn't really have a social responsibility to welfare. Twitter doesn't have a social responsibility to culture. Twitter doesn't have a social responsibility to anything. So, I mean,
nor is it strategic to global peace.
Of course not. Of course not. And it's an incredibly dangerous model. And the only reason that Twitter survives today is because they put enough pressure on large corporations to come back and overfund their Twitter, their Twitter deals, their Twitter sponsorships and their Twitter advertising. The sad part about that is that these companies are going to realize, this is our legacy, this is how we'll be remembered, and who we make. When you make a deal with the devil, you essentially at some point you pay for it, and these companies are going to pay for it, and they're going to hate what they just did. They sold out.
You remember Chainsaw Al Dunlap?
Yeah, but I don't remember where. What was he?
He was like a turnaround. He was like a CEO turnaround, Hacksaw Al or Chainsaw Al, they called him.
Yeah.
And they would bring him into old calcified companies, publicly traded companies, new CEO, with no loyalty to anybody in the building.
Sure.
Give me the spreadsheets, mark, everybody with an even numbered or a vowel in their name and fire them. Don't worry about performing nothing. It was like a famous sort of management philosophy that ultimately was, celebrated cover the Wall Street Journal. This guy's a maniac, all this, and then catastrophic ultimately.
Always ends that way. The ending is always catastrophic. You come in gangbusters, you end in a catastrophic tragedy. It's the way it always happens.
So then let's try this a different way, because then this is a good question for you, because you have a good track record in this domain, even though, obviously you'll differ 1,000 ways for good reason. But what do you believe are the 3 first principles of creating a successful organization? If it's not simply to come in and terrify everybody and fire half the room. Like if you're like, listen, walking in, whether it's the head coach at the Chicago Bulls or whether it's the president of the United States or whether it's the new CEO of Twitter, one CEO's theory is I just come in, I fire half the people, put the fear of God in everybody, and then they do, and then we go from there. Or I cut half the team, I cut half the players, whatever it is. That's one organizational concept, which would be Musk's concept at this point, right?
So where I differ,
what is yours?
So where I differ from Musk and where I differ from, I guess, others, I don't really know, is the first thing is I am absolutely okay with changing leadership. So let's say I don't have a problem switching out the brain or switching out the head because there's obviously a problem. There's a reason you were brought in. And the reason you were brought in was to make changes. What you never mess with is the body. You don't mess with all the pieces, all the people that don't have that control. Some may be good, some may be bad. Who knows? You'll figure that out. But you don't mess with all the people, all the bodies.
With the organism.
You don't mess with the organism. Of course not, because that's too hard to replace. It's too hard to retrain. There's too much skill there. It's so expensive. You get rid of, the first thing you do is you just get rid of the head, and the reason you do that is you get rid of kind of the executive committee or a few of the top people, because you have to control the vision. And you have to control the new vision. That's one thing. The next thing that you do is you immediately, instead of destroying the energy, the culture, instead of destroying all the innovation, everything everybody's worked for, and everything that's there, which makes zero sense at all, what you do is you create challenges and see who wants to be there. It's not a difficult thing to do. It's not like something that's like, this is not some conceptual thing. You create challenge,
new goals, and see who rises to the challenge.
That's exactly right. And then you change some of the pieces out. But first you get rid of the head, then you make the challenges. Once you have the challenges in place, then you figure out exactly what you have, and then you recreate, the strategy.
And over time, you restaff to the challenge.
Of course,
to the information revealed by the
and you rebuild,
showing up day one and chopping half the organism and then see what happens.
And you rebuild the strategy and everything else. That's why when you have these huge governmental agencies, you don't shut them down. That's idiotic. You change the people that are running them if you don't like it, and you keep all your talent that, all the public service, people that have basically committed their lives to public service. You keep the talent there, and then you change the strategy. That's all. It's not, it's.
I feel like what you're describing is a more business-like way of looking at the government than simply going in and firing people.
There is no playbook that says we'll just get rid. There's no playbook that says, hey, you know what? We're just going to come in and get rid of 40% of everything that's here. Doesn't matter who it is. Doesn't matter what it is. As long as we get rid of 40%,
everybody with a vowel at the end of their name is fired.
Sure. Or everybody with a vowel at the end of their name. Everybody of color. Everybody that doesn't have an American passport. You know how it works.
Everybody with an Illinois license plate.
Exactly. Everybody that's ever listened to a rap song, everybody that's ever done this. Of course. It's easy in AI. It's easy in the world of AI.
But so I guess my point is that it's not, what we're getting right now is actually not a business-like method of operating anything. But suggesting that the current fire everybody or send me an email that tells me what you did last week
I mean, there's a business.
What's business like is accountability for the board, accountability for the CEO, and new priorities for the staff, and then slowly changing the staff based on performance relative to the new management's priorities.
Yeah, I mean, there's a business approach to this. I just don't like it, but there's a business approach to it.
Which is the chainsaw Al approach, you're saying?
Yeah, it's a chainsaw approach. Yeah, I had a buddy once that was one of the first investors in Thinkorswim that I had met through. He was introduced to us. His name was Joe Whiteside, and Joe was he was a pay for hire CEO CFO that went into distressed companies and he turned them around. You know, he basically went in. He had a 2-year contract for a lot of money. Went in, turned around a company. Left, went to the next company. He was in huge demand. And I always found his stories to be fascinating because although each company was a little bit different, he was able, because he came in from the outside, he was able to have a very objective view and he was able to clean them up pretty fast in most cases. I think his track record was like 80, 90%. He cleaned up, turned around, and put them in the right direction. I think that's what we need in the world of politics, is people to come in and change things up. I don't have any issue with that. I think politics are no different. I think the way we run governments is no different than the way we run an economy, and things have to be disrupted every once in a while and things have to change, but it's the violence of those changes that you have to be careful about. You can't destroy your culture and you can't destroy the integrity of your system, okay, and everybody's belief in the integrity of the system while you're making those changes. That's the challenge.
Mm-hmm. I mean, my biggest concern right now for the U.S. as an American, largely operating for the moment outside of America, but really with American business, inside of American business, American facing, is the number of non-American businesses, small, medium, and large. I had dinner tonight with an executive from a huge Canadian copper company. And he was so happy that his Canadian copper business, which is a big, 100 million plus kind of revenue, big copper business. He was so happy that that business was a Canadian business that does business primarily with China. Not because he was anti-American, but because he's one of, I've probably talked to a dozen people in the last month who are extremely happy that they are protected from the perceived instability of trying to sell product, any product, whether it's a piece of metal or a car or a computer chip or a fashion item or a banking service or whatever, from Europe, from Canada, from China, from Mexico into America. And that all of those boardrooms and all those executives are trying to figure out, okay, how do I make this business work and be less dependent on America for my revenue, knowing that America is obviously the biggest market, the deep, like I want to be in America, but all of my contingency in the context of the new American government is America doesn't want to do business with anybody outside of America. So if I have a business, even if I'm a copper company in Canada, or for that matter, an American car company in Mexico, I need to have a plan to do business to sell Ford cars from Mexico back to China or from Mexico to Brazil or from Mexico to whatever. And I actually think that's the biggest concern I have right now for the financial markets is that you're going to start to see a greater hesitation to engage in long-term planning, that large capital expenditures tied to development outside of America, into America, from Europe, South America, Canada.
You hit on a really important topic. This is what the game that the Trump administration is playing is a game of chicken. And on the one hand, you introduce tariffs for the sole purpose of bringing the business back to the U.S. The manufacturing piece of the business back to the U.S. Because the logic is if you create a tariff, but if you don't have that tariff if whatever the product is created here, then, even if it's a Chinese company, Mexican company, whatever it is, if it's done in the U.S., there is no tariff. So that's the incentive to bring the business into the U.S. You want to build an iPhone, build it in the U.S. You want to build a car, build it in the U.S. Okay, this is the big game of chicken that's going on. So that's the reason for the tariffs. I mean, that's the only thing it can be. The other side to that is you're messing with free trade and Mother Nature, and these companies, they can say, okay, fine, two can play at this game. We don't care about your damn business.
I mean, obviously, everybody cares, but like the focus is, I want to invest and have more customers in Brazil, more customers in Canada, more customers at any place but America.
We don't want to incent the rest of the world. The dangerous piece of this game of chicken is we don't want to incent the rest of the world to disrupt us. We like we want to incent everybody to do business with us because that's what builds up our economy. That's what makes us strong. That's what brings all the capital here. That's what brings all the liquidity into our system is, we want that economy to be super strong. So we don't want to scare the children. But at the same time, trying to create some kind of method for bringing the business back here, you walk down a very dangerous path because it could easily slip to the other side. And so this is one of the things, this is why compromise is good. And this is why bullying is not good. Now, sometimes you get away with it. And sometimes you spin it and get away with it. But most of the time, this backfires.
Does this make you, just to finish on the market, does this increase your incentive or your preference to be short-term more bearish on U.S. growth? I.e., long the bond, short the dollar, short oil, all that jazz. And if so, and then why? And why not?
Because generally speaking, I am not somebody that cares about short-term economic fundamentals. And when I think about it doesn't make me, the only thing that makes me bearish on the stock market is when the stock market goes up too much and it's too strong. And I feel like it needs a little bit of a sell-off to get back into line. That's the only thing that makes me bearish. Nothing that happens economically is going to make me bearish because I'm an efficient market person. I already feel like that's all built into the marketplace. So none of that's going to make me bearish. It's just going to make me.
So your price extreme is vastly more interesting than any sort of.
That's right. I only care about price extreme.
By the time we have an opinion on the dollar because of Trump, the markets had that opinion long before we ever showed up.
I'm short the dollar, not because I give a rat's ass about Trump. I don't care. Couldn't care less. I'm short the dollar because the dollar's been going up for 15 straight years. I don't care about what. You can give me any argument you want about why the dollar is going up or down, sideways. I couldn't care less. I'm short the dollar because it's been up for 15 years. I'm going to buy the market if it drops more because for the last 15 years, every time it drops, it goes higher until that doesn't work. But if the market rallies back up to record highs, we'll get shorted again. I mean, this has nothing to do with the economic side to this. Zero.
Yeah, price is destiny more than any analysis.
Most people do not understand that.
Sorry, say that again.
Most people do not understand that, and they get hung up with all the macro crap. This is just a game of price.
Do you think the market, that the government right now is actually being run like a business in the sort of cliched sense, or is it just a rhetorical device for the current administration?
I mean, the current administration is taking a shot, but they're doing it using a surrogate. They're using Elon, a non-elected person, because I wrote about this 2 weeks ago. It takes all the risk off the table. If you want to talk about, I don't know whether Trump did this on purpose, whether he backed into it, or whether he just lucked out, whatever it is. But the deal with Elon is something where if it doesn't work out, he throws Elon under the bus. And if it works out...
So you let him go hog wild, and if it doesn't work out, you toss him and say, wasn't me.
He's an idiot, it wasn't me. If it works out, He's not elected. You get 100% of the credit. I wrote that it was a riskless trade for Trump. And whether he did it because he was smart enough to figure it out, or whether he did it because he backed into it just by luck or whatever it is, it's a riskless trade. Okay? You know, Elon gets destroyed. Elon loses either way. He doesn't get credit for it, or he gets thrown under the bus. So is this a business thing? Sure. I'll give you that. I mean, I'll give you that. It's a business thing. I don't think the government runs any different, but I think that part is. I think we touched on many of the other changes to government this time around.
Mm-hmm.
But
I
Dylan,
like your organizational theory, which is to change the head of the beast, set some new goals, and then sort of see how the organization adapts, and then restaff over time, over 3 years, let's say, based on response to the new goals. That makes a hell of a lot more sense.
It's both the humane way, it's the ethical way, and it keeps the integrity of whatever's there and whatever people have spent their lives doing, keeps that in place. It's the good faith approach. I'm Tom Sosnoff. He's Dylan Radigan. This is Truth or Skepticism. Thanks for spending an hour with us, or 45 minutes with us. Dylan, thanks so much.
See you next week.
I want to play a game. It's a relationship game. So I'm going to ask you each a question.
Who loves the hardest?
Yes, yes, yes. So are you ready?
TikTok.
Who's more stubborn? Who's more public? Who's more patient?
These are two of the least. These are the least patient people I've ever met.
I'm going to say him just because he's a little older than me.
Who calls or texts more? And who do you think takes longer to get ready in the morning? Who's a better driver?
I drove a truck in New York City.
I can fly an airplane.
Who loves the bed the most? Who's the bigger spender, do you think?
Me. Yeah.
Who's the alpha in this relationship? Who is more spoiled?
Oh, him.
Who do you think is funnier? Who is the better debater?
Well, I'm gonna give it to him.
Dylan, you think you're the better debater? Are you the master debater?
No, he's he's good because he doesn't answer the questions, which is great for debating.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
If you missed the live show, here's our cherry on top weekly recap.
You know what my first concert was but when I was very young. It's quite embarrassing.
Anson.
How'd you know that?
I mean, I feel like everybody.
How did you know that?
Because who else was popular then in like the late 90s?
Oh my God,
that's amazing.
That was cringe. There it is, the song. Yes.
Yes. All right. Good luck. Good trading. Let's go eat some roost.
Peace.
What happens when two titans of trading come together to harness the power of their prowess? Let's watch these two master the art of the noble sport boxing. Wow, look at those geriatric thumbs go. Someone had an extra dose of fibre this morning. Like a flutter of fills, it's definitely fists of plastic fury over here. And I'm spent. Well, lucky for us, Tom and TP are better at writing than they are almost anything else. Subscribe to Tasty Live Cherry Bomb to get piping hot takes on the market delivered right to your inbox. Sign up at tastylive.com/cherrybomb. newsletters.
Stocks go up and stocks go down. Markets move. Beta is a way to measure the movement of a specific stock relative to the market as a whole. In simple terms, it tells us if the underlying has more volatility of price movement relative to the S&P 500. Beta of 1 is our control here, SPY being the underlying. If the beta of a stock is less than 1, it would mean the stock typically moves less than the SPY. If the beta of the stock is greater than 1, it means the stock tends to move with greater volatility than the SPY.
We built the Tasty Trade app for today's traders. See it, tap it, trade it. Deposit and withdraw money right in the app. View company financials, forecasts, news, and more. Set custom alerts to stay up to date. See things bigger in landscape mode. Get the customizable trading experience you want. The tools, the data, the knowledge. See it, tap it, trade it. Join the club, genius. Tasty Trade.
If you missed the live show, here's our cherry on top weekly recap.
First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And then he's still doing this.
Snow, let's take a look. They did not hold that rally at all. Phil, you got a partial. 973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this to me. And then you know what? Money goes to money. You did it. Good job out of you.
Yeah. I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours.
So why are we all doing all the things that we do inside of the active trading space? Simple. To make money and generate returns. Well, inside of the Tasty universe, there are essentially 5 keys to making those returns. And in this crash course, we're going to break down all the details of each one of those keys. So I'll see you inside.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Having trouble understanding what your trader buddies are saying? Here's what it means when they say catch a bid. The term catch a bid is in reference to the stock's price action. The bid price is the price at which you can sell a stock at. When a stock continues to go down, so do bids, meaning the price at which you'd be selling the stock is continuing to go much lower. If you miss it, you can't catch a bid.
What is going on? Welcome back to today's assignment. We're back in the teacher seat with Dr. Jim. Dr. Jim, just the guy that I was looking for. What's going on?
Man, what you got on NASDAQ unched, bro? What you got for me on the NASDAQ unched on the day? Dude, it was up like 300 this morning, and the ES was up 1 million, and everybody was happy, and then all of a sudden, man, I mean, what's going on out there, E? You got to help us out, dude. Like, we need the secret sauce today. There's no more delay. There's no more vagueness. Like, I need the secret sauce today because it's not good out there, man.
I'm going to tell you right now, there's been no secret sauce this week. Not on my end. I will let you know that. But no, we're already back down to the lows after that rally that we had seen today. You know, maybe was the sell-off over? I don't know. But we do have NVIDIA earnings after the bell today, and NVIDIA is holding the weight of the market on its shoulders. What are your thoughts on NVIDIA? And just quickly, before we even get into the segment for today, what is NVIDIA going to do today, Dr. Jim? What can we expect?
No, it's all about NVIDIA, dude. Like it's all 100% about NVIDIA after the bell. And I mean, I think that obviously we're going to get you to trade it today. I don't want to hear anything that is contrary to that. We're getting you into some NVIDIA positions today.
I don't know.
Dude, I just think that look. So listen, man. Let's just use common sense. Like, forget about charts. Forget about fundamentals. Forget about the quants. We don't need any quants, dude. Let's just use common sense, man. Think about NVIDIA. Just think of it as an idea. Just think of it as a philosophy, right? When you think about this company, this structure, how can you be anything other than mega pint bullish, dude? Like, dude, this is the only way to play. No, it's the only way to play it, man.
Is it because it's such a contrarian? I don't know. Would it be a contrarian play to the downside today? But I mean, the overall market's been selling off. How do you gauge that?
I mean, it's pretty hard to say, you're going into NVIDIA, you're bullish, and you're a contrarian. Like, I'm not going to go that far, right? Because I think a lot of people are obviously going to share that same sentiment. But I just feel like, a lot of it appears to be primed to just squash him today. And like NVIDIA is going to disappoint, the stock's going to get hammered, whatever. I think we're kind of brewing for a little bit of a face ripper. I think we're kind of brewing for a little bit of something to pop off to the upside. And I thought it was going to happen this morning. And then NVIDIA was going to be the thing to take it over the top. I think NVIDIA is going to do the whole thing, man. Like, it's going to take the market off of its lows and then send it up, 400, 500, 600 points. Yeah, I do. I really do.
I mean, I hope I hope the overall market goes up a little bit. So just to let you know kind of where I'm at, I have a longer term dated SPY position in the portfolio to express my larger view opinion. But I do have a position on that's a little bullish for this week that expires on Friday. So right now, because we sold all the way back off to the lows, I'm around break even on that one. But if we get a little bit of a pop within the next, day or two, especially with NVIDIA earnings, both of those positions will be sitting comfy. But I bring today's topic up because the tariffs have a huge impact on just the overall sentiment of the market. And there's some other asset classes we don't talk about too much that I wanted to touch on today. But upwards drift, Dr. Jim, one of the favorites. But what is upwards drift? Why does it exist? And we could just jump into this first slide. And as we jump into this first slide, it was the Lakers and Mavs for the first time last night.
Dude, man, what's up with your boy Luka, dude? Like they look pretty good, man.
No, they look good. They're going to have some issues whenever they come up to the Nuggets.
No. Didn't they already beat the Nuggets?
I don't know, but if they did something, somebody was cheating if they did. But I don't know. But the West is going to be really competitive again. I think they're looking good. Honestly, the Mavs and the Lakers, they both look amazing. I know AD's out right now, but those are some stacked teams, the two of them, both of them.
Yeah, they are. But isn't AD always out? Like, isn't that his thing? Like, he's always hurt, right? Yeah. So it's like, that's nothing new.
He's got that downwards drift.
Yeah, he's got that negative drift. Yeah, no, there's no doubt about that. Yeah. And so no, it's gonna be. I'll tell you what though, man, it's gonna be pretty crazy. I think after the bell, I really think that. Once these earnings come out, like it's gonna be quite the spectacle, I think.
Yeah, and by the time we get to the last slide, there's a trade idea that I'm very much so entertaining. And a lot of my main decisions have been on halt a little bit just for this one binary event that's happening after the bell. So once that goes, it'll clear up a lot of uncertainty and then be able to make more straightforward actions in the market. But I want to touch on that today too. So I'll jump into the first slide. Introduction to upwards drift. And the reason why we bring this up again, this individual that had brought up this topic to me, he was actually 19. So I was like, you know what? You're 19 years old. Maybe were you even around for the 2008? Not that I was in the market by any means, but considering 2008, we're still near all-time highs. So it even seems like in the moment, whenever we have those massive events in the market, we almost always recover. But why is that? So introduction to upwards drift. Upwards drift refers to the tendency of financial markets to trend upward over time due to economic growth, technological advancements, investor optimism. While short-term volatility exists, markets generally show an upward trajectory in the long term. And this is kind of where it feels we're sitting at right now in the market, Dr. Jim. We've had some aggressive sell-offs over the last 3 to 4 days. But is upward drift really the reason why investors are comfortable with buying the dip, maybe selling some at-the-money puts whenever we're selling off so aggressively? Is this what gives them the confidence, or is this something that gives you the confidence to continue to be a perma bear?
Perma bear, you said, or perma bull?
Perma bull.
Yeah. I mean, I think that, people could buy a dip or whatever for a number of reasons. So, I mean, it's very difficult to pin down just one. But when it comes to general bulls in the market, I mean, this is what they're trading. This is what they're investing on because it is such a powerful force. I mean, it is an incredibly powerful force because it has all the things that you kind of listed off there in their first bullet point: economic growth, technological advancements, blah, 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 blah. Like, it's all baked in there. And you just have this positive drift, this upwards risk premium that's kind of baked into the center of the global marketplace. It's a very, very strong force. And this is the thing that gets a lot of investors excited about their financial future, objectives and the things that they're trying to achieve. And so when it comes to, a market like right now, like still, I mean, we're only 5 or 6% off of all-time highs. I mean, the S&Ps, I don't even think we're 5% off. I think we're only like 3 or 4% off. Maybe we're 5% off. But in the NASDAQ, we're maybe 7% off. I mean, we're still not that far off from all-time highs. And so it's not like, even though the last few days have been incredibly weak and today is a huge surprise, it's still, we're not really in bad shape just yet. And so I wouldn't necessarily say it's that difficult to get in and get bullish right now. You may view this as kind of a short-term blip and blah, 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 blah. And so, but over time, the positive drift is an incredibly powerful force.
I got you. I would sit here and ask myself, the first question that always comes to my mind is why does upwards drift even exist? How does that even happen? And when I just sit and think, and then obviously doing the research, but when I sit and think, it makes a little bit of sense, especially considering we like the benchmark for inflation to be sitting around 2%. That must mean things have to be growing over time to be able to beat that 2% inflation rate. Then also, we live in a pretty capitalistic society, so we're always innovating. We have a lot of competition. And what's the saying? I think competition breeds innovation, something along those lines. And I think we see that firsthand within our society. And then also I think that's reflecting back onto the market. Not that the, economy is the market and the market is the economy, but I think we see it reflecting back there a little bit. Some historical evidence to that, though, Dr. Jim. Long-term market growth, over the last 100 years, over the last century, and the S&P 500 has delivered an annual return of approximately 7% after inflation since its inception. And we have a little bit of a graph to bring along here. I think visuals are always nice to get into, but it just really shows the resilience, even through things like recessions. Again, 08, was talking about that the other day. Again, the guy's 19, was talking about it the other day, with him. And it's just kind of funny. We circle back around here and we're sitting at all-time highs. So whenever it feels like the world is falling apart, or even 2020, when we had that insanely fast sell-off in March of 2020, I mean, we recovered. That was one of the quickest market recoveries we've ever had. But anyways, I say that to show the little visual that we have for the day, Dr. Jim. And here's a graph showing the historical growth of $1 invested in the S&P 500, assuming an average annual return of 7% after inflation, further highlighting the presence, of upwards drift. And I had to bring this one up for you because you're a professor. You were a professor for a little while, and I got to back up the points that I'm saying. I got to back it up visually as well. I'm more of a visual learner, so these are always really helpful. But it just shows you, over the course of 100 years, with a $1 investment, I think clearly shows the picture of the upwards drift in the market year after year. And then again, taking into account those recessions in between, the market's been resilient through it all. So this doesn't take into account NVIDIA being on the market and NVIDIA tanking after hours and pulling the rest of the market down with it. So I don't know what we make of this. I don't know.
Like, dude, it's not going to take. Come on, again, just use common sense, man.
I got to update these stats after tomorrow. I got to update these stats. But anything on the basics of just upwards drift, why it exists, the visual element of it, and how we see a positive return on average year over year.
No, well, this graph is really nice. And you know what this graph reminds me of? Like, for people that might be listening to the audio-only version of the show, I would check out the video today because this is a really great graphic that Errol kind of brought to our table here. And it kind of shows the exponential nature of compounding returns over time. And what this graph reminds me of is, so there was an example I used to use in the classroom all the time. And I'll see if you know the answer. So if you started with 1 penny, with just one single, yep, here you go. Okay. If you started with 1 penny, right, and you started doubling that penny every day, and you did it for 30 days, how much money would you have at the very end of the 30th day? So again, to be very clear, the first day you double from 1 penny to 2 pennies.
To 2 pennies.
The second day, 2 to 4, 4 to 8, etc. How much do you have at the end of the 30th day?
I'm gonna go
Do you have
30
any
pennies.
idea?
No, I'm just kidding. Give me a second. Give me a second. Hold on. I need to get in the ballpark. 1, 2, 2, 2, 4, 4, 4, 8, 4, 4, 8, 8, 8. It's gotta be. Give me something, Dr. Jim, before you.
No,
give me
I
the
mean, I
answer.
gave you everything. I gave you everything.
All right, 1, 2, 2, 2, 4, 4, 8, 8, 16, 16, 30, 4, 34, 68, 68, 120. We're about 8 in. To not take up too much time, we're gonna go. I know it flips quickly towards the end of that 30.
Well, it's just like this graph. It's just like this graph.
Like exponential type growth for that.
Yeah.
Compound. You're right. I'm going to go, man, I know it's not even going to be close. I was going to say 100,000.
Okay. So that's a pretty good guess. So if you actually do the math, at the very end, you actually have over $10 million.
Really?
And yeah, it's over 10 million.
He
and
said
I
that's
used
a good guess.
Well, no, I mean, yeah, but I mean, it's impossible to figure that out in your head, right? So
Yeah.
I mean, it's
Yeah.
fine. But what's funny is in class, I would give that example, and every time I would do it, like it's quite startling to hear that number. I would have students calling me out on it, like students saying there is no way, that's impossible, like that's crazy. So we would actually work out the math like on the board, and I would show them like how it really starts to get crazy towards the end. Well, the point that I would always want to drive home to my students, and I think is a good reminder here, is not to go home and start doubling pennies, because by like the 9th day you can be like, I'm done, I'm cashing out, like I can't do it, right? The point is, when it comes to compounding returns, however you choose to get there, whether it's just buying index funds or actively trading like we do, whatever, the longer you wait to get started, the doubles in your portfolio that you're losing are the last doubles, not the first doubles. The doubles that you lose are the life-changing doubles. You're going to get the first doubles, but the longer you wait to get started, you're going to lose the last double or two, the ones that really change things. And so, like for the guy that came to you 19 years old, it's like, man, that's unbelievable. Like he doesn't understand how precious time is to him right now, and I really hope that he grabs onto it.
Yeah, well, unfortunately, he calls me Unc, so I don't really care if he grabs onto it or not.
Yeah, but isn't that a good thing? That's not a bad thing. That's a good thing,
No,
right?
I can't. I was like, bro, I'm 2 years older than you. What are we doing here? What do we mean, Unc? But no, so this also lets me know, if Tom started investing around 1920, 1930, this man,
That's
if
what
he
I'm saying.
was, man, he's got to be up there. But we could jump to this next slide here.
I mean, Tom was 10 years into the pitch in 1920.
He was experienced in 1920.
Oh, yeah.
No, but I do have some trades on watch, and I wanted to list this out to give a little bit more context on the overall market sentiment. Right. As we all know, U.S. imposing 25% tariffs on all goods on Mexico, Canada products, and 10% tariffs on Canada energy exports like oil, natural gas, electricity. So these could be some other underlyings or some other futures markets that you might want to pay attention to, especially if you trade these, or if you're looking for some more price volatility, you can look to some of these markets, because these are some markets that could be affected with some of these things going on. But again, this just gives a little bit more context, right? Both Mexico and Canada have indicated that they will implement retaliatory tariffs on U.S. goods, raising concerns about escalating trade tensions. I know we don't care about news. We're going to, whatever the data shows, we don't care too much for the news. But I do think it's important. Just keep an eye on the overall market sentiment as a whole. And I think this is one of the biggest headlines out there as of now. And then again, we got a couple more bullet points down here. The market reaction has been cautious with stable Mexican peso. I know we have a lot of the foreign exchange assets that we can trade as well in the Canadian dollar, suggesting investors are waiting for more developments. I know we're in a little bit of a pause period, and I think any type of time, whenever it's a 30-day extension, then maybe we'll go through with the tariffs, the retaliating, other countries retaliating with other tariffs. All I hear is uncertainty, Dr. Jim. So I hear all of this. It lets me know, okay, there's a lot of uncertainty in the market. What is that going to look like on volatility? What's that going to look like on the overall market? How are the gold assets? How are some of the precious metals going to react? And then again, most importantly, something like oil, natural gas, electricity. So here's a little bit more context. Once we get into this last side, talking about one of the assets I have a key focus on. But before we move on, Dr. Jim, I know this is very detail oriented. We don't really care about news, But again, when I read all of this, all I hear is uncertainty. So how do you kind of gauge the uncertainty in the market and the overall sentiment of the market? Is this important to you, or is this something that goes in one ear and out the other, and you just care what your pop is, the credit you're receiving in to make all of your decisions?
Well, that's a great question, and I think I think it's very helpful to be aware of what might be happening in the world around you, not necessarily to trade it like trying to match the directional outcome with the story itself or with the news event itself, but just to know that there's going to be these injections of volatility, which is kind of what you've kind of put here on the slides. Just like, I mean, today's a great example, right? I mean, we were just humming along. Market looked great, looked super strong going into NVIDIA after the bell. Like, all right, let's see what happens. And then all of a sudden, I think, Trump drops some more tariff news, and boom, it wipes away all the gains, and now we're red. Like, that's pretty wild stuff, man. And so it's like you kind of want to be aware of what's going on, just to, again, I mean, be ready for these injections of volatility and the volatility pops. And so that's why I think this stuff is important. This is also why I think, like, keeping an eye on, keeping your pulse on some of the 4 or 5 major economic indicators that are released every month, like jobs and like CPI and like PPI. And then, like, PCE is Friday. That's another pretty important one when it comes to inflation. And so it's like there's only 4 or 5 I think you really need to monitor. The rest of them are probably not that important.
No, I hear you. Again, it was brought to my attention. Someone was like, "Yeah, we got new home sales today again as well." It was like, to be honest, I don't really care. Like, there's just some.
Come on, man. At a certain point, you gotta cut it off, dude.
I was like,
at a certain point, it's like, man, do I need to know the Canadian durable goods number? Like, I don't think so. Like, I think I'm good.
And again, sometimes those topics will rise to the surface again, and like I'm like, I can give like such a political answer to this, but at the end of the day, I really don't care. All I care about is the risk to reward, the probability on the trade, and will I be okay and confident if I take a loss on this trade at the end of the day. But no, with all that being said, Dr. Jim, we have gold on watch. We know with a lot of uncertainty, just in the U.S. in general, sometimes gold is seen as kind of like a safe haven, kind of seen as like a hedge asset. I know Bitcoin is down I think Bitcoin is down about 20% from its highs. And I know there was a lot of talk about, is Bitcoin the new hedge? Is Bitcoin the new hedge for inflation? Is Bitcoin the new hedge against America as a whole, as gold has kind of been? So I don't know. Bitcoin is always an interesting talk, but we're talking about gold right now. And I'm looking at gold right now. I haven't pulled the trigger, but after today and after the earnings on NVIDIA, so Thursday and Friday, I'm going to be looking a little more at gold, especially with just the overall market sentiment. And I think after the uncertainty is resolved with NVIDIA, I'll have a little bit more confidence on exactly what I want to do right here. But I want to give you a little bit more context to this gold trade. Price action confirmation. What does that even mean? To each their own, but looking for strong signals such as strong reversal candles, increased volume, buying pressure to confirm my level at 2,900 is holding. But this is a really important area for me just because this was a level where there was a ton of active market participants. So this isn't going to be a level that lets me know I should be buying over here or I should be selling over here, but it is going to be a level that lets me know a lot of market participants are in fact interested at this level. So either I might get great risk to reward at that level if I'm trading directionally, or maybe I sell some out of the money puts on the options on the futures. I haven't decided which instrument I'm going to use to trade this underlying. But again, these levels don't let us know we need to buy here, we need to sell here. It just lets me know a lot of market activity, a lot of market participants are interested here. So that's where I also want to be interested. So I'm going to be looking for a potential rebound, potential place to get long, whether that's buying the gold futures, maybe the minis on those. And again, selling some out of the money puts, and maybe we sell those options on futures, or we could sell or trade another assets that's highly correlated to gold. But this is me stepping out of my comfort zone a little bit, Dr. Jim. As you know, I primarily trade things like NASDAQ, S&P 500. I don't trade oil too much, but gold is another one that's on my radar. You got any thoughts on this, or you have any experience with trading gold, or is it not your?
No, it's got to be quick though, because we're gonna get you in this NVIDIA trade. But all I'm gonna say is, dude,
I don't know.
All I'm gonna say is, hey, you are growing, you are maturing. Like you're trading GC, you're trading GLD. You're not bringing that GOLD garbage to my doorstep like you used to. Like we used to talk about gold, and you would type in GOLD. Like, bro, that's the Costco gold. That's the gold you get at Costco. That's not the gold we're trading, dude. So now you're actually doing some gold futures. I'll tell you what, man. That's good stuff, man.
all I know.
I'm proud
is
of you.
If it's bringing some green in, I don't care if it's the gold from the dollar store. If it's going up,
I'm just saying,
down.
I'm proud of you, bro. All right, hey, get into NVIDIA. Let's do it, man. Look. You don't want to miss this, man. You don't want to miss this. Let's keep it really simple. We have 90 seconds. Don't overthink it, man. I'm telling you right now, this is common sense.
All right. I gotta ask.
Common sense.
What are you guys doing? What are you guys actually doing on your side over there? Let us know.
At the money vertical.
Just
buy an at the money vertical. Dude, don't even overthink it, man.
Really?
Don't overthink it.
What are you guys doing?
We don't need a fancy strategy. Yeah, probably. Probably do a 2-day.
Okay.
Just go 2-day. Just buy the at the money vertical.
And you guys are bullish.
100%. Couldn't be more bullish.
Outside of that, I would be bullish as well. So regardless of the outcome, I'm bullish as well.
I mean, I'm telling you I'm bullish, but when the show's over, I'm putting me on a bearish trade. Like, you know how this works, bro. We've done this before.
Oh, yeah. Hold on. Let's see. And you guys are doing a vertical. You guys are doing an at the money vertical.
Just buy a 127, sell a 132. There you go. It's 2.5 points. It's $5 wide. You risk 2.5 to make 2.5. Buy the 127.
There we go.
Look at that, dude. It's beautiful. Look at that, dude. It's beautiful. Do you know how many Jalen Hurts jerseys you can get for that? Like 1 or 2, bro. Get you a Luka Doncic jersey?
257 debit.
Just saying, dude.
Max, I do like the max. I will say, whenever we're buying these, I love the max loss on these. So whenever we're trading directionally, we're trading those binary events, I really don't mind paying a debit in those situations specifically. So I am comfortable with that. Buying power, little to none. That's not going to be an issue. Delta, positive 13 deltas, that's getting me long enough. I would say without even doing that intentionally, I'd say that does a good job of gauging my bias on how bullish I might be. So I do like this, Dr. Jim, but then again, we're trading earnings. But the thing is, you did get me 2 for 2 on Meta and Microsoft simultaneously. That's right. So I got to give it another go. But before we send it through, I know we got 30 seconds left here. Let's just see overall what NVIDIA has been up to. You know what's funny too is,
look at that chart. It couldn't be more bullish.
Well,
look at that.
Depending on how this goes, will give me more information on what I want to do with SMCI, because I didn't want to trade SMCI because of NVIDIA earnings. I was like, I really want to sell an out of the money put spread, but I want to be patient for NVIDIA earnings, see how that plays out, and then go from there. But we'll do something in NVIDIA. And if this has a good outcome, we will look to SMCI as well.
There it is. Push it out. Do it now. Go. Do it. We got to go. You got to get filled. Don't even worry about it. Nah, pay 2 more pennies. Go 260. You get filled.
260? I'm getting filled at 259. All right. There we go.
Man, look at you. Look at you. You're welcome. You're welcome.
All right, Dr. Jim. We'll see how this one goes. We'll manage it. But I do like how the risk is going to be managed, because the buying power is nothing crazy on that one. But anything to add before we head on out of here today?
No, I think tonight is going to be very telling. Like I said, I'm very surprised by the sell-off. The market seemed really strong, but hey, man, markets move and things change. That's what happens.
Oh, that was a good quote for the day. Markets move, things change. Anyways, that's going to wrap it up for today's assignment. Dr. Jim, as always, we always appreciate you having you here, getting your thoughts and opinions on whatever we're doing. Be sure to stay tuned for Tim Knight coming on next, and we'll catch you guys next time. Peace.
Peace.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Hey, everybody. Well, let's see here, the big days here. Boy, I'm having a ball with this market. That scares me. This is the fourth day in a row where it's just been a blast. And I've done this long enough to know that I should probably be getting kind of freaked out by that. I am deliberately making myself less vulnerable to an NVIDIA pop. You know, if it does, I don't want to get hurt too badly. So I've done a few things. I've gotten out of NVIDIA completely. Got out of the trade at a nice profit. I got out of AMD completely. I've sold half my SMH puts. Now, if NVIDIA collapses, well, shame on me. There'll be a lot of profits that I didn't get. But I would rather lighten up than keep my fingers crossed. I have no idea. I'm a man with many opinions, most of them unwelcome, but I have no opinion on NVIDIA. None. None. 50-50. And given all the tension and uncertainty, I just figured play it safe. It's a pretty big deal, though, because the market's softened up quite a bit. And if NVIDIA does fall, which I'll be delighted with in spite of the aforementioned missed profits, it will be a new phase in what could be the very earliest stages of an honest-to-God bear market. I have 14 positions, all bearish. And as I said, though, I've trimmed the sails a bit with respect to NVIDIA exposure. I've got the symbols preloaded, and I'm ready to go and talk about them. We start with Spider. We're at a very important point right now. Yesterday and today, we are challenging this midline. This midline is a big deal. It is the channel that goes back, good Lord, how long is it now? 16 years, I believe. It's a huge deal. Break it, and we could be in for some more fun. As it is now, we've merely traversed in rapid speed lifetime highs a week ago down to threatening that midline. The diamonds are also down a bit. And as I said yesterday, I consider this cluster here a new barrier for the bull's little cluster of overhead supply. I showed this nifty 50 futures chart a while ago, and it's breaking down. Nothing dramatic, nothing too exciting, but it's doing what it's supposed to do. So I like the looks of that. That's I think over in Singapore, and the Nikkei is representative of the old age pension colony known as Japan. This is the Nikkei 225, and was slowly carving out what might be a massive top there. But there have been massive tops before that didn't do anything. This one didn't amount to anything. These side-by-side ones didn't either. Last one that meant anything at all was actually back right when COVID hit. We had this brief plunge. As I said 2 days ago, crack 90,000 and look out below. And crypto's continuing to collapse. We're down again hard, just like I said. And I suspect firm support will not be had until the lower 70,000s. This is an important break. And I guess we're down about 20. How much is it now? Maybe $27,000 from the inauguration, I think. Yeah, old Eric Trump's buy the dip didn't work out so good so far. And while we're still in this mode, Ethereum down double-digit %, trendline failure, like I pointed out yesterday. Everywhere you look, Solana, which back here, just before the inauguration, this was just raging higher because you had all these there's a platform I wrote about at length, and now I can't remember it, but basically let you make your own coins. Tons of fraud, and I think they got. I think they're in the throes of an investigation now. But Solana, I think, was the platform for that. That have been going higher. Now it's getting destroyed. And the crypto crowd said, when Melania coin and the Trump coin came out, don't. This is bad for us. And they were right, because they've been disasters. And it kind of probably left a bad taste in people's mouth to see, 80 and 90% collapses in their investment. So Melania going down again, new lifetime low there. And Dogecoin, which was introduced as a joke, but for whatever reason, Elon got into it and it became sensationally popular, like so. And then kind of had its own bear market, just didn't do anything for years, and then blasted higher again following the election results. And I guess there was this thing about, Doge is now the Department of Government Efficiency, and maybe they'll use Dogecoin in the U.S. government, just all sorts of childish, preposterous, puerile notions. Didn't mean a thing. In any case, Dogecoin has lost, I can't figure out that, for 60%, 70%. It'll be 100% at one point, but a big number. And speaking of Elon, there's Tesla, down $200 a share approximately since December 18, destroying 40% of shareholder value, something like $700 billion of shareholder value. How much of this he owns, I'm not sure. 10%, 15%, probably about $1/10 trillion blown to smithereens just personally. And the Fibonacci, the next Fibonacci has failed. So next stop, 250, something like that. You probably saw the story that sales in Europe, Tesla vehicles are down almost 50% because I own a one-person company. This is the employee. I learned through hard experience, when it comes to politics, keep my mouth shut. The only talking to I've ever gotten was from the former head of Tasty. It wasn't Tom. It was very gentle. It wasn't mean or anything like that. Just hey, your political stuff, if you're going to say it, at least preface it by saying it's your opinion. I said, you know what? I just won't say anything. And so I don't. I'm one guy in one-person company. I've got enough sense to keep my mouth shut when it comes to politics, because I'm not going to change anybody's mind. I'm here to talk about charts. So I just don't. A person who employs hundreds of thousands of people might have the same wisdom, I would think. Just stick to your business, send the rockets up, make the cars go, make the great AI, etc. Stick to the businesses. You're an astonishing businessman. No. So hundreds and hundreds of billions of dollars of value already gone, and I don't think it's over. So yeah, Fibonacci's still working. Well, enough of that. The weirdly named Apple sounds like a character from Superbad, plunging. I've read about this many times. There's one particular bearish newsletter that I really like, which has been decrying this company, and the company just kept going up. But they kept at it, saying this is wrong, this is wrong, this is wrong. Looks like it's finally starting to take, because in a few days here we've gone from about 520 to 320. Tremendous plunge on that. So that's Apple PE in the triple digits still. Let's talk about gaps for a sec. Frequent subject here. Palantir is it got very close to a gap yesterday. Maybe that's it. Maybe they've bottomed or close to bottoming. An example of that happening is old Axon, formerly Taser. Remember this? We talked about this a lot. Axon plunged from here all the way to here. Look how close it got to the gap. Just about close. There's the gap right there, which naturally was following the election. There's the gap. Boom, up it goes today. That's probably about all it's going to go in my opinion. But just interesting how that near gap closure was a kind of a very appealing risk reward ratio. Oil is down a little bit. It's interesting with oil. This is USO. It had cut above this line here for a day, suggesting a breakout. It failed. And I've said long ago and many times that, in my opinion, crude oil is indicative of the bad world economy coming. And it was odd to me that it broke out here, but that did not last. So it makes a lot more sense that we had this failed breakout. So this continues to fall. And this is reflected also in XOP. And you can see this with the $ XOI index, the oil and gas index. But this is still hammering out what could be a tremendous head and shoulders top. It's not there yet. It's got more work to do. But should it fail this pattern, yeah, that'll be fun. But I'm in a couple of items related to that. I've got ConocoPhillips puts, COP. This is breaking down nicely. And Devon Energy, DVN, like so. So those are looking good. Some other puts, I've mentioned I've got 14 positions. Here's some other. This is working out great. I'd never traded MDLZ in my life. In fact, I thought they were a beer company. They're trying to make Oreos. But in any case, they're a big snack maker. But I got into this for the first time ever, either yesterday or the day before. Good prices, but it's reversed hard. We've lost all of yesterday's gains, all the day before's gains. We've dialed it back to here. Beautiful, beautiful near tag of that trend line. This is also a new one, never touched before. I don't know if I keep getting stocks that I can't pronounce. Either Bungie or Bungie, Great Bungholio, something. BG, we got very close to this massive overhead supply, and this is starting to peel away from that. So that's a new position. Wendy's, that's a honey oven position there too, down over 2.5% today, below the diamond pattern. On semiconductor, ON, getting back to my risk reduction, took a little bit of profit off this one. It's still there largely, but trimmed out somewhat. It's a nice pattern. United Healthcare. Hey, Luigi. Anyway, this is down almost 2%. And XHB. What I did with this one is added more yesterday. We had a big up day yesterday. I re-added to that position. I trimmed here. I added it back here. And so far, so good. We're weakening again. How's our time? Oh, we're going to make it all right today. Important. I just saw this. The RTY futures. Fibonacci time. This is the RTY going back for many, many, many years. Look what's going on. Look at those pink patterns. And look at where the price is relative to the Fibonacci. If, let's just fantasize, that we start to break down tomorrow and the next day, this could get exciting because it will complete the pattern and it will cut the floor out from under prices by way of this fib failure. Just saying. Could happen. Here's NVIDIA. Good heavens. One of my many dogs. Here's NVIDIA. And all eyes will be on it. It's basically in the middle of its range right now. I mean, it has been banging around since September. Bang, 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 bang. It's kind of in the middle of that range. See this whole swath right here? Right in the middle. A lot of tension right now. Be very exciting to see what happens with that. Should it fall, though? Should it fall on the cubes? To me, the natural target, if we get some real selling going, will be where this price gap is. So keep an eye on that. All right. Well, that is the end of the show. And good luck to you, those of you who are still in NVIDIA. And we'll take a look at the aftermath tomorrow. Looking forward to that. Thanks as always. And I'll see you on Thursday. Bye-bye.
If you missed the live show, here's our cherry on top weekly recap.
Sadnov, can you show him your Valentine's Day present? Please, this is the moment when Sadnov was happiest. There you go. That's Sadnov when he was eating his Barnaby's pizza. I made him a pillow.
Oh, nice.
I spoke to your wife last night. You know, you got to stop just thinking about yourself, Sosnoff. That's soon to be in the store. Your wife wants you to bring it home for the grandson.
No,
Hand to God, that's what she. I have it here. I'll send. You want me to send you a screenshot? And I said, would you like me to take this home for you? And I said, no, not me, the pillow. And she's like, oh, I thought you liked me, but sure, I'll take the pillow for my grandson. I think he'll enjoy it. I go, I don't know if Case is going to enjoy it, but the baby will enjoy it. I had no less than a half a dozen people from our firm say, I love that pillow. Where did you get it from?
Oh my God, you're so full of crap.
People love it.
I'm going to do a buddy pillow.
You want a what?
There you go, John. How cool would that be?
You should do a buddy pillow.
Can you see this?
Yeah. What is it?
I made this. We went glass blowing over the weekend. I made this.
Oh my God.
Oh my God, are we at show and tell now? What am I, back in third grade?
Beth, thank you. See, I'm very proud of it. It sits on my desk.
You went glass blowing?
Yeah. When was the last time you did that, sir?
I would never do that.
Guarantee you, if the missus said to you, we're going to go glass blowing and then hang out. There you go. You're blowing glass left and right. What do you got? I love glass blowing. Okay?
You become the best glass blower this country's ever seen.
I think we are on the precipice of a new star emerging in the world of influencer culture. I'm talking about Mr. Scott Sheridan. And I'm like, Scott, if you do take a Waymo, I was like, can you film it for me and send me the clips so I can put them on social? Scott is so natural, so just giving commentary. Check this out.
We're in a driverless car, my first time ever. Not really excited about the prospect of nobody sitting behind the wheel, but I'm with people I love. And if this is the way it ends, so be it. Solid A+ for this experience. Shout out to Waymo and to Jaguar.
Thank you from our new Tasty Live correspondent.
How's it light out now?
This type
I'm going to say the word.
Nobody's showing the inside of the car.
I'm going to say the word. I'm going to say the word. I'm going to say it. I can't.
Don't say it. No.
Do you have a beeper? Beat me.
Don't
beat
say
me.
it.
You are so freaking sometimes. I mean, honest to God.
I just want to know how you went from darkness to light.
It wasn't me.
The light out is not him. That's just B-roll.
That's a woman. That's like stock.
That's like a stock photo.
Oh my God.
Why are you putting stock photos in there?
Oh gosh, Tom.
This is pathetic.
He's stupid. He's so stupid. My Taiwanese sources told me that you sometimes like to watch hockey games with toe spreaders on. Did you have?
Oh, the best. No, but I've got them on now. I do have them on now. It's the greatest thing I've ever done for my back.
Why do you have a toe spreader?
It's just amazing what it has done for my back.
Do you tap dance when you have these toe spreaders on?
I haven't started the tap dancing yet. I'm a little upset about that. All right, I'm still working on that one. But no, I haven't done. But I do ride with toe spreaders on. Wait, look at that. Those are good.
My toes are already webbed together.
He has his toes up in the air.
Yeah, your toes are webbed.
Yep.
Right. Do you have webbed toes?
Yeah.
All of them are webbed?
Yeah. So I can swim really good. Yeah, web toes. Yeah.
Yeah, I've seen you swim. Okay, so, right, well, we won't talk about that.
TMI!
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means? Time for the last call. I don't know what you did to the market, Sadnov, but we were significantly higher. We've had an $80 range on the E-mini S&Ps. We were over 6,000 and a Michael Jordan 23. We are now closer to 59.66, Sadnov. What'd you do to the market?
Ooh, I don't.
Did you talk tariffs again?
I didn't do anything to the market. It's funny. I had a phone call I had to be on, so I had to disconnect, and I went into another room. And when I went in, they were up 15 or 17. When I got out, they were down 17.
After being up 45.
After being up 50 something at one point.
Sure.
Yeah, they look like sick puppies. The sickest puppy of them all is Tesla, no doubt about it. It's back to, this is kind of what I thought, where I thought it was going. Now I think you can.
Oh my God, I hate it when you're right. I really do. I mean, it's so obnoxious.
I thought it was going. I just want to comment on some of the things I've been right about. Bitcoin, which I think is going about 75,000. I said low 80s, but now I think it's going 75,000. Maybe into the 60s, but then it'll be a buy. But Tesla, I thought was getting back to the to where it was on election night. And
it definitely there.
It's right back to where it was pre-election when they had their. I think it wasn't bad earnings, but they'd hit the stock from like 3 something down to 280 something. It's back in that 280 level. I just sold a put spread in there. I don't know. We'll see. Better than we did this morning. Let's put it that way.
Understood.
They took away a lot of our profits on this down move. They pumped a little vol into this thing today, and this morning I liked it better when they were crushing vol. Definitely pumped.
Yeah, volatility trade under 18 to 1760. It's back to 18 and a half, Sosnoff.
I know they took away a little bit of my cash. I don't like that. All right. Well, I've been waiting all day for them. I've been waiting all day for a little, opportunity in NVIDIA, and that in the last, I would say 5 or 7 minutes, they finally bought some options in there. All day they've been sellers. They finally bought some options.
IB rank is 57 over the last 5 days. The IB rank or the IVX 5-day change has gone up by 13%. Expected move is a little over 1170 now.
Yeah, but they crushed it. Just so you know, like the expected move was like 12 yesterday. They took it down to like 1070 or 1080. Now back to 1170. I just got filled on some. I sold some March strangles, some cheapies for $1.87. I sold the 100.
100. Go ahead.
I sold the 100 163.
The 100 163. Oh, these options are flirting with the dollar, Saad. Now, your wife okay with this?
I called, but she wasn't home, so I left a message. I told her to call me back before the close, so I knew if I had to cover or not.
knew if I had the capital. She was going to let me use some of hers.
I had to have her make a money transfer.
All right.
I got to tell you a quick story. So we were out in Vegas, right? We were out in Vegas like 2 weeks ago. So it was late. We were out. We had dinner, then we were doing something else. Then we went to the tables to play. So I got to go to the cage because I don't have any cash. I got to get a mark. I got to get my marker going. She goes,
get some chips. Yeah.
Yeah. So she goes, what do you got to do? I go, I just got to sign a piece of paper. So I get there. They go, oh yeah, you got to update your thing. So they go, you got to move some money.
Update your thing. You got to update your information. You mean?
Yeah, you got to update your information. She goes, but the bank account we have on file is not the one you guys use. So I go, I don't want to deal. So I go, Corinne, could you do me a favor? Just move over the money. It's like 11 o'clock at night on a Friday night, right? You got to move over some money because she has some 24-hour number. I don't know what it is. So she goes, fine. So I leave her in there. Okay. She's moving money around at like 11:30 at night on a Friday night. And she goes, I have no idea what I'm even doing. Like, I don't even know what this is. And I'm like, just so I can get some money to play at the tables. And anyway, needless to say,
you're a kept man, Sosnoff. You're a kept man. She had to use her Amex card to get you a marker. I got it.
No. It all worked out. But anyway, the funniest thing is, like, that's exactly what we're doing here, right? Hey, just move some money over. Call Steve. Tell him you move some money in. And we can put this trade on.
You're 100% correct.
No. So anyway, I did a couple things. I sold that strangle in March. No big deal. I'm short some March iron condors, which I've had on for a couple weeks, which is nothing. And I sold some front month, and I don't like the 2-dayer that much, but I don't like it. I don't know. I don't even know if I'm going to keep it. Just some junk.
What'd you do?
Just junk, crappy trades, like 50-cent options. What are you going to do in there? What are you going to do?
I was going to ask you gun to your head, up or down on Nvidia. Just like where? Just give it to me. What do you think tomorrow?
Gun to my head, Nvidia. Man, I hate to say this, but I think up 10.
Inside the expected move to the upside, right?
Inside the expected move to the upside. Yes.
Yeah, I think it's going to be closer to up like 5, but inside the expected move.
Yeah, I think inside the expected move upside, though, only because the stock is really strong today. Even when the market sold off, Nvidia didn't sell off at all.
No, it didn't. And if it did, it was met with bids. Unlike Apple, which isn't being met by anything.
Unlike somebody on this show, I forgot who it was this morning, said, "Follow me into Apple because we're making a bottom." I mean, I'm just paraphrasing. Like somebody
you're 100% correct. And about an hour later, it was $2.50 higher.
Somebody was patting themselves. Somebody pulled like a shoulder muscle. Somebody has to have Tommy John surgery now because they were patting themselves in the back so much for buying Apple down $5. I hated it all day. I made money in there today. I didn't like it all day.
Lucky you, aren't you just that guy?
I'm just saying, I don't like Apple all day. When a stock is down $5 and the market's up big, I'm not buying it.
It was the right thing to do. It rallied $2.50. It was an easy freaking play.
You had exactly 30 seconds. You had 30 seconds to make your. You say it rallied $2.50, but it really rallied like legit, like $1, and you had about maybe 30 minutes to get out, and you wouldn't have got out.
You're amazing. You're amazing. Good volume in the E-mini S&Ps, 1.6 million. Today, NASDAQ, the only green, up 12. Russell unchanged. Dow down 174. I would have expected a day like this yesterday, but I didn't expect that we'd have this huge range that we had in the market. It was very surprising to me. Volatility basically unchanged, 1833.
Biggest surprisers for me today would be the sell-off in the S&Ps, the rally in the bonds, because the bonds are over 118. I did not think you'd see 118. And if you're talking about individual stocks, the two stocks that had the biggest down moves today, which were, in my opinion, of the most active stocks, Tesla down $14, Apple down whatever is $7 or so now. Yeah, it's still down 7.
Yeah,
those would be the two biggest surprises. I mean, Bitcoin trading trading in the 82 handle, I guess would be a little bit of a surprise. If you're looking for other stuff, Meta up 15, no surprise there. I thought it was oversold yesterday. And let's see, was there anything else on the board that jumped off?
Google can't get out. Google can't get out of its own way. I mean, it's like down $2, $3 every day.
Yeah, which is
AKA
funny.
Alphabet.
I used the new Google. No, actually, I take that back. I was looking something up before. No, I used the new ChatGPT AI.
Grok.
And it was interesting. It was good. It was good. I had to look up something, and I think it gave me a thorough answer. I don't know. Like, there's no way to fact check AI. Like the reason you're using it is because you don't know the answer. So
right.
I can't believe I'm going to say this, but I almost feel a little more confident when I Google something than when I ask AI. But AI sounds, what they spit out.
It sounds more progressive. Sounds like you're in the here and now.
It sounds more professional the way they lay it out. So
yeah. You don't sound like a boomer. I'm going to Google it.
Yeah, right.
Understood. You care about snow.
Honestly, I think snow is a better trading vehicle, SNOW, than CRM.
Up $3 and change today, but it's been on a slide from around just under 200, 180 and change down to 167.
Yeah, 167 is an interesting number in there because it stopped there, a few times in the past. Well, sometimes it actually got down to like 130 or something. But CRM has an expected move, I believe, of $25. I was looking at it earlier, but I didn't get filled. I eventually got filled, I think, I eventually did a put ratio spread, but I never got filled on the strangle I wanted to sell. In snow, I didn't do anything.
CRM does have a $25 expected move. Snow has a $20 expected move.
Yeah. So what would you do in snow? Markets are way better in snow than they are in CRM. Fact.
I mean, if this market was behaving and it's starting to behave a little bit better, it looks like a puts or schmutz play to me.
I kind of agree with you. I mean, this is an interesting.
Oh my God, we're dead. We're dead. We're dead.
I know.
I mean, a guy like you can go. What did you do?
Nothing yet.
Oh my God,
I can't tell you.
The 130. You know what? I can't give you my great calls if you're going to waste them on 50-cent options.
I don't really like snow that much, but I feel like there's some free money in there with 2 days to go. I feel like the 130 puts are as close to free money. I hate this trade, so you can't do it huge, but I did a couple tranches.
You got Mara tomorrow.
Yeah,
that's it.
I traded Riot the other day, and it was a non-event. The question is, with Bitcoin doing what it's doing, Mara has dropped. I want to say, it's been on a straight down path from 20 to 12.
Where it sits right now, 1235 and change.
Yeah, the problem in Mara is that if you want to sell upside calls, there's nothing there. So the question is, at what price would you buy Mara?
Do I have to?
Yeah, you kind of have to.
I mean, expected move is $1.
Yeah. So there's plenty of
those 10 puts look juicy at 8 cents, Sosnoff.
No, but what does look good, what I kind of think you do here is you sell stock and you sell the 11.5 puts.
Oh no.
Delta's 28. I'm gonna do it. For every 10 puts.
Okey-dokey.
Oh man. For every 10 puts, you got to buy 300 shares of stock. I'm sorry, sell 300 shares of stock. You don't like that play,
Have
right?
You done that?
What?
No, I hate it. No, I hate it.
I know.
Not my style.
I know.
You got a partial. There you go.
This is hard to do. It's not worth it. All right, I'm filled. So
beautiful.
I had to do something. Sell a little stock, sell some puts. I did it 10 by 2 is my ratio. So short 200 shares of stock, short 10 puts. Gotcha. Maybe I think the stock's going to be down $1. That's my play.
Oh, you're playing it to the downside. I like it.
Playing it to the downside, playing it small downside because the stock's already down a lot. Stock down $1. That's how I'm playing it.
Got it.
In CRM, I did a really small trade just for earnings. I did a 1 by 1 by 1 ratio spread. I bought the 280 puts, which is at the expected move, and I sold the 272.5s and 270 puts, and I did it for a net credit of 19 cents.
Good job, buddy. You care about VST or anything else like that, like WBD, the trades stocks you don't usually trade?
VST, we do not have a position on. What'd you say, WDD?
V as in Victor, VST, and
no
WBD.
Position. No position.
Yeah. Okie dokie. Just want to make sure.
I'm going with the ones that we just mentioned, CRM and what'd I just do? CRM,
Mara,
NVIDIA. Yep.
Did
all right.
You
what
get
else?
Filled in snow.
Which one?
eBay also. If you're if you're interested too.
I actually don't like trading eBay. I find the markets
traded in the past. You couldn't get out.
I don't like eBay. You think you trade Boeing here? Stock's down $5 today. It had been on a pretty nice run and it's just sold off like, $10. I'm not saying that you buy Boeing, but you think it's a premium sale here? I kind of feel like it's a relatively liquid 33? Stock.
Well, you got to go to April, right?
Yeah, you sell some April premium.
Go.
The markets are actually kind of tight. You can go to
what are you gonna do? Like 155, 195?
Yeah.
Yeah, I got you. $4 and change.
$4.32.
Mm-hmm.
Can't get filled there, but it sounded good on paper. Oh, filled $4.32.
Oh, beautiful. 1 penny off of mid price. Look at you.
Yeah, that's not bad for Boeing. Sometimes at the end of the day, you can get filled on some, some funky stuff. All right, what else do we got? Was it AMAT not an earnings play tonight? I don't remember.
AMAT?
No, we must have done it earlier today. Sorry about that. Forget it. Disregard.
That's okay. No, AMAT doesn't have earnings or anything looming.
Coinbase hung in there today, unchanged. That's pretty good for that stock. And MSTR is actually up $8 with Bitcoin down.
The stock unchanged is pretty good, is what you're saying for coin? Is that what you're saying? It's unchanged. It's doing pretty good because we're getting hammered the last.
I'm saying it's pretty
weeks.
good because Bitcoin's down 3,600. Yeah.
Mm-hmm.
Same with MSTR. That's going to mess a few people up. Why is MSTR up so much today with Bitcoin getting killed? I mean, it's a reasonable question.
It's a reasonable question. Just probably playing catch up. I mean, coin was pretty weak relative to Bitcoin when Bitcoin wasn't doing anything.
All right, here's something interesting.
They don't have a,
I'm going to give you something interesting, Bat. My NVIDIA profits just exploded, so they must have just killed premium in there. Let's go see what the expected move is. Because everything just got crushed.
Yeah, 11.29. It was 11.70 and change, 11.30 right now. Your strangle that you did is trading 178.
Yeah, it just came in 10 cents. That's exactly what happened. And the other strangles came into, everything just came in. It's funny how that works sometimes. Sometimes you wait till the end of the day and you get the best possible prices. Sometimes you wait till 2:30. You never know.
Well, you're never gonna know, right? You're never gonna know.
Yeah.
But it's good. The only thing I know is it's good to be a Sosnoff. I know that, right?
Well, you'd rather be a Sheridan, with all due respect. He's a better.
That's true.
He's a better He's a better. He's a better player.
Right there. He's just better.
He's a better player.
He sure is. He sure is.
Yeah. Yeah.
That's true. That's true.
Yeah. He's yeah.
Okie dokie.
All right, let's see what we got here.
You want to see my overtime crew?
Yeah, I want to see what happens though as we kind of man, what the hell?
What's the matter?
All right, yeah, sure.
Are you ready?
Yeah, sure.
All right, who we got? We got it?
Gentlemen.
We got it?
We got it.
We got it? We got it?
For some reason, I mean, Chris is here. I see him. But,
there he is.
I guess we don't. Oh, there he is.
All right, there he is.
Hi.
No, Dylan is out today.
Welcome to the show.
I just got a picture of Dylan in standing with Christy Ross and Joe Mama. That is the strangest combination of three people I've ever seen in my life. Christy, Joe Mama, and Dylan. Did you see the picture, Tony?
Oh yeah, I'm on the. She sent it to me. Yeah.
Yeah. Christy just texted
Send me a couple. Very, very handsome. That's a good combo there for Christy. There, you know what I mean?
She's like
little side action.
She's like, what did I do to deserve this? I've worked so hard. I've been good my entire life.
I'm a good person.
I'm a good person. What did I do to get Dylan and Joe Mama as my Wednesday night dates? Yeah, not good.
I never did anything wrong.
I deserve better than that.
Having recently been out to drinks with Dylan with some of his friends, I could say he's a lovely dinner companion.
Oh no,
Dylan's great.
You want to talk about two of the best like dinner companions ever? She's got them tonight. Joe Mama, great dinner companion. Dylan, great dinner companion. You got him.
Yep, for sure.
Yeah,
for sure. Now, as breakfast goes, they're not good breakfast companions.
No.
I can give you that for sure. That you don't want to have breakfast with them. You don't mind having dinner. You just don't want to have breakfast with them.
That was specifically noted. In fact, Dylan said, "I can see you for dinner, but do not invite me to breakfast."
Do not have them over for breakfast. Okay. This is true. All right, Chris, Ilya, give us what's your NVIDIA call? What do you think here? Ilya, you go first.
I think we're getting quarter after quarter to a place where the market has learned to benchmark them. And so I think scope for some sort of an explosive surprise that gets everybody excited is probably relatively low. So you probably get a number. Everybody kind of goes, okay, this is like a beat, but it's a beat in line with what we'd expect would be a normal beat for them. They guide a little under, they beat a little over. And I think the market ultimately just shrugs its shoulders and goes back to our regular scheduled programming. We're through the event risk. Good night.
Okie dokie. So you're calling for like an inside-ish move a little bit, but with a little bit of a better number that they.
Yeah, I don't think they miss. I think that would be strange. Reading the guidance should be interesting, but I think in that the market's default the past few days has clearly been risk off. I think the market just goes back to that. And we probably don't want to overinterpret after that this is some sort of NVIDIA thing, unless, of course, NVIDIA itself moves. But I don't really see a huge surprise that they're going to deliver here. Of course, right, now Chris, that means that's exactly what they're going to do just to make me wrong.
Chris, what do you got?
Yeah, I mean, I think it's going to be an inside day. We've been looking at volatility NVIDIA come in over the course of the past few sessions. Look, unless it's a really big number to the upside, the cadence of earnings releases this particular quarter has been good numbers have not been rewarded, bad numbers have been punished. And so they really need to clear a high hurdle here, both beating on the numbers and then guiding much higher to show that the AI CAPEX build out continues. Otherwise, the narrative is bearish in the action we're seeing in stocks today.
Yeah.
Wow, sad enough. I think we're almost all on the same page here.
Oh my God, I'm now scared shitless because we're all making the exact same call. We're all watching the same movie. We're making the same call. Has there ever been a time in history when all four of us have been right?
It's appropriate. This is a week where literally the planets are aligning if you go outside and look at the night sky.
That did not answer. That did not answer my question. Has there ever been a time when all four of us have been right? I mean, we're never all on the same page, but this is even more incredible than that.
This would be a first, Sosnoff. I'll give it to you. This would be a first for sure.
Yeah. Fade the boys, reverse iron fly time.
Close all watertight doors.
Yeah,
like I said, the market doesn't look great.
No
the action that we had.
Well,
today.
The Nasdaq just poked its head up, but yeah, the market doesn't look great. It was a good churn day. I mean, it for sure can't hold a rally. That's the ugly thing. Yeah. Can't hold a rally.
That's for sure. Yeah.
Yeah. I mean, it's kind of what we talked about yesterday when we talked exactly 24 hours ago. We said, look, would it be that weird if the market bounced after so many days just in front of the NVIDIA event risk? Okay, it didn't really sell off very much, but it couldn't even manage that. It couldn't even manage a little baby retracement here.
Yeah, no, it's definitely a muted move here going into the last minute. Even the S&Ps look like they're going to be basically unchanged, down 3. Nasdaq's up 25. Dow's down 200. The Russell is unchanged.
This is a binary event day. This is a classic binary event. I mean, NVIDIA's big enough to be considered a binary event, and this is a binary event day. Just everything's scratched until whatever, 25 minutes from now, 20 minutes. What time does NVIDIA come out?
Ooh, I don't know for sure.
3:20, right, somebody said. 3:20.
Yeah, it's like
that's usually when they come out.
Yeah, I mean, Scoopy.
Well, we're on the clock, ladies and gentlemen. You got about, even the S&P is rallying to the close, up 8. NASDAQ rallying to the close, up around 75. Sadnov, we'll take a quick 90-second break. We'll come back. We got more Tasty Live after this with the Overtime crew. Sound correct?
Sounds
80%.
good to me. Curious what just jumped them. I'm curious what came out that gave them that little, that goosed them a little bit.
Tariffs off. Who knows? See you later.
No way. Tariffs off.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
If you missed the live show, here's our cherry on top weekly recap.
Sadnov, can you show him your Valentine's Day present? Please, this is the moment when Sadnov was happiest. There you go. That's Sadnov when he was eating his Barnaby's pizza. I made him a pillow.
Oh, nice.
I spoke to your wife last night. You know, you got to stop just thinking about yourself, Sadnov. That's soon to be in the store. Your wife wants you to bring it home for the grandson.
No,
Hand to God, that's what she. I have it here. I'll send. You want me to send you a screenshot? And I said, would you like me to take this home for you? And I said, no, not me, the pillow. And she's like, oh, I thought you liked me, but sure, I'll take the pillow for my grandson. I think he'll enjoy it. I go, I don't know if Case is going to enjoy it, but the baby will enjoy it. I had no less than a half a dozen people from our firm say, I love that pillow. Where did you get it from?
Oh my God, you're so full of crap.
People love it.
I'm going to do a buddy pillow.
You want a what?
There you go, John. How cool would that be?
You should do a buddy pillow.
Can you see this?
Yeah. What is it?
I made this. We went glass blowing over the weekend. I made this.
Oh my God.
Oh my God, are we at show and tell now? What am I, back in third grade?
Beth, thank you. See, I'm very proud of it. It sits on my desk.
You went glass blowing?
Yeah. When was the last time you did that, sir?
I would never do that.
Guarantee you, if the missus said to you, we're going to go glass blowing and then hang out, there you go. You're blowing glass left and right. What do you got? I love glass blowing. Okay?
You become the best glass blower this country's ever seen.
I think we are on the precipice of a new star emerging in the world of influencer culture. I'm talking about Mr. Scott Sheridan. And I'm like, Scott, if you do take a Waymo, I was like, can you film it for me and send me the clips so I can put them on social? Scott is so natural, so just giving commentary. Check this out.
We're in a driverless car, my first time ever. Not really excited about the prospect of nobody sitting behind the wheel, but I'm with people I love. And if this is the way it ends, so be it. Solid A+ for this experience. Shout out to Waymo and to Jaguar.
Thank you from our new Tasty Live correspondent.
How's it light out now?
This time.
Do you tap dance when you have these toe spreaders on?
I haven't started any tap dancing yet. I'm a little upset about that. All right, I'm still working on that one. But no, I haven't done. But I do ride with toe spreaders on. Wait, look at that. Those are good.
My toes are already webbed together.
He has his toes up in the air.
Yeah, your toes are webbed.
Yep.
Right. Do you have webbed toes?
Yeah.
All of them are webbed?
Yeah. So I can swim really good. Yeah, web toes. Yeah.
Yeah, I've seen you swim. Okay, so, right, we won't talk about that.
TMI.
Get the full scoop by checking out the archives at tastylive.com.
We all wait for NVIDIA earnings. It is Wednesday, February 26, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco. The rotating cast of guest hosts continues. This time, Mike Butler in Chicago with us to finish up this hour as we make our way through the most important event of the week, the NVIDIA earnings due out in about 13 minutes time. If you're joining us on the website, if you're on the platform, come over to YouTube. Tell us what you're trading today, what you're doing ahead of these NVIDIA earnings. If you're already on YouTube, join us on the platform on the website, tastylive.com. See what we're all about. Guys, it was a mixed day. Stocks tried bouncing earlier in the session. We had a little bit of a break out in the Asia and European hours. But then midday rolls around, the markets decide to keel over. We do bounce back a little bit as we go into the close. Ultimately, the S&P 500 up by 0.13%, the NASDAQ up 0.36%, your Dow Jones down by 0.47%, the Russell up by 0.28%. But just because there was some stability in stocks doesn't mean it was ultimately a good day. They are well off their highs. Cryptocurrencies continue to come off the board. Bitcoin down below 85K now. Haven't seen that in quite a few weeks. Other than that, gold, silver do bounce back. The dollar churning through a potential top still as yields continue to break down. 10-year yield closes the year at a fresh yearly low. But that all is just an appetizer, guys. Mike, you are the person among us who trades these earnings releases more than anything else. So let's just get to the meat of it and go to the charts and look at NVIDIA. What are you thinking about today's market, the implied volatility that's priced in for today's move? What are you expecting here as we count down the clock?
I expect some craziness. I think it's interesting that the market has been so relatively bearish leading up to NVIDIA, but yesterday we saw the big red day. It got gobbled up intraday, and then today we were up like 40, 50. I was like, okay, maybe this is maybe NVIDIA earnings, just blowing out earnings, skyrocketing, could be the catalyst to going back to all-time highs. But we've sold off from the recent highs, and we are in the I don't know range. I feel like the last hour of trading and tape action has really been like just absolute chop. Like we were down 20, we were up 20, we were down 20, and then we kind of closed flat. So I think the uncertainty is there. You had Salesforce come out a couple minutes ago. They gapped down from 307 to 275, and they've rallied to 295 since. So I don't know if that was a misclick by some big player or some knee-jerk reaction either way, but Salesforce, NVIDIA, and Snowflake all coming today. Snowflake's up 20 points after the close. That's good for the data people out there. But yeah,
looks like Salesforce missed on revenue, and that was the on the forecast. So looks like they're expecting to be between 4.5 billion and 4.9 billion, and analysts were looking for 41.3 or 41.4 according to LSEG.
Lovely.
It's nice for Snow. CRM is not having a decent, not quite the same reaction that Snow is here. 294, Mike, you mentioned off from the levels closer to 307, 308 into the close. I think 307.47 was that close there. Guys, this is obviously a very important day here. Mike, I described NVIDIA as the Atlas holding up these markets midday today. And even though markets come back in, it feels like that NVIDIA really still fulfills that role here. Are we witnessing the potential turning point in this AI narrative from your point of view, or is this another day of earnings releases that we'll look forward to 3 months from now and won't really care about this random February 26th?
Well, Nick and I were calling it NVIDIA Day today, so that's officially the name for it. But yeah, I think with such a strong concentration in products like SMH and the NASDAQ, if there's a big move in NVIDIA in either direction, it can certainly kind of move the markets to a degree. And then that movement can create compounding movement from there. It's been interesting, though, to see like products like Apple ripping higher the last couple of days. It's down pretty big today. And you saw a reversal in some other products like Microsoft, Amazon, at least in the morning. So I think you're seeing a decent amount of rotation and churn in a lot of these products. But I think if NVIDIA posts a big number or has some kind of headline that really moves it outside of the expected move, I think that could compound into other names, into other sectors as well.
You talk about that expected move. We look at the options chain, looking at $11.30 through, the end of this week. It's February 28th expiry here. So at 132, less than 10% right now on the board. Ilya, I saw a really fascinating chart here today from Warren Pies, if I'm mispronouncing that name, 314 Research, is the amount of availability that for various GPUs that you could rent right now, and those that are currently, those that are on the market, as it were, the percent of minutes where GPU availability is out there for rental. And since the DeepSeek emergence back in January, apparently people are renting GPUs to run training, and they're scaling up. And so this oversupply that potentially we were talking about at the end of last year, are we overbuilding? We're starting to see more consumption come back into the space, which I suppose is ultimately a good sign if you believe in the AI revolution. This is perhaps confirmation bias for my own proclivities. But you think there's a bigger macro story at play here, right? Yeah. Like NVIDIA earnings that are bad, if they miss, if they don't hit on the revenues and they don't give us the guidance that the market really needs, which is well beyond what the estimates are, of course.
Yeah.
Then this is occurring in the manner which the market's already dealing with a bit of a growth scare.
Yeah. So two quick things. Just on the renting of GPUs. I mean, obviously the perspective that sort of feeds the optimism in the narrative, as it were, is that, okay, people are coming out, they don't need to spend all of this money necessarily to build out, they can rent, and this will be a tailwind for the sector and the efficiency gains that they portend for the economy and all of these things. Or, and I don't think you necessarily know which one it is at this point, you could say we have so many GPUs that people can now rent them because we have a situation where they're not being bought up by the people with the deep enough pockets to want to build out capacity. That this is already a sign of oversupply and overbuild. That there are excess GPUs that aren't being gobbled up by everybody scrambling to build their own, and now there is a supply that's available for rent. So we'll see. The larger narrative, I think, as you point out, is the macro narrative, because what NVIDIA is at this point, I think, is to a large extent a known quantity in terms of sort of what normal looks like for them. They've been beating by smaller margins over the recent quarters. They managed actually to beat by a slightly larger one announcement to announcement for the third quarter, 8.3% beat on the surprise quotient for the EPS. But we're not talking about 29% beat, 18% beat, like what we were looking at in early 2023. So this is a different thing now. I think the markets are looking at this more as a kind of event risk way station. When you get to the other side and nothing shocking has occurred up or down, you come back to what the default is. And the default over the past several months really has been we set a swing high on most of the indices in early December. We have not made any kind of serious attempt to take out those highs. We're stuck in a range, and more recently we're swinging into the bottom of that range because we got a second consecutive month now, as of Friday, of abysmal U.S. PMI data, in particular for the service sector, showing us that the service sector in the U.S. contracted for the first time in 25 months in February, which is incredibly ominous because the service sector in the U.S. has been the only engine of global growth for the better part of 2 years. I just had a long conversation on Macro Money yesterday about this idea that China is rebounding. People look at the rally in Hong Kong and say, oh, look, we have a rally. China is coming back. Well, no, the numbers are still awful. And when you look at the fund flows, it seems like the rally in Hong Kong is to some extent about DeepSeek, but more so about money fleeing China and people trying to evade capital controls. If there was, in fact, optimism that China is coming back, we'd see money flowing onto the mainland through Hong Kong. And we're not seeing that. So if you look at, for example, ASHR, the mainland index, it is anchored. If you look at FXI, it is surging, but FXI are all Hong Kong listed stocks. This is not mainland. So when you look at what's going on here, you're operating with no safety net. China is anemic. Europe is anemic. That's 2 out of 3 major engines of global growth. The only one that was working last year was the US, and the only reason it was working was the service sector, which is why even Canada, our closest trading partner, literally attached at our hip, could not make hay of US strength because we were not importing goods. So we weren't sending demand out into the world. We were being powered by a service sector mainly serviced by domestic firms. So this is the only real leg on which global growth has to stand on. And then we get the kind of PMI numbers that we got, which means that leg is giving way. How you don't get a global recession in this environment, if in fact what we're seeing in the PMIs holds, and I say if because, okay, 2 data points, 2 PMI numbers. Yes, the CPI numbers confirmed them. Yes, the ISM numbers confirmed them. Yes, the consumer confidence numbers, both from University of Michigan and yesterday the Conference Board, all of that confirms it. Let's get some hard data. Let's get a scary GDP number or something like this. But if in fact the U.S. service sector is giving way like these numbers suggest, I don't know how you don't get a global recession at some point this year. So not surprisingly, that's the story. And if NVIDIA doesn't give people enough to basically forget that that's occurring, well, then that's the regular scheduled programming that we go back to.
Mike, we're obviously less than a minute away here. We can see that we're about, 30 seconds away, so hopefully those come out soon. If Ilya's right, then the bond market perhaps should stay on fire. Before we talk about NVIDIA real quick, any strong feelings on which way bonds are pointing here?
I think it's been interesting to watch the probabilities of rate cuts going forward. I remember when I was talking to you and Mr. Radigan last week, we were looking at a 50-50 chance in June of a 25 basis point cut or staying where we are. Now we're looking at a 55% chance of a 25 basis point cut and even a 15% chance of a 50 basis point cut. And going to July, they're basically pricing in a 50% chance that we are at 40425 and even higher, almost double the probability at 30% that we go to 37540. So the movement in bonds, as I'm speaking, NVIDIA had a big gap down. It's rallying from that number now. Looks like it's up.
I got the numbers here.
A couple points here.
89 cents on the EPS versus 84 cents expected. So that's a beat. Sales 39.3 billion versus 38.26 billion. That is also a beat. Their gross margins right in line at 73.5%. So NVIDIA shares up here a little bit after hours, now 136. Maybe that little sucre that the market needed. We'll wait to see what we get on some of the guidance moving forward. So stocks up about 4% here after hours. Mike, this is obviously good news for a market that needs it right now. NVIDIA is the big boy. Do you think that this could be the catalyst, depending upon what happens after the earnings call, that helps revitalize this beleaguered stock market over what's been didn't we just hit all-time highs last week in SPY and triple Qs?
Isn't this funny how the narrative shifts so quickly? You get a 5% sell-off or not even, and everyone thinks the world's crumbling. But yeah, good to see, if you're bullish, good to see the NASDAQ ripping higher. I think it's always interesting to check out some of the potential sympathy plays. So AMD moving a little bit higher. Of course, SMH and these other products that have a lot of NVIDIA exposure are going to be moving higher too. But yeah, I think to answer your question, if we see a big rally in the markets tomorrow, a continuation with some of these tech stocks rallying, and a big vol crush, I think those three things kind of point to everything's fine. Let's continue on. But I think if we, like Ilya's saying, the numbers are not really telling that same story.
Yeah, I mean, to take a look here, I mean, on EPS, right, we were expecting 0.85, we got 0.89. That's a beat of under 5% relative to expectations. That's the smallest we've seen since the last time NVIDIA underwhelmed, which was the third quarter of 2022. This is the smallest surprise quotient we have seen in the series of upside beats that we've seen for going on 2 years now. So is this news? I'm not sure.
Okay, so I have more on the numbers here. Their guidance for Q1, revs 43 billion versus an estimate of 42.3. They are expecting their adjusted gross margins to come in 71% plus or minus 0.5%, which is versus an estimate of 72.1. So that's not great. Data center revenues estimates, right, for Q4, 35.6 billion from an estimate of 34.1 billion. That's up 93% year over year. Their professional visualization revenue, I don't know why that's called out, 511 million from 486 million expected.
Is that the video game component?
The gaming revenue is 2.5 billion versus an estimate of 3.2 billion, down 11% year over year. Auto revenues are up about 103% year over year, but only a 570 million line item there. Jensen Wong in the comments says that demand for Blackwell is amazing as reasoning AI adds another scaling law. Increasing compute for trading makes models smarter, and increasing compute for long thinking makes the answers smarter. He also says AI is advancing at light speed as agentic AI and physical AI set the stage for the next wave of AI to revolutionize the largest industries. All that, and we get a lousy t-shirt because it's 1:32 here in NVIDIA right now, basically where we closed. Maybe we were all right, Mr. Spivak.
I'm just going to go on record and say agentic is a stupid name. It should be just agent AI. I was having this debate with my wife the other day, and I don't want to say debate because I don't think she was disagreeing, but she's a big marketer in the tech space, in particular in SaaS here in Silicon Valley, and she was saying that the word they've come up with is agentic AI. I'm like, this is terrible copy. Just call it agent AI. Why do we need to be so complicated?
Agentic
I'll get off my soapbox now.
Functioning like an agent. So, yeah, language.
I mean,
is weird.
agent AI just seems so much cleaner.
All words are made up. It doesn't really matter.
I digress.
They typed it into the Google machine and it said, acts like an agent. They said, yeah, that works. What's wrong with it?
Yeah, that sounds right.
Like, okay. All right.
But yeah, some people in the chat pointing out volatility's getting crushed a little bit. I think you definitely saw some elevated IV in the VIX futures leading up into these big names announcing. So even with a NVIDIA non-move, I think it makes a lot of sense that you are seeing volatility come out of the futures a little bit, just because if they're pricing in a potential surprise, which can always happen for any earnings announcement, even an inside move, if you were expecting a bullish move or bearish move, the fact that the market was pricing in an 11-point move and we are exactly where we closed at 3:00 Central, that can crush implied volatility too. It's not always related to a rally. It's more about how is this moving relative to implications. And even if NVIDIA opens down a couple points tomorrow, you could still see a big vol crush throughout the day.
Right. That's why when you play some of these earnings releases, I know early on in my trading career, I would do rolls of the dice where it's like, oh, I'll buy an out of the money call around an earnings release or an out of the money put. And sure enough, the market moves close to that direction. And then all of a sudden, the position is losing money. It's like, wait, why IV crush. Right. I'm not making nearly as much money as I thought I would, or end up losing some. Vol futures are in here a little bit. During the day, they spike up in the VXH5 contract up to north of 18.70. We're down 17.95. Mike, I guess my question for you is, Victor Jones often calls the 18 to 20 range kind of like the gray area, because you're statistically just as likely to go up another 2 or 3 points as you are to come back in another 2 or 3 points, to go from, say, 18 to 21 versus 18 back down to 15. So we're sitting at 18 on the nose right now. How do you approach an environment where vol is elevated but not super high and has the ability to trend higher from here?
Yeah, it's a good question. I mean, I totally agree. I think when you think of the average implied volatility or VIX, it's around 15, 16. But so we're a little bit elevated from there. But when you look at the difference in the curve from each futures contract, we're still in contango. And as long as we're in contango, I kind of brush off these sell-offs. I will say a couple of days ago, we flattened out a lot. So when the VIX is at 19, you could see 19 across the board in volatility futures contracts. So the H, the J, the K, the M, all those were around 19. Now we're seeing a pretty sizable difference in price, with the H contract being at 17.95 and the M, for example, at 19. So when we're in contango and we're seeing moves that are expected, I think, it doesn't really give me any signals of a larger macro issue, even though I know Ilya is seeing them under the surface. But what I always say is okay, if you're looking for something that's really going to change the markets, you likely need to see velocity to the downside and sustained velocity to the downside, not this sell off and then buy it back the next day. And I think if you got that, if you got 150 point moves 3 days in a row to the downside in the E-minis, you would see volatility in the 20s and you would see that curve flatten out or even go into backwardation. So for me, that's the signal. If we go to backwardation, that's the signal for me to where we've already seen some velocity to the downside, but that might be a period of time where things are a little more murky and there's a lot more fear in the markets.
And I mean, looking at the S&P, you kind of see it, right? It's down, but it's down within the range that it's been holding for the better part of a few months here. So we're down, but we're not in panic mode.
Yeah.
We're not seeing any kind of a collapse. So the upshot continues to be, I think, if you're near the top of the range in the big indexes, then the risk reward favors a short. If you're near the bottom, then the risk reward favors being long. If you don't have exposure here, the risk reward favors doing nothing. You're not really in a position here where there's much to do. I mean, I guess at 28 IV, you could think about some sort of vol extraction with a condor type structure, but I don't really think the juice is worth the squeeze.
Stocks are up here a little bit off the swing low that we had going into the close, guys. 59.72. That's more or less where the market bounced back to. I think what we saw it squeeze up to 59.78 just as we saw the closing bell. This is an ugly day. I don't know. It feels like even with the NVIDIA earnings, this action after hours, I look at the uptrends here over the past few months, Ilya, and while I've been lightly pressing on the long side this year through 2 trades so far, I see this failure up at that 1 week moving average. We couldn't climb over it today. I see us trying to scale the uptrend from the August and January swing lows, and we're not really making a bounce from there.
No.
Momentum's weakening. The NASDAQ is telling you the same story too. I mean, it's just not a market that ultimately is pushing for a significant bounce. Sure, it's an inside day, but like, where's the juice right now?
Yeah. Yesterday's NASDAQ action in particular, I think, is a little bit worrying because what you get is a nominally lower close through the preceding like inner range, if you will. Obviously, you're not approaching those levels below the 2100 level or 21,000 level rather, where you have that gray line, the kind of larger range bottom, but the inner range right around sort of the upper 21,000 area, 21.5, something like that. That range got those closes with the long wicks going back to early February. You managed to close under them. Those exactly. So if you look at where those closes are on that big red candle, the sort of post deep seek candle, that's a kind of line in the sand there, and we narrowly closed under it yesterday. It's a little bit tenuous, but that's more technical damage than ES has sustained. It's more technical damage than Russell has sustained. This is not great. And if you look at what we're looking at on the current candle, I mean, we just got these NVIDIA results. Nobody was apparently sitting there with an itchy trigger finger going, oh, well, as long as these are okay, buy. Obviously not.
NVIDIA still 129, 130. It looks like it's going to be that call that moves the market here because we're not really getting much of anything at all. Snow, CRM, those are still proven to be a little bit more active, at least. Snow here up at 181, closed at 166.20. We go over to CRM. This closed in at 307. It's currently trading at 291, so a little bit more direction. Guys, overall, when we talk about this market here today, and I say guys, ladies, and gentlemen, I assume not all men in the audience right now, the sector performance here isn't that great. I count 10 that are positive on the day. Semiconductors did lead up by 2.34%, but it looks like that's an NVIDIA bounce back thanks to that Facebook or Meta data center announcement, $200 billion being invested for a new data center that was previously not known. Maybe we could look to XLP being the weak one here today, Ilya. Hey, Staples, which had been doing really, really well the past 2 or 3 weeks. This is a defensive sector, so it does come off the board. XLV healthcare is also weaker, down by 0.72%. So there's a modest retreat from defensive names. But I don't think this is anything to write home about. I mean, 15 of the 25, we're still in the red. And the sector rotation on balance for the past 5 trading days has been more late cycle equity rally than early stage equity rally.
Yeah. Yeah, I mean, if you take a look at what is going on here, I mean, this is not anything like people going, oh, shrug it off. This is not a problem. As we'd seen a lot of, we very much were in this mode before where, okay, there's been some bad news. Okay, there was a little baby sell-off, but there's growth, everybody. It's okay. So you lost some money today, but you'll make it back tomorrow because the economy is growing and people are getting hired and they're going to spend. And when they spend, then there'll be earnings. And when there's earnings, there's all kinds of good things happening. And so you can make whatever money you lost today back tomorrow, as long as the prospect of future money remains. Then la-di-da, everything's okay. Buy the dip. And by the way, doesn't hurt that the Fed is out here saying, yeah, we got to cut a little bit, but it's not for bad reasons. It's because inflation expectations have come in a lot. If we look at what happens to real interest rates when that occurs, then we don't want to let nominal rates out of whack, because if we don't move down nominal rates to line them up with inflation expectations, then real rates surge and we crush the economy. It's not what we want to do. We don't want to make real cost of borrowing net of inflation surge. That's going to ruin our soft landing. So we're just going to cut a little bit because inflation expectations have been coming in, because we've been successful at beating inflation back. All good news. So cheaper money downwind, and there's growth. Let's all hold hands and sing Kumbaya. All great until the growth goes away, because then debt to GDP ratios go up and financing starts becoming an issue after a big rate hike cycle with lots of debt rollover on deck this year and next. And people start to get skittish. They go, well, if there's no growth, then maybe there's a hit to earnings. Then maybe I don't get to make tomorrow money. Let me not part with today money or even put it at risk. And so you get this sort of general defensiveness when growth goes away. We talked on last call, just a half hour ago, about this idea that the market is developing a default, and that default seems to be pointing down in the recent days. And if you then get NVIDIA earnings that don't change fundamentally what the landscape is, you just go back to default. We'll look at NVIDIA now. We'll look at NASDAQ now. What are we seeing? Back to default.
Yeah, so the growth names today, even industrials, they up by 0.09%. But again, you look at that candle, we gap open higher, we try to trade higher, we end up moving lower over the course of the session. Mike, what's your take on what's happening in the crypto space right now? It feels like crypto winter may be starting to set in again. Even as stocks churn, the coins are getting killed.
Yeah, I think it's always worrisome when you see consecutive big red bars like this, but it hasn't been too different from the E-minis or NASDAQ, where we try to open higher, but we close lower. Bitcoin is the same story, but the last 2 days has been really interesting. It's the first time we've gotten below 85K since the initial post-election ripper. With that said, Bitcoin's implied volatility is significantly more than the NASDAQ and E-minis. So over the next 30 days, we're pricing in a range of plus or minus 10K. If you look at where we were trading a couple weeks ago, we were between 95 and 105. So really, if you think about that, back then we would have had a 10K range as well. We're just at the lower bound of that implied range. So IV rank in Bitcoin sitting at 9. Implied volatility is on the lower end of the range of where it's been, but it's still at 66%, which is a big number for a product in general. So I think if you've been looking for a time to get into Bitcoin, obviously this is the lowest price we've seen, but we're not really seeing too much of an implied volatility shakeup. And this could be just in line with everything else, where when you see bigger moves than you might think you would see in products like Microsoft, Amazon, Apple, Google, you should expect to see similar moves or more volatile moves in Bitcoin just because of the nature of the beast. But, I don't really see anything shifting too dramatically under the hood here in Bitcoin, but you should expect to see these volatile moves because we get 20% weeks pretty regularly in Bitcoin, even though it doesn't feel like that.
It's been one of those weeks, right? A few days ago on the 21st, we were north of 100K, so now below 85. It's a 15% move in 4 days. That certainly stakes out some weaker hands. Guys, go over to Coin right now. Now, it's always odd when you get a mobile alert from your bank and it's like, hey, here's the text code for the account you're trying to sign into. It's like, well, I'm currently on air right now. I'm not trying to sign in anywhere. So going to have to address that. Coin 212.96 up by 0.22. Some of these names that are kind of mirror images of the space, I mean, philosophically right now, it feels like the names that are associated as proxies, they're rallying up a little bit. But when Bitcoin's coming down, they're getting hit a lot harder than everything else. So, Mike, what's the case for like getting long deltas in Riot or Coinbase or anything, knowing that the rallies are shallower than what's happening in BTC?
Yeah, I like that idea. I mean, we've seen that before in the NASDAQ and other products where you see pretty broad-based sell-offs, and then you see a product like NVIDIA that's not moving, which makes me believe if you see a reversal of that move, you would probably hang your hat on the product that didn't go down or didn't move in a favorable way for that to reverse. So MicroStrategy is another one. Someone in the YouTube chat pointed out that MicroStrategy is rallying into the close, which it did. But into today's move in Bitcoin, when we were down 4 or 5K, MicroStrategy was pretty flat. If you're looking for a roller coaster ride, MicroStrategy is probably where I'd go, especially because when you look at implied volatility in MicroStrategy, which has actually kicked up a little bit, IV rank of 33, you should expect to see IV around 100 in this product. But a couple of weeks ago, it was in the 70s when we were just chopping around and not moving. So MicroStrategy, high leverage play. It's basically a volatility product of Bitcoin, if you want to think about it that way. Implied volatility explodes to the upside if you get continuous movement to the upside. Coinbase is another interesting one. And Coinbase, I think, is if you're agnostic to the coins themselves, but there's just if you think there's going to be more activity trading in Ethereum, Bitcoin, Solana, what have you, Coinbase, I think, is a more conservative way to approach that, since you're getting more volume flowing through there. But yeah, I would say Bitcoin futures, micro Bitcoin futures, IBIT is my preferred method. IBIT is my year-long trade for 2025. So I have a strangle on in there that I'm leaning up to the upside in. And I'm just going to have a strangle on in there all year. And it's a $50 product now, and it's basically tracks Bitcoin in lockstep, the percentage change in Bitcoin in lockstep. So if you're looking for a way to not have to work through crypto wallets and all those things, IBIT's an easy way to partake in that. And that has high implied volatility. And most importantly, it's a $50 stock, so you can really do whatever you want in there from an option strategy standpoint.
Ilya, it feels like this is a trade that's killing over quickly. If we were ticker agnostic, that looks like a heck of a top that's coming together, at least for the short term right now. It's not.
Yeah.
Go ahead.
I mean, we talked about the range break earlier this week, right? We were looking at BTC futures and essentially saying, well, look, if you know nothing, if you ignore what the ticker is, what did you see this week? You saw a range that's been holding since early November, let's say, and good night. That range is gone. So if you knew nothing about anything, you would just say, okay, technically speaking, if you're any kind of a chart watcher, any kind of a tape reader, one of these is not like the others. When you look at moves into 90,000 here over the past, 3, 4, 5 months. And that told you. And I've in the past been kind of skeptical of using technical analysis on Bitcoin, just because technical analysis, much like any kind of statistical anything, needs a good sample space and so needs liquidity to work really well. Things get very choppy when you look at technicals on illiquid things. But I think with the advent of Bitcoin ETFs, this is safe analytical ground at this point. These things are like Bitcoin itself, I think, is liquid enough to where there's enough hands in the pot that you can expect that technicals should have fairly solid follow through. I mean, it's not the euro or the S&P, but it should work reasonably well. Here we are. In my mind, technical analysis is most powerful when things are really obvious and everybody is looking at the same thing, because you don't really need for the technicals to have any empirical power, any intrinsic validity. Who cares? The bottom line is there's a range. That range has a line under it. If everybody is looking at the same line and you go under the line and everybody goes, oh, it's under the line, something is different, sell. Who cares if the line had any kind of validity or you believe or don't believe in technical analysis? That's irrelevant. If everybody is looking at the same line and is going to sell under it, then it's going to work. And that's the level of maturation that it seems like we're looking at here, and Bitcoin is the weaker for it.
I would point out that if this is a measured move top, that gives you a destination perhaps close to 70K, depending upon where you draw your neckline. If you want to be a little bit more conservative and use the swing low from the third, it's going to give you somewhere closer to 74. And quite frankly, that seems reasonable, right around the highs that you have back here in March of 2024. I think that you make a good point. I mean, you can't really do fundamental analysis on cryptocurrencies, not traditional fundamental analysis anyway. You're going to use on-chain metrics, transaction counts, transaction values, active addresses, fees paid, hash rate, and staking. If it's a coin, it's a project metric like the tokenomics and initial distribution. And then maybe you could look at market cap, liquidity, and volume and some of the supply mechanisms. But like traditional fundamental analysis, there's no balance sheet for you to pick apart.
Right.
And so I've just found in my conversations with crypto people over the years, they've really leaned into TA more than anything else because it's a ticker on a chart, right? Like at least there's that universal set of principles. There are candlesticks. We can slap moving averages on them. Like we don't need to agree about what kind of on-chain metrics that we need to follow here. That actually means I think a technical topping pattern in crypto carries more weight than like a single stock name, because Apple could just throw in hey, big earnings release. Hey, a new product. Hey, they finally got AI to work on the iPhone 16. That could change the narrative in a heartbeat. Whereas Bitcoin doesn't necessarily have that going for it because there is no, cash flow, bringing in new nodes or increasing the speed of the Lightning Network. Like those are nice things for people who use it, but I don't know if they break the public zeitgeist for actually increasing demand within the product itself. Either way, though, it's tough skiing right now. I mean, it's tough skiing for risk across the board, I think, is the important thing to note. We were talking about bonds briefly before NVIDIA earnings came out, and this has been one of the few things that works if it's the ZN calls or for some people still in the short ZB put spreads. We now see a 10-year yield that's down to 4.251%, Ilya. Okay, should we be screaming with our hair on fire now? This is about 50 basis points lower in the span of a week and a half. Not quite there yet, but that's a lot in a short period of time. That typically does not happen.
No. And this is, I think, emblematic of the kind of move that you're seeing. I mean, for the record, I'm back long a TLT vertical as of yesterday. It's working so far. And I think this is part and parcel of this growth narrative that we've seen occurring. I mean, if you look at the front end of the curve and the back end of the curve, one of the unique things that we've seen happening recently is a more dovish view is coming into both. We'd been watching a 2-year yield that's done basically nothing going back to November. And of course it's done basically nothing because Fed policy expectations have been remarkably stable since November. The Fed had their big dovish jump in September, 100 basis points in 2025, 100 basis points in 2024. By the way, here's half of that 100 basis points up front. We're cutting everybody. It's all the things you've been calling for. And the market goes, yeah, that's too much. You've gone too far. And then when the Fed comes out in November, by then the markets have already shifted the yield curve to a much less dovish setting. Fed basically endorses that after the election in November. In December, they make it official with the new SCP. But by December, the Fed funds futures curve isn't really moving anymore. It's kind of wiggling back and forth a little, 20 basis points here, 20 basis points there at the tail end. But none of the big tectonic revision from September into November. And so then you look at the 2-year and you see from November onward until basically this week, it's not really going anywhere. All of the action is happening at the long end, and that's because anytime you get a piece of data that's good, bad, whatever, markets go, okay, one fewer cut in 2025, so one more in 2026. Or one fewer cut in 2026, so one more in 2025. And the aggregates don't move around. This week, in the wake of Friday's PMI shocker, all of them, the entire curve is moving to lower rates. We're going to have lower rates this year. We're going to have lower rates next year. This is a market that is actively baking in, seemingly, a Fed that has to respond to a growth scare. And that's different. That's a meaningful departure. That's not maintenance cuts anymore. And so, not surprisingly, bonds are going up across the board here.
You know, I want to cover that topic that you just mentioned there. You brought up the word, and it's so crazy that you read my mind, because the spreadsheet that I have open here is on the very topic of the types
we've
of
only
cuts.
been doing this together for over a decade.
So I would point out, this is a spreadsheet that we looked at back in September when the Fed started its cutting cycle. And it was what happens under various cutting scenarios. Is the Fed cutting for a maintenance reason because inflation's come down and they can afford to take their foot off the brake? Is it for an emergency reason like COVID? Something's hit the fan, they got to respond, unforeseen. Or is it just because of your garden variety slowdown? The economy is going through a recession and they need to cut rates. So when we talk about it being a maintenance cut, this is actually a pretty good situation for stocks, right? The maintenance cuts here, you're looking at positive gains 3, 6, 12 months out. But when they're recession cuts, the 1 month, 3 month, 6 month, and 12 month return, they're all negative. And if we're just looking at non-maintenance cuts, because emergency is a little bit different, you know, stuff hits the fan the first month after the maintenance cut, but then the Fed's here to save the day, so then the markets quickly rebound thereafter. But I would point out that if it's not a maintenance cut, or if it's for a recession, you're probably looking at a window where if those rate cut odds are being pulled forward once more, and yields are going down and stocks aren't going up, it's because the market's changing its interpretation of why the Fed has cut rates and why the Fed would be cutting rates moving forward. No longer is the Fed cutting rates because it's declaring victory. It's cutting rates because it thinks the economy is going towards recession. And that's a totally different ballgame for being long equities, as was the case last year. 23 and 24, the whole game was, as long as the golden goose remains, labor market's stable, inflation's coming back towards the target, growth is still positive, don't worry about anything. Kind of just shut up and buy stocks. But that's not the backdrop that we're seeing play out right now. And the narrative is shifting. So NVIDIA, if you want to be a catalyst today, you've only added $1 here after hours so far, with about, we'll call it 34 minutes on the other side of the earnings release. Mike, is this shock you that the market was priced effectively right? I can't think of the last time we had an NVIDIA earnings result where we were basically pinned as such.
Yeah, I hate this move because I told Nick on the show today, I was like, there's no chance it's going to open right at 1:32 in the morning. And now here we are. But when you bring up that chart and you put it the way that you put it so eloquently, if you think about the fact that the market always knows, like the market's going to move first and then the narratives come out, it does kind of make sense then that you have these frothy names that have had extreme moves to the upside, like Microsoft, Google, Amazon, your big tech stocks, Nvidia. And then you have your extra frothy product, Bitcoin, that was up, over 50% from pre-election to post-election. And now you're seeing a lot of that price come out. If these movements are kind of leading towards what you're speaking about, and we should expect to see some kind of neutral to downside move going forward this year, and people are getting ahead of it, it could be what you're seeing in the markets for sure. And the lack of ability of some of these products that everybody used to just gobble up, like Nvidia, the inability for Nvidia to have any kind of substantial or sustained move to the upside, I think kind of just adds to that.
It's like such a different cadence. It's like, oh, rates are going lower. Inflation's going to be defeated. Let's pile into the risk, right? The Fed's going to start cutting. Bitcoin goes up. This time around, it's not that way, right?
No.
Rates just closed on their lows. The market is telling you that credit conditions should be easier. Liquidity conditions should be more plentiful. And yet the risk assets are still being jettisoned. I would look at XRT, which is really interesting because, as we've noted numerous times, it's the ETF that tends to be most sensitive to growth conditions. And so when recession sets in, this tends to be the biggest loser. I suppose it's worth tapping on that again because XRT is down 1.19% today, a more substantial loser leading to the downside. Just like we would look to, a name like XLY, for example, consumer discretionary off by 0.38, and that's just really ugly down here. We can't pivot back through the January 13th low. Struggling now 3-4 days down here, guys. Whether or not we're looking at a late July type of setup in equity markets is a different story. There doesn't seem to be a carry trade component this time, Ilya. I don't see anyone chirping about BOJ rate hikes and that potentially destroying the market. Is there anything in the world of FX or international markets that we need to review here before we close the door on this Wednesday session and all tune in for our NVIDIA earnings call with Jensen Huang?
Don't listen to the earnings call. Listen to Macro Money right after this show, where we're going to talk about the international component and the euro, because it's kind of a little series we're working out this week. On Monday on Macro Money, we talked about why the U.S. service sector numbers were so scary and why this is a recession scare. Yesterday, we were talking about, okay, well, if the U.S. is having a recession scare, who can backstop it? Is it China? That's the other big engine of global growth. And the answer is, well, don't look now, but the rally in Hong Kong is not the rally you think it is. It looks more like money running away from China, not money optimistic that China is coming back. Oh, and by the way, 7th consecutive quarter of deflation economy wide. No, China is not going to save the world economy. The third main engine is Europe and the Eurozone in particular. So if you take a look at the euro here, what you find is that you have basically these repeated knocks on resistance over and over and over again. Now, the ECB is supposed to be the most dovish central bank this year. They're on course for 80 plus basis points and cuts. So call it 3 with a chance of 4. So this should not be going up. Why is it going up? And why is it holding? Why is it not selling off? And that's really a story about they're not going to cut anymore because, interestingly, Eurozone inflation is actually going higher. And it's not going higher for good reasons. Yeah, okay, you can make all kinds of offsides here about energy is a bigger contribution, there's more uncertainty, maybe tariffs, this, that. The bigger issue is we're expecting Eurozone CPI to be 2.5% when it comes out next week. As of December, 50 basis points or half of a percentage point of Eurozone CPI was hospitality and recreation in an economy that's stopped, that hasn't grown in months. not with any kind of vigor anyway. PMI is basically flat at 50. So why is it that these discretionary areas of the economy, why aren't they feeling the pain and disinflating? Well, maybe it's because the inflation is stuck in labor markets. So the ECB does not have room to get any more dovish. But if the picture on the Fed is getting more dovish, then yield spreads move and the dollar starts to weaken in relative terms. So I think the story you're getting in FX here is there's maybe not meaningful changes except for the US, but that of course means the dollar gets shellacked against everything. And the euro is front and center, and all we're going to get is just more evidence that the US really was the only engine of growth. We're not going to get any more tailwinds from anywhere else. We're not going to get a more dovish ECB. The China thing isn't working. And if the U.S. service sector now folds, again, I don't know how you don't have a global recession in that environment. And that then is what we're seeing across the board here. That's the response in NVIDIA being as soggy as it is. That's the stock market being as soggy as it's been. That's the bonds being as buoyant as they are. You name it, that's what we're looking at.
Well, it's a good thing NVIDIA didn't miss today. I saw one comment from Douglas Boneparth. If NVIDIA misses earnings, the earth will explode. Mike, we really got into the ball here.
Saved.
We have been saved.
We have been saved. That's for sure.
With that, overtime's out of time for this Wednesday, February 26th. We'll be back tomorrow, same time, same place, here right after last call, every Monday through Thursday, 4 p.m. Eastern, 3 Central. So for Ilya Spivak in San Francisco and Mike Butler in Chicago, I've been Chris Vecchio in New York. Good luck trading. Stick around, though. Tasty Live at Night continues next. Ilya Spivak's up first with Macro Money. I'll be here at 6 Eastern, 5 Central with Victor Jones for The Price of Truth. So stick around and then come back for more.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
My name is Tom Preston, and I am the Chief Market Strategist here at Tasty Live. So every day I write the cherry bomb that goes out to our Tasty Live customers. And usually it talks about some potential trade idea that people might want to consider with a little bit of context about why a person might be interested in doing it. But the main reason that I push these things out is to get people to think in terms of volatility, liquidity, and probability in their financial decisions. What I want people to learn is an effective way to approach the financial markets and to use options to their fullest advantage.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
I got interested in trading when I was around 18 years old. There was a conference downtown and they just kind of described the very beginning of the market. It pretty much would say 99.9% of everything was stuff that wasn't covered in school, just how to leverage your investments, even with options, and that was just really attractive to me. I understand that no one can for sure predict if the market is going to go up or down, but with the research that Tasty does, we're able to find those optimal numbers to trade around to put ourselves in the best situations. One thing people can expect to see with my trades is just a very raw learning process, someone just really getting into the market, but really applying the correct principles and mechanics, a very non-emotional approach, just trading by the book, just to have an inside look on how it really is for someone getting into the market.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new. The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
Well, it doesn't look like NVIDIA cheered anybody up here with these results. Small surprises out on EPS and on revenue. In fact, the smallest since the third quarter of 2022. And the market seemingly going back to the previously scheduled programming set for us last week. We've been talking all week about the growing recession scare. This is Macro Money. I'm Ilias Pivac, head of Global Macro here at Tasty Live. We got those scary-looking U.S. PMI numbers on Friday, suggesting that the last pillar of global growth is coming undone. And we've been going through it methodically this week. On Monday, we talked about why those numbers were so scary, what they meant, and why this is a global recession scare. We talked yesterday about why China, the world's second largest economy, is not in a position to be an offsetting force for that kind of a scare. And today, we're going to finish out with the third largest engine of global growth. And that, of course, is the Eurozone, and see if maybe we can get some help from the currency bloc here with the emerging growth situation, or if, in fact, we are looking at an environment where the giving out of the U.S. service sector and thereby the overall U.S. economy, the slowdown there, really does put us on a smooth and perhaps at this point irreversible glide path toward some sort of a global downturn. And we'll start the conversation with a look at the euro, because currency markets in their infinite liquidity and wisdom here are very telling indeed of what is going on. So we can see here the euro has been drifting a bit higher here since the beginning of the year. We put in that low just around the 102 figure as we started the year. And since then, the euro has been attempting to carve out something of a bottom. Now, obviously, the first thought is, well, something positive must be happening in the euro area for this to be happening. And so maybe capital is flowing to those markets. Maybe something is occurring to buoy investors' optimism. And indeed, when we look at the driving catalysts for the euro, we can see it is very much a creature of the short-term yield spread between benchmark Germany, the sort of stand-in for Eurozone borrowing costs, the largest economy in the region, and the U.S. And we're looking at the 2-year spread here because, of course, that is the proxy for the front end of the curve, the relative sort of measure of strength and weakness between what the ECB is going to do relative to the Fed. We can see here that as we were heading into the second half of last year, the dollar was strengthening against the euro. That's what you see right here. Euro going down against the dollar. And that was happening against the backdrop of the US and Germany spread going down. So, in other words, the euro looked like it was losing a measure of yield advantage here. And when we consider this in context, it would make sense, of course, that if this is the relationship that holds, the euro would weaken. And we can see that going into the new year now, some stabilizing in this spread has occurred. And so likewise, the euro has found a bottom. So that kind of rhymes with the idea that perhaps whatever deterioration was occurring might have at the very least stopped, if not necessarily improved. So what's going on here? Are we in fact seeing some green shoots in Europe? If we look at rate expectations baked into futures markets across the major central banks for the end of this year, we can see that apart from Japan, which is kind of this perennially low-yielding environment and has been for decades now, the ECB is seen having the lowest year-end rates of the major central bank bunch, and the U.S. is narrowly near the top. The Bank of England is very close by here, but the U.S. is near the top of the ledger, and clearly there's a big gap here. Europe expected to end the year with rates narrowly below 2%. Let's round it up to 2. Let's round up the U.S. to about 4. It's narrowly under that. That should be about a push. And so there's a 2% yield gap here, give or take, in favor of the dollar. So why has this stopped moving, and why is the euro finding support in it? Well, as ever, the markets don't care about absolutes. They care about the direction of travel, and the question that they're constantly asking is, what have you done for me lately? So they care about where things are going and how those expectations then line up with reality as it occurs. This is the direction of travel. So notice now the Bank of Japan jumps to the top of the list from the bottom, because despite having the lowest rates, it is also the only central bank looking to hike this year. We can see that they're on course to add about 50 basis points, somewhere in the middle here, between 0 and 1%, let's call it. And the U.S. is the least dovish of the cutters. So we can see here the U.S. on pace to cut about 50 basis points this year, in line, by the way, with what Fed policy prognostications told us back when the Fed updated their summary of economic projections in December. Markets basically lined up with that world view at this point. But what we've very interestingly watched here over the recent days has been a kind of rethink all around on just how much easing is in fact coming across the board. So if you look at this U.S. curve here, what you find is that in the very recent days, it's kind of started to edge lower. And that lines up with the markets now pricing in 56 basis points in rate cuts for the Fed. That's the most dovish that market pricing has been for this year since the middle of December. Notice also that for 2026, which unfortunately we don't have on this chart, we have an increasingly dovish view as well, which winds up with this adjustment. That's a little bit different from what we'd seen before, where you'd get a little bit more hawkish in 2025's outlook. So there was a little bit of give back with a little bit more dovishness the following year. If the following year got a little bit more hawkish, then you'd get a little bit more dovish for 2025. The markets were essentially in this sort of back and forth fine-tuning mode. And what we've seen really since about the middle of this month, in the wake, of course, of this worrying growth data that we've seen out of the U.S., is a more concerted dovish repricing across the entire cycle here through the end of 2026. Now the markets are fully baked in for 27 basis points next year. That's the most dovish that they've been for that outlook going back really since these contracts in the Fed funds futures market had any liquidity in it. The last sort of comparable levels were about 26 basis points, again, back in December, about the first half of December of last year. So we're looking at the markets becoming increasingly more dovish for the Fed. Meanwhile, we can see the situation for the European Central Bank has actually cautiously moved the other way. There's not really a whole lot of movement, but we're certainly not getting any more dovish here as we start the year. And if we look at sort of the overall thrust of what's going on, we can see we're currently baked in for essentially no change next year from the ECB. This year expected to bring 85 basis points in cuts. Consider that basically 3 cuts with about a 50-50 chance of a fourth one. And the picture relatively stable. So we've been in this range here largely for some months. And we can really see it in the direction of travel of the yield curve. So from December of last year to the ECB policy meeting on January 30th, now into today's price action, we can see these yield curves haven't really shifted much at all. And so what you end up with then is a situation where the U.S. outlook, especially in recent days, is getting less hawkish, is shifting toward more easing, whereas the situation in Europe is standing still. And what that seems to be doing is accounting for how you end up with a smaller dollar yield advantage and the beginnings of a euro rebound. This does not appear to be a story of positivity about what's going on with Eurozone growth. Rather, it seems to be a story about deteriorating expectations for U.S. growth and a more dovish outlook for the Fed, and no counterweight on the other side, which of course gives us the results that we're now watching. Now, the next major inflection point from the European side in this story is going to be next week's release of Eurozone CPI. And interestingly enough, it's expected to go higher from 2.4 to 2.5% year on year on the headline reading. And the internals of this really start to stick out. Now, consider it's a fairly even spread here for the various components of CPI as far as the contributions. But when you look at the December breakdown, and of course these will be January figures that come out next week, the one that really jumps out is this hospitality component. So about 0.5 percentage point in this overall 2.4% inflation number that we got in December was restaurants and hotels. Now, of course, we've had a little bit of a pickup from fuel. We can see month on month that's grown in terms of its contribution. The miscellaneous component here is primarily insurance and primarily having to do with autos and energy. We can see there's been a wiggle higher in the transport side that sort of matches that whole story. So it does seem like there's been a little bit more concern around the pricing of energy and everything related, and that's been bidding up costs a little bit. Of course, crude oil has become something that's rebalancing here. We can see down here you had the transport side of things and the energy side of things going from negative contribution to rebalancing to slightly positive, the transport side being negative and then slowly adjusting the other way. This miscellaneous component that includes insurance, that's been negative and now adjusting the other way. So some of what's going on here is just statistical rebasing as you sort of round the horn on year calculations. This restaurants and hotels hospitality component, which you see here in the purple, it's been remarkably stable and refusing to go down, refusing to let go of this baked-in inflation, despite an economic picture that looks, frankly, anemic. We saw the latest February PMI numbers for the Eurozone last Friday, as we did with the US. We can see manufacturing still very much in contraction mode. If you're unfamiliar with these numbers, though we talk about them on the show ad nauseum, they are centered around 50, where that's neutral, neither expansion nor contraction for the relevant sector. Above 50 is growth. Below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. So you can see that going all the way back to basically the middle of 2022, Eurozone manufacturing has been in various modes of contraction, a little bit faster, a little bit slower, depending on when you look. But basically, since the beginning of last year, it's been shrinking at a reasonably steady rate. You can see there's something of a range that's emerged here. But as with the U.S., it's the service sector that's the outsized part of the economy. And so you can see the composite numbers that follow both manufacturing and services, really echo what services are doing, and essentially ignoring for the most part what manufacturing is doing, because services are a much bigger part of most developed economies than is manufacturing. And that's certainly the case for the Eurozone, despite some big manufacturing powerhouses in the region, like, of course, its largest economy, Germany. So what you're looking at here then is a second consecutive month now in February that we've held a thin hair above neutral. So 50.2 here is basically an economy at standstill. And it's been close to standstill now, going all the way back to basically the middle of last year. As the attempt from the shallow recession in 2023 to stage any kind of rebound basically falters by the end of the first quarter of last year, things fizzle back. You get a little baby contraction into the fourth quarter of 2024. And now you've basically come back to neutral, no growth at all. Moreover, if you look at what's going on with inflation expectations, they've actually trended a bit higher since the middle of last year. This is the break-even rate for Germany's short-term bonds. Break-even rates are just the difference between analog maturities in real, that is inflation-adjusted bonds, and nominal bonds. When you take that difference between those yields, you end up with the expected inflation that would take you from nominal to real. Right? Nominal minus expected inflation is, of course, what real is. So this extracts that inflation adjustment component. You can see that, of course, more recently you've had a little bit of a downswing, but the trend has been toward rising inflation expectations. And it's difficult to surmise that it's anything other than this sticky component right here, which will not go away despite the anemic economy, which you might think would give you an unraveling of discretionary spending on things like restaurants and hotels. So put it all together and you start to understand why, despite this weakness, you still have inflation that's expected to tick a little bit higher, and policy expectations that, despite that deterioration in the growth structure, hasn't gone anywhere. Surely the ECB doesn't find itself with any more room to cut when inflation is going in the wrong direction, and when the reason it's going in the wrong direction is stickiness in a part of the inflation structure that really should be unraveling, but isn't. And so, as we consider what this means in context, we, of course, come back to these results that we're looking at as of Friday. We can see from about the middle of last year, a very strong U.S. and cooling performance in the Eurozone and in China. And there's an asterisk here on the China numbers, of course, because those come out next week. But we learned in our conversation yesterday that the situation in China remains anemic, and we'll link that video here. If you're watching on YouTube, it should appear somewhere above my head here, this link. But just look at yesterday's macro money show, and we unpack it in detail. So the situation seemingly still lining up with exactly what you might expect. An anemic Europe, but with no room for the ECB to do much about it as inflation remains sticky. An anemic China, which recorded the 7th consecutive quarter of economy-wide deflation, and where the recent rally in Hong Kong seems to less so reflect optimism in China's economy coming back, and more so investors having found a way to take money offshore, and done that through buying stocks in Hong Kong in part. So no real scope for a big recovery there, at least for now. And the big difference maker and the thing that likely tips you into a global recession kind of conversation, this rapid unwinding of the U.S. and the service sector as the driving force of that unwinding. Just to remind ourselves here why all of this comes together, these three make up 58% of global GDP growth. The remaining 42% are mainly vendors to the larger three. So think Central Europe, Nordic Europe for the Eurozone, think commodity producers in Latin America and Africa and Asia, and of course Australia and New Zealand for China, think Canada, Mexico for the US as kind of the immediate dependencies. And so what you increasingly start to see is if this leg gives way, if the U.S. part of this gives way, as it now appears to be, there is no safety net. And despite what we might be seeing from the euro, despite what these shifts in relative yield seem to imply at surface level, you don't have a positive growth story in the Eurozone, nor a dovish central bank story to offset it. And if what we're seeing in the U.S. is going to be lasting and a larger decline than just a 2-month run, well, then it becomes difficult to see how you don't end up in a global recession at some point this year. And that is macro money for today. As ever, we are here right after overtime, Monday through Thursday. That's a show that I co-host with Chris Vecchio and Dylan Radigan, looking at the Wall Street close and what might follow. I'm on with Chris Mondays and Fridays for Futures Power Hour, on with Victor Jones for The Price of Truth on Tuesdays, back with Victor and Tom for First Call Sundays, writing for the News and Insights portion of tastylive.com, and commenting at Ilya Spivak on the platform formerly known as Twitter, as well as on Blue Sky. If you're watching on YouTube, like and subscribe. Happy trading. Macro Money's back tomorrow.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
You just mentioned AI a moment ago. Would you like to see some of the evils of AI? All you had to do was look at this picture. You got the evil of AI.
This was very disturbing. So this is you and me as a mashup? I don't know who did that, but whoever did that should be fired.
Well, maybe you can get to it.
Please make that go away.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I've got not one, but two trade ideas for you today.
Exploring zero DTE. We promised you we would take a look, and here we go.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
All right, we're back. Tasty Crypto Show. I'm Ryan Grace, and today I'm flying solo. We've got a special episode, I suppose, planned here today, even though a lot going on in the market, which towards the end of the show I'll get to. We've got a performance dashboard and expected moves to run through. But we've had a ton of questions recently on the Tasty Crypto support side of things. If you do have a question for us, you can hit us up at support@tastycrypto.com, send us an email, or hit us up on Twitter at Tasty Crypto. But we've had a lot of great feedback, a lot of questions recently, and I want to take the time today to run through a demo and talk a bit about the Tasty Trade crypto product offering. We're going to talk about enabling cryptocurrency trading, and also transfers. And then we're going to jump over to the Tasty Crypto app, where I want to walk through some of the features that I find pretty useful in the app. We also have the ability to connect to your Tasty Trade account in that app. So we're going to show you how to do that. And we're also going to talk about some of the features that are upcoming in the new build that we've got going to the App Store here pretty soon. So excited for today's show. If you're not watching over on YouTube, no shade on tastylive.com, but get over there because you can pop into the chat, and I want to open it up to any questions, and we'll just fire away kind of throughout the show. I'll take those questions, and I guess if they're related to anything that we're talking about with the apps, happy to go through that, or just generally speaking, crypto questions, we'll take those as well. So we'll see who shows up here. Hope everybody's having a good day. If we jump over to our slides really quickly, again, just a quick overview of what we're going to talk about. Enabling crypto trading. This is at Tasty Trade. Transferring crypto. And then we're going to look at connecting Tasty Trade to Tasty Crypto. And like I said, talk about some of those new app updates. But we got Big Deal Donuts in the chat. What's going on? I love the cherry emojis there. If you are watching on YouTube, I used to say this as a true streamer back in the day, subscribe to the channel if you're not subscribed, and hit that like button, or as I like to say, throw some dollars up here on the stage. I'm dancing for you today. So let's jump into the demo. And the first thing that I want to do is talk about the product offering. If we could throw up the browser here, talk about the product offering at Tasty Trade. So if you have a cash or margin account and you want to trade crypto at the Tasty Trade brokerage, you'll need to enable crypto trading first of all. Your account is a fully disclosed account with Zero Hash. That is the crypto custodian. You can kind of in some ways think about them as the, similar to Apex or the custodian that exists on the securities side. But in order to do this, you first need to enable crypto. So that's step one. And you can do that by going over to tastytrade.com, and you can see that we have the site up here. But you go over to tastytrade.com, log into your accounts, and then underneath My Accounts on the left-hand side, go down to Trading Preferences and click on Trading Preferences, and you can see that with my account here, I have that crypto trading enabled. So if you don't have that enabled, you'll see that you can click this button over here, and that'll give you a couple forms that you want to be aware of. You can look at those documents, and then you just click another button, and you're good to go. You also have the ability to enable other features such as futures margin, futures trading here on the screen, and then also portfolio margin if you're interested in that as well. But this is all on the Tasty Trade website. Again, log in, go over to Trading Preferences, and step one, enable cryptocurrency trading. And then when you do that, in a cash or margin account, you can trade one of the 7 tokens that we offer here today, or that Tasty Trade offers. There are more coming soon, so I hear, but today you can trade spot Bitcoin, Bitcoin Cash, Litecoin, Ethereum, and more recently, Solana, XRP, and Doge. So expanding the offering, but those are the 7 tokens that are available. And if you're interested, go back to the summary here. We have some great courses as well. You also have to log in, so just use your Tasty Trade username and password. But if you log in there, there are some great crypto-related courses on the trading platform and cryptocurrency in general that you can access right here by clicking the Get Started button. So that's the first thing that I want to cover. The next thing that I want to talk about is transferring crypto. So in addition to being able to trade the 7 tokens that I mentioned, you can also transfer crypto using your brokerage account. You can kind of treat the account as a wallet. Technically, that's what it is on chain. You can deposit cryptocurrency at the brokerage, and then you can hold it in your account, or you can choose to sell it if you wish. Or you can buy crypto through tastytrade, through Zero Hash, and withdraw that crypto to an address that you have control over. So maybe it's through the Tasty Crypto app or another self-custody wallet, or you simply want to send it somewhere else, cold storage, whatever you want to do with that. You have the ability to transfer crypto and kind of treat the tastytrade brokerage, or at least I do, as like a store, a little crypto store. You can take it home with you, take it on chain to that wallet address that you control, and do whatever you want with it. If you want to swap it for other tokens that are available on chain through a decentralized exchange, you want to create liquidity pools, you want to stake it through a protocol like Lido, you want to buy some NFTs, it's up to you. Whatever you want to do with it, you can withdraw that crypto after you purchase it through tastytrade. But in order to do that, you first need to enable cryptocurrency trading. Once you've enabled cryptocurrency trading, go over to My Money. You'll see that there's a cryptocurrency transfers section here, and you'll have to take a couple more steps. I've gone through this process already, but you'll need to enable 2-factor authentication on your account, and then you'll also need to just re-verify your identity. And once you've done that, you can go in here, you can add a wallet address that you want to withdraw to and that you want to deposit from. And once you've done that, you'll have the ability to transfer crypto. Again, you can deposit crypto. You can also withdraw crypto right here. And so let's just take a quick look at how you can do that. So on this page, click on cryptocurrency transfers. As you can see, this is a list of wallets that I've used previously. Click on deposit, bunch of language that you can read some of these disclaimers. But if you scroll to the bottom of the page, you have the ability to generate a deposit address. But first, you need to pick the cryptocurrency that you want to deposit. And also, what's up, Jose? Nice to see you in the chat. Nice to see the gangs all here, per usual. So this is how you do it. Really straightforward, really simple. One thing you want to be aware of is that when you're sending cryptocurrency, whether this is withdrawing it or depositing it here at the brokerage, you want to just make sure that you're on the right chain. These are different blockchain networks. Bitcoin is obviously different than Ethereum, different than Bitcoin Cash and Litecoin. So if you're sending Ethereum to an Ethereum address, make sure that it is, in fact, an Ethereum address, and you're not sending Ethereum to a Bitcoin address, for example. So just make sure that you've selected the correct asset here. Then you can generate that deposit wallet address, and it's really easy after that. You simply just take that deposit address, and that is the one that you're going to use when you send the cryptocurrency from wherever you currently hold it, whether that's in your self-custody wallet or it's at another exchange account that you might own. If we scroll to the top of the page and click on withdrawal, this is how you move that crypto out to the wallet address that you've chosen or that you've added here previously. And again, the same rules apply. I can't stress this enough. Make sure that you are using the right blockchain network address for the asset that you wish to transfer. So again, if I want to transfer ETH, double check the address always and just make sure that you didn't accidentally select or you're accidentally sending it to a Bitcoin address. Make sure that's not the case. And so you go down here and you select the asset that you want to send, and you'll get that address that you can also deposit to if you're going to deposit. So a couple quick things or quick points to cover around the broader crypto offering at tastytrade. Again, step one, if you want to trade crypto at tastytrade, right now it's only available in cash and margin accounts. You need to enable crypto. So if you just opened your account and you haven't enabled crypto or you want to trade crypto, you can't do that unless you've enabled it. So make sure that you enable it. And then if you want to transfer it after you've purchased it, it's available to withdraw in your account, or you want to deposit crypto to your account, you need to first turn on those transfers. So now that we've got that out of the way, I want to talk a little bit more about the Tasty Crypto app. This is something that we're certainly excited about here and have been working on for a couple of years now in terms of the broader development timeline. And you can see it here on the screen. we've got a lot of new features coming that I'm going to talk about as well. If you have any questions about the app, if you're an app user, please type it into the chat. But before I talk about what's coming next, let me show you what's already in the application. And the first place that I want to start is around connecting Tasty Trade and Tasty Crypto together. These are separate applications. So there's a little bit of confusion. You have the Tasty Trade Crypto side of things, and you have the Tasty Crypto wallet application. What we have on the screen here is the Tasty Crypto wallet application. This is going to give you those self-custody capabilities, allows you to be really truly in control of your crypto, full ownership. And what I mean by that is that you are in control of your private key. You can sign transactions. Everything is on chain, but when you trade through Tasty Trade and through Zero Hash, you don't hold the keys. The keys are held by the crypto custodian, in this case, Zero Hash. You have control over your crypto. The platform gives you the ability to buy crypto and to transfer it, but you can't actually go on chain and interact with, let's say, a decentralized exchange or do more with your crypto. In order to do that, you'll need a self-custody wallet. So not only is this a wallet, it's really a platform that gives you access to on-chain opportunities, DeFi, NFT marketplaces, etc. Everything that you might want to do with your crypto, you can through the Tasty Crypto app. So first, I want to just talk about how you can connect to Tasty Trade. A couple of ways that you can do that. You can click on the Add button here on the screen in the upper left corner. And when I click on that, you can see I've got a couple of choices here. Maybe you don't have a Tasty Trade account, but you have a PayPal account and you want to use that to purchase crypto and control it with your app. You can do that. You can also use a third party such as Transact. Similar to PayPal in that you can connect it, use a debit card, and buy crypto, and then it's shortly available in the application. Say within 30 seconds or so, that ETH is on chain under your control. But let's say that you do have a Tasty Trade account. I've already logged in, but you will click on this and you'll be prompted to then log into the account. And it'll take a second here to just load up, but these balances should load in just a second. But I know that this one at the bottom is the one that I have crypto in. If I click on this, it'll give me two options. I have the ability to buy crypto. And if you're in the current version of the app, you're not going to see this because this is a feature that in this version, I wanted to show on air today, but we haven't yet released to the store. We're planning on releasing this towards the end of the week, so hopefully by Friday. And then pending approval by Apple, by Google in those app stores, this should be available for download or for update on your phone here, hopefully within the next week or so. And you will see that buy crypto functionality in there. Today, in the current production version of the application, you'll just see the ability to withdraw crypto. So let's say that you want to do that. You have crypto at Tasty Trade. You want to move it to this address that you control through this application so that you can do something with it. Maybe you have Ethereum that you want to swap into something else and you want to use it on chain. In order to do that, you simply just need to click on Withdraw Crypto. And then in a second here, it'll load up the crypto that is available to withdraw. So you can withdraw Bitcoin, Ethereum, and Solana from the account that I have. Those are the cryptocurrencies that I hold in that account. If I wanted to withdraw Ethereum, simply just click on Ethereum, and then I can type in the next version, you should just be able to type in the dollar amount. But I think here today, we'd have to type in the crypto amount. So I can type in 0.01. It's about $23, a little bit less here today after the price action in the market. But I can now move that $23 from the wallet that's controlled by Zero Hash, by Tasty Trade, to the wallet address that I control through the app. You'll be asked to review the transfer, and you'll be prompted to enter in that 2FA code. So again, you need to have the two-factor authentication turned on for security purposes with the brokerage account. But once I do that, I don't have the Authenticator app here on this phone, but assuming that I entered that code, I'll then be able to move that cryptocurrency to the address that I control through this application. And it's really as easy as that. So initially, I went through the Tasty Trade website and showed you how you can withdraw crypto or deposit crypto using the website. If you have the Tasty Crypto app, it's even easier. Simply just log in, click that Add button, click Tasty Trade. You'll be prompted to log in, click the OK on the disclaimer, and then you can move that out. And you can do that with Bitcoin. You can do that with Solana as well. Now, this app does not support the Litecoin network or the Bitcoin Cash network just yet. So these are the ones that you can move out there that I have in the account. Also want to just quickly show the feature that's coming soon, which is the ability to buy crypto. I'm super excited about this. It's easy to buy crypto through any of the Tasty Trade platforms. There's some great updates coming to those platforms as well, specifically the mobile app very soon. But once this is out, the new version of the Tasty Crypto app, you'll also be able to go in here, and this is really slick. You can use this interface to buy crypto. It's somewhat limited. It's kind of the MVP initially, where you can only buy it using a dollar amount, market order. So if you want to use a limit order, or you want to change the amount to the actual cryptocurrency, you can do that through the other platforms. But here we've made it super easy just to go in, click on buy crypto, and here I can buy ETH, Bitcoin, Solana, Litecoin, Bitcoin Cash, eventually Doge, XRP, anything that's available through the Tasty Trade brokerage through Zero Hash, you'll be able to do that. But let's just say that I want to buy $5 worth of ETH. I can see that my cash balance here is $325.25. So that's the cash that's available in my Tasty Trade account to purchase crypto with. If I want to buy $5 worth, I'll just hit that 5, hit the review button. Here are the details for the order. This is kind of your confirm and send page. Place buy, and in a second here, we'll see that that order is filled, and boom, I've just purchased $5 worth of ETH. You can see the market price that I was filled at, $23.50 or so, it said there. So this is, again, in your Tasty Trade account. It's just a different interface if you'd like to use this in order to trade in that account. You can kind of think of this as expanding the footprint or the number of locations where with your Tasty Trade account, assuming that you're logged in here and it is a cash or margin account, you can buy crypto through the Tasty Trade app. The next step for us is to hopefully allow you to simultaneously purchase it and send it. So give you the same functionality that exists with the transfer side, but allow you to do this all at once where you can come in, buy crypto with the cash that's available, and then transfer it on chain immediately so that you can do what you want with it. And then, of course, if you want to move it back and you want to trade it, you can do that as well. So that's one way that you can do it. One other thing I just want to point out here is the menu. And you can see that I am connected to the Tasty Trade account in here. If you want to log out, you can do that. Just click on the button. But that'll tell you whether you have an active connection. If you aren't actively connected, then you can go in here and you can log in. But you can also, again, do that from the assets page. So let's talk a little bit more about what's here on the screen. When you look at the coins page, this is all of the crypto that I hold across multiple blockchain networks that I'm viewing through this single application. So what I love about the Tasty Crypto app is that is multi-network. So this is something that's going to give you access or control over your crypto on the Bitcoin blockchain, the Ethereum blockchain network, also on Ethereum L2s or layer 2s. So scaling solutions like Polygon, but also layer 2s like Base from Coinbase or Optimism, Arbitrum. Additionally, you have the ability to trade and control your crypto on Solana. We're bringing more chains to the wallet, but those are the ones that are available today. And you can see as I scroll through this, I've got a bunch of stuff that's all over the place. Some of the things that unfortunately didn't go so well for us during some of the bag battles. If you caught that, prior to this more recent downturn, we got some of that stuff left over in here. But you can see that we're on Base, we're on Ethereum, we're on Solana, and so on. And there's an indication next to the logo. I know it's a little small on the screen, but you can see the network that it's on. So you could have, in some cases, Ethereum or a balance on the Ethereum layer 1. You might also have Ethereum in terms of the token that you hold on the Base network or on Polygon or Arbitrum. You might have USDC on those networks as well. So that's the US dollar stablecoin. You also might have that on Solana. You'll see what networks those are on when you look at that little logo there. So here's USDC on Solana versus USDC on Base. So now let's say that you have these balances and you want to trade something that's not available directly through the Tasty Trade brokerage. As I mentioned earlier, there's currently 7 tokens that are available. We're working to expand that token list as quickly as we can. But if I do have something here that I want to trade and I want to swap this into any other token that really exists on chain through a decentralized exchange, you can do that directly in the wallet. So all you have to do, if I go back, is just click on the balance that you hold. So again, we'll go to USDC on base, and you can see some details for each one of these. So this is the coin details. You can see the market cap. You can see the rank in terms of market cap. So obviously USDC is going to be one of the larger tokens, even though it's just the dollar. You can see the correlation with different things across different tokens at times. But let's say that we're just looking at a stable coin, so there's not going to be much volatility here. But let's say that we want to swap this. We want to trade it for something else. All I need to do is, you guessed it, click that swap button. And now I can select any other token as long as it's on that same network, right? I'm not going to be able to, with my USDC on base, at least not today. We've got cross-chain swaps coming, but not today. I won't be able to go in there and, let's say, swap that for something that exists on Solana. So if I want to trade on Solana, I need USDC on the Solana network. But I'm on base. I want to trade on the base network. Maybe I want to buy more of the virtuals protocol. I select virtual, just like you would select a stock symbol or any other token when you're trading it in dollars. And then I just select the amount that I want to trade. So if I want to buy $10 worth of the virtual token, you'll see what that looks like here in terms of the amount that I'd receive. So there's going to be a little bit of a fee and at times, depending on the dollar amount that you're trying to trade. Could be a little bit of slippage depending on how much liquidity is available on chain. But once I have that refreshed quote, I'm going to click Review Swap. And then when I swap this token in a second or two, it's going to submit that transaction, and it's ultimately going to let me swap that token. So it might take a moment here to load. But that's how you do it right here within the application. Very easy to swap from USDC to any other token. You can see the transaction is processing now. And then once that's confirmed on chain, those balances will update, and I'll have more of the virtual token and less of the USDC that I started with. So really easy, again, to swap here in this application. That's what I love about it, is that it opens up kind of a world of possibilities that exist on chain. And the way that this works is it uses liquidity from decentralized exchanges. So if you watch Tasty Crypto Show, we've talked about Uniswap, we've talked about on Solana, Jupiter, Radium, a lot of these decentralized exchanges where it's P2P, there's no intermediary. You just kind of go through the code base in that sense. It's all code. And it allows you to swap tokens one for another, trade them, as long as there's liquidity on the exchange. And so what happens in the background here is we aggregate liquidity from a variety of different decentralized exchanges, get you the best price, the best quote, and then route that order and allow you to swap all without an intermediary. You do it right here in the application. And again, you do that simply by selecting the token, or you can click swap here at the top, and then you can decide what asset, based on what you have, you want to trade across those different networks. So again, really easy to do that here in the application. If you buy ETH, let's say, at the Tasty Trade brokerage, you can move that to this wallet, and then you can swap that Ethereum. You don't need USDC. That was just the token that we used for the example. But you can swap Ethereum, eventually USDC from Tasty Trade. But you can swap Ethereum for any other token across these networks, or you can use a DEX like Uniswap on the DeFi tab here, which we'll show in just a second, to bridge that to another network. So now I want to jump over to the DeFi tab. This is something that I use quite a bit, and we're constantly working to make some improvements here. But this is going to be the launch pad for a lot of decentralized applications, or dApps as they're commonly referred to. You can see Uniswap is here, PancakeSwap, Aerodrome, that's a decentralized exchange on the base network. You can also enter a URL, and you can go to an application that you have the URL for. You can connect to it. I would just caution everyone to make sure that they understand what they're connecting to and what transactions they're signing. Just be aware of that, because there is some security risks at times if you don't know what you're doing or what you're signing. But let's say that I want to use Uniswap, and I've gone through here earlier and I've connected to this, but I click that Uniswap icon and it's going to take me to the Uniswap application. If I click on connect, I've got the ability to then connect the Tasty Crypto app, click that connect button one more time. And now this is going to read the balances that I have at this address across those different networks, whether that's Base or it's the Ethereum blockchain or it's Optimism, Arbitrum, you name it. As I go in here, I can then swap any of those balances that I have also using Uniswap. I can also now go and create a liquidity pool. Previously, and it's been beaten up quite a bit, as you can see, I had a virtual WETH or wrapped ETH pool here. So virtual token with ETH base. Going in here, you can see that we're out of range, but this is where you can go in and you can manage your liquidity pools. You can put liquidity pools together. You can use applications like Uniswap. You can do that all through this DeFi dashboard. Additionally, as you trade, as you have activity on chain, if you want to see any of that, you receive tokens. I mean, there's the swap that we just did earlier where we swapped USDC for virtual. You can see all of your activity here. If you click on any of these, you can also then click that completed button. When you tap on that, that'll take you to the blockchain scanner or ETH scan, Sol scan for Solana, Base scan. That'll allow you to then investigate the transaction. If you ever have a question about it, you want to look at a balance if it's not updating for one reason or another in the application, you can view all of that directly on chain when you go to the activity here. You can also filter this and look for transactions by address or keyword. Additionally, if we just jump back to the assets page, you have the ability to send and receive crypto, obviously, with the wallet application. You have the ability to see more details on these token details pages. So if I want to look at relative performance on the day for Ethereum, at this point a little bit better than Bitcoin, up 2% against itself. It's just going to show you 0. You can see the range on the day. So a pretty volatile day for crypto in general. Also have the ability to see some news and the activity here. So that's for the most part, an overview of the application. I'm probably missing a couple things. This will allow you to manage multiple addresses within a single application. So if you ever see something where the balance isn't showing, the first thing I would check is just to make sure that you don't have multiple wallets that you've imported or created and you are just on the wrong one, right? If I go to this wallet 1, I don't have any balances, but if I go back to, the wallet that I was in, you can see those balances load again. So this gives you the ability to not only manage assets across multiple blockchain networks, but also gives you the ability to manage multiple wallets, which I love. And we haven't touched on any of the features that are coming soon aside from the buy feature. We're going to do that in more detail once the new version of the application is available for download, which, like I said, should go to the stores for review by the end of this week. And then as long as we don't have any issues, should be available for download the following week. Hopefully as early as Monday, we'll push that out for update. But that is a quick demo of the Tasty Trade crypto product. Enabling cryptocurrency is step 1. And then if you want to transfer, you want to move that to a wallet address that you control on chain, you can do that. Just make sure that you have cryptocurrency transfers enabled as well. You can do that all through the Tasty Trade website. Just go to tastytrade.com, click on log in, and then you can manage your account. And if you do have the Tasty Crypto app, you can connect it to the Tasty Trade account. You can do everything that we just talked about here today on the show. If you don't have the app, it is available for both iOS and Android, and also available as a browser extension for the Chrome web browser. But that's going to do it for our show. If you have any questions, if you are a user of the application, we love feedback. It's still kind of early days for the development timeline. So if you have any questions, you have suggestions, you have feedback, bugs you want to report, criticisms, we want it all. Send us an email to support@tastycrypto.com. Join the Tasty Crypto Discord, and also follow Tasty Crypto on X @Tasty Crypto. But that's going to do it for my show. Victor Jones is up next with The Price of Truth. I'll be back next Monday with Katie McGarrigle. Until then, I'm Ryan Grace. Thanks for watching.
get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Twitter versus Facebook. A rap battle. First up, Facebook.
Twitter, I'll snuff you out like I did to MySpace. I'ma have to erase your little Twitter face. Warm it up, Facebook, I'm about to. Did they make an Oscar-nominated movie about you? Check my school out, I'm at the top of my class. My main interest is listed as kicking your ass. I help dictators get thrown over. You help the cast of choices, you'll get overexposure. I'm too Titanic for you Twitter and twist. You bird-ass tweets, stick to the branches. I'm root deep, universal expansive. Twitter better get lost before you get poked. What? What?
Yeah, this is Twitter. Check it. At Facebook, can I attack you? Yes, and I could do it in 140 characters or less. Brevity's the soul of wit. I'll make this quick. Hash mark. Facebook is a dick. Retweet. Yeah, I'm backing that ass, and I'm young and I'm brash, and I'm packing that cash. Stick with the kid, I'm an early adapter. Your old Facebook played out like Napster. I'll make it real easy for family to talk. I'll make ex-girlfriends real easy to stalk. I'll show you life in real time that's completely amazing. I'll show you which celebrities are totally crazy. From Blitzer to Sheen to Kanye to Rom. I run with stars, Facebook is a place for your mom. What's the matter, Zuckerberg? Don't like how that sounds? I got 1 million customizable backgrounds. You're so totally boring. My card's on the table, hash mark. Facebook is disabled.
If you say way to go out on a ledge, what are you doing?
Way to go out on a ledge is just another expression when you make fun of another trader who's not willing to take any risk, who's very risk averse. So when somebody's very risk averse and doesn't want to do anything risky, you say, "Hey, way to go out on the ledge."
When you say you're going to whack the bid, what are you doing?
When you whack the bid, that means you're selling at the best available price.
A scoopy.
Scoopy Scoopy! That's one of my favorite. That's when you're just like scooping something at the bottom. Like, you know, you bought something and it never goes lower. Scoopy.
Back in the pits, you guys call them teenies. What are teenies?
A teeny is a 16th. So before we went to decimalization, we used fractions. And we used 16ths under a certain dollar amount.
Do you want the penny or the position?
Well, that's always something. The penny or the position is, do you want the trade? Then just pay up to get the trade. But do you want to squeeze it for a penny? That means you're just going to wait until you get filled.
When you say Omaha, what happened?
When I hear Omaha, I know I've gone too far.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
yeah, it's Wednesday, February 26th, a little bit after 5 p.m. Central Time, the best time. You know what that means? It's time for Tasty Live's evening show, little podcast, little podcast called The Price of Truth, the show where we like to explore the incentives that govern our world, and good God, are they throwing incentives out like hotcakes every single day. But we're here to field them, and more than that, we've got the big brain with us to help us figure out what the is going on with the world. I'm talking about none other than Mr. Chris Vecchio. Chris, how you doing, my friend?
When you start with Wednesday like that, I think of the Family Guy sketch, the wacky waving inflatable arm flailing tube man commercial. I don't know why, but that is
I don't remember.
I don't know. Yeah, well, you're not going to hear me repeat it because I'm not that fast of the tongue. But anyway, happy Wednesday to you, sir.
Happy hump day to you too, my friend. We were talking about nostalgic programs we used to watch that sort of have a little bit of sexual assault in them in the green room.
You put me on the spot the other day as if I'm throwing racial epitaphs around. You're talking about Pepe Le Pew.
Well, Pepe Le Pew, we were talking about first The Sandlot when Squints pulls the move on the lifeguard, and I was like, that's a sexual assault scene, and they kind of made it okay when the lifeguard kind of waves at him afterwards. They just they papered over it. She was okay. That's some sort of like consent. Everything's fine here. And then Pepe Le Pew,
no longer creepy now, right? She's okay with it. Tough message to send to the kids, but
yeah. So I'm curious, do you got any others like that were really sort of like, you watched them as a kid, like Snow White's kind of, isn't Snow White, going up and kissing somebody when they're asleep? Isn't that a little essay?
Yeah, Disney and Warner Brothers frequently put those like not trailers, but they go ahead of the movie, right? And they edit the language like these cartoons are from another time. We're not editing them because to do so would be whitewashing history, basically. So you have to understand what people think and felt, but like we're not okay with it. But I mean, like most of the content back then has something in it that may not be perceived as couth today. But what I find particularly funny, Victor, is now that I like rewatch a bunch of these cartoons and movies with my kid. When I was a kid, I'm like, oh, the parents are so mean. Like this little boy just wants to explore the world and be a hero. And now I'm like, yeah, the parents got a point. What does he think he's doing? Like, you're no hero. Get back in bed.
No, bro. I go back. You ever watch The Newsies? You ever seen this movie? The Newsies? Yeah. Bro, like those old school New York kids selling newspapers, smoking cigarettes, hustling for money. We are so far. I can't even imagine letting my kid go out for 8 hours, not knowing where he's at, and then coming back like, "Hey, son, did you bring home your salary?" I can't imagine that world.
Yeah, I'm actually.
I'm trying to buy a geo tracker to slap on this kid so I can know his whereabouts at all times. That's a different world. Anyway, somehow that's the open.
Whatever that.
Anyway,
again, whatever that
that's
was.
the open. Welcome, everybody. Shout out to everybody who's still watching somehow, some way on tastylive.com. Shout out to everybody that's watching on Tasty Trade desktop and mobile application, waiting for us to get to something somewhat market related. But if you want to be part of this little chat box on your screen, there's only one place to do it, and that's on the evil Google YouTube. So head on over there. Jump in the chat, move your phalanges, metacarpals, or just slam your face across the keyboard. Doesn't matter. Random ass characters will suffice so we can spoof the Google algorithm into putting us in front of as many people as possible. And I don't know, maybe deprogram the world a little bit. Chris Vecchio, last time I talked to you, I think we were on the other side. We've been in like this 6,000 plus or minus 200 range. We're on the other side of it, 61-ish. And the market has taken just a bath for a couple of days straight. We're at 59.76, but vol is, I'm arguing, relatively subdued here. It's still sub 20. I had a conversation with Ilya yesterday. Ilya argues, and I would, it's hard not to argue this, that those horrible PMIs from last Friday, along with poor home sales, just a litany of garbage data, kicked us off.
was the catalyst from last Friday. Where do you stand on risk here at 59.75 on the other side of 6,000 here? What's your take on what just transpired over the last 4 days?
Sure. Well, I mean, if we had met a week ago, I would have been on here banding about how the stock market was closing at a fresh all-time high and how quickly things have changed. The fact of the matter is right now, it feels a little reminiscent to what happened in July of last year when the market got over its skis and all of a sudden the attention swings from is inflation being defeated to, whoa, do we have a growth problem on our hands? And it was those non-farm payrolls data, the triggering of the SOM rule in August that ultimately provoked that type of market mindset. And it seems like we're going through that right now. Unlike what we've seen 2023, 2024, when interest rates dropped, stock markets went up, particularly the Russell would go up, because it meant that the Fed was able to cut rates thanks to inflation being lower. And the golden goose was still there. The Goldilocks world of strong growth, 2 to 3% in real terms, unemployment rate with a 4 handle, CPI heading back towards the Fed's target. You could justify, okay, this is good, right? Yeah, lower rates, good for stocks. But in this world, the past few days especially, we've seen lower rates come in and stocks just haven't been participating or at least seeing them as gleeful. And it's because it feels like that focus point has shifted from growth, from inflation being a problem to wait, we have growth now in our spotlight of fear. And so to that end, that's what you see last summer, right? You now have another market environment defined by the fact that it doesn't really matter what's happening with the inflation figures. It doesn't really matter what's happening with the inflation trackers. We have PMI data that says the economy may be slipping back towards recession. We have weak Dallas Fed manufacturing. We have weak Chicago National Fed Activity Index. The home sales figures aren't great. And altogether, you have growth fears accumulating all of a sudden once more. And then you have a federal government, which for all intents and purposes, it says it wants a lower 10-year yield. It looks like it's getting it, but for all the wrong reasons.
But a lot there.
Can I add one more layer to that? And I brought this up twice today, but for the third time, you haven't heard me say this, but for the sake of the audience, once more, forgive me.
How do you know? How do you know I don't watch you nonstop on the network?
I know you do, but it's just the beginning of your day. So you have all day to catch up on what I said. We think about the difference between types of cuts. And this is a topic you and I have discussed in the fall of last year when the Fed was beginning their cut cycle. And it's, what type of cut are we getting? Is it for maintenance reasons? The Fed can just back off a little bit. Is it for a recession? The economy's slowing down. Or is it an emergency? Oh my gosh, something just happened. We didn't expect it. We have to cut rates immediately, like COVID. And I argued at the time this was a maintenance cut. And the returns of the stock market after maintenance cuts, 3, 6, 12 months out, are all positive. But it seems that the market's now thinking that forthcoming cuts would be the recessionary kind. Why do we say that? Because after CPI, we had, 2 cuts priced in through the end of next year. Now we're at 4. Interest rates are lower as those cuts have come in. And instead of rejoicing over more interest rate cuts appearing on the horizon, the stock market has taken, a 4% leg lower in the interim while those cuts have been built up. That to me is a clear indication that the market's now thinking rate cuts, if they do come, are not because inflation has been defeated, but it's because of recession. And when you look out stock market returns, when the Fed is cutting for recessionary reasons, that's bad a month out, 3 months out, 6, 9, 12, right? It's just not good. So then you go over to your sector performance recently and you see that XRT, the retail sector, hasn't been performing that hot. And XLP has been on fire. And healthcare, another defensive name, has been doing well, while XLY, granted there is a Tesla component into that, but XLY has been struggling again and recently just set lows. So the sectors don't look great. The backdrop is looking a little less accretive for more gains in the near term. It feels like there's a lot of macro risk, and the market really does now care more about growth. And you can see it in the cross asset flows and how yields aren't triggering the type of euphoria in risk assets that we saw for stretches of the past 2 years.
Yeah, really quickly to your point, just to throw this up in front of everybody. These are the sort of the cut expectations for until the end of 2026. There is the continued expectation of a cut in the June meeting that we flirted with either June or July. It seems like it's firming up in June with an additional one in September. and early cuts in 2026. The markets moved that back and forth between December and January, and then another one in the tail end of December. So you've got 4 cuts there from now to the end of next year, as Chris just mentioned. And previously, if we take a look at the yield curve, this red line is where we were in September when you got that jumbo cut. And what's happened is more cuts or more implied cuts have tended to yield to the long end of the curve actually lifting. But all of a sudden, you are not getting that same relationship where additional cuts are leading to a long end that's lifting. You're seeing the exact opposite. The whole curve, the yellow line now is the whole curve, is falling, and it's falling precipitously. We're now under where we were when we had the cuts in December. We're now under, the curve has fallen to below where we were when we had the cuts in November as well. The difference is sort of the shape of the curve is a lot different. We were inverted going up, and we're staying sort of uninverted on the way down. So the whole curve is moving lower. At the same time, more implied cuts are being priced in, which is a completely different scenario than we've seen for the last 4 or 5 months. To Chris's point, and we pointed this out yesterday as well. So I guess my point to you is there it seems like there are a lot of underlying dynamics in the market over the last week that have changed. That doesn't necessarily have to stick, right? All of that in the next week or in the coming weeks can be undone. We can go back to the previous correlations that we've seen up until this point. My question to you, Chris, is from your point of view, it seems like from that open, you believe, as Ilya, I think, did yesterday, you sort of believe that we might have just hit this transition point in the market where whatever was up until last Friday is now something new. We have sort of a new market dynamic to work with, and this isn't going to be short-lived. Is that fair, that your confidence interval is pointing towards a pathway where we're going to have new market dynamics where growth, the market is dealing with growth slowdown, and that looks very different than where we were before with high growth and high sticky inflation?
It does feel different, and you can see the market caring more about, the potential impact of the tariffs and trade wars, if you will, because the economy is signaling that it's taking these concerns a little bit more seriously. We may feel from following the news so closely and living on social media, particularly Twitter, that we've come to understand the boy who cried wolf nature of some of these tariff threats. What do we find out today? Have the Mexico and Canada tariffs been pushed back again, Victor? You bet. But you know what? We're traders. We're not people who own and operate businesses who have to project cash flows. And we can see in the survey responses, in the consumer confidence data, in the PMI data, that this uncertainty and the will there be tariffs or won't there be? Is it a negotiating tool or not? It just, as a business, that's just not something you can entertain. So the uncertainty that these businesses are facing in the surveys are skyrocketing right now. And that is something that does cause an overhang in the economy. It goes from being bluster that we've interpreted as for the first few weeks of the administration to, well, if people aren't confident about the future, they stop spending. If they stop spending, then hiring slows down, and yada, yada, yada. And then it becomes self-fulfilling simply because everyone decides to take a step back and take a beat at the same moment to get their bearings. And didn't this happen in COVID? Everyone kind of just stopped spending all at once. Yeah, there are shutdowns. But when everyone stops spending all at once, everything can come down really quickly. So that's a dynamic here that while we as traders have said, okay, yeah, it's fade the gap. It's another weekend gap. It's starting to appear in the data, right? And now that it's actually appearing in the data and it could slow down growth, that sets up nasty dynamics where structurally higher inflation coupled with slowing growth and higher unemployment. It's not stagflation, but it certainly, has that Pepe Le Pew whiff to it, Victor. That doesn't make you comfortable.
Nice callback. Interesting. Okay, let me ask you, we've been talking about the 6,000 plus or minus 200 range for the last 4 months, and I think that was even, you sort of expected that coming into the year. So why there tends to be at the upper end of the range a feeling of general euphoria, right? That it's hard to find bad news. At the low end of the range, it's hard to find good news. Can I ask, like, why shouldn't I just be trading the range here? Why shouldn't, when assets are getting cheaper, why shouldn't I be looking to add on to a portfolio of longs when assets are getting cheaper? Why should I be sort of jumping in bed with the negative narrative that is creating a discount in assets?
I don't know. So to take a step back, I think I've placed 2 trades in ES this year, right? Like it's been range bound. I'm a momentum guy. This thing has been grinding. I've taken some stabs that it looks like it's getting some acceleration, and then it's petered out. So it hasn't, and I haven't placed any trades in NQ, just no reason. I mean, I'm looking at my chart right now. Maybe it's a double top, maybe it's a sideways shift, but at 59.72, Victor, you talk about trading the range. The range is 200 points wide of exactly where we are right now on either end. I mean, we are literally in the midpoint of where the market has traded since basically late September. And so you got a little bit of vol here. Maybe the prudent thing is it's February 26th. We know that the seasonal tendency of the market is to grind sideways into the Ides of March. Slap on an iron condor, short iron condor. And if we get to the range lows, look to do a little bit of a scoop. And if we get back to range highs, look to sell some calls. But until March 15th, a lot of chop. And I think perhaps even more consistent with the, thesis that comes out of DeepSeek. I think it was Wednesday, January 29th we spoke, or maybe it was the week after. But if a phase 2 transition is occurring, then you'd expect a lot of chop in the headline indexes for some time, and that comported with the seasonality. So I've taken my chips, like 2 shots, chip shots, at trying to get long stocks in some capacity, but never have really loved it. And now the golden goose of why I really like being long all of last year, like check the economic scoreboard, everything's fine. That's moving in a direction that makes me less comfortable with just buying every single dip.
But you're a long-term, but you're not a trader though. You're like a long-term guy. No, what I'm saying is, I would expect a long-term point of view as assets get cheaper to want to start to switch into accumulation mode. You get what I'm saying? That's what I'm saying.
Accumulation. Okay, so if we're thinking about this on a longer-term basis, just if I'm trading this, we have recent lows in ES and NQ that are close enough by where if you wanted to risk 100 points in ES, for example, you could. And if you're right, you probably catch a swing that's 300 or 400 points to the upside. But if you're wrong, you're talking about another potential 400 point flush lower. And like, if as a longer term person, right, if I see ES break its current range below 57.75, that to me says step back from accumulating right now, right? This is a good time to have some cash and capital on the side, maybe even sell out of some positions and wait for the correction and then begin to layer in long again. But we'll know quickly because we're kind of teetering on that edge right now. I just don't find the setups compelling again because as a momentum, primary person, where's the momentum right now? If anything, it's tilting lower, and that cuts against my long-term bias. So I'm not.
There's definitely no momentum. Momentum got murdered over the last couple of weeks. But I guess I would agree that I don't think that the majors are interesting. Like, I wouldn't buy the S&P here. But I do think the reason it's trading sloppy, sideways, and a bit ugly is because the underlying components that make up the S&P, some of these instruments are starting to get to interesting levels. So, I mean, whether you want to participate in the Mag 7 or not, I do think there are interesting stocks that have been hammered that to me start to look like interesting buying points. I would agree with you. At the index level, it's shit. It's a 50-50 shot. It's exactly mid-range. And quite frankly, while vol is 19, that's elevated, but given the potential risk of a break of significant support, I don't love how much you're getting paid. If I was getting paid like 22 vol points, then maybe I like the idea of selling some downside puts here. But yeah, I would agree that the major indices, in particular the S&P, doesn't look too interesting. But I wonder if below the surface, either sectors or particular instruments who've been bombed out here in some cases
Have they been bombed out?
Start to look interesting.
I don't know if they look bombed out.
On a percentage basis, sure. Depends on what you're looking at. What do you mean?
Like even in Amazon, yesterday it had that really, really nice rebound over the course of the day. Hammer candle textbook at the downside of a range, right? Looks like a great buying opportunity. We bounce back today. We rally up to the 1 week moving average, and that like clocks the high, and we immediately fall back from it. So sure, there was like a little bit of a dip, but the rebounds are a little bit of a dip.
It's 20%. It's 20% off highs.
No, I mean like yesterday you have that dip and you pull back, and now you rally up a little bit today, and then you have a little bit of a dip off of today's high. But like that little dip off of today's high is still so instructive, because it just goes to show that there's no staying power right now, and it feels like that's a sign of systemic weakness, that you're looking for signs of these, technical bottoming signals, and the moment you run into some sort of momentum level, the market immediately fails there. And that's not a good look right now. So if it's Amazon, if it's Apple, we'll see what Apple does tomorrow against its 1 month moving average. But Amazon looked pretty crummy today. I know that Meta's been coming back in over the past few weeks, and today's action not quite as terrible as everything else, but it tries to get back above its 1 month moving average and falls down below there again. And that's not the kind of behavior we had been seeing when this thing was ripping to the upside for 20 odd days in a row. So just there's some characteristic behavior changes in the technicals of even some of the individual names that warrant some caution. But I think the bigger picture is, though, if we are going into recession conditions, stock picking is going to be fantastic, right? If you can do sector rotation, you can avoid the noise in the top line indexes and find a place like XLP or XLE that have perhaps been ignored for recent years and tend to do well in the defensive shifts. Or you could just use it as a signal to step up your trading in other places. Like stocks have been crummy this year. My shots at longs haven't worked out, but finally bonds worked. Finally gold worked. Gold's been working. And that's more than enough to offset the disappointment we've seen in the directional move thus far in ES or NQ.
I just can't. What do you make of vol being at 19? What do you make of
I've been quoting you all day
at 19?
I've been quoting you all day. I go,
what?
this is the gray zone. If you're between if you're like 17.5 to 19.5, 18, 20, like you're in that zone where statistically the odds of breaking up 2 or 3 points are the same as breaking down 2 or 3 points. And when you're sitting near support in ES, do I really just want to jump in here with such negative momentum that's accumulating right now and look to sell put spreads, when in reality we could get a vol spike and a break of the range and all of a sudden it's a double tap, and that sucks. I don't want that. So I just don't like. I think I'm with you. This is the tricky part for where the VIX is sitting right now in both spot and in the futures market.
It's super tricky because this 4 days in a row of selling, but only getting back to the midpoint with no real vol spike and no real capitulation. Here's what happens. Everybody, there's sort of, I don't want to say here's what happens, but if you don't get a real nasty spike or if you don't get a discounted price, the market is going to, everyone's going to do this thing in 3 days. They're going to go, oh, see, everyone got worked up about growth. Everyone over-rotated, only buy the dip, idiots. And then we're going to go triple top. So my biggest thing is to me, the narrative is so negative, but to me, the price action doesn't match the negative narrative right now. And I of all people, I think we're trading in the clouds. And at some point we've got to pay the piper here. But it just feels like it's too easy right now. The negative narrative, it's too much. And it's too much without the accompanying signals of a real vol spike, a real flush, any sign of capitulation. It's a 4-day orderly sell-off. And if you don't do enough damage to people and you give them 20% off the Mag 7, I don't know that this thing holds. And in the very short term, I'd be looking for opportunities to get exposure on the low end of this range for another run up to the up end of the range. I wouldn't trust it, but it just feels like the setup is too easy. It's like a children's book right now.
Give me 5,800 and I will happily pile in with a sizable long position trying to say that the range low is going to hold. But mean, like, again, midpoint of the range, VIX where it is, and then the number of stocks trading above their 20-day moving average as of today's close is 45.12 in the S&P 500. You think about the VIX spike at the end of December, that coincided with fewer than 8% of stocks in the S&P 500 trading above their 20-day moving average, which in recent years, that's been a signal that the market has been flushed out and a bottom is nearby. So we're nowhere near the bottom is nearby type of thing. And VIX, we're not near the yearly highs even. So this is kind of a danger spot. You're flipping. Yeah. I feel very much like I'm flipping a coin right now. And that's why short iron condor, let's just say the range holds. Let's just say this 400 range point, 57.75 to 61.75 holds for now. And if we get a top, we trade it like a top. And if it's a continuation, we trade it like a continuation. But this chop, I've been trying to trade out of the chop thinking we're going to get some upside movement, and it's fallen flat for whatever reason, deep sea tariffs, what have you.
It's just, I don't know. My personal opinion is it's too expensive. So finding a catalyst to break us on the upside, it's going to be hard. But the interesting thing is, if you wanted one, you're getting lower yields. And theoretically, I mean, this is all the stuff that should have helped to be a catalyst to move us towards the upside, right? Lower yields, I don't know, growth expectations coming in a bit, but they're still relatively elevated, more cuts into the future. I mean, these were all the things that bulls were sort of, again, it always depends on how you get these things, and you made that point eloquently earlier. But if you told me you were going to get a bunch of cuts and you were going to get lower yields with that, I would say, okay, that's probably constructive. The only problem is that only happens if people are scared shitless of growth. You mentioned bonds before. Bonds at 117 or nearly 118. Just a rally from the gods. And this was a hard one to hold on to. But from 110 up to 118, I suppose the question after this move is, what do you do now? What do you do now with bonds, in your opinion?
4 cuts seems rich. 4 cuts seems rich. That seems like it's a little rich. We only get 4 cuts if you're going to get a recession, right? And
why did you say that?
Because if you're getting the policy,
I get what you're saying. You meaning the 4 cuts only plays out in reality if we're going to go through a growth slowdown. That's what you're saying.
Right. And I point to that because I think about the market reaction mechanism to CPI data. The last CPI report was way warmer than anticipated, right? 0.5% on the headline versus 0.3. Now, when you look beneath the surface, it's like transportation services, car insurance, and, okay, a lot of one-off rebasing stuff still. Do you really take it that seriously? You could look past it. The market did. We recovered almost immediately. But then the PMIs come out. I mean, to his credit, Ilya has been bandying on about the PMIs, like, oh, the PMI is the most important report this week. And sure enough, like, they punched above their weight. They had a much bigger staying power than the actual inflation report did. So, if you look at bonds, then the bond move is predicated on the U.S. economy gliding into recession. And you have to think that we are going there and that the Fed is going to deliver on that. And I am out of my short put spread in ZB after yesterday's move up. So I missed the last 20 ticks or so, but it was 110, 108 when we were back looking at like a 50 IVR and the market was thinking about 1 cut through next year. So we moved away from that extreme now. Do I really feel like that we're going to have 4? I'd rather be in gold at the end of the day. I think about our previous conversations, Victor. Again, what's the best performing asset class if you're heading into a recession? If you look back to like 1985 or so, the 2 things that perform best, long end of the curve and gold, plain and simple. I just prefer to be in gold given everything that's happening in the world and the seemingly balkanization of trade and the U.S., I guess, managing its own decline out of a hegemonic world order into a more multipolar world. Gold seems like the better place to be than treasuries if we're going to be defensive and play a recession fear.
I don't disagree with that for many different reasons. At the beginning of this week, I was hoping we would get a a 5% down day, which would be about 150 point down day in gold. We didn't get it. We got exactly half. We got a 75 point down day the other day. Which, that's what happens. You never get what you ask for. You get something short of it, and then you get put to the test. What are you going to do? Knowing that you would rather be in gold, but knowing that we are also sitting at highs, how does Chris Vecchio think about positioning into that? Do you go directly into gold? Do you do something risk-defying like upside call spreads just in case you get a breakdown? Do you look at the gold miners as I've been doing, the unloved gold miners, which got a little bit of love today? To me, it makes no sense what's happening in the miners. Newmont got absolutely blasted over the last couple of days on positive earnings, but I think a lot of that positivity had already been priced into the market. So you got it at nearly 42 yesterday, 43.5 today. That's my proxy for playing into gold because I think there's some discount there. How do you express your opinion at gold 3,000, knowing that you want additional long deltas, or you still have a bullish position or bullish outlook, I should say?
So my whole thing, since we started to break out through 27.25 has been rolling up gold call spreads. Recently, there's been a decline in volatility here, right? And that's pretty important because gold's best days are when vol is expanding. So an early indication last week that maybe we were coming into a choppy range and carving out a near-term top would be the fact that gold vol was coming off the board. That said, while gold vol has deteriorated, prices really haven't moved. We're still at the midpoint of the range that we've been in since February 10th from the open there. We closed that day at 29.34. We're currently at 29.33. We've ebbed and flowed a little bit on either end. It's about a $70 range. The bigger picture here is that gold still looks like it wants to move above 3K. I have a measured move at 39.20 cents in the GCJ5 contract. And if we take the measurement in what looks to be a bull flag, that's going to carry you well past that longer-term Fibonacci extension. And so consistent with that, so long as we are holding up and as long as we're maintaining those closes north of that 1 month moving average, then I am comfortable with staying long the calls or call spreads, depending upon what each person feels is best for them. But the way I've been playing it on the Tasty Live follow page has been just out of the money call spreads and rolling up as we reach the long strike. And that is something that Jamal just took off the table 2 days ago. Kudos on him because it was north of 29.50. For me, I would like to get back to 29.50, and then I'll roll forward with a long 3K short 30.50 call spread. Just not going to step off. And again, I'm very smooth brain like this, Victor. I know that my momentum trading is not going to work at some point in time. I've accepted it as a way of life. This could be the trade that doesn't work, but if you catch 2 out of 3 and the last one's structured in a manner where the max loss eats into the half the gains of the previous winner, you walk away from the table net up. So that's just how the strategies work for me for the past year in gold. Trade long, out of the money calls, roll up until it breaks. And when it breaks, step back for a few weeks. And if it starts to break out again, start doing it again. So that's working now. And it's, there's no reason for me to think it's going to stop working.
I think I did that, I think it was either last year or 2022, but I mix up the years. And when you're in it, it's great. But then when you're not in it and gold is at an all-time high, it's really hard to pull that trigger. So then, and that's kind of where I'm at. I was in gold for a very long time, and now I'm not in paper gold. And for the last almost 3 months now, it's just gone one direction. It hasn't given anybody who's not in the trade a real opportunity to get in it at an attractive price. So that's why I've sort of been forced to go about it through other proxies, Newmont and other things. But as an aside, I don't know how much you've looked into this. We didn't plan on talking about this, but I'm gonna throw it out. I won't be able to volley with you much because I haven't dug into it yet. But I'm curious, since we just talked about treasuries and we talked about gold, do you have an opinion on the budget that the House just passed? Did you look into that at all? I'm guessing you've had enough. You stay steeped in this stuff. Did you have an opinion?
I feel. Are you yanking on my chain? I feel like you know the answer to this question.
Well, I'm trying to give you an out just in case you hadn't had the opportunity to dig in. So I'm guessing you have, But I wanted to ask it in a way that didn't expect it, just in case you hadn't. That's what I was doing.
It's fair. They only voted on the bill yesterday, so what could I have possibly been doing since yesterday to read a House spending bill? Yeah. I mean, look, I remember, I'm so old that I remember when Paul Ryan proposed cutting $125 to $150 billion from Medicaid to fund tax cuts, pulled at like minus 30% in 2017. And obviously the plan went nowhere because it was seen as politically toxic and you couldn't do something like that heading into the midterms. Which begs the question, right now, the program that they set forth, which let's just do this with a heavy grain of salt. I don't like this. This is not going to be the final bill.
It won't.
So whatever numbers that we see here and discuss today, just know this is a framework because the Senate's going to make their revisions and amendments, and it's going to go back to the House, and it's going to go back to right. And so, but right now it's 800. The big line item for me is $800 billion cut from Medicaid, $200 billion cut from SNAP to offset $1 trillion in tax cuts.
To dot the I's and cross T's, I think it's $880 billion cut from Medicaid and $230 billion cut from SNAP, which is food stamps. Yeah, go ahead.
Sorry. So it's 1.1 trillion worth of cuts, not 1 trillion worth of cuts. 1.1 trillion worth of cuts to these social safety net programs to offset tax cuts. Which, granted, if the 125 to 150 billion were seen as politically poisonous, I would think that this plan may not be received that well by the American public either right now, given the zeitgeist that we're going through, where we're, trying to get transparent and make government work for the people. So whether or not that ultimately becomes the law of the land is another story. That's perhaps why the market hasn't reacted to this all that much. Does it get scaled back? Maybe. I think ultimately the goal was just to get the ball moving forward because I know, like for my congressman, Mike Lawler, for example, he has been making it very clear in every medium possible that the singular focus is making sure that the SALT tax cap is bumped up or repealed again so that New Yorkers and other high tax state residents can write off more of their taxes effectively, which I would be a fan of. I live in New York. But that didn't get included in the most recent program. So clearly there is some understanding with House leadership and the members who towed the line. Only one, Thomas Massey, didn't vote yes with the entire GOP caucus. There has to be some understanding that this is just a starting point of a framework to get it to the Senate, and they're going to make their revisions. Murkowski, the senator from Alaska today, noted that the Medicaid cuts proposed would be ruinous for Alaskans writ large. And so she is, again, can you afford to lose 2, 3, 4 senators now? No, you can't. So it's not going anywhere. But if this is the plan that goes through, Victor Jones, this is not these aren't the Doge cuts, right? Then the Doge cuts that have happened so far, I don't know if you've been following this story, but the 5 biggest ones that they had announced on their website have since been scaled back because the documentation that they posted was inaccurate. The numbers that they said they saved, that were claimed to have saved, were inaccurate. And so the Doge cuts, as Polymarket's tracking them, maybe it's $55 billion so far. But in the face of a new budget that's going to add $300 billion plus to the deficit this year and $250 billion plus the year after that, and something to the same tune in the following fiscal year.
It's about $2.5 trillion over.
Right. So
a few years.
$50 billion in cuts for these programs that were scaled out over 10 years versus $2.5 trillion, $3 trillion of new debt. Peanuts. Right. So it's great. It's quote, great theater. It's made for some really interesting tweets and conversations and, big balls, nicknames, I guess. But beyond that, in terms of actual fiscal policy, it's looks like kind of like a Reagan, George Bush bending plan. Cut taxes, cut entitlements. It's Paul Ryan's dream, actually, that to a degree that he couldn't get passed through, and he ultimately stepped down as Speaker of the House because of it. So what a change in just 6 years. 7 years? Yeah. Gosh, 2017? That was 8 years ago, Victor.
Paul Ryan was an idiot. We're better for him stepping down. $2.8 trillion added to the deficit over basically 10 years until 2034. And I agree with you. I don't think this is the final. And I also think, like, I don't know, I might be wrong on this, but I think what tends to happen is, like, the administration will sit back and they'll see what's politically popular or unpopular. Trump will only attach himself in most cases to things that are fairly politically popular. Not always, but most of the time. In this particular case, I wonder if he's not necessarily going to come out strongly in favor of a budget or in favor of Medicaid cuts. I think he'll be totally quiet on this. I might be completely wrong and have pie on my face. And he likes to come in at the 11th hour and look like a savior. It's what happened with TikTok. It happens with things that are politically unpopular, even if it's a Republican thing. So to come in and say, we can't cut Medicaid or we can't do this, like, I wouldn't put that out of the cards for something like that to happen. But even if it doesn't, I would agree with you. This would be pretty unpopular to cut to cut nearly $1 trillion from Medicaid and $230 billion from food stamps, and to fuel $4.5 trillion of tax cuts, and still add $2.5 trillion to the deficit over the next 9 or 10 years. I don't.
What's great about that tax plan?
That almost really
our taxes would go up.
Yeah. Maybe. I don't think so.
I have a tax attorney mother, Victor. I asked all the questions last night. My taxes are going to go up.
Yours might. Here's my point, that it would satisfy nobody, because your fiscal conservatives, it's not going to satisfy them. It's not going to satisfy sort of the populi that helped to get Donald Trump elected. It kind of it's like shit across the board, except for sort of an uber wealthy who's going to benefit through some of those tax cuts. So I don't see, and the biggest thing is there wasn't even cuts in defense spending. Nope. So you can cut out of Medicaid, you can cut out of food stamps, but you're going to keep defense spending the same, if not add a few more dollars here and there. It's like, this is clearly step one in what will likely be a negotiation. And that's kind of their style. They go way left in order to negotiate it back towards something that they still feel like they won on. But the problem with that is you're going to get a lot of ammo. Political opposition is going to get a lot of ammo because this does not look good on paper. There's almost nobody that's going to be excited about this on paper.
Well, Democrats are excited about this on paper insofar as now when Trump comes in and can claim the victory that you say he's going to claim. Look, they were talking about cutting Medicaid by $880 billion. We negotiated it down to only $400 billion, right? We got to support the American people, but we got to save money, right? Like, well, now you have all these House Republicans who are on record saying, like, we were willing to cut $880 billion. We voted yes in favor of it. Like, so you just sailed. Man, have you been watching some of these town halls? People are caring right now, Victor, about what's going on in the federal government. The town halls have been wild, to say the least. They remind me of the Obamacare town halls in 2010, 2011. Okay. So look, there's going to be political pushback, but if there's a window to do all this stuff, it's now. Midterms are next year. That's what matters most, right? All these House Republicans, they have a political future ahead of them, so they hope. So there will be moves, and they will vote according to that. Because Trump is, he will be a lame duck if there is not a House majority next year. The Republicans will keep the Senate. But if there's no House majority next year, you're going to get gridlock again, and then nothing legislatively happens in D.C. for another 2 years.
Mm-hmm. Well, if you had to bet right now, do you think Republicans hold post midterms?
No, if only because of the historical swing. And I think, in fairness, the 2022 midterms were a bit of a surprise, right? Well, 2022 midterms were a surprise because we expected a bigger blowback against Democrats. and it really didn't materialize to the degree that one would think in line with historical standards. Typically,
because they used the Roe versus Wade overturning. Pelosi used it really, really effectively to mobilize.
Yes. So then what's the issue?
2022 midterms.
So then what's the wedge issue that Republicans can deploy to help brunt the historical swing that typically goes against the incumbent's party in midterms?
I just think sitting down and laying dead. I think Democrats just don't understand. I think the strategy is to do nothing, to offer nothing, and to hope that this administration runs into enough speed bumps that they can put in people's feeds and put in people's face that rouse them enough to be enthusiastic again. Because their biggest problem was the Democratic vote. They just didn't show up. Like in Chicago, I think Biden got 944,000, dropped to 700,000 votes for Biden. And it's like, I think they think their biggest problem was a lack of enthusiasm. And if we can just rouse these guys up, if we can get them back out to the polls. And I think that's a losing strategy. I don't think it's going to work.
Yeah, I mean, from the polling data that I've seen in the first month of the Trump administration, most people, including people who had Democratic congressmen, were like, work with the Trump admin. Something like 56 to 44 in that neighborhood. Like, we want you to
tired of that shit. Yeah.
It's switched now. It's now like 35-65. It's now like, no, don't work with the Trump administration because of everything that's happened in the course of February.
Dude, again, people just
I hear you.
People that believe these polls don't understand human nature. Like the idea, I never get how smart people can be just hoodwinked by these fucking polls. If people believe something 1 month, the entirety of a nation does not flip on a dime without some big catalyst event. It's so these polls get used.
Catalysts in February? The constant stream of Elon Musk in the White House with a chainsaw talking about how he's going to fire all these people. And you don't think this has an effect on the American, even though it's showing up in PMI data now?
I think wine moms, it has a big deal on wine moms that spend too much time scrolling on their phones. I think it probably does.
That's like me. I'm basically me.
I did not see that coming.
It's your buddy Chris. You know me.
I did not see that. I think I got that term from you the other day. I can't remember what you said, but I was like, I like that phrase. That's me. All right, man. Let's move on. I'm pretty sure we've got 3 more minutes left, and I don't know. Maybe the ramblings there probably lost half the audience. So, in a nutshell, we both think this is step 1 of a negotiation. I think kudos to Thomas Massey, who always seems to vote on the right side of history. So where do you think they end up? Do you think wherever they negotiate, do you think they might pull a lever down, pull a lever up, they might pull something from defense, add something back to Medicaid? Do you think wherever this budget ends up, it's somewhere in the ballpark of $2.8 trillion to the deficit over the next 10 years, and that's ultimately what we need to care about as people who care about the curve? I think that number is probably pretty fixed. I don't think that's going very far. I think it'll go down, if anything.
Yeah, I think you're probably right. Yeah. I mean, look, we're kind of painted in a box right now. Realistically, the Fed is with Powell at the helm. Maybe if Trump appoints someone else in the future, you get a more proactive Fed. But that's then totally different than what the market's been used to for decades. So
proactive Fed, as in what? More hawkish or more dovish? What do you mean by more proactive?
So right now, the Fed is concerned about tariffs. If they were a proactive group, they would start raising rates now to tamp down inflation pressures in advance of the tariffs coming, right? But they're not a proactive group. They're a reactionary group. They don't want to tighten up the economy now in the event that the tariffs never materialize, or the impact of the tariffs when they do materialize. What if they're offset? What if they're not long lasting, right? Do they really require that type of change when the tariffs go into effect? How quickly will the economy adapt and evolve? Right? Will new industries at home spring up and offset the decline in trade abroad? And maybe that's enough to power real growth higher. We get a little bit more inflation, but hey, GDP is that much faster. Does that require a rate hike or not? So the Fed is they can't do anything right now. But a future Fed chair may say, hey, tariffs are coming. We think this is inflationary. We're going to raise rates now so that we discourage people from pulling forward all that aggregate demand, right? Which would then become inflationary in a self-fulfilling kind of prophecy. If I think prices are going to be higher because of tariffs 3 months from now, I'm going to buy the things now today. And a lot of other people may think that too. So the Fed says, let's just get ahead of this. Let's just ratchet up those rates. Yeah, a proactive Fed would have already raised rates at this point in time, given the concerns they've talked about. But they are reactive.
Do you think they would have been wrong to do so? I'm just
yes.
I agree, because the 5-year, forward inflation expectations, while you did see a short-term spike in January, it seems they've cooled off, and we're now at the exact same point we were before all this started, and ultimately at the low end of the range from where we've been for the last few years. So I think for all of our tariffs inflationary, and there is a price adjustment, let's not kid ourselves, but the inflation expectations, while they did drift, are still anchored around 2.2.
Yeah, I think that's ultimately the tell. So the Fed, until the credit market starts to crack, which it has not by any stretch of the imagination, but until the credit market starts to crack around any of these issues, just as we said coming out of SVB and Signature Bank failing, the Fed is not going to move off course. It's not going to front run an issue that may not materialize. It will watch it. It will stand by. If it has to cut rates or do something in an emergency fashion, it will. But so the Fed is boxed in, and now we have fiscal policy that's, it's a lot of dog and pony show, but the reality is deficits are going to grow. I guess the question is whether or not the tariffs go into place, and we're still trying to figure out what the tariffs are actually being used for, if it's to replace income taxes or if it's to just rebalance trade, or if it's really to just make us an autarky. Who knows? The Calvin ball aspect of it continues. But again, now they're kicked out another month. So the sword of Damocles, we still will not cut that knot. It will swing over us in perpetuity, it feels like.
And I think when the 30-day thing happened, the 30-day extension happened, you and I talked about this, and the odds that we were going to resolve it in 30 days was nil. The odds that it was going to be extended was nearly 100%, I think, in both of our minds. So let me ask you this. I can't let you get out of here without talking Bitcoin, which is now trading 84,000. Coinbase, a lot of these things that trade alongside or in sympathy with Bitcoin have taken significant haircuts off of their highs as well. I know you're a long-term holder, so let's put that aside. Let's just talk from a trading perspective. Do you have enough of a discount to take a short-term long stab at Bitcoin here in the 80s?
No, I don't. SBF is tweeting again, so that's probably bad. And the fact that he tweets and the market breaks the range the other night, Bitcoin is really unique. Yeah, it's a bad omen. There the signs when I wave a sword around on camera when the market hits a new all-time high, as a bull, you go take profits. Like SBF tweeting, that's a time that you think, okay, well, I think about this philosophically. If the Trump admin is out here, SBF is clearly fishing for a pardon. They pardon Ross Ulbricht. Who's to say that Trump just turns around and says yeah, we want to free SBF because it was done under the woke Biden DOJ or whatever rationale he rolls out there. You're telling the world, we're slowly informing the world that U.S. regulators actually don't give two hoots about what happens in the crypto space. If bad actors are found, they'll get a slap on the wrist. They'll get what was taken from them. They'll have to give it back. They may spend some time in jail, but ultimately they'll be forgiven and be allowed to go back into society once more. He may be banned from securities trading, but again, do you trust an industry that's going to be rife with these kind of people? And I think the sentiment right now is, really captured well by this tweet the other day. Years ago, the villains in crypto were Do Kwon and SBF talking about game theory. And now we're getting you get these leaked messages from Discord from the guy who's behind Argentina's Libra project, where he's to be honest, this is just a max extract kind of effort, right? They're not even hiding the villainy anymore. And so it feels kind of exhaustive right now in the short run, where, sentiment wise, the people who are supposed to be the champions of this new order of finance in Trump and in Milei, what did they do? They launched these meme coins that have been rugged effectively, trading 90%, 85% off the highs. If you look at Libra, if you look at the Melania coin, if you look at the Trump coin, and they may not be putting in significant regulations yet. We're waiting for David Sachs to bring forward, his own recommendations. We obviously know SAB 122 went through. But what is driving the sentiment higher right now? Like, what's the impulse? Fundamentally, and I made this point on Overtime today, you can't really do traditional fundamental analysis because there's no balance sheet, right? There's no macro data. So you look at various metrics like on-chain things, or the number of counts or transactions on-chain, or the number of liquidity, or various tokenomics, what have you. But there's no like generally accepted accounting principles for how to do fundamental analysis in Bitcoin. So it's a much more technically driven market, because that is the single language that all traders speak. We all can look at charts and all can look at the lines in the charts. And to that end, technically, Bitcoin looks like trash right now. You're talking about a break of this range, 105K down to 90. That looks like it's a bit of a top. The measured move has a, falling back towards 70 to 75, depending upon your point, which does bring you pretty close to some of the swing highs that we saw last year before we began our multi-month flagging pattern. And down there at 70 or 75K, having completed a measured move, having returned to a former swing high, knowing that this is a very technically driven market and has been for a long time, I am very interested at looking long deltas down there. But here, in a growth off kind of world, Vic, lower yields, when Lambo, right? You, me, and Andy Constant talked about this a few years ago. How do you get from T-bills out to Lamborghinis? How do you get to the Bitcoin? The lower interest rates push people out along the risk spectrum. So again, lower rates and Bitcoin getting pummeled, that's no bueno.
So your new level, I'm sorry you said it, but I missed the exact.
Give me somewhere between
in the
70s. Give me somewhere between 70 and 75K.
Yeah, I think that makes a lot of sense too, because you bet basically everyone that's been accumulating since November is now underwater, and as long as we stay in a range between 90 and something like 70, you put them to a test. And the longer we stay in a new lower range, the more likelihood I think it is that we see a price between 70 and 75.
No, but it's so great, right? Like, for people who've been involved in this for a long time, you can see the dichotomy in people's comments. Like, personally, it's like, well, just another 20% drawdown in the world of cryptocurrency. But you can see the people who've just bought in, and you can see on Twitter like, oh, my so-and-so's freaking out. He has like a 20% drawdown on his crypto that he purchased at 103. It's like, oh, this really is your first rodeo. Like, welcome. Like, yeah.
Oh, man. It's always fun to chop it up with you. Thanks for taking that venture into the budget conversation. I had really two fascinating conversations this week. Yesterday's was with Ilya on the new commission to basically go over the central bank and their dual mandate, which I would love to talk with you about, hopefully sometime in the future. And then getting your opinion on the budget. I really enjoyed the last 2 days. Chris Vecchio, if people want more from you, tell them where they can go.
Twitter at CVecchioFX, here on Tasty Live Monday through Friday, Futures Power Hour, 1 p.m. Eastern, overtime, Monday through Thursday, 4 p.m. Eastern. Let Me Explain, Tuesday mornings, 9:40 a.m. Eastern. And of course, here with you, Vic, on Wednesdays, the price, what's the word? Truth. That's at 6 p.m. Eastern, 5 Central.
My man. Thank you very much, Chris Vecchio. And thanks all of you for spending a little bit more than an hour with us. Hit the like button on your way out the door. Subscribe to the channel if you haven't already. Make sure you follow Chris Vecchio on his socials. And if you want to follow me on Twitter, you can do so at Victor Jones, the O and Jones, the 0. I'll see you back here tomorrow, same time, same place, same great network, only on Tasty Live. Peace.